Yes, today we are going to start the marathon of cost and management audit. And yes, guys, the exams are pretty close, and we have to really pull up our socks. Really, we have to, turn this entire 2 months or 3 months of the exam time, because now only 1.5 months is left for the exams. We need to really turn it around well, and we need to make sure that we are really bang on for the examination. We are absolutely ready for the examination, and yes, we are giving our best shot for the examination. That is what we have to seek in the upcoming 1.5 months, which is due for the examination. Good evening, Aarti Jain, Akhil Skaria. Okay, Suraj Maurya is also here. Welcome, Suraj sir. Suraj sir is also here. Welcome, Suraj sir. Niyati, Jatin. All right, welcome guys, welcome. And yes, we are going to start the cost and management audit marathon series, whereby I will be covering all the important chapters of cost audit from an exam standpoint. Whatever are the important chapters, they are a part of this entire marathon series. And yes, guys, I will also pick and choose certain topics which are very critical, important from an exam standpoint, which have been coming repeatedly in the past examination, and the expectation that they will come in the future examination is also quite high. I'll be picking up all those topics. I'll be picking up all those important topics for all of you. Yes, hi. Good evening. Yes, I can see a lot of good evenings. Yes, all right. So guys, let's start the marathon of cost and management audit. So first of all, let us bifurcate these two words into two different words, cost and audit. Okay. Cost, you are already aware about. What is costing? Costing means identification, classification of cost, and when we identify, classify, measure, assign, prepare, and present the costing statements, that is the cost for you. And what is audit? Audit is verification or review, examination, appraisal, checking of any record on an independent basis. The ultimate objective of audit is to express an opinion. We need to express our opinion on the audited financial statements, and that is why that is the ultimate objective of cost audit. So the ultimate objective of cost audit is to express an opinion, and yes, audit is done in an independent manner, which means the auditor should be independent of the client. That is a primary requirement of audit. Okay, so two words which are there, cost and audit. You need to understand both these words. What do you mean by audit and what do you mean by cost? Now moving on to the definition of audit. So guys, if we see the definition of audit, audit means it has been derived from a word called auditor. Okay, it has been derived from a Latin word called auditor. Audit has been derived from a Latin word called auditor. That is the word which is audit. Now let me reduce the brightness of the screen a little bit so that you will be able to see it properly, guys. Okay, brightness I need to reduce a little bit. Okay, now you'll be able to see the screen properly. Yes. All right, so audit has been derived from a Latin word which is auditor. Auditor means to listen. So guys, in earlier days, in the medieval period, the audit was a function of listening. So the auditor used to listen to the facts and circumstances of the case and used to prepare an audit report. So from there, this concept of audit has been taken over. So audit has been derived from word auditor. In ancient days, the person appointed to check accounts used to hear the explanations required from responsible officers, and that's why the person who heard the explanations was called as the auditor. So that is the basic genesis of audit. Where has the audit word come from? It has come from auditor. Then guys, in this particular statement, I've discussed certain scandals which have come up in past in the world, like Enron scandal has come up in the past, Arthur Andersen and Enron scandal. That is what I discussed in this particular chart. Now, very important, guys, what is the difference between statutory audit and non-statutory audit? There are two kinds of audits, statutory audit and non-statutory audit. Statutory audit means the audits which are relevant from a law perspective. They are recommended by law, they are mandated by law, they are mandatory audits which are to be done as per law, and the guidelines are also given in law. And non-statutory audit means the audit which are not as per the law. They are voluntary audit, which means if you want to do it, then you can do it. If you don't want to do it, you don't do it. They are voluntary audit. Okay, so statutory audits are compulsory and non-statutory audits are voluntary. So these are the difference between statutory auditor and non-statutory audit. Now relevant statute is there in case of statutory audit. Non-statutory audit, employers or the partners who are going to get the audit done, they decide the scope. In case of statutory audit, the scope is decided by the law, the legal framework, the act which is under which the audit is being done. That is the perspective of audit. Yes, these videos are applicable for old as well as new syllabus. Both the syllabus are being taken care of in this particular session. Is my audio okay? Are you able to hear me? Please confirm in the chat box, because I have got a message that your voice is low. Am I audible to all of you? Am I perfectly audible to all of you? Is my voice all right? Please confirm in the chat box. Okay, so statutory audit and non-statutory audit. Then the academic or professional qualifications are required in case of statutory audit. The statutory auditor has to be qualified. Like in case of cost auditor is required. In case of financial audit, statutory auditor, start accountant is required. So professional qualifications are prescribed under statutory audit. In case of non-statutory audit, professional qualification, academic qualifications are not required. A non-statutory auditor can easily be a graduate or a law graduate or a commerce graduate. Any graduate can be non-statutory auditor, but statutory auditor has to be the specific the degree which is required under law, which is cost audit. For cost audit, it's cost auditor. For financial audit, it's chartered accountant. So that particular degree is very much required. Okay, so this is the difference between statutory audit and non-statutory audit. And yes, statutory audit example is cost audit. Non-statutory audit example is management audit and operational audit. So guys, in cost audit itself, we have a module in which we'll be studying about management audit, operational audit. So these audits are non-statutory audit. If you want to get your audit done, then please do it. If you don't want to get your audit done, it's perfectly all right. No one is going to force you. So these are management audit and operational audit, which are non-statutory audits. Now, what is the difference between audit and investigation? Very, very important, distinguishing factor. Audit means to check the prima facie, express an opinion on the prima facie, things which have been given to you. Investigation means it's an in-depth analysis to ascertain any fact. It's an in-depth analysis of certain thing. Okay. Now, in case of audit, it has a wide scope, which means it will cover everything which is there in the financial statements. However, in case of investigation, the scope is limited to the period or areas which are to be covered. So in a nutshell, I can tell you that, audit is a routine exercise. Okay, it's a compliance, it's a routine exercise. However, investigation is an exercise which is invited only when there is some fraud which has been unearthed. There is some something grave which has been found out in the process of your financial statements, working on anything of that sort. Something has been found out. In that case, investigation happens. Audit happens in every case. Okay, it's a general routine process of audit. Okay, that is the difference between audit and investigation. From an exam standpoint, this is not very, very important, guys, because these distinguishing factors we are just brushing up to update our knowledge on the subject, because audit that we are going to start, you need to really understand the basics of it. Therefore, these topics are important. From an exam standpoint, not very, very important. Okay. Now, what are the other differences between audit and investigation? So audit is done as per the generally accepted auditing principles. So there are principles which are prescribed for doing audit. In case of investigation, they are only an extension to auditing procedure. Whatever auditing procedures have been applied, the investigation is extension to those procedures. Auditor will gather persuasive evidence. Okay, persuasive evidence means evidence which have more than 50% of chances that they are correct. Okay, persuasive evidence which they persuade you. Okay, they are not conclusive. They are not 100% indicative of the fact that everything is fine. So, the perspective of audit is to give a reasonable assurance. Reasonable assurance means more than 50% we are okay with everything. Okay, that is reasonable assurance. So, purpose of audit is to give a reasonable assurance. Purpose of investigation is to give an absolute assurance, which means 100% we need to certify that yes, everything which is written in the financial statements or the cost statements are absolutely fine. That is 100% assurance which is given in investigation. In case of audit, there is only reasonable assurance which is given, which means more than 50% chance that everything is fine. That is a very important distinguishing factor between audit and investigation. So yes, guys, let us see how's the Josh in the house. Hi, guys. How's the Josh? Yes, we have good 77 people in the room. How's the Josh, guys? You know, the upcoming examinations are around the corner. How's the Josh with all of you? Let me check out in the message in the chat section. How's the Josh in all of you? Please tell me in the chat box. And yes, please like the video. Do share the video with your friends so that, you know, maximum people get benefit out of it. Please like this video for sure. Let's see how many students are going to like this video. So please like the video for sure. And how's the Josh in the room? Let me check out in the chat box. Please write in the chat box. Deepan says, great. Yes, good. Superb, sir. Hi, sir. Hi. Perfect. Your Josh should actually be high. And that is the biggest thing which is required as of now, because the papers are just round the corner, guys. Round the corners. Perfect. Super high. Full Josh. Tejasvi says, good, Tejasvi. All right. So yes, persuasive evidence and conclusive evidence in case of investigation, persuasive evidence in case of audit. That is the evidence, type of evidence which is required in both of the cases. Auditor is skeptical, not suspicious. So in case of auditor, he is skeptical. Skeptical means careful. He's careful, but he's not suspective. He's not suspecting anything. He's not saying that, you know, something is wrong in the company. He's not coming with that mindset that something is wrong in the company. However, investigator comes with that mindset that something is wrong in the company. Some suspicion is there, some negative thought is there. He comes with a negative thought in case of investigation. Auditing is a routine exercise, which means annually it is done. However, investigation is done, quite not regularly. Okay, so these are difference between investigation and audit. And window dressing of accounts is not a not a very important topic to discuss. Yes, this is very important, guys. 1 marks question can be asked in the examination. It is there in the MTP as well. What is the history of genesis of cost audit in India? What was the reason why cost audit was invented in India? Why was it launched in India? Why was the cost audit the cost audit provisions were introduced in India? Why Companies Act introduced cost audit? When did it introduce it? And what changes did cost audit provisions get over a period of time? That is the point of discussion now. Very important point. Okay, so yes, genesis of cost audit in India. When did cost audit come into play? This is the chart that can that can be, I think you can see it. Yes, this is a chart that will give you a brief of what happened to the cost audit provisions over a period of time. It was introduced in 1965 under the Companies Act 1956 with 2 sections, maintenance of cost records and cost audit. Okay, 1965 was the year when the cost audit was first launched in the Companies Act 1956. Then 1965 to 2008, cost audit was applicable only on 44 industries. Cost records were applicable on 44 industries, only 44 industries in which cost records were applicable. And cost audit was applied on specific companies. So the cost audit earlier was company based, which means company were specified that this company should get its cost audit done. Okay, it was not industry wise that this industry should get its cost audit done. It was company wise. So yes, company like Tata Steel Limited or Reliance Industries Limited or Aditya Birla Group. So companies were chosen for getting the cost audit done. So it was company specific earlier. During 1965 to 2008, it was company specific. In 2011, company specific audit was replaced with industry specific audit. Then it was a wider scope. In 2011, the company specific audit was replaced with industry specific audit. So now audit was applicable on entire industry which say manufactured cement. Entire industry which manufactured cement, entire industry was applicable on cost audit provisions. Earlier, only specified companies were eligible for cost audit provisions like Ambuja Cements. Okay, not other cement companies. But afterwards, in 2011, the cost audit was specified on the basis of industry. Industry means some product which you are making. On the basis of that, cost audit was introduced, which means it was on a wider scope that the cost audit was launched subsequently. Old syllabus as well as new syllabus, both syllabus are applicable. These videos will be applicable for. 2014 was a radical year in the history of records, when the rules, cost audit rules and cost audit report rules were absolutely revamped. They were absolutely changed to meet the latest requirements of the industry. They were changed. So in 2014, Companies Act 2013, there were new sections which were introduced. Section 148(1), Section 148(2), maintenance of cost records and cost audit. So these sections were introduced in Companies Act 2013, and Companies Cost Records and Audit Rules 2014 were launched in 2014, and they were amended subsequently by 2015, 16, 17, 18, 19 rules. So the rules which are applicable for all of you today are the 2014 rules, and they have been launched in 2014. And Companies Act 2013, the relevant section is 148.1 and 148.2. 148.1 refers to the maintenance of cost records, 148.2 refers to the cost audit. These are the two main sections which will be applicable to you for your examination. And yes, this is where the cost audit and cost records provisions are specified in under Companies Act 2013. That is how we bifurcate the entire genesis of cost audit. This is the genesis of cost audit, the the advent of cost audit. Where did cost audit start from? So guys, you need not remember all these years, okay? You need not remember all these years minutely. You should just remember the major years, which is 1965. Yes, of course, you need to remember this, 1965. You need to remember 2011, and you need to remember 2014. These are the 3 years which you need to remember. And what are the significant events that have happened in these 3 years? They are most important from an exam standpoint, okay? This is not very useful. This is okay. Yes, now comes the major thing, okay? Now comes the major thing, okay? Now I want you to answer in the chat box which part of your body is the most important part of your body, without which you cannot stand, without which you cannot sit, without which you cannot do whatever you are doing, without which your nervous system comes to a standstill, without which your entire body will not function properly, which is one most important part of your body, without which everything will come to a standstill. If that part is hampered, or if that part is somewhere dilapidated, or that part is hampered, then guys, your entire body will come to a standstill. What is that one part for your body? Please tell me in the chat box, in the comment section. I want to know which is one part of your body. Yes, 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 Tejasvi, it's the spine. Rekha Chaudhary, Shayani Banerjee, perfect guys, it is the spine. Spine is one such thing which, if it is hurt in any way, then your entire life will come to a standstill. Guys, similarly, in case of any audit, if we talk about audit, any audit, be it internal audit, be it statutory audit, be it GST audit, be it income tax audit, be it management audit, be it any kind of audit, the spinal cord of audit is the thing which keeps audit going strong, is the law which is backing that particular audit. The law which is backing that particular audit. If there is no law which is backing an audit, then audit becomes weak, audit becomes fragile, audit becomes non-effective. So, or every audit needs to have a spinal cord, needs to have a backing, needs to have a strong support system. I'll give you a simple example, okay? I come to your, suppose you guys are staying in Delhi, okay? I'm also in Delhi. Suppose you guys are staying in Delhi. I come to your home and I tell you, oh, please show me, I want to audit your room, okay? Show me all the almiras, all the cupboards, and all the all the things which are there in your room. Please show me all of them. I want to audit. Please answer in the chat box what will be your response. I am coming tomorrow. I am coming for your audit of your room. I am coming to your home. Wherever you are situated, I am coming to your home, and I will want to audit your room, your almiras, your drawers, everything I want to audit. What will be your response? Will you allow me to do audit of your room? Will you allow me to do audit of your room? Please tell me. Will you allow me to audit your room? I want to come to your home and I want to audit your room. Ankita says, I will allow you, sir, no problem. But Ankita Murarka says no. Aditya says no. Anandu says no. Rekha says, who authorized you? Very good, Rekha. Very good question. Very good question. No, answer is no. Not at all. Sharan says not at all. B. Chenna Keshafa says yes. See, there are very sweet people also in the chat room. They are not only rude people who are saying, no, sir, we will not allow you. We will not allow you. We will not allow you. Everyone is saying, we will not allow you. They are so rude people. But there are some good, nice people also who are saying, no, sir, we will allow you. Please come. B. Chenna Keshava is one such nice person. Most welcome, Nikhil, sir. C. Pavan Jagtap is saying, most welcome. Lakshmi Dhar says, under whose permission? Ajna says, yes, you can. मम्मी को भी अलाउड नहीं है. शरण कह रही है मम्मी को भी अलाउड नहीं है, तो अब आपको अलाउ कैसे कर देंगे? So yes, guys, point of the matter is that you need to ask a person who's getting your audit done, who authorized you to come into my personal space and touch my personal things, who allowed you to do that. I'm not going to give you any such permission, because you need authority to visit anyone's personal premises. You need some kind of some kind of authority, some kind of permission to do any kind of audit, because it's your personal thing. Similarly, guys, when you come to a business, then business cost statements, business cost sheet is their personal asset, is their personal thing. Why would they allow you to touch your personal thing? It is a personal thing. It is their personal thing. Why would they allow you to touch it? They will not allow you to touch it. They will say, we don't need any audit. Don't touch our books of accounts. No, you are not allowed to touch our books of accounts. They will say like this. But then we will show them the relevant sections under the Companies Act 2013, which they have to mandatorily follow. And the relevant sections, soon as they will read the relevant sections, they will definitely allow you to audit their firm. Like I'm going to tell you, I'll tell you that your father is giving you a call and he's telling you, allow Nikhil sir to come to your room and get your room audited. Then will you permit me? Answer is yes. Now the law under which you are governed, that law is requiring you to get the audit done. So you cannot deny. No, you cannot deny then. So every audit needs a backbone, and backbone means the law under which audit is to be performed. If audit is not performed under any law, then it becomes futile. It becomes useless. So audit has to be performed under some law, and that law under which audit is to be performed is the spinal cord of that particular audit. That is the most important part of that particular audit. So which is the spinal cord of our audit? Which is cost audit. Which is the spinal cord of cost audit? Guys, the spinal cord of cost audit is section 148. Please highlight and highlight and highlight this section. This is the section because of which CMAs are monopolized to do cost audit. And yes, we have a monopoly in cost audit. And yes, we can proudly say that only and only cost and management accountant can enter into a company and ask for the cost records of a company. No other professional in the world can force the company to give their cost records to them, because cost records are very, very, very private documents, very, very personal and very, very confidential for every company. But yes, cost auditors, CMAs, cost and management accountants, are authorized to get hold of the cost records and check the cost records, and if any lacunas are there, if any problems are there, then that is going to be highlighted by the cost audit. So sections which are applicable for Companies Act, which are relevant for cost auditors as well, are sections 139 to section 148. 148 being the prime section, and all these sections are also relevant to the cost auditor along with the any other auditor. So these sections are also very, very relevant. Section 139 to 140, and yes, under law you must have already read these sections. These sections are equally important under cost audit as well. Yes, sir. So yes, guys, cost audit after engagement letter audit will be done. Yes, after engagement letter audit will be done. Perfect. So this is the law which is requiring every company to get their cost audit done. And because of this law, cost audit is mandatory provision. Okay. So, sections 139 to 140, guys, let me tell you a quick revision strategy or a quick way to learn this section, mnemonic to learn this section. Okay. 139, ao means come. Okay. Come means appointment of the cost auditor. 139, come, appointment of the cost auditor including rotation. Ao. Removal means jao. Okay. Go. Jana is removal. Ao, jao. Ao is section 139. Jao is section 140. Ao, jao. Eligibility, jancho. You always test something, whether it is good or not. Eligibility, whether you are eligible for doing cost audit or not. Eligibility, qualifications, disqualification of the auditor. Jancho means whether you are eligible or not. Testing, so jancho means testing. You have to test the eligibility of the cost auditor, whether he is eligible or not. So jancho is testing. Then parkho means you have to evaluate whether it is worth or not. Parkho means what is the value that is payable for this particular person, what is the remuneration that can be given to the auditor. Parkho, what is the remuneration that is given to the auditor. So that is parkho. So ao, jao, jancho, parkho. Ao, jao, jancho, parkho. 139, 140, 141, 142. Okay. 139, 140, 141, 142. These are the chronological sequence of all the sections which are related to audits. Okay, so today we are going to cover all these sections which are related to audit, section 139 to 142. So this is the mnemonic to learn these sections. I'll be telling you the mnemonic of other sections also in a while. Okay, please remember these mnemonics, guys. आओ, जाओ, जांचो, परखो. 139, 140, 141, 142. आओ, जाओ, जांचो, parkho. These are the mnemonics for these four sections. Okay, so important sections from an exam standpoint. Okay, we'll be studying about these sections, but first of all, let us start our discussion on section 148. Guys, section 148 is the major section, the monopoly section, which will help us to get the cost audit done, and it will give us powers, it will give us monopoly to do cost audit of any company. Okay, are you able to see the chart well? Yes, you are able to see the chart well. All right, all right. So now we come on to section 148, which is the basic section of cost audit, and very, very important question of cost audit. Okay, so what is this chart telling you about cost audit? Now, cost audit is divided into, cost audit section is divided into three sections: subsection 1, subsection 2, subsection 3. Section is 148. Okay, please remember the section. This is the mother section. This is the mother section, or you can also say it as God section. ये अपुनीच भगवान है, ये सेक्शन अपने आप को देख के बोलता होगा अपुनीच सीएमए वालों का भगवान है. यस, यही हमारे सीएमए वालों का भगवान है. मदर सेक्शन और द गॉड सेक्शन, बैकबोन ऑफ सीएमए प्रोफेशन is this particular section, which is section 148. We have to carefully scrutinize the entire section 148 and need to understand subsection 1, 2, 3. What are the subsections of this section? We need to carefully scrutinize them, and we need to carefully look at these sections. Okay. Okay, so section 149 divided into two parts, 1, 2, and 3. Subsection 1 relates to cost records. Guys, unless and until you mandate a company to prepare cost records, you cannot ask the company to get the cost audit done, because cost audit can be done only when a company prepares cost records. So the first essential element is to instruct the companies, to make it mandatory on the companies to prepare cost records. That is the first and foremost requirement which law has to impose. So law has to mandatorily impose a requirement of cost records, preparation of cost records on each and every person, on each and every company who is eligible to prepare its cost records. So subsection 1 relates to cost records. What are the companies which are required to prepare the cost records? That is subsection 1. Then subsection 2, cost audit. Now, out of the companies which are required to prepare cost records, not all are required to get their cost audit done. Out of them, only few are required to get their cost audit done. So first essential element is you need to have a mandatory requirement of preparing a cost records. And after that, the second essential element is, for those cost records, cost audit is required to be performed by you. And yes, third is, who can be the cost auditor? Who can be the cost auditor? Who can perform the activity of cost audit? That is the relevant person. Who is the relevant person? That is the third subsection. So subsection 1, cost record; subsection 2, cost audit; subsection 3, cost auditor. These are the three subsections which we need to in-depth delve into, in-depth understand the context of these three subsections. Okay, first of all, let's start cost records. Which are the companies who are required to prepare their cost records? That is the question under consideration. So cost records are required to be prepared by specified companies, which means not all companies are required to prepare their cost records, guys. Only specified companies are required to cover the cost records. Okay, so specified companies are required to prepare their cost records. And who are those specified companies? Guys, there are some turnover and net worth criteria based on which the companies are chosen. Not all companies are required to prepare their cost records. First of all, the question which should arise in your mind is, sir, what are cost records? Guys, cost records are nothing but utilization of material, utilization of labor, and utilization of other item of cost, which is nothing but your cost sheet. The cost sheet which you prepare for your products, that is the cost records for you, and the underlying documents or the underlying ledgers, they are the cost records for you. So cost records are nothing but utilization of material, utilization of labor, and utilization of other items of cost. That is cost records for you. So cost records are the records which a company is required to be paid. Only specified companies are required to prepare these records. Specified companies, and specified companies are determined on the basis of turnover and net worth criteria as per the rules. Plus, there's one more requirement, that those companies should make specified goods or services. So there are certain goods and services. Only if you make those goods and services, you will be required to prepare your cost records. So every company is not required to get its cost records prepared and audited. No. A clear distinction with statutory audit. Guys, statutory audit is applicable on all the companies, whether they are preparing A product, B product, C product, whatever product they are preparing. Cost records are statutory audit is applicable on all companies, but cost audit is applicable only on specified companies, because cost records are applicable only on specified companies. That is one point of differentiation between statutory audit and cost audit, which we need to understand. Our statutory audit is applicable on all companies. However, the cost audit is applicable only on specified companies. And what are those specified companies? Who are those specified companies? Guys, this we'll be discussing in our next chapter, which is the rules chapter. Over here, we are not going to discuss what are those companies, okay? But cost records are required to be prepared by specified companies who are fulfilling the specified criteria with respect to turnover and net worth, and they are preparing specified goods. The goods are listed in two tables, table A and table B of the rules. The goods are listed, that these are the list of goods. If you prepare these list of goods, then you are required to get your cost records prepared. Now, once you are required to get your cost records prepared, out of these companies, guys, we will pick up certain companies for cost audit. Again, cost audit is not applicable on all the companies. Cost audit is applicable only on certain companies, and those certain companies will be chosen out of these companies who are required to prepare their cost records. Out of these companies, certain companies are to be chosen, and cost audit is required to be done of those certain companies. So what are those companies where cost audit is required to be done? Companies covered under subsection 1. So yes, first requirement is that the company should be covered under the cost records. Cost records must be applicable on those companies who are eligible for cost audit. So first requirement is that companies must be covered under subsection 1, which is cost records. Then the company must be meeting the net worth and threshold criteria. So there's a threshold in subsection 2 also. There's a threshold in subsection 1 also. So first of all, subsection 1, your threshold should be met. Then subsection 2, your threshold should be met. Again, threshold is applicable for the subsection 2 also. So cost audit is also subject to certain thresholds. Then subsection 3, which is the cost auditor. Cost auditor has to be a cost accountant in practice, and he should be appointed by the board of directors specified under subsection 2. So two requirements of becoming a cost auditor. Number one, he should be a CMA, cost accountant, and that too in practice, which means he should hold a COP. COP should be available with that particular person, cost accountant in practice. And second requirement, he should be appointed by the board of directors of the company as a cost auditor. If these two requirements are cumulatively satisfied, then that particular person becomes the cost auditor of that particular company. So this is how cost auditor is defined in the law. So let's quickly read the section also. Okay, 148 subsection 1. Notwithstanding anything contained in this chapter, this is a non-obtained clause. Non-obtained clause, which means it overrides all other clauses which are given in the law. So notwithstanding anything contained in the chapter, the central government may by an order. So there is a specific requirement of central government to give an order. This is not an automatic section which will activate automatically. No. Government will tell what companies are required to prepare their cost records. Not all companies are required to prepare their cost records. Only specified companies are required to prepare their cost records. So government by an order in respect of such class of companies engaged in production of such goods or providing such services. So government will tell what goods and services are covered under cost audit, and only if you are preparing those goods and services, you will be covered under cost audit. So specified goods, specified services, if you prepare, then you need to prepare utilization of material, utilization of labor, and other item of cost, which is cost sheet. If you fulfill the criteria which is given by the government, then you need to prepare your cost records, and cost records means cost sheet with supporting documents should be included in the books of accounts kept by that class of companies. Now, what is subsection 2? Subsection 2 is if central government is of an opinion and the company is covered under subsection 1. So if there's an opinion of central government, the opinion is given by the net worth and turnover criteria. So if two conditions are cumulatively fulfilled, that the company should fall under subsection 1. The first condition is that company should fall under subsection 1. If your company is falling under subsection 1 is cost records. If your company is falling under subsection 1, plus you are meeting the net worth and turnover criteria, your net worth is above the required threshold. If these two conditions are cumulatively satisfied, then you are eligible to get your cost audit done under subsection 2. Now we are testing the eligibility of cost audit for companies. Okay, so if the company is covered under subsection 1, secondly, the company's net worth and turnover is above the prescribed limit, both the condition are cumulatively satisfied, then the company is eligible for cost audit under subsection 2. These are the two conditions which are to be required to be fulfilled. Then subsection 3, which is the cost auditor. Who can be the cost auditor? Guys, any cost accountant in practice, any person who's in practice, who's a cost accountant CMA, and he is in practice, that is the first requirement, and he should be appointed by the board as a cost auditor. Both the conditions are satisfied, he can become a cost auditor. So guys, there are in a particular section, no, even while you are doing a law, okay, you are studying law, there are certain elements which stand out as compared to the other provisions of the law. So law is all about accumulating all the conditions, putting it together and drafting an equation. That is law. And this is how I bifurcate law. Whenever I teach law, this is how I bifurcate it. I pick up the important elements of the section and put it as plus 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 equal to this. This is how you should study law also in your group 3. Okay. So how many of you are afraid of studying law? Just write in the chat box, me. How many of you are afraid of studying law of group 3? Write in the chat box, me, me. Let's see how many of you are afraid of studying law. How many of you are afraid of studying law? Please write in the chat box, me. Sharan says me. Okay. No one else is afraid of studying law. Finance crew says me. Raju Kumar says, not at all, sir. All the provisions of law are on my fingertips. I read it so fluently, sir. Priyanka says me, Rekha says me, Ankita says me, Aarti Jain says me. All the girls are afraid of studying law, huh? Manisha says me. Boys are not afraid of studying law. Anjima says me. Yogesh Sharma says me. Yes, there's one boy also who's saying that yes, it's difficult in law. I understand everything, but remember nothing. Yes, remembrance is a big thing in law. Yes, remembrance is a big thing. So guys, if you bifurcate your law also this way, you will be able to remember law very, very easily. Just write your law in this way, the way I have written law. You write this law and you will be able to really, do well in your law paper also. Okay, sir, got it. So yes, these were the provisions of section 148. I'm not taking these subsections, guys. These subsections are very, very easy. All right. So in a nutshell, what is the cost audit definition? What do you mean by cost audit? Cost audit is an independent examination of cost books, cost accounts, cost statements, and subsidiary prime documents with a view to satisfying the auditor that these represents true and fair view of the cost of production. So your cost of production is perfect. Your cost of production is up to the mark. Your cost of production is absolutely correctly computed. When you audit all these things like your cost accounts, cost books, cost statements, subsidiary and prime documents, when you audit, examine all these things and ascertain the cost of production and ascertain that yes, our cost of production is absolutely perfect, guys, that is known as cost audit. And you give a true and fair view on the cost statement, that is cost audit definition. Okay, the verification of correctness of cost accounts and adherence to cost accounting plan. Whenever you are verifying the correctness of cost accounts, we specifically see the cost accounts, whether cost accounting is done properly or not. And yes, guys, in this revision series, we'll be dealing with the cost accounting standards. Yes, the big thing, the 24 cost accounting standards, which is there in our syllabus. We'll be dealing with this in this revision series. And those cost accounting standards will tell us how cost accounts are required to be maintained, how cost sheet is required to be made. Those cost accounting standards are going to tell us about the cost sheet and the cost statements and the cost accounting records. So yes, we will be dealing with cost accounting standards also. Yes. Sir, section 141 disqualification exam mein aata hai kya? It might come. I mean, rarely, it doesn't come quite often, but it might come. Section 141, which is the disqualification. Okay, it might come. Okay, guys. So this was the definition of cost audit for all of you. Relevance of cost audit. What are the benefits of cost audit, guys? Price control. The first relevance is price control. All the things which are there in market, which are available in public domain. If you want to control the price of all those things, then cost audit is very much required. And even for reporting purposes, we need to know what is the cost of a particular product, what is the profit margin of that particular product. All these things will be adhered to only when cost audit is perfectly done for that particular company. So cost audit, the first benefit of cost audit is that it regulates the market, it regulates the price. That is the first benefit of cost audit. Market regulation is the first benefit of cost audit. Then It provides accurate and authentic information to the board of directors about the cost and structure of cost. So it will tell you what is the cost of a particular product and what is the bifurcation of cost. I mean, what material cost is employed, what labor cost is employed, what other expenses are employed. All these things will be given. The structure of cost will also be given in the cost sheet. So that is the information which is provided to the board of directors using the cost sheet. That is the benefit of cost sheet. Okay, then to assess the performance of the company in terms of shareholders value, stakeholders value, whether the company's performance has increased over a period of time, whether it has upgraded over a period of time, or whether it has declined over a period of time. That is the objective of cost audit. Then good practice in costing should support a range of both regular and non-regular decision making. So whenever decision making is required to be done, then costing forms the basis of every decision the management is going to take. Because guys, costing and cost sheet gives very valuable information about the product, about the profitability of the product, about how the company is doing as a whole. All these things are detailed, discussed in detail in cost sheet. So all these gives a hint or clue as to what is the performance of the company. So to assess the performance of the company, cost sheet is required. Helps protect interest of Indian companies from allegation of dumping. Now, dumping is something which is absolutely against law. Dumping is when a foreign company sends or sells its goods to some other company at a throwaway price, at a very, very minimal price, even below the cost of production. Okay. So whenever someone tells me that, okay, you are selling the product even below cost of production, you are incurring a loss in effective terms. So I will say that, no, please see my cost sheet. My cost sheet will tell you that this is the cost of this particular product, and it is fine. So, to if you want to shield against the allegation of dumping, if you want someone to say that, someone to not to say that you are dumping your goods into another country, then cost sheet will form a very important basis of saying that, no, I'm not dumping my goods in another company. I'm not just putting my goods at a price which is even below than cost of production. No, I'm not doing that. So allegation of dumping can be protected if cost sheet is prepared. To become effective against the anti-competition activity, so whenever you are competing against your peers in the market, then guys, sometimes there are some competition laws which restrict you. Okay, there are competition laws which restrict you. So there is Competition Commission of India, CCI. Okay, that CCI will restrict you if you are entering into any unhealthy trade practices. Like, I'll tell you an example. When two companies merge with each other, then they try to increase price of their product because they are monopolizing the market. Okay, in that case, CCI will restrict them that, no, you cannot increase price of the product, because monopoly will not should not hamper the welfare of the people. So if you want to be very, very effective against those allegations that you are increasing your price unnecessarily, or you are selling your goods at a very, very high profit margin, if you have these kind of allegation, unhealthy competition practices you are following, if you have this kind of allegation, cost sheet will come as a rescue. Cost data will come as a rescue. You can show the cost data and tell the people, no, I'm definitely not entering into any unhealthy practice. I'm going to give my products at a reasonable rate, and this is my cost sheet, which will tell you that this is the rate at which the cost sheet is done. The cost is this is the cost, and this is the rate at which profit margins are given to you. So my entire cost data will be evident of the fact that I'm not doing any unhealthy trade practice. I'm not doing any unhealthy trade practice. My entire cost data will be a proof. Arm's length price, to determine the arm's length price of a transaction. And yes, arm's length price is a very, very important determination as far as when your inter-department transfers are concerned, or when you are transferring goods from one country to another country. At that point in time, your transfer pricing regulations or arm's length price regulation is very, very important, because customs, even excise sometimes deals with arm's length. And of course, we have section 92 of the Income Tax Act which deals with arm's length. And to gain accurate cost information regarding arm's length price, what will be the cost of this particular product, what is the profit margin, and what will be the actual selling price of this particular product, to analyze all the arm's length price of a particular product, cost sheet or the relevant cost data becomes a standard benchmark, becomes a basic thing, sine qua non. It becomes an essential thing to ascertain the arm's length price. So for ascertaining the arm's length price, we need good costing data. Like inter-unit transfers are there, we need costing data, we need cost sheet to ascertain the price. ascertaining actual productivity and wastage. So whenever you want to ascertain whether your goods are being produced at a are you wasting your goods a lot, or are you wasting your raw material a lot? If you want to know that, if you want to know the productivity, then guys, cost sheet will be a very, very good source of information. Objectives of cost sheet, objectives of cost audit is that, first of all, verification of cost records. You need to verify your cost records. What are your cost records? Whether they are prepared well or not, whether they are prepared correctly or not. That is the first objective of your cost audit. Then to detect errors and frauds. If any error and fraud has crept in the financial statements, you need to detect that. Then determination of inventory valuation. Inventory valuation can be done using various methods. Okay, various different methods can be employed while doing the inventory valuation. So to determine whether inventory valuation is done right or not, you need cost audit. Cost audit will assist you in your inventory valuation process also. Then reconciliation of costing records with accounting records. If you want to reconcile your costing profits with accounting profits are different, costing profits are different, and you may prepare a reconciliation statement. And guys, mind you, very, very important, a mandatory question from reconciliation statement, practical, will definitely come in your examination. So reconciliation of financial and costing profit you must do in your preparation. Please do all the questions of reconciliation statement. That is very, very important topic from an exam standpoint. Okay. Then it helps government in setting up price of regulated goods. There are certain goods which are regulated goods, like pharma, some pharmaceutical goods, some medicines are regulated goods. So whatever are the regulated goods, to set prices of those goods, cost sheet, cost data will be used by Government of India. Then detection of abnormal loss of material and time. If there is an abnormal loss of material time, we will detect it using the cost audit. And there are several other guys benefits which are there for cost audit. Okay. Again, guys, social objectives are also very similar. I'm not going to go deep down into it. You can actually read it through. Some important definitions, like definition of books of accounts. What are books of accounts? Mode of maintenance of accounts, how the books of accounts should be maintained. Guys, very simple provisions. But yes, a very important provision which we are going to study now. Companies required to maintain cost records and audit done. So companies which are required to maintain the cost audit and record, section 148. So what are the defaulting provisions? If you default in preparing your cost records, if you default in getting your cost audit done, then what are the repercussions that you can face? So you can, if there's a one-time default, if you have a one-time default, then every officer and the company who is in default shall be punishable with a fine which is extendable to 5,000 rupees. This is default number one. For continuing default, which means you have not got your cost audit done for several years, then the fine will be rupees 500 per day till the default continues. So till the default continues, your fine will be 500 per day. So many days as the default continues, multiply by rupees 500 per day. That is your defaulting, penalty. Okay. Okay, sir, that's why anti-dumping was introduced. Yes, Sharan is absolutely right. To damage the economy of the importing country, anti-dumping duty was introduced. Perfect. So cost audit will serve as a shield if you are claiming that you have not done anti-dumping, and if other countries' government is claiming that you have done you have done dumping, which means you have sold your goods at a very, very low price than cost of production. If the other country's government is saying this thing, and if you are saying no, I am not done anti-dumping, then you need to prove it. Okay. And for proving it, you need to prepare your cost sheet and give it to government of that country and tell them, look, my cost is less. It's not that I'm selling it below cost of production. My cost is less, therefore my profit is less, and therefore I'm selling it at a less price. I have technology which produces this good at a very, very effective price. So cost sheet will form a basis of your your argument in front of a court if you are faced with the allegation of dumping. That is the anti-dumping duty for you. Okay. So for a one-time default, 5,000 rupees punishment. For a continuing default, 500 rupees per day punishment is levied on you. Then section 148(5). Okay. Qualifications and disqualifications of the auditor, rights and duties of the auditor. Very, very important section, guys. Okay. So what are the qualifications of the auditor? What are the qualifications of the auditor? Qualifications of the auditor. Number one, the auditor should be a cost accountant. The auditor should be a cost accountant within the meaning of Cost and Works Accountants 1959. So the auditor should be a cost accountant, which means he should be a CMA. He should have qualified his examination and also got the membership number from the institute. If you don't have the membership number, you cannot call yourself as a cost accountant. So first is that he should be a cost accountant. Second is he should have a COP. So there are two options which are given to you once you become a CMA. Either you can have your COP, or you can work somewhere in a job. Okay, if you have COP, only then will you be permitted to do your cost audit. You can be a cost auditor only when you have a COP, certificate of practice. He shall be individual or firm of cost accountants with at least 2 partners. So you can be an individual or a firm of cost accountant. Either of the two is permitted. Where firm including LLP is appointed as a cost auditor, then the partner who are cost accountant shall be authorized to act on behalf of the firm. So wherever the limited liability partnership is appointed as the cost auditor, or the partnership firm is appointed as the cost auditor, then the partners of those firms who are cost accountants are do any activity like cost audit on behalf of the firm. Obviously, guys, firm is a unnatural entity. It is not a natural person that it can perform something. So only the cost accountants who are authorized to act on behalf of the firm, they will be eligible to perform the cost audit. Then restrictions on number of cost audit. So how many cost audits can you do? Section 141 3G. There is a restriction on cost audit, number of cost audit that you can do. There's a restriction on it. Let us see what is the restriction. So guys, this PDF material I will upload on the Google Drive, and I will give that Google Drive link on the description below. So don't worry about PDF. Right now you are not focusing on what I'm teaching, you're focusing on PDF. Focus on whatever I'm teaching, and you might not even need the PDF. Okay, so restriction of number of cost audits. So 141 3G section restricts number of cost audit. It restricts what is the cost audit, how many cost audit are required to be done by a particular person. It restricts it. Section 141 3G restricts the number of cost audit which one cost auditor can do. Now what is that restriction? Restriction is, in a case for a firm appointed by the as a cost auditor of the company, it shall not hold more than 20 audits. So any partnership firm cannot hold more than 20 audits per partner. This limit is per partner, which means if there are 3 partnership firms in a firm, then 3 multiplied by 20, which means that firm can do 60 audits. Okay, 3 partners, 20 audit per partner, that means that firm can do 60 audits. So 20 audit per partner is the limit which is prescribed under the law. And yes, this limit does not include 1-person companies, dormant companies, small companies, and most importantly, private companies having paid up share capital of less than 100 crores. So if you have private companies which have less than 100 crores share capital, you can do unlimited companies audit of such companies. Okay, unlimited audit can be performed. But in case you have a public company, you have a company where the paid up share capital is more than 100 crores in case of a private company also, then guys, the limit is only 20 companies. You can do cost audit of only of 20 companies, not more than 20 companies. That is the restriction on number of audits. Then disqualifications of auditor, very very important topic, guys, from an exam standpoint also. Yes, direct question might not come, but still an indirect question can come from this particular aspect. So disqualifications of cost auditor, section 141. First of all, he shall not be a body corporate. Any body corporate is not eligible to do cost audit. Can anyone tell me the reason in the chat box? Let's see who all have prepared this particular section well. Please tell me why a body corporate. Body corporate means any company or any other organization established under the statutory provisions of any act, like banking regulation has banking companies, insurance companies, all these are included under body corporate. Body corporate is a broader word, and corporate company is a narrower word. Company means only those companies which are registered under Companies Act 2013, and body corporate means those companies which are registered under 2013 plus any company which is formed under any statutory provisions of law, which means banking companies, insurance companies, finance companies, NBFCs, any kind of companies which are statutorily prepared. Okay. Yes, Ghoshal Dake. Very good, Ghoshal Dake. Very good answer. So why body corporate is not allowed to do cost audit? Because it has a separate legal entity. It is a separate legal entity. There's a corporate wheel between body corporate, a company, and its shareholders or the owners. So owners cannot be held responsible for the errors done by the company, and that is the reason why body corporates are not allowed to do audits of any company, be it statutory audit or cost audit. other than LLP or partnership firm. So LLP and partnership firm is allowed to do the audit. Now guys, limited liability is still limited. Partnership is also limited liability. Okay, their partners are also not eligible for unlimited liability. Then why they have been permitted to do audit? Because guys, they always have one partner who has unlimited liability, which is the designated partner. Designated partner always have unlimited liability, and that is why even when limited liability partnership has got word limited in it, even then this company, this particular firm is eligible to get its to do its audit. Okay, so LLBs are okay. LLB audit can be done by an LLB. Body corporate cannot hold trust position individually. Neha Bhere, very good. Neha Bhere, very good. He shall not be an officer and employee of the company. Now, the second requirement is that auditor cannot be an officer or employee of the company. Because if auditor is an officer or an employee of the company, then guys, that person holds office of profit. He's an officer or employee of the company, then he will be biased towards the company. So he cannot be an officer or employee of the company. Next is, he shall not be in partnership or in employment of an officer or employee of the company. So neither the officer and employee of the company is eligible, nor the partner of officer or employee of officer can be auditor of the company. So officers and their employees and partners are also restricted from doing the cost audit. Again guys, independence threat. We don't want any a person who's closely linked with the company, who has office of profit in the company, to audit our company. Okay, he, including his relatives, shall not be indebted to the company. So a person who's not indebted to the company or its associates, company or its associates. Associates means the group companies, okay, for an amount exceeding 5 lakh rupees. So indebtedness should not be there if you want to be an auditor, okay. Then he shall not be holding any security or any interest in the company. However, his relative may hold security up to face value of rupees 1 lakh. So auditor himself cannot hold shares even worth 1 rupee. But auditor's relatives, auditor's wife, auditor's mother, auditor's children, auditor's uncle, auditor's brother, they can hold securities worth rupees maximum face value of 1 lakh rupees. Face value is important over here. Face value should be maximum 1 lakh rupees. He shall have not given any guarantee or provided any security in connection with the indebtedness of the third person to the company. So that person should not have given any security or guarantee on behalf of the company. Okay, that is also very, very important. Neither the person should be indebted to the company, nor had he given any guarantee to the debt of the company. So for example, there is a company who's taking a loan. Mr. A gives guarantee on behalf of the company that if company doesn't pay, then Mr. A will pay. So Mr. A here becomes linked to the company. So Mr. A cannot be the auditor of the company. Mr. A cannot be the auditor of the company. Very, very important provision. He shall not have business relationship with the company. Any kind of activities which are prohibited. We will see what is this activities which are prohibited under the @ sign. He shall not have any business relationship with the company. He should not be providing any restricted or prohibited services to the company if he wants to be the cost auditor. He shall not be relative of director or employee of the director or key management personnel. So, key management personnel or the top management of the company, he shall not be any relative of the director or employee of the director. Okay. So, relative is also prohibited in case of director, and employee of the director is also prohibited from auditing the same company. He shall not be in full-time employment elsewhere. So he should not be in employment elsewhere. He should not work anywhere else. Okay, because then there'll be a threat. There'll be a threat between the two companies. So he shall not be in full-time employment anywhere. He shall not exceed the ceiling on number of audits. The number of audits, which is 20, he shall not exceed that ceiling. He shall neither be internal auditor of the company, non-current auditor. So internal auditor, he cannot be an internal auditor. He cannot even be a concurrent auditor. Concurrent auditor means auditor which is required to get audit of banks done. Concurrent means on a regular basis the auditor is going. Okay, because guys, both of these situations will lead to a threat which is self-review threat. Self-review threat means if an internal auditor would do the internal audit and come back as a cost auditor again, then there's a self-review threat. He's reviewing his own work. He has already performed internal audit of that particular company, and now he's reviewing his own work. That will lead to self-review threat. So the internal auditor or concurrent auditor cannot be the cost auditor of the companies. That is the requirement. Self-review threat is there in case of these two things. He shall not be engaged, whether directly or indirectly, as on date of appointment in consulting specialized services as provided under section 144. So 144 is a limiting section, guys, which limits the kind of services which auditor can perform along with doing cost audit. When an auditor is doing cost audit, he cannot do certain things which are listed under section 144. So 144 is a limiting section. He shall not be convicted by court for any offense involving fraud, and a period of 10 years has not elapsed from date of such conviction. He shall not be convicted by a court for any kind of fraud. If he is convicted by a court for any kind of fraud, then he has to give a cooling off period of 10 years. So next 10 years, he will not be able to do cost audit of any company. Sir, we can't be in employment of X Limited and auditor of Y Limited, which are completely unrelated parties. Very good. We cannot be. Very good. Neha Behre, yes, you are absolutely right. If we are in employment of X Limited, we cannot be auditor of Y Limited. We cannot be, because if you are in employment, then that means that you are not holding COP, certificate of practice. And if you're not holding certificate of practice, then how can you do audit? You cannot do audit. Yes. Body corporate cannot be held trust position individually. Very good. Separate legal entity, so lack of responsibility. Perfect. Perfect, guys. Good. आरती जैन says कितने आवर्स चलेगा? जितने आवर्स चला पाएंगे उतने आवर्स चलेगा. आज तो बस आज जाने की जिद ना करो, यूं ही यूट्यूब पे बैठे रहो, आज जाने की जिद ना करो. भाई अब तो समय ऐसा स्टार्ट हो गया है, हमारा एकदम पीक सीजन स्टार्ट हो गया है एग्जाम से पहले, तो अब आपको घंटे गिन के तो पढ़ाई करनी ही नहीं चाहिए. The students who ask me, sir, how many hours should we study? Don't ask this question from me. Don't ask this question from any person in the world. Ask this question from yourself. How many hours do you study? Are you required to study when you are in CMA final, when you are at the last step of CMA final, and when the next step is that you are going to get a professional degree that is going to benefit you immensely? You ask yourself, how many hours can you put in a particular day? A particular day has 24 hours. Whatever best you can do, do that. Never ask this question at this critical stage from anyone. How many hours should we study? No, there's no demarcation. There's no counting of how many hours should you study at this point in time. Guys, study as much as possible. Give your heart and soul to it, because you are going to get amazing, amazing benefits out of it. So give your heart and soul to it. Yes, yes, guys. Okay, so he shall not be engaged anywhere in the specialized services. 144, he should not be given, and he should not be convicted by court for any fraud. Okay, so there are certain business relationships which are prohibited. For example, there cannot be any commercial transactions between the auditor and the company. There cannot be commercial transactions. So if I'm the auditor of the company, I cannot supply cement to the company as well. Okay, if I'm auditor of the company, I'm only the auditor of the company. Okay, associates means the group companies. Then there are 144 special services, 144 services. You should be aware about these services. Just read this list. If you are providing these services to the company, you cannot be a cost auditor of that particular company. This is the list. Okay. Okay, sir. Okay, let's finish this particular part. Okay, this you are going to do this. I'm not going to do this. You are going to do this. Okay. DIY. You need to answer these questions. Mr. A, practicing cost accountant, is holding securities of XYZ Limited having face value of 900 rupees. Whether Mr. A is qualified for appointment as cost auditor or not. Yes or no? Yes or no? Supreet Saluja says, your motivation is all we need. Yes, I am here for the motivation as well as the teaching. Sir, आप singing भी अच्छी कर लेते हो. Okay, thank you, Neha Behre. Okay, first question, please answer, guys. A practicing cost accountant is holding securities of XYZ Limited of only 900 rupees. Hardly matters. Huh? Is he qualified? Can he be appointed as the cost auditor? So the limit is 1 lakh, no? 900 hardly matters. It's like peanuts, so small. 900. Is he qualified for appointing as a cost auditor? Please write a yes or no in the chat box. Is he qualified? Answer is no, he is not qualified. Because as a cost auditor, even if he's holding 1 share, that is prohibited. No, he is not qualified. Answer is no. Okay, B. Answer it, please, guys. B. Mr. P is a practicing cost accountant, and Q, the relative of P, is holding securities of ABC Limited worth face value of 90,000 rupees. whether Mr. P is qualified from being appointed as the auditor of ABC Limited. For relative, it is 1 lakh. Very good. So now in this case, guys, relative of auditor is holding securities worth face value of 90,000. Whether he is eligible or not, yes or no, please write in the chat box. B part, yes or no. Perfect, perfect. Ghoshal Dake has got the correct answer. Yes, he is qualified because for relatives the limit is 1 lakh rupees. For relatives the limit is not 0, but the limit is 1 lakh rupees. So relative can hold securities worth 1 lakh rupees, and this relative is holding securities only worth 90,000 rupees. So yes, he is eligible. Yes, he is eligible. Perfect answer. C. C. Mr. RM and company is an audit firm having partners CMA R, CMA M. Okay. Have offered the appointment as an auditor of ENN Limited for financial year 16-17. Mr. B, the relative of CMA R, okay, is holding 5,000 shares of rupees 10 each, having market value of 1,50,000. Oh, market value is 1,50,000. Although he's a relative, but he's holding shares worth 1,50,000. Whether Mr. RM company is disqualified to be appointed as the auditor. Please tell me yes or no. Whether they are disqualified from being the auditor, yes or no. I'll expand the document a little bit so that you can see it properly. Okay, see it properly, guys. Whether he is disqualified from being appointed as the auditor, please write yes or no in the chat box. Yes or no. Answer is no, no, no. Yes, face value is considered. Market value is not considered. Very good answer by Ghoshal Dake. Yes, perfect answer, guys. So, no, he is not disqualified. No, no, not disqualified. Why not disqualified? Because face value is seen, market value is not seen, and face value is 50,000. The limit is 1 lakh. It is much below 1 lakh. Face value is 50,000. Face value is seen, market value is not seen. Market value is 1,50,000. Okay. Market value is irrelevant. Perfect, 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 guys. Very good answer by all of you. Very good answer. Okay. Now let's see what are the powers of auditor. What are the powers of cost auditor? So as powers of cost auditor, number one is right to access books and vouchers at all times, whether kept at head office of the company or elsewhere. So cost auditor has the power to access books of accounts and the relevant documents at all times. Guys, in the chat box, does it mean that auditor can knock the doors of CFO's home at 12 midnight and ask him to give the books of accounts to the auditor? Does it give this power to the auditor as well? Right to access books of accounts and vouchers at all times. It's written at all times. So can he knock the doors of the CFO's home and tell him to give the cost records and cost sheets at 12 midnight? Is it possible or no? Answer is no. It is not. Rekha Chaudhary is right. Answer is no. No, correct. Because it's specifically written. Books are kept at head office. You cannot go to CFO's home to get the books. They're kept at head office. And yes, at all times means there's a reasonable interpretation to it. At all times means during working hours of that particular company. During working hours of that particular company. Yes, during business hours. Perfect. To inquire, obtain any information from the officer as he considered necessary. So whatever information is required to be gathered, that information is to be gathered by the auditor within reasonable times. To gain access to the information and data required for cost audit, such a cost accounting rules. So to gain any information, access any information like cost accounting records, statement, annexures, pro forma, all these things can be done by the cost auditor. So these are the powers of the cost auditor. Cost auditor can obtain all such things from the company to do its cost audit. Okay. Then guys, what are the penalties for not compliance with section 141, 143, 144? What are the penalties? Very, very important, guys. Section 147, penalties for non-compliance. Okay. Penalties are, in case of cost auditor, if default is done by a cost auditor, then the penalty is for unknowing default, rupees 25,000 to 5 lakhs. For knowing or willful default, rupees 1 lakh to 25 lakhs. Now, this you have to prove that was the default knowing or unknowing, okay? Because the penalties are different for knowing and unknowing defaults. Where cost auditor is convicted, he or she shall also be required to refund the remuneration received by him to the company and pay damages, if any. Damages are required to be paid and the remuneration is required to be refunded. Then if the default is on part of the company, then company has to pay a fine of 25,000 to 5 lakh rupees. And if the default is on part of any officer of the company, any officer of the company means the CFO, the cost director, the cost manager, the costing in charge, all these are the officers of the company, the relevant people who handle the cost records and cost audit. They are the relevant people. Okay. So the timetable of revision classes, every day the class will be held from 9 p.m. onwards till the time we complete that particular chapter. Okay. So that is the timetable. There's no specific timetable. Sir, if business conducted at night, then can auditor inspect such in night at registered office? Yes, Neha Bhere. If the business hours are night hours are also there, if the company works in night only, okay, and the finance department comes in night only, then your books of accounts shall be accessible at night as well. You can do it. In case the default is done by any officer of the company, which means the CFO, the costing director, the costing manager, the default is done in that way, imprisonment for 0 to 1 years and fine of 10,000 rupees to 1 lakh rupees fine is there for this kind of a default. Now, duties of the cost auditor, of course, guys, if there are powers which are given to cost auditor, then there are duties also which are which the auditor should take care of. There are duties also which the auditor should take care of. Number one, to ensure that proper books of accounts are maintained by the company. Auditor must make sure that proper books of accounts are maintained by the company as per the rules and cost accounting standards. As per the rules and the cost accounting standard, proper books of accounts should be maintained by the company. That is the first thing that the auditor should ensure. Number two, he is duty bound to verify the returns of those branches which are not visited by him. So any branch is there, the auditor has not visited that branch. Even then, guys, the cost records, the cost accounting sheet, the cost accounting records, the annexures, the documents, everything should be reviewed by the auditor. Auditor cannot say that, oh, that was a small branch, that's why I didn't visit it. If the fraud has been unearthed from that branch, I'm not responsible. No, auditor is responsible for that branch also, which he did not visit. To ensure that cost audit report and detailed cost statements are in the form prescribed in the rules. So rules are giving you certain formats in which the cost accounting records and cost accounting data should be fed in. So auditor should ensure that all the cost records are in that format itself. To ensure reasonableness of assumptions and basis of allocation, absorption of indirect expenses are done as per the established standards. The established standards are cost accounting standards. So the auditor should ensure that whatever absorption costing has been taken into place, whatever indirect expenses have been absorbed in the cost sheet, that are as per the cost accounting standards which are prescribed by the institute. And yes, in our revision class, we will take up all the 24 standards in great detail, guys. Great details, we are going to get into it. To qualify the report, in case there is any need. So qualification means the report should be, dented with a statement that these are the problems in the financial statements or cost statements of the company. So qualification should be given in the cost audit report if any thing is required to be mentioned over there. Then sending cost audit report to the company within 180 days from the end of the financial year. So as soon as the financial year ends, within 180 days of the end of the financial year, cost audit report should be submitted to the company, not later than 180 days from the end of the financial year. Appointment of auditor is done within 180 days of the commencement of the financial year, and cost audit report should be done within 180 days of end of the financial year. That is the very important requirement. Okay, sir. And the next topic is audit risk. Yes, what do you mean by audit risk? Guys, audit risk means the risk that the expression which is given by the auditor is incorrect. Okay, if the auditor is saying that yes, everything is correct and the thing is not correct, that is audit risk. So what is audit risk? So you'll understand it by taking one example. Okay, what do you mean by risk? What do you mean by risk? Risk means that whatever you don't want, that thing happens. That is risk. What do you mean by risk? Risk means whatever you don't want, that thing happens. And what is audit risk? Audit risk is that whatever you don't want in audit, that happens. And what you don't want in audit? I don't want to give a incorrect view in audit. And by chance, you give only incorrect view in the audit. That is audit risk. You're not able to catch hold of fraud. You're not able to catch hold of error. You're not able to catch hold of miscompliances in the cost statements. That is the risk in audit. So audit risk means the risk that cost auditor expresses an inappropriate audit opinion. Cost auditor gives a wrong audit opinion. That is the audit risk. Towards the cost statement, that is the audit risk. An incorrect audit opinion is given by the cost auditor, that is the audit risk. In other words, audit risk is the risk that cost statements are materially incorrect. Cost statements are incorrect in a major way. Materially means in a major way that hampers the decision making of the company. though the audit opinion states that financial reports are free from material misstatement. So audit report is saying financial statements are fine, they are all good. However, there is some material misstatement in the financial statement. That is the audit risk, which means the auditor has missed out on some point. Auditor has not done the scrutiny well. Auditor has not done the checking well. That is known as audit risk. Okay. Probabilities of uncertainties to happen. Supreet Saluja, very good answer. Very good answer. Uncertainty. Ankita, very good answer. Perfect, guys. Perfect. So audit risk are of two types, guys, or three types. Audit risk are of three types. Please learn this well. This is an important element of our syllabus, guys. Audit risk is of three types. Number one, inherent risk. Number two, control risk. Number three, detection risk. These are three types of audit risk. Once you add on all these audit risks, then it will give you the complete audit risk. And these two audit risks, which are inherent risk and control risk, these two combined together will give you risk of material misstatement. This is also known as ROMM. ROMM, risk of material misstatement. So risk of material misstatement arises from these two risks. And if you combine all three risks, then it will give you audit risk. Now let us see what are these three risks which are there in audit. Okay. Let us see what are three risks which are there in audit. So yes, guys, how's the Josh now in the room? We are still more than half a century strong people in the room. How's the Josh, guys? Please write in the chat box. And yes, do like the video if you are liking this session. And if you want me to continue this session, because your love, your appreciation, your support, your wholehearted affection will motivate me to get these tests, get these series of marathon up and running, guys, up and running. Full sir, hi sir, Ankita says. Ajnas says, great sir. Neha says hi. Pooja says hi. Wonderful. So there are almost more than 60 people in the room, and I'm getting answers only from 6. What are the rest people doing, huh? If business is conducted at night, then we can. Okay, got it. Yes, very interesting. Hi. Pawan K. Jagdap says hi. Okay, all right. So, guys, there are three kind of audit risk: inherent risk, control risk, detection risk. First is inherent risk. What do you mean by inherent risk? Inherent risk means these risks are forming the core of our financial statements or the accounts which we are auditing. This is the inherent in the accounting code itself. It is inevitable. We cannot do anything about it because these risks are there in the account head itself. These are there in the financial statements itself. We cannot do anything about these inherent risks. And what are these inherent risks? Inherent risks are whenever we are preparing a provision and making an estimate of the expense. Guys, while preparing that provision and making an estimate of that particular expense, we can do an error in calculation. Calculation can go wrong in estimate. It is just an estimate. Whenever you are making a provision for expenses, it is just an estimate. You can go wrong there. Provision for bad debt, you can go wrong there. So there's an inherent risk in such accounts which can make them wrong, which can make them incorrect. And we cannot do anything about it because it's just an estimate. It can go wrong any point in time. We have very little control on these inherent risks. So yes, company is saying we have a provision for bad debt of 2 crores. But you never know. Actual bad debts come out to 4 crores or 6 crores, or they come out to 50 lakhs or 5 lakhs. You never know. So these are such accounts where the risk is inherent. It is present inside the account itself. We cannot do anything about it. That is inherent risk. Risk of expressing inappropriate opinion due to certain inherent features present in the accounts of financial statements, like complexity of clients, nature of business or transaction. The transaction are very complex. Complex calculations are there which can be misstated. Okay. Transaction involving high level of human judgment, where we are judging something. Okay. So when we are valuing complex derivative instrument, then judgment is required, estimate is required. When we are estimating anything, we can go wrong, guys. We can go wrong. Undoubtedly we can go wrong. So that is inherent risk. Number 2, control risk. What is control risk? Control risk is what are controls, internal controls. So inherent risk is systematic risk. Okay, Goshal says. Okay, Neha, where inherent risk cannot be avoided, however we can reduce it. Yes, we can reduce it. It cannot be fully avoided. Goshal says timing of marathon is perfect for working folks. Thanks a lot. Yes, it has been decided as per the working force. This session will be recorded on YouTube. Okay. So control risk. What do you mean by control risk? Control risk means that inappropriate audit opinion will be expressed despite of the fact that controls have been installed in the company. Controls are there in the company. Despite of that fact, the audit can go wrong. So, auditors rely on controls a lot. What do you mean by controls? Controls are the checks and balances which company puts inside the organization to test that transactions are working well. They are known as controls. And if the controls are working fine, then auditor will employ less auditing procedures on those financial statements or those account statements, if the controls are working fine. So auditor will evaluate the controls which are there in a particular transaction and will employ lesser amount of auditing procedures in those accounts where the controls are strong. Now suppose auditor concludes that the controls are strong, but they're not that strong. What are controls? Controls are ways of checking a particular transaction. For example, if expense worth 5 lakh or above will be done by the company, it will be signed only by the MD, managing director. This is a control to check that no hanky-manky stuff goes on in the business and no money is ripped off from the business. This is a control. 5 lakh rupees above expense shall be signed only by the MD. Now, what if the MD himself breaks this rule or policy? He tells his general manager, oh, you please sign the check. I am not available. You sign the check. That's okay. What if this happens? This is a lapse of control. And if there's a lapse of control, then auditor has to be extra vigile. Auditor has to be extra cautious. So what is control risk? Control risk is that, we express an appropriate audit opinion which will not be prevented or detected or corrected by entities' internal operational management controls. So even when controls were there, then also the fraud is not detecting. Why? Because the internal controls are overridden by management. The controls, the worst part about controls is that internal controls are overridden by the management. Management can easily say that, oh no, we are not following the controls. So that is the control risk, that weak internal controls are established, which are very weak. Secondly, management is overriding the internal controls. Management is covering the internal controls. Because of these two factors, controls become weak, and this leads to auditor being confused about the control effectiveness and taking the wrong decision. That is control risk. Okay, both of these risks combined together is known as risk of material misstatement. Last is the detection risk. Detection risk is entirely auditor's responsibility, guys. Okay, auditor has failed to employ good audit procedures. The audit procedures which auditor has employed are incorrect, are not good. He has failed to employ good auditing procedures. That is the detection risk. Auditor has not been able to employ good auditing procedures. He has employed auditing procedures which are not correct according to the nature of the company, according to the transaction of the company. The auditing procedures are not correct. That is known as detection risk. Auditor has not been able to put appropriate auditing checks and balances. It is problem of the auditor. So there are three things which are very, very important, guys. Nature, timing, and extent of audit procedures. NTE. This is known as NTE. So whatever audit procedure auditor is appointing, that audit procedure should be appropriate according to the nature of the transaction. Timing should be perfect, and extent. Extent means what is the sample size that we are going to take. Auditor has to make sure that the auditing procedure is perfect. So I'll give you an example. Inventory valuation is always done at the end of the year, which is 31st March 2023 or 24, whatever it is. Okay. Audit count, audit inventory count should be done on 31st March itself. Now it is auditor's mistake if he does the audit, if he does the stock count on 30th April. It is mistake of the auditor. Auditor has done wrong. He will never be able to accurately compute the value of inventory if he has done the stock take on 30th April. Because inventory is to be reported on 31st March only, or beginning of the year and end of the year. So if you do stock count at the end of 30th April, not effective, not good, you are doing wrong. So when auditor himself does some wrong procedure, he himself does some incorrect activity, which makes his opinion incorrect, that is known as detection risk. That is known as detection risk. So detection risk is the risk that audit procedures followed by the auditor will not detect a material misstatement. Audit procedures are incorrect. It will not detect a material misstatement. It will not catch hold of a material misstatement. That is known as detection risk. Detection risk cannot be reduced to zero. So detection risk cannot be reduced to zero because the auditor usually does not examine all of the cost heads and disclosures. Detection risk relates to the nature, timing, and extent of auditor's procedures that are determined by the auditor to reduce the audit risk to an acceptably low level. We can reduce the audit risk, but we cannot make it zero. Okay, that is known as audit risk. Okay, so these are the three elements of audit risk, and the ultimate result of audit risk is that you will give a wrong opinion. That is the inherent risk, control risk, detection risk. And if you do not take care of these risks, then your audit opinion can actually be absolutely wrong. Audit opinion can be wrong. This is known as audit risk. Okay, guys, so this was the chapter of basics on audit for all of you. And yes, I'll be uploading this PDF in the Google Drive. I'll be sharing the link on the description. Okay, I'll be sharing the entire link on the description. So guys, this was the chapter on basics of cost audit for all of you. And yes, this marathon series will continue for the entire syllabus. In very short span of time, I'll be revising all the important topics of your entire cost and management audit paper. And yes, theoretical as well as practical, both the aspects I'm going to deal with in this particular session, guys. So please be with me for a couple of next few days, and we'll be finishing the entire cost and management audit at a very, very high speed and a very, very short span of time. We'll be covering all the aspects of the important aspects of cost and management audit in this test series, in this marathon series, which will continue for a few days now. Timing will be constant, 9 p.m. daily. Okay, Monday to Friday. Saturday, Sunday, the marathon will not be there. Monday to Friday, all days marathon will be there. If there is any emergency whereby I'll not be able to take the marathon, I will put it in the communities tab. So please keep a tab of communities tab. I'll be putting over there that today, due to some reason, marathon class will not be there. But otherwise, the timing is fixed. Monday to Friday, 9 o'clock in the evening, we'll be meeting for the marathon class of cost and management audit. And yes, this particular subject is going to give you marks that will benefit you in the entire group or the entire CMA final, because benefit of set off will be given by this particular subject to you. Cost audit and BVM SPM, these are two subjects, guys, which will give you benefit of set off. Benefit of set off will be given to you by these two subjects. If you like this marathon series, and if you want me to continue with this marathon series, guys, please hit the like button. Okay, like button, please hit before you go. And yes, we'll be meeting in our subsequent sessions. So yes, let's first of all, before we call off the session, please hit a like button, and let's see how many of you have liked this particular video. The next speech we have got are even less than 200. Not fair at all, guys. Not fair at all. Like should be actually more now. We should target a little more likes. And yes, you can do it. You can definitely do it, guys. All right, guys. So this was today's session, and we'll be meeting in our subsequent sessions with more cost audit provisions. And yes, we'll complete it in our marathon series. So yes, we'll be meeting tomorrow. All the very best and happy studying. Bye-bye. See you in the next session. We are going to start the second chapter, and yes, the most important chapter of your syllabus, guys. Very, very important from a practical standpoint as well as from theoretical standpoint. The most important chapter of your syllabus, chapter number 2. That is what we are going to start today. So quickly, guys, please write in the chat box, how's the Josh for the upcoming examination? Are we all set to rock CMA final group 4 examination and have those 3 alphabets before our name, CMA? Are we all set? How's the Josh, guys? Please comment in the comment section. Yes. Shreya Ghate, Yogesh, Vishal, Manisha, Tejasvi. Yes, we all have amazing Josh and full high. We are full on energy, guys, because yes, quick time check. For the examination, guys, time is very, very less now. Approximately even less than 1.5 months to go for your examination. So yes, we need to gear up. We cannot afford now to leave even 1 hour wasted. Even 1 hour we cannot afford to waste in our preparations tree. So yes, an amazing time to put in our heart and soul. Okay, put in 100% to this goal called CMA, and yes, we'll be able to achieve this goal very, very, very easily. So yes, let's start today's session, guys. And today's session is dedicated to companies, cost records, and audit rules 2014, the most important rules of your syllabus. And yes, from this particular chapter, you can easily expect questions worth 15 marks in your examination. 10 to 15 marks dedicated to this particular chapter. And what kind of questions can be asked? Theoretical as well as practical. Both kind of questions can be asked. Theoretical as well as practical questions both can be asked. सर ऑफिस के बाद एनर्जी लो रहती है, लेकिन चलेगा मेरे को, बिकॉज हमें बनना है CMA. यस, बिल्कुल चलेगा. एनर्जी को लो रहते हुए भी पढ़ाई करना है, हमको अच्छे मार्क्स लाना है और एग्जाम में क्वालिफाई करना है. So let's start. Companies Cost Records and Audit Rules 2014. Guys, yesterday while studying section 148, now let me ask you, okay, what is section 148 1 for? Please comment in the comment section. Let me see how many of you have seen yesterday's marathon. Section 148 subsection 1 is for what? What is the purpose of the section? Section 148 subsection 1. Let me see in the comment section. What is your answer to this question? Although I still have group 3 to clear later, I always dream of seeing myself with that title every day. Yes, Abhishek, amazing, amazing. Okay, guys, yesterday we studied one section, 148.1. Please comment in the chat box. What is the subject matter of that subsection? Subsection 1 of section 148. Perfect. Tanisha Jain is wrong. Tanish Jain is wrong. Perfect. Rest everyone is absolutely fine. Joshika, Alagu, Ajnaz, Arti, Lavanya. Cost records. Very good, guys. Very, very good. So cost records, who should prepare cost records? That is section 148.1. And yes, Aarti has answered my next question. My next question was, what is section 148 subsection 2? Aarti has already answered it. It's cost audit. Perfect, guys. So guys, these are the rules which are related to two things, cost records and cost audit. Who shall prepare the cost audit? Who shall get the cost audit done? Who shall prepare the cost records? Everything will be clarified under these rules, and these rules are amended up till 2019, which are there in your syllabus. So these are 2014 rules, but amended till 2019. So you can actually, you have to actually do all the amendments which have come by in these rules up to 2019. So let us start this session by giving you a brief history of cost records and cost audit rules which were existing prior to these rules. Guys, earlier cost audit was ordered on a company basis, which means that individual companies were selected and those companies were instructed to get their cost audit done. So this company-based cost records and cost audit scenario was changed to industry-based cost records and cost audit scenario, which means now a product will be identified and everyone who's making that particular product will be asked to prepare its cost records, of course, subject to certain monetary threshold limit. So in earlier scenario, only a few companies were selected for cost audit purposes, and they were named in an order that these are the names of the companies whose cost audit is required to be done. Now, no such order comes from the ministry. You have been given monetary thresholds. If your turnover is above those monetary thresholds, you will be required to get your cost records prepared and get your cost audit done. Okay, so this is a brief history of these cost records. All right, let's start the cost records rules, cost records and audit rules. And yes, rule number 1 is the title. Title is Companies Cost Records and Audit Rules 2014. That is the title of this rules. Rule 2 are certain definitions, and these are very straightforward definitions, guys. So you can do it yourself. Now we come on to the most important rule, rule 3. And guys, rule 3 corresponds to section 148 subsection 1, which is cost records. Now you must be wondering since yesterday, what are those companies who are required to get their cost records prepared? What are those companies in whose case cost records are required to be prepared? All your answers will be answered today in rule number 3. So in rule number 3, we are going to see what are the companies, what are the situations, what are the scenarios in which cost records are mandatorily required to be made. So what are cost records? Cost records are comprised of 3 things: utilization of material, utilization of labor, and other item of cost, which cumulatively directs you to cost sheet. So you need to prepare cost sheet and the supporting annexures, supporting ledger accounts, supporting details of the balances. You have to prepare all these things. That will be termed as your cost records. So cost records, applicability of cost records. Rule 3 is the rule where application of cost records are required to be analyzed and required to be seen by you. So cost records. Now, any company, including a foreign company, please note each and every word. Each and every word of this rule is very, very important. Very, very important. Okay. Any company, including a foreign company, engaged in production of goods or providing services. So any company, which means the section is wide open. It is applicable to any company, including a foreign company, which is engaged in production of goods or providing services. So 2 mandatory things which are required to be fulfilled are: you should be producing certain goods, you should be providing certain services, which are specified under the tables below. No, not every goods and services, but only those goods and services which are specified in the tables below shall be required to prepare cost records for such products or services in their books of accounts. It is mandatory that for these products, the products which are listed over there, for these products, you need to mandatorily prepare cost records in your books of accounts. Now, what are these products. So guys, these products are divided into two parts, category A and category B. Category A is the regulated sector, which means that this sector is bound by some law. This sector is bound by some legal provisions, by some ministry, or they are regulated by Government of India directly. So there are two tables. Table 1, category A products, which are regulated sector. These sectors are regulated, or these are these are led with compliances by the Government of India. What are these sectors? Telecommunication sectors, including transmission, reception of signs, signals, writing, images, sounds, or intelligence of any nature, or broadcasting services. So guys, this is a very wide category, where even if you are broadcasting pictures, which means Instagram, okay, or Snapchat, or any kind of social media platform where you are exchanging images, sound, or intelligence of any nature, broadcasting services is categorized under this particular section. So even your WhatsApp will be categorized under this particular section. So everything which is related to broadcasting of signs, signals, sounds, image, movie, anything that is covered under this this provision. Telecom Regulatory Authority of India, which is TRAI, is the responsible act. Next is generation, transmission, distribution, and supply of electricity. Very, very, very important regulated sector, guys. If you are into generation, transmission, distribution, or supply, there are four things which are included in the section. If you are doing any one of the four activities with respect to supply of electricity, be it generation, be it transmission, be it distribution or supply, you are eligible to prepare your cost records. The next is petroleum products. Again, eligible to prepare your cost records. Drugs and pharmaceuticals, fertilizers, sugar, and industrial alcohol. These are the regulated sectors. So if you are producing any one of these category of products, then subject to the monetary threshold, you are required to prepare your cost records. And what are cost records? Cost records are the records which are required to be maintained as per the cost sheet. Okay. And one very amazing shortcut trick told to us by Aarti Jain, Tease PDF. Okay, so shortcut is Tease PDF. TEAS PDF. This is the shortcut trick by which you can remember these all these provisions, guys. So this is telecommunication, generation, transmission, distribution of electricity, petroleum products, drugs, pharmaceuticals, fertilizer, sugar, and industrial alcohol. Okay. And yes, guys, from this particular aspect, examiner is not going to ask the entire section, the entire list of services or goods, but is going to ask specific questions from this particular type. Okay. Now comes the second category of goods, category B, which is the unregulated sector, which means that this sector is free from any regulation from Government of India, and this particular sector has no regulations which they are bound within their production capacity. So their production capacity is not bound, their selling capacity is not bound, their marketing is not bound. They are not bound by anything. So these are unregulated sector, and there are 33 industries which are specified under this unregulated sector. So what are these 33 industries? These 33 industries are machinery, mechanical appliances used in defense, space, atomic energy. Okay. Now even the companies which are engaged in any item or supplied exclusively for use under this clause shall be deemed to be covered under this rules. Now, very, very important inclusion, guys. So all the companies which are producing something which is exclusively used in defense, space, atomic energy, etc., then guys, those companies are also covered under this particular category. So there's a company which is preparing defense equipments. There's another company who's supplying some goods to defense equipment exclusively. Then that other company will also be falling under this category. That is the rule. So turbojets, turbo propellers, arms, ammunitions, explosives, propellant powder, prepared explosive other than powder, safety fuses, detonating fuses, percussion or detonating caps. So guys, you do not need to remember or mug up each and every word. You just have to read these entire list thrice, and you'll be able to identify in the examination if the examiner asks you. However, examiner generally doesn't ask these names of these products, but if it asks you, it will click you. So do not try to mug up this entire list of products. It is virtually impossible to mug up this entire list of products. Okay, sir. So next is radar apparatus, port services of stevedoring, pilotage, etc., etc. All these are covered under the category of unregulated goods. Iron and steel, roads and other infrastructure projects, rubber, allied products, coffee, inorganic chemical, etc., etc. So you can, you can cover this entire list properly. And yes, you need to read this entire list. One very amazing section, guys. Health services, namely functioning, running of hospitals, diagnostic centers, clinical centers, test laboratories, etc. Exclusions are companies running hospitals exclusively for its own employees are excluded from this category. So if you run a hospital but only for your employees, you are excluded from this category. Second one, companies engaged in running of beauty parlors and beauty treatment. So very, very good news for all the girls out here. For all the girls, beauty parlor and beauty treatment is exempt from cost records. So naturally, they'll be exempt from cost audit also. So beauty parlors, beauty treatment is not covered under this category. Education services are covered under this particular category. Okay, milk powder, insecticide. So you can read this entire list. This list is very, very important from an exam standpoint. Okay, one very important thing which you need to note at this point in time, guys. Please note the category 33rd. Please note the category 33rd. Okay, please note this category 33. So guys, generally the cost records are applicable only where you produce a particular product. They are not applicable where you are just trading in a particular product. However, in clause 33, production, import, supply, or trading. This is the only category out of the 33 categories which includes trading as well. So in this particular category, guys, even when you are not manufacturing these medical equipments, even when you are not producing these medical equipments, but even if you are just trading in these medical equipments, you will be eligible for cost records. One very, very important thing to be noted in clause number 33. Please underline it. Please, wherever is your notebook or wherever is your book, whichever book you are referring to, please underline this particular part. Exclusions, the rule is not applicable, which means cost records are not applicable. Cost records are not applicable to foreign companies having only liaison office in India. Liaison office means the office which does only marketing function in India. So a foreign company which is having only liaison office in India with respect to product category 33 above, this category, guys. So if you have a foreign company which is having a liaison office in India with respect to product 33, it is exempt from cost records, even if it is producing any of these things. It is trading in any of these things. Second is micro enterprise or small enterprise as per the MSMED Act. So MSMED Act is an act which safeguards the interest of small enterprises and mini enterprises. That act permits the companies to pay on time. It requires commitment from the companies to pay on time to these MSMEDs, to these small and medium enterprises. So guys, in this particular act, whatever is the definition of micro and small enterprise, they are exempt from preparing the cost records. The exemption has been granted to them. There's a definition of MSMED, what is micro, what is medium, given under this particular table. Okay, now what is the monetary threshold for rule 3? This is a very, very important point, guys. Very, very important, and I need to read each and every word of this particular line very, very carefully. So monetary threshold for applicability of rule 3, table A as well as table B products, is that the overall turnover of the company, please underline this word. This word is very, very important. The overall turnover of the company from all the products and services during immediately preceding financial year is 35 crores or more. Now, very, very important point, turnover from all the products of this particular company. It is not only those products which are specified under table A and B, but is all the products which are covered under which are produced by the company. Total turnover shall not exceed, if it exceeds 35 crores, then cost records is applicable to them. Okay, 35 crores or more, then cost records is applicable to them. Overall turnover of the company should be 35 crore or more. Okay, now let me give you some examples, and you need to actually tell me in the comment section whether cost records are required to be prepared in this case or not. Okay, I'll give you certain examples and you tell me whether cost records are required to be prepared or not. There is a company X. Okay, it produces product X, product Y, product Z. Okay, product X is table A product. Product X is table A product. Product A is purchased and it is sold worth rupees 25 lakhs. Product Y is being sold at as 15 crores. Products Z being sold at 20 crores. Whether cost records will be applicable in this case or not. Whether cost records will be applicable in this case or not. I have product X, table A product. Product Y, no table. Product Z, no table. 25 lakhs is product X, product Y is 15 crores, product Z is 20 crores. Whether cost records will be applicable in this case or not. Yes or no? Yes or no? Very good answer. Yes. Perfect. Yes. Perfect. So guys, we will see the total turnover of the company. And total turnover of the company is 35.25 crores. 35.25 crores is the total turnover of the company. So it is exceeding 35 crores. Of course, yes, cost records are required to be prepared in this particular case. Cost records are required to be prepared in this particular case. Now, my next question to you is, please listen to my next question very, very carefully. Please listen to my next question very, very carefully. Cost records are required to be prepared for which of these products? Product X, product Y, product Z, or all of them? Yes, you are right. Cost records are required to be prepared. Cost records is applicable. My next question is, which of the product should I prepare the cost records? Should it be product X, product Y, product Z? What will it be? Only product X or all the products? That is the question. Please answer my question. All the products or only product X? And guys, a very, very deep question. So please, answer it after thinking and looking at the section ones. If you can look at the section ones, then perfect. So some people are saying all the products, some are saying table A. All of the products. Ashutosh says all of the products. Nivya says all of the products. Amitesh X, Ajnaz X, Tejasvi X, Surinder all, Joshika all. Okay. So guys, the correct answer is only product X. Only product X. Cost records are required to be prepared only for product X. So why are you saying this? Let's read the language of the section. Let's read the language of the section and you'll be able to understand why I'm saying this. Let's read the language of the question. Okay. Let's read it together. Any company engaged in production of goods or providing services specified in table below shall be required to prepare cost records for such product, not for all the products, for such products or services in their books of accounts. So please read the section and please interpret the section well. I know there'll be some difficulties which will be faced by you because it's not a straightforward section. It's a difficult section. It's a twisted section. But for which product the cost records are required to be prepared? Only product X. For only product X, the cost records are required to be prepared. Okay. Okay, sir. Now let me change my example. Okay, product X we are producing to the extent of 0. Product Y 40 crores. Product X, product Z 15 crores. Total turnover 55 crores. So guys, unfortunately in this year we have not produced product X. We have not sold product X. Okay. If turnover includes excluded products, then excluded products are also included in the turnover, guys. So product Y and Z are excluded products only. Product Y and Z are excluded. So they will be included in the turnover while calculating the total turnover. They'll be included. My question to you is, product X, we did not purchase and sell product X at all. So it's 0. Product Y 40, Z 15. Whether cost records is applicable or not, and if yes, on which product? Cost records will be applicable or not? Goshal says not applicable. Twinkle says applicable hoga. Aarti says applicable hoga. Sir, if turnover excluded product, I've already answered. Nivya says no. Who else, guys? Please write your answers quickly. I want to see how many of you are giving the. Mansi says no. Amitesh says X, which means Amitesh says that cost records are required to be prepared. It is applicable to A. In earlier year, cost records were applicable, then in all subsequent years it will be applicable. No, Abhishek, it is not about earlier year or current year. It is a fresh company, fresh case. Don't link with earlier example. Don't link with earlier example. Joshika says no, cost records will not be required to be prepared. Harshit Verma says X. Surendra says N. So guys, the correct answer is cost records are not required to be prepared. Because one of the prime conditions is that you should have some turnover from the specified goods. You should have some turnover from the specified goods. The specified goods like table A goods, table B goods. You should have some turnover with respect to the specified goods. That is the bottom line. That is the benchmark. If you have no production or no sales and no turnover from the specified goods, then even if your turnover is over 35 crores, you are not required to prepare your cost records. So cost records are not required to be prepared in this particular case. Cost records are not required to be prepared. Okay, got it. Yes, sir. Got it. Okay. I'll change my example. Okay. I'll give one more example, and this time the example will be little complicated. Yes. So are you ready for the example? Are you ready for the next example? Write yes in the chat box. Write yes in the chat box. Next example will be little complicated. Okay. Product X, which is covered, its turnover is 15 lakhs. Product Y, again, it is being manufactured, not covered under table A or table B. Okay, it is manufactured. The turnover is, say, 2 crores. Product Z, we are not manufacturing product Z. We are only trading in product Z. Now, third example is very, very critical, guys. We are not manufacturing product Z. We are only trading in product Z. Okay. And the turnover is 40 crores. Total turnover is 42.15 crores. 42.15 crores. Now you need to tell me whether cost records is applicable or not. Please note, product Z is only trading, no manufacture. Product Y manufacture. Product X manufacture, table A. 15 lakh, 15 lakh, manufacture 2 crores, trading 40 crores. Whether cost records will be applicable or not. Please note, product Z is trading. It's not production. It's not production, and it is not 33 clause product. It is not 33 clause product. Is it? We are talking about cost records. Please don't talk about cost audit. Ajnas, don't talk about cost audit. We are not talking about audit. We are talking about records as of now. It's only records. Please tell me whether cost records are required to be prepared or not. Yes or no? Aarti Jain says no. Joshika says applicable. Lakshmidhar says applicable. Milan says applicable. Yes, Ashutosh says applicable. Guys, all of you should, give the answer so that your concepts will also, be strong. And guys, definitely do hit the like button, guys. Before we move ahead, please do hit the like button. That is one thing which will give me energy to, continue with these marathons. Yes, answer is yes, cost records are applicable. Irrespective of whether you are trading in any goods or manufacturing in any goods, irrespective of that, you are definitely covered under cost records. And which product cost records will be required to be prepared? Only product X. Not all the products, only product X. Chalo. Okay? Yes, it will be applicable. No, Z will not be applicable. No, Z, we will not prepare cost records for Z. Chalo. Next example. Next example. And this time I'll give you a even more critical example. All right. Please note my next example. Product X, product Y, product Z. Turnover of product X, 5 lakhs. Product Y, 20 crores. Okay. Product Z, product Z, 34 crores. No, not 34, but 14 crores. Okay. Let this be 50 lakhs. Okay. So this is the bifurcation. I'm adding one more thing. Scrap sale. Scrap sale is 70 lakhs. Scrap sale is 70 lakhs. Now you need to tell me whether cost records are applicable or not in this particular case. Different example. And yes, guys, you can write these examples in your register. Very, very useful for understanding purposes. Now, please tell me, scrap sale, 70 lakh rupees of scrap sale. Very, very interesting. And I'm really excited to listen to your answers. Very, very interesting case which I have created. Whether cost records will be applicable or not. If you exclude scrap sales, then it is coming out to be less than 35 crores. If you include scrap sales, then it will be more than 35 crores. What will be your answer? I'm really, really excited to listen to your answer. Yes, very good. That's like my future CMAs. All of you are future CMAs. Very good answer by all of you. I'm very, very happy. Goshal says scrap sale is excluded. So no. Oh. Applicable, applicable, applicable. Yes, 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 yes. Yes, guys, you are very, very right. You are very, very right, guys. Yes, it is applicable. So while you are calculating the total turnover of the company, scrap sale is also included as a part of total turnover of the company. And therefore, in this case, since the total turnover is exceeding 35 crores, product X will be subject to cost records. Cost records will be applicable in case of product X. So this time, I want all of you to clap for yourself. Clap for yourself. Yes, even if you are at your home, clap for yourself. Even if your parents feel that you have gone crazy, clap for yourself because you've given an amazing answer. Amazing answer. And it was pretty tricky, guys, because these tricks are really, they can cost you your marks. But you are very confident about your answers, and I'm really liking this fact that you are really confident about your answers. So yes, this was the limit of 35 crores which has been specified, and we have done various cases in which this 35 crores can, vary, and what are the possible probabilities that can come in your examination. All right. Now, please remember this form, very, very important, form CRA1, which is the format of cost records. Form CRA1, which is the format of cost records. Okay. All right, guys. So yes, you have completed your discussion on cost records. Yes, we have completed our discussion on cost records. Okay. Let's do some easy exercises, guys. I hope you are able to see the exercises well. Okay. Let's do some easy exercises. Okay. DIY, do it yourself. So please give me the answer of this question. Maharaja Private Limited purchases a raw material, steel coil, and then do some cutting or drawing work on it either by self or through a job worker, and then it sells in market. CFO of the company considers it as trading sale. CFO is saying it is not manufacture, it is trading. Okay. Accord your opinion on whether cost records or audit is applicable on this sale if the turnover exceeds the prescribed limits. You need to tell whether, cutting raw material, cuttings, there are steel coils. What are steel coils? Steel coils are, rolled like this. There are long length wires which are there like this. What is the role of this particular Maharaja Private Limited? It just cuts steel coil into small pieces. Whether this cutting will qualify as manufacture or not, whether this cutting of steel coil will qualify as manufacture or not, that is the question. Goshal says cutting or drawing OP is manufacturing. Hence, opinion of the CFO is incorrect. Brilliant, brilliant answer. Aarti's answer is incorrect. Cutting to basic new things. So yes, applicable. Very good. Superb, superb. Yes, guys, this is manufacture. Even if you are cutting something into small pieces, it tantamounts to manufacture because you are changing the entire use of that particular wire. Because if it is a long wire, then you will not purchase it. If you are a retail customer, you will not purchase that long wire if you are having only long wire. So very, very good answer. Brilliant. So DIY 2. Please read carefully. Sanjeevni Booty, City Hospital, specializes in test tube baby technology. Are these services covered under Rule 3? Presume that they fulfill the turnover criteria. Test tubes, test tubes, test tubes. Form change hogi thodi. Twinkle, form change ho gayi. Form change ho gayi. Yes. Why form change ho gayi? Because the people who want smaller parts, they will only buy smaller parts. They will not take the entire length of the wire. So manufacturer is there. Okay, test tubes. Are they covered? Yes, they are covered. Very good answer by Goshal, Twinkle, Lakshmidhar, Amitesh. Very good answer. Yes, yes. Very, very good answer. Superb, guys. So, yes, it is covered under Rule 3. Very much covered under Rule 3. Okay. Messrs. Mahakal Enterprises, Private Limited, manufactures and sell wooden furniture. Okay. They are into selling of wooden furniture. Total turnover of the company during financial year 18-19 was 50 crores. 50 crores is the total turnover, guys. More than 35 crores. Whether the company is required to prepare cost records under Rule 3 or not. Whether cost records are required to be prepared or not. हाँ ट्विंकल समझ में आ गई बात ठीक है okay you please tell me guys whether cost records will be applicable or not the turnover is 50 crores turnover is 50 crores whether cost records is applicable or not part C please comment in the comment section Manisha says required Ankita says no Joshika says no Nidhi says required Harshit says no Mansi says no please give the reasons also guys what is the reason if you're saying no cost records are not required then what is the reason please give the reason also what is the reason Abhishek says yes. Yogesh says yes. Sachin says yes. Sachin Bangar says above 35 crores. Okay, okay. Milan says no. I'm really loving it. I'm liking it because you are really, really performing well, guys. Okay, the correct answer is no. Cost records are not applicable. Why? Because furniture, wooden furniture, is not covered under Table A or Table B. Wooden furniture is not covered under Table B or Table A or Table B. Even if the turnover is more than 35 crores, cost records will not be applicable in this particular case. So not applicable. Furniture is not applicable. Very good, guys. So yes, guys, question can trick you in any manner. Okay. Okay. Next. In the above example, company suffered a sudden reduction in the demand of wooden furniture. Okay. So the company has suffered a sudden reduction in demand of wooden furniture in FY 2019-20 and its turnover dropped to 37 crores. Okay. So earlier the turnover was 50 crores, now it is 37 crores. Hence the company introduced a new range of product made out of jute. Financial year 1920, company was able to sell jute products worth rupees 2 lakhs. 2 lakhs jute products were sold. Comment whether the company is required to prepare cost records under Rule 3 or not. If yes, for which product? Now, guys, I want your answer, okay? I want your answer in the chat box. There are two questions which are imposed. Number one, whether company is covered under cost records or not. Secondly, for which product will the cost records be prepared? That is the question before you. Yes, come on, guys, come on. Let's see who will prepare who will get the right answer. Very good answer. Superb. Yes, it is applicable. Record for very good. Mansi Sonavane, very good answer. Yes, jute bag ka record banega. Twinkle Rustagi, very good answer. Yes, cost records are required. Very good. Superb. So yes, guys, cost records are required, but only for jute products, not for wooden furniture, as only jute products are specified under Table A or B category. Perfect. Okay, interesting one. Please read this question. Interesting one. Again, a tricky one. Let me expand it as much as I can so that you can, view it clearly. Okay. Twinkle Private Limited. Look, Twinkle Rustagi, who's in our chat box, she has a company also. No, it's Trilok. It's not Twinkle, it's Trilok. Okay. Trilok Private Limited has given details of the products manufactured or traded by it during financial year 1920. You are required to assess which products of the company is required to prepare cost records. Which products are required to prepare cost records? It's manufacturing cement, insecticides, garments, hosiery. It's trading in laptops, allied accessories, calculators, electrical appliances. Job work income is 90 lakhs. And the total turnover is 34.9 crores. Please see the total turnover. 34.9 crores. Okay. Total turnover is 34.9 crores. Apart from the above, company sold scrap from garment and hosiery division, 12 lakhs. What a question. First question, whether cost records are required to be prepared or not. Answer yes or no in the chat box. Guys, answer should be in yes or no in the chat box. Yes or no. Cost records. Yeah, superb. Hmm. Perfect. Yes, cost records is applicable because including the scrap scale, the turnover is above 35. Perfect answer. Perfect. Perfect answer. Question number 2. For which products cost records will be prepared? For which product cost records will be prepared? For which product cost records will be prepared? Now let's see who's going to give the right answer. I'm eagerly waiting. For which products the cost records are required to be prepared? Product name. Table A, table B. Yes, I want the names. Cement and insecticide. Very good answer. Very, very good answer. Cement and insecticide. Perfect. Perfect, guys. You are prodigies already. I think you are really doing well. And yes, I have a CMA brigade who's ready to rock the corporate world. You are my CMA brigade. You are no less than a brigade. You're no less than warriors. You're no less than, fighters. So amazing, amazing. Cement and insecticide. Very good. Cement and insecticide. Perfect, perfect. All right, next question. Dhara Oils Private Limited, leading manufacturer of edible olive oil in India. During financial year 1920, its turnover of sale of edible oil is 58 crores. Company is registered under MSMED as small enterprise. However, there is a lacuna. 58 crore turnover cannot be small, but it's okay. Assume that 58 turnover is small. Okay, it is registered as a small enterprise. Analyze the applicability of Rule 3, whether Rule 3 will be applicable or not. It is an MSMED. It is registered as a small enterprise. Okay, not micro and medium, but small enterprise. Perfect, perfect, perfect. Very good answer. No, not applicable, not applicable. Very good answer, not applicable. Perfect, not applicable, guys. Because if you are registered under the MSMED Act as medium, as a micro and small enterprise. So, guys, there's medium also. If you are registered as a medium enterprise, then cost records will be applicable on you. Exemption is only given to micro and small. It is not given to medium. Okay, please note this point very, very carefully. All right, sir. Next, Gartner Limited provides facility management services, FMS, at the commercial and residential premises. These include housekeeping, security, fire safety, facility management, pest control, landscaping, facade cleaning, etc., etc., etc. The entire operational revenue of the company, rupees 60 crore, is from faculty management services. Will the activities of company be covered under construction activity as per Rule 3? Whether facility management services is covered under the construction activity under Rule 3? Please answer in the chat box. Please answer in the chat box. Whether this will be covered under faculty management services will be covered under Rule 3 of construction activities. Construction activities. Let's see who are. So this is quite tricky. Okay, this is not easy. Ajna says no. Mansi says yes. Jyoshika says yes. Ankita says yes. Wow, wow, wow. Ghoshal Dake has even given the explanation correctly, guys. Brilliant, Ghoshal Dake. Ghoshal Dake, from which state are you there? From which state? And all of you guys, please mention your states. From which states are you there? I want your states. From which state are you there? Perfect answer, guys. Perfect answer. Yes, it is applicable. It is very much applicable, guys. Even if you are doing facility management services, that facility management services included in Rule 3 construction activities, because construction activity has a specific exclusion which says that even the development or maintenance of a facility is covered under construction activity. So yes, this activity will be covered under the category of cost records. Andhra Pradesh, Twinkle, Haryana, Rewari, Pune, Maharashtra is, Ghoshal. Very good. Chandigarh, Maharashtra. Mansi, Maharashtra. Manisha, Odisha. Perfect. Kerala, Ajnaz. Guwahati, Assam. Abhishek Kumar Sarma. Guwahati. Beautiful, beautiful state. Guwahati. Kolkata. Brilliant. And guys, I want to know one more thing, guys. Whether are you giving only group 4 in the upcoming attempt or both the groups? So those who are giving only group 4, write 4. And those who are giving both the groups, write both. Let's see who is giving which group. Okay. Raipur, Chhattisgarh, Jamshedpur, Tamil Nadu, West Bengal, Pune. Okay. Nidhi Suman is from Pune. Very good. Amchi, Pune. Both. Manisha Behrera, both. Vishakhapatnam, Surendra, both. Nidhi, 4th. Only 4th. Joshika, 4th. Alagu, both. Shreya, group 4. Amitesh, 4. Very good. Very, very nice, guys. Durgapur, West Bengal. Very good, guys. Brilliant, brilliant, brilliant. It is amazing to interact with all of you. All of you. Now, let us start the important section, guys. Most important rule of your syllabus. Rule 4. Rule 4 is related to cost audit. And cost audit was given in section 148.2. So now I'm referring to section 148.2, which is cost audit. And what are the provisions which are applicable on cost audit? That is what we are going to study now. So I'll directly take you to this table. Please see this table, okay? Now, rule 2 is a little bit complicated. Rule 4 is a little bit complicated. It is not as easy as rule 3. Because rule 4 contains twin conditions which are required to be satisfied if you want cost audit to be performed for your company. Cost record had only one condition, which is 35 crores overall turnover of the company, and the condition was same for table A and table B. Condition was absolutely same for table A and table B. However, in case of cost audit, the condition is not same for table A and table B. Condition is different for table A and table B. So the conditions are, these are the conditions of table A and table B, which are there in case of cost audit. So let's read these conditions. Very, very important, guys. Please read them very, very carefully. And yes, you need to learn them. You need to learn them. So if you are thinking about cost audit of category A goods, then overall turnover of the company should at least be 50 crores. Aggregate turnover of individual products for which cost records are prescribed is 25 crores. 50 crores, 25 crores. So when you are analyzing cost audit requirement of the regulated goods which are categorized under product under the table A, then you have to see these thresholds. 50 crores total turnover of the company, 25 crores for individual products which are covered under cost records. Okay. Now, let us not move forward. Let me give you a practical question for this part. Okay. Let me give you a practical question for this part. Yes, very good, very good. Wow, सबको याद है भाई, ये तो सबको याद है. Perfect, perfect. Okay, let me give you a practical question. Okay, let us get back to our original. Okay, so product X is table A product. Okay, 50 crore overall turnover. Individual turnover should be at least 25 crores. Okay, so overall turnover of the company is 51 crores, and product A turnover out of this is 26 crores. Please tell me in the chat box. Please tell me in the chat box. Cost audit applicable or not? Cost audit applicable or not? You know, these can be anyone. These can be anything. You know, just reduce 51 and 26. This can be anything. So I'm not fuzzy about product Y and product Z. I'm fuzzy about product X. Please tell me cost audit applicable or not. Audit होगा या नहीं होगा? Yes, audit होगा. Perfect, perfect. Audit होगा. Audit होगा. Example number 2. This is 16 crores. बताओ audit होगा या नहीं होगा? Product X 16 crores. Audit applicable or not? Product X 16 crores. Product X 16 crores. Audit applicable or not? Audit applicable or not? Product X 16 crores. Answer is no. Very good answer, guys. Very good answer. Answer is no. Perfect, perfect, perfect. Now I'll change this question a little bit. Assume that product Y is table B product. Assume that product Y is table B product, and the table B product turnover is 11 crores. Product table B turnover is 11 crores. Okay. Now you need to tell me, please listen to the question. Don't give the answer. Don't give the answer. Please listen to the question. You need to tell me whether product X will be subject to audit or not. You need to tell me whether product X will be subject to audit or not. Only product X, not product Y. Whether product X will be subject to audit or not. Product X is having turnover of 16 crores. Overall turnover of the company is 51 crores. Whether product X, which is table A, we have only studied the limit of table A. We have not studied the limit of table B, guys, as of now. So I'm asking question related to table A only. I'm not asking question related to table B. Please tell me whether audit, cost audit will be done for table A product, which is product X, or not. Whether cost audit is required to be done or not. Vishal says yes. Tejasvi says no. Ankita, what is your answer? Ankita Murarka is telling the limits. I don't want the limits. I want the answer. Mansi says yes, applicable. Twinkle says yes, applicable. Ankit Murarka? No. Please tell me the answer, Aarti Jain. What is your answer? Yes or no? Whether table A product X will be subject to cost audit or not. Yes or no should be the answer. Ankita says no. Goshal Dake says yes. Aarti Jain says no. Pooja Shinde says product X will not be subject to cost audit. Now, guys, let me give you the answer. Okay, very, very critical point, guys. Superbly critical point, and most of the students falter on this particular point. Answer is yes. Table A product, which is product X, will be subject to cost audit. Table A product, which is product X, will be subject to cost audit. Twinkle is also giving the don't bifurcate between table and table for threshold, include both. Very good, Goshal Dake. Goshal Dake has studied cost audit beautifully. Very good, Goshal Dake. Goshal Dake has studied cost audit beautifully. Very good. Yes. So guys, now please understand what is the concept. Okay, now this is the point where I would definitely want to spend 2-3 minutes. Overall turnover of the company should be more than 50 crores, fulfilling the condition. And the second condition is aggregate turnover of the products which are covered under rules of cost record rules. Aggregate turnover is to be considered, it should be more than 25 crores. The aggregate turnover is more than 25 crores. It is in fact 27 crores. So when it is 27 crores, and when we are analyzing table A product X will be subject to cost audit. So most students make this mistake. They take only 16 crores as the threshold and they say no, cost records are not, cost audit is not applicable. Absolutely incorrect. Please read the section once again. It says aggregate turnover of the individual products, services for which cost records are prescribed. It nowhere says where cost records are prescribed only for table A. No. For all the products for which cost records are prescribed, which is table A and table B. So we always take the aggregate. Okay. That is very, very important point. So that is why these limits are very tricky and these limits are very, very important. Similarly, guys, table B product, overall turnover should be 100 crores and aggregate turnover of individual products should be 35 crores. That is the limit for table B products which are non-regulated, 100 crores and 35 crores. So similar, interpretation is applicable on this particular product as well. Now, exclusions are there. Okay, certain exclusions are there. The companies which are not subject to cost audit. What are the exclusions? Let's see. Now clear, sir. Tejashvi Shripada says now clear. Yes, guys, absolutely clear. Okay. So what are the exclusions to cost audit? Number one, a company whose revenue from exports of product covered under table A and table B exceeds 75% of the total revenue. When the revenue from exports, which is in foreign exchange, when these revenues exceed the 75% of total revenue benchmark, then which means you are primarily an exporter. Okay, if you are primarily an exporter, then cost records are not applicable to you even when your turnover is above the threshold limit. Okay, sir. Then company which is operating from special economic zone, cost audit is not required to be prepared for these particular companies. Now guys, I have a question for you. Whether a company who's situated in special economic zone and if its turnover is above 35 crores and it is producing a good which is covered in table A and table B, will cost records be applicable for that company? Answer in the chat box. Will cost records be applicable for that company? Answer in the chat box. So if a company is there who's into special economic zone, who's working from special economic zone, that company is working from special economic zone and it has a turnover of more than 35 crores for the specified goods, whether cost records are applicable for that company or not. Cost audit is not required, that is for sure, but whether cost records are required or not, answer is yes. Cost records are very much required. Yes, cost record to hoga bhai, cost audit nahi hoga. Cost record to hoga, cost audit nahi hoga. Very, very, very important point, guys. Very important point. Okay. So that is the concept. Okay. And last one is which is engaged in generation of electricity for captive consumption. If some company is generating electricity only for captively consuming it, which means they produce it and internally they consume it, then they are not applicable for cost audit in this particular case. Okay, sir, got it. So yes, these were the concepts which are related to table A and table B. Very, very important concepts, guys. And one notorious provision. Okay, once you are inside the purview of cost records or cost audit, once you are there, there's no way out. There's no way out. You have to permanently be there with cost records and cost audit. अजीब जबरदस्ती है, हाँ जी हाँ जबरदस्ती है. Chipko section है, Chipko section, which is what? Which is, if a company meets the eligibility criteria in 1 year, and if in the subsequent year the turnover drops below the specified limits, rule shall be applicable for all the subsequent years. Notorious criteria, but yes, this is a fact that once you are into this net of cost audit and cost records, you will be there forever. Forever. No looking back. No looking back. So yes, a notorious section. So this is, guys, maintenance of cost records. And yes, you definitely need to remember these 4 forms, guys. These 4 forms you definitely need to remember. CRA1, CRA2, CRA3, CRA4. What is the use of these forms? Okay. एक बार फंस गए तो लगेगा ही. Yes, Twinkle. CRA1, CRA2, CRA3, CRA4. CRA4 is in XBRL format. CRA2 is in XBRL format because they are to be submitted to the ministry. CRA1 and 3 are not in XBRL format because they are not to be submitted to the ministry or Ministry of Corporate Affairs. Okay. So CRA1, CRA2, CRA1, CRA2, CRA3, CRA4. These are the forms which you should remember very, very profoundly. CRA1 is for particulars of cost to be included. CRA2 is for appointment of cost auditor. CRA3 is for cost audit report. CRA4 is for submission of cost audit report to central government. Yes, sir. Perfect. Perfect, guys. Very, very, very good. Okay. Yes, these are generic things, guys. These are the penalties. And yes, now we come on to the next rule, rule number 6. Again, an important rule, because from an exam standpoint, guys, a question can come from this particular rule in a theoretical way. Okay. Even a case study can come from this particular rule. Rule number 6, cost audit. What are the requirements of cost audit? How are cost auditors appointed? Okay. Appointment of cost auditor. Okay. So rule 6, appointment of cost auditor. How would the cost auditor be appointed? The company satisfying threshold limits under rule 4 must appoint a cost auditor within 180 days. Please remember, within 180 days of the commencement of the financial year. Within 180 days of commencement of the financial year. So guys, within 180 days of commencement of the financial year, you must appoint your cost auditor. So that is the threshold limit. Appoint a cost auditor. You need to appoint a cost auditor. Okay. Cost auditor should give his written consent and certificates in the following manner. Okay. So these are the certificates which auditor is required to be submit to the company. That is not disqualified. It is not disqualified for appointment as an auditor. It satisfied criteria provided under 141, which are disqualification, which is studied in the last class. Proposed appointment is within the limits laid down in the Companies Act. List of pending proceedings are also given by the auditor. So these are the requirements which the auditor will give to the company. Then company must inform cost auditor about his appointment and file a notice of appointment with the central government. The cost auditor appointment, the company must inform to the central government within 30 days of the board meeting or 180 days of the commencement of the financial year, whichever is earlier. Very, very important threshold, guys. The intimation is required to be given to the ministry within 30 days of the board meeting or 180 days of the commencement of the financial year, whichever is earlier. So it means that, if your board meeting happens on 15th of May, then you have time only till 14th of June to send an intimation to central government. Okay. But if you are appointing your auditor only, say, at fag end of 15th of September, then you don't have entire 1 month, because 180 days from the end of the financial year is the ultimate threshold. Then you can only file the form by 28th September, which is 180 days threshold. Okay. 28, 27 September. Okay, sir. Got it. Sub-rule 3, auditor shall continue to be in this capacity up to 180 days of the closure of the financial year. So up till closure of the financial year, beyond that 180 days, the tenure is of the cost auditor. Okay. Then any casual vacancy with the office of cost auditor shall be filled by board of directors within 30 days of occurrence of such vacancy. You're aware about casual vacancy. Casual vacancy means in the event of death of the auditor, or when he resigns, or any other inadvertent situation. Whenever there's a casual vacancy, then the appointment is to be done within 30 days, and the board of director would need to make this appointment. And yes, rest of the provisions are pretty straightforward and very, very important, guys. Very, very important. Okay. A question can come from this particular part, which is sub-rule 7. Provisions of subsection 12 of section 143, which is related to fraud of the act and the relevant rules made thereunder shall apply. Mutus mutandis means in the same manner they'll apply to the cost auditor as they apply to the statutory auditor. So fraud provisions, fraud reporting requirements are applicable to cost auditors as well. That is the most important thing. Okay. Love from Kerala. All right. Thank you so much. Yes, Harshit, I will try to take some sessions on SPM BVM. Also, I understand that you guys require that. Also, definitely, I will try to do that. Okay. Okay. One DIY. Let's see who's able to solve this DIY. Guys, please solve this DIY. Rajvik Automobiles has to get the cost audit conducted for FY 2019-20 for a aforesaid audit. The company proposes to appoint Messrs. RK Associates. The company about due date of the appointment of the cost auditor. What is the due date of appointment of the cost auditor for the relevant under the following two situations? Board meeting held on 17th April 2019. Board meeting held on 17th September 2019. Please write the answer in the chat box. मेरे सवालों का जवाब दो ना. तो आपको बताना है what is the threshold of appointing the cost auditor. In case 1 and case 2, what is the threshold of appointing the cost auditor? Yes, 30 days. You will count 30 days. 17th May will be the 30th day. Perfect. 17th May will be the 30th day. First case. Second case, 17th September is the date when board meeting is held. 17th of September. Second case, what will be the due date? Case 2. 27th September. Actually, 27th September is the last date, not 28th. 27th September. Perfect. Perfect. Within 1 days. Perfect, guys. Very, very good answer. Okay, these are very generic sections, guys. Okay, most important, guys. Most important. Very, very important. Very, very, very important. Waste multiplier. A practical question from this particular concept will come, not mandatorily, but yes, most likely it comes in every session. So very, very important concept of waste multiplier. Concept of waste multiplier. What is the concept of waste multiplier? What is the per unit production from first unit, from the first process, that will give 1 unit production in the last process. That is the concept of waste multiplier. Very, very important concept. Okay, waste multiplier is that quantity of output from any process which will be needed to get one quantity of final output. That is the waste multiplier. Please mark very, very important against this particular question. So guys, you will be given various processes like blow room, carding, draw frames, rowing, ring frame, reeling. You will be given various processes. You will be given input and outputs of these various processes, and you need to find the waste multiplier. You need to find the waste multiplier. Very, very, very important from an exam standpoint, how to calculate this waste multiplier. So as the first step in calculating the waste multiplier is that you need to calculate the loss. You need to calculate the loss. And I will not do the entire question because it will take a lot of time. I'll just do 1-2 parts, and then I'll be asking you to replicate those parts in other parts as well. Okay. First of all, you need to calculate the loss. Okay. So 46, 72, 560 has been introduced, minus 42, 58, 270 has been produced. So the loss is 4,14,290. We divide this by the cotton which is processed, which is 46,72,560. We'll get the percentage loss which has been incurred. The percentage loss which has been incurred is 8.87%. 8.87% is the loss which has been incurred. Okay. We'll compute the output. What is the output in percentage forms? What is the output in percentage form? Both of these are computed according to percentages. Okay. So if you assume 100, which is the input, minus 8.87, it gives me an output of 91.13 percentage. Output is 91.13 percentage. Output is 91.93. Oh wow, You guys have already computed the waste multiplier also. Brilliant. Good. So output is 91.13. Okay. So in the second part, guys, 42, 74, 360. 42, 74, 360 minus 39, 76, 400 divided by 42, 74, 360. 42, 74, 360. This gives a figure of 6.97%. Now be careful. Okay, now be careful of the next output which I'm going to produce. Okay, next output is, if 91% has been introduced, then the percentage loss is 60.97. So what I'm going to do is, I'm going to compute the output using 91.13 as the input. So 91.13 minus 6.97%. This gives me a figure of 84.78%. You need to understand this point only. This is the specific point which is very, very important. This is a specific point which is very, very critical. So while reducing 6.97, you don't have to reduce it exactly from 91.13. But what you have to do is, you have to first of all multiply 91.13 into 6.9%, 97%, and then reduce it. Okay. So 91.13 minus 6.97%, that is the that will give you 84.78. So on and so forth, you will compute all the output percentages, and then whatever is the last percentage, you will keep it in denominator and you will keep this in numerator, and you will be computing the waste multiplier. Simple as it is. Okay. But this is very, very, very important. Why is it very important? Because a mandatory question is coming in from this particular concept in every attempt. Almost in every attempt, a mandatory question is coming from this particular concept. So waste multiplier, very, very, very important. Okay, sir, got it. Then next important part of your practical from this particular chapter, capital employed. What is the capital employed in any business? So capital employed will cover three things: net fixed assets, non-current investments, and net current assets. These three things will club together to form capital employed of any business. Net fixed assets, non-current investments, investments which are non-current. Non-current means long-term investments. Long-term investments. Okay. These are to be included while calculating capital employed and net current assets. So obviously, guys, everything which is being added over here has got some logic. Why is it being added? I'm not discussing the logic over here because it will take a lot of time to make you understand the logic. So I'm quickly making you just revise the formula. So capital employed includes all these three things: non-current investment, net current investment, and net fixed assets. Capital employed excludes, capital employed will not have capital work in progress, revaluation, current investment, investment in other companies, investment in buildings, not used for business, preliminary expense, debit of profit and loss account. These are not included in capital employed. That is the formula of capital employed. Okay. Pretty much a straightforward and a simple concept, guys. The next concept is net worth. Net worth, again, a very, very important concept. Net worth means what is the book value of shareholders' equity in your business. That is the net worth. Okay. Net worth means paid up share capital plus all reserves created out of profits plus security premium account plus forfeited shares and plus surplus. So whatever belongs to the equity shareholders, that is my net worth. Whatever belongs to the equity shareholders, that is my net worth. Okay. Everything which is belonging to the equity shareholders, that is my net worth. Net worth is the book value of equity shareholders. Okay. Then, okay, yes, these things are very, very important, guys. Value addition. What is value addition? Value addition is revenues which have been earned during the year minus the revenue from operations, minus any kind of cost of bought out inputs and cost of bought out material. Cost of bought out inputs and cost of bought out material. So revenue minus cost of bought out inputs. That is the formula for value addition. Again, it includes material, cost of material, process material, consumption of stores, spares, utility, others, etc. This will give you the figure of value addition. Value addition is one of the most important ratios which are required to be calculated in this particular section. Okay, sir, and distribution to different claimants due to. So, guys, we're just revising the formula. Your responsibility is to actually do the practical questions also, because that is a very important thing. All right. Some miscellaneous ratios which are required to be made, which are computed while calculating the while preparing the cost audit report. Yes, I will be sharing the PDF as well. No worries in that. Okay, so what is the different ratios which are required to be inserted in the annexure to cost audit report? Profitability ratio, which is return on capital employed. Please remember the ratio. Return on capital employed is EBIT, earning before interest and after tax, divided by average capital employed. That is the formula for return on capital employed. Return on equity formula is profit after tax divided by net worth or the shareholders fund. That is return on net worth. Profitability ratios, which is gross profit ratio, operating profit ratio, and net profit ratio. It gives you the profitability percentages of different kinds: gross profit, operating profit, and net profit. Solvency ratio, whether you are solvent or not, whether you can meet your short-term liabilities if they arise, whether you are able to meet them or not. So current ratio, current assets divided by current liability. Solvency ratio, debt equity ratio, long-term debt divided by shareholders funds. Proprietary ratio, shareholders funds divided by total assets, that is proprietary ratio. Turnover ratio, like asset turnover, net sales divided by total fixed assets. Stock turnover ratio, net sales divided by average stock or inventory. Debtors turnover ratio, average receivables into number of days in the year divided by credit sales. So these are various ratios which are required to be computed and put in the annexures to cost audit report. Why are they put? So that meaningful analysis can be done. Where are the wastages? Why profit is not increasing? All this analysis can be done only when these ratios are put inside the audit report. Okay, sir, got it. So these are certain questions which are very, very important. Okay, now comes the most important part of your chapter, guys, which is a reconciliation statement. Okay, now reconciliation of profit as per financial and costing records. This is a question which will mandatorily come in your examination. Reconciliation. Please mark it as very, very, very important. Mark it as very, very, very important. This question is definitely going to come in your examination, guys. There is hardly an attempt which has gone by where this question has not been asked in your examination. The reconciliation statement between financial profit and costing profit. So guys, you should preferably use the format which is given in the rules. Format is that you need to start with costing profit. You first of all need to start with costing profit. Costing profit is the starting point of your profit reconciliation statement. Profit according to cost accounts, that is the starting point. Okay, so profit which is according to the cost accounts, they are to be adjusted and they are to be matched to the financial accounts. I'll give you a very simple way of doing it. Okay, you have two hands. Okay, you have two hands. I'm drawing these two hands over here. Suppose these are two hands. These are your hands. Okay, you write costing profit in one hand, which is your right hand. Right hand you write costing profit, and left hand you write financial profit. So this is costing profit, this is financial profit. If you are starting with costing profit, then you can only change the position of costing profit hand. And if you are starting with financial profit, then you can only change the financial profit hand. So if you are starting with costing profit, then if your profits are in this situation whereby financial profits are more, costing profits are less, then you will add in costing profit to make it equal to financial profit. If your costing profit is high and your financial profit is less, then you will reduce from costing profit to make it equal to the financial profit. This is how you can actually play with your hands during examination at the cost of the examiners thinking that you have done out of your mind and you don't understand what is happening. Even at that risk, you can do this so that your reconciliation can be done easily. So it's like bank reconciliation. Very good, Twinkle. It's actually like bank reconciliation statement. So yes, indeed a very, very, very important topic from an exam standpoint for all of you. Profit reconciliation statement. Okay, sir. So yes, performance analysis. Some ratios are there for performance analysis. That's okay, guys. Not very, very important. All right. So yes, guys, these are the ratios which are required for performance analysis. Economic value added. Okay. Yes. Now this is an important thing. So what do you mean by economic value added? What do you mean by economic value added? Economic value added means that what is the increase in shareholders' wealth that you have created? What is the increase in shareholders' wealth that you have created? That is economic value added. What is the addition that you have made in shareholders' wealth that has benefited the shareholders? That is the concept of economic value added. Economic value added, the formula is capital employed multiplied by rate of return minus the cost of capital. So net, whatever shareholders have in their hands, after reducing the cost of capital. What is cost of capital? Cost of capital is like dividends. Whatever dividends are there, they are cost of capital from the point of view of the company, because company is paying dividends to the shareholders. Okay, so cost of capital, rate of return, whatever rate of return you have earned on the equity shareholders or the capital employed, rate of return minus cost of capital will give you percentage of the net profit or the net value addition which has been earned by you, and that will give you the figure of economic value added. And if you multiply it by capital employed, then it will give you the figure in absolute form, which is in rupee form. It will give you the figure. All right. So yes, this was the economic value added for all of you. And this is a small question on economic value added, which is very, very simple. Okay. So these are certain very simple ratios which are definitely there in your syllabus, but not very important from an exam standpoint. So yes, guys, this was your chapter on cost accounting record rules 2014. Of course, this is not the entire chapter. So this is just a revision of the entire chapter, and I've marked the important areas of the chapter. I've highlighted the areas which will, the chances of these areas coming in the examination is more than other areas. So I've highlighted those areas for you, and I've tried to quickly, revise the entire chapter, and especially the cost audit thresholds, cost records thresholds. They are the most important thing in the entire chapter, because a question from those are, it is tentative that they will come in the examination. Sir, EVF formula is different from SPM BV. We can't use the same formula. It is absolutely the same formula, guys. It is absolutely the same formula. It is absolutely the same formula. SPM BV formula of economic value added and cost audit formula of economic value added, absolutely the same. It's absolutely the same. So yes, guys, that's all for today's session. And yes, this was chapter 2 for all of you, which is companies, cost records and audit rules 2014. We'll be coming up with more such chapters and more such concepts of cost and management audit in our subsequent sessions. And yes, PDF will be shared of yesterday's session and today's session in the chat box, in the description box. I'll share a link. By tomorrow, I will share the link where these PDFs can be found by you. So yes, that's all for today's session, guys. It was an amazing session. Please hit a like button if you're not done so. And please subscribe to the channel if you're not subscribed to the channel as yet. And yes, for the very last time today, how's the Josh? Please write in the chat box. How's the Josh, guys? What is the level of your Josh? How's the Josh? Deepon says it's very helpful if notes are provided. Yes, notes will be provided. That's okay. You take the session for IDT and CFR also. Wow. I don't know whether I can take IDT and CFR also, but I'm very sure that whatever I can do, cost audit and BVM SPM, that I will surely do. Yes, hi sir. Very, very, very high. Superb, guys. So yes, guys, very few days left. Okay. And yes, these days will be very tough for you also, because you'll be studying day and night, and you'll be studying on weekends, you'll be studying on every day, and you'll be sacrificing a lot of things. But don't worry, all these sacrifices which you are doing today for the sake of your studies, they will reap multiple benefits to you, because tomorrow when you become a CMA and reap a big package in a campus placement, then you will realize that all these sacrifices which you are doing today, all these restrictions which you have imposed on yourself, all the discipline which you have imposed on yourself, all this will bear fruit once you become a qualified CMA. So don't worry, keep on sacrificing your pleasures, keep on sacrificing social media, keep on sacrificing your friends, family, everyone. Don't meet your friends, don't attend birthday parties, don't attend weddings, because I'm very sure that when you become CMA, then you're going to get these privileges back multifolds. Don't worry, I can give it to you in writing. So don't worry if you are feeling very very low with respect to your pleasures. That's really okay, guys, because now the pleasure in our life is getting those 3 alphabets, which is CMA, and that is the end game. That is the lakshya. That is the goal of our life today. So yes, all the very best and happy studying. Bye bye. See you in the next session. Today we are going to start one again an important chapter of your syllabus, which is the professional ethics and responsibilities. Okay, I'll give you a brief history about this particular subject, this particular chapter. Guys, the chapter is that now this particular chapter was introduced in 2008 syllabus. Of course, it was there in 2008 syllabus, and it was omitted from 2012 syllabas. When 2012 syllabus came and I saw cost and management audit book of study mat, this chapter was omitted from it, and only 1 or 2 paragraphs, 1 2 pages was there inserted in some other chapter. Okay, this chapter was absolutely omitted. But I was adamant to the fact that if you are willing to become a cost auditor, if you tomorrow see yourself as an auditor, if you see yourself as a professional tomorrow, this chapter is definitely to be done by you. Even if institute has erased this chapter from syllabus 2012, this chapter should be studied by each and every CMA. I was a firm believer of this particular fact, and to my surprise, in the examination, guys, question came from this particular chapter. That is the importance of this chapter. And yes, in 2016 syllabus, this chapter was very much there, and 2022 syllabus, of course, this chapter is there. You can actually expect, and you can expect a mandatory question from this particular chapter, 4 to 5 marks, maximum 6 marks. Okay, 4 to 5 marks, theoretical case study based question you can expect from this particular chapter. And yes, this particular chapter is definitely an important chapter. So Abhishek Kumar Sarma says the main reason behind is that you are teaching those subjects. Wow, what a good comment. Okay, Abhishek, thank you so much for this appreciation. So if I teach all the subjects, say, so tomorrow I start teaching all the subject of CMA final, then will all your subjects be your favorite subjects? What logic? So Gopika is saying, sir, but I'm sure I've attended all the questions in previous exam. It was direct question, but I got 20. At least one word will get approximately 17. I too demotivated. Gopika, don't be demotivated. Okay, sometimes your expectations and examiner's expectations are very different. Under this situation, I would recommend you to pull out your copy and see what is the error that you are doing. All right, so guys, let's start today's session of professional ethics and responsibilities. So as a professional, I'll ask you a simple question. Please, write in the chat box whether it's a yes or no. Okay. We have seen a lot of advertisements on TV, right? We see actors like Ranbir Kapoor, Ranveer Singh, Deepika Padukone, Pariniti Chopra, Priyanka Chopra. All these actresses and actors come on the television and they publicize a lot of products. Okay. So, Vimal Supari being advertised by Shah Rukh Khan, Akshay Kumar, Ajay Devgan, big actors come on television and advertise about products of these big companies, and there's huge budget which is allocated for marketing for these particular companies, for these particular products. Now my question to all of you is that, guys, do you think advertisement is also required by cost auditors? So once you become a cost auditor, do you need advertisement? Do you need to advertise your services? Do you think you also need advertisement? Because in today's world, we don't see advertisements of cost auditor. I mean, we don't see a situation where Aishwarya Rai Bachchan is coming on the screen and saying that, okay, if you want to get your cost audit done, then only get it done by ABC cost accountants. We have never seen that scenario. Or we have never seen banners being put, of cost accountants publicizing about their achievements, about their services, about their cost audit, about their expertise in income tax or audit or GST or any other matter. We have never seen any professionals advertisement on television or billboard. Why? What is the reason? Do you think they don't need advertisement? Do you think professionals don't need advertisement? Do you think so? Everyone is saying no. Everyone is saying no. Any particular reason? Why are you saying no? Sankari is saying no. Aarti Jain is saying no. Nidhi Suman is saying no. Abhishek Kumar is saying no. Ankita Murarka. Any particular reason? Cost auditor should not advertise. Why? Why cost auditor should not advertise? That is my question. Tejasvi is saying cost auditor should not advertise. Why? So guys, very frankly, every person or every product or every service in this world needs advertisement. Advertisement is required by everyone, whether it's a service, whether it's a product. Advertisement is definitely required by each one of us. But unfortunately or fortunately, all the professionals are bound by certain guidelines given to them by their respective institutes. For example, doctors are bound by the guidelines which are given to doctors by the Indian Medical Association. Engineers are also bound by the guidelines which are given by their own institute. Similarly, cost accountants are bound by the guidelines which are given by CMA Institute. So once you qualify CMA and you give your both the groups and you qualify and you apply for your membership, you will be taken in writing that you will not advertise your services. You will not undertake advertisement of your services. This will be taken in writing from you. But sir, why such a harsh imposition on professionals? Guys, the reason is that profession is a very, very noble thing. And if we allow professionals to advertise their services, if we allow professionals to go all out in market and tell about their services and hire big film stars or actors and tell about their services, then somewhere the integrity of the profession will be compromised. एक हिंदी का वर्ड मुझे याद आ रहा है, गरिमा. Garima of the profession will be compromised. The respect which profession has, that will be compromised. And that is the reason why doctors, engineers, architects, CMAs, chartered accountants, company secretaries are not permitted to advertise. Because somewhere, if we permit advertisements of any of the professionals, then guys, our integrity will be compromised. And we don't want any dark spot on our goodwill. Our goodwill will be compromised. So once you become member of any professional body, once you become member of any professional institute, and I am aware because I am member of 3 professional bodies, if you become member of any professional institute or body, then guys, your behavior is also governed by that body. How do you behave? How do you talk? How do you walk? How does your visiting card look like? All these things will be governed by the professional body whose membership you have taken. So the behavioral control, see, one is work-related control. Work-related controls means if you are doing audit, you don't have to do fraud. If you're doing audit, then you have to follow these guidelines, these principles, cost accounting standards, rules you have to follow. This is profession-related guidelines, guys. This is professional-related things that are imposed on you. But what I'm talking about is that you need to behaviorally also adhere to the requirements given to you by the CMA Institute. Your behavior, your conduct. What kind of social media profile are you creating? What kind of image are you creating about the profession in the world? And why is these professionals so particular about their image? Because guys, whenever something goes wrong, then the headlines do not read as Mr. Ram, Mr. Mohan did this wrong. No, the headlines will read as leading doctor of Delhi commits this offense. So the profession is at stake. Goodwill of profession is at stake. That's why we are saying we will govern your behavior also. We will not allow you to do certain unethical things. We will not allow you to do certain things which will put a dark spot on the profession. Because tomorrow, if anything goes wrong, then the headlines will read as cost accountant in practice does this wrong thing. And that is the reason. You are the brand ambassadors of profession. The members of the institute, the members of the professional body are the brand ambassadors of the profession. And that is the reason why strict guidelines, strict professional ethics are laid down. And before you are given membership of any professional body, you have to sign these these guidelines. You have to do your signature on these guidelines that you will follow these guidelines very, very carefully. Guys, very important guidelines are given under these professional ethics and responsibilities. And yes, these govern your behavior. These don't govern your work. These govern your behavior. So people advertise through websites and their services provided are enlisted there. So website is permitted. Website, if you create a website and enumerate your services, it is permitted. It is not considered as advertisement because everyone prepares their website. So website is okay. Okay. I am a doctor's. Yes. Fiduciary duties. Very good. Goshal Dake. Fiduciary duty and fiduciary position and trust is there. Definitely. Definitely. Okay. So guys, you must have seen, visiting cards of CMAs, visiting cards of CAs are there only in black and white color. Apart from the logo, logo can be in color. But apart from the logo, everything else should be in black and white. 2 colors are permitted. Guys, we don't want a situation where CMA is giving you card and his card is so flashy that you are seeing multiple colors, rainbow colors in that card. We won't have that situation. If a CMA, if a cost accountant is coming to your office, he should not wear t-shirt and jeans. He should always wear formal clothes. Tell me one thing, guys. As a teacher, on my entire channel, you always see me in formals. Have you ever seen me in casuals? Answer is no. What stops me? What stops me? As a teacher, I'm not bound by any professional guideline that I have to follow this mandatorily. I'm not bound by any guideline. Still, I make it a point that I always wear formals whenever I'm in front of all of you. The reason is I want to imbibe this subtle habit, this subtle mannerism in you, that tomorrow when you are going to some client's place or having some public dealing, guys, do not wear t-shirts and jeans. You should be in formals. That is the reason. Always, whenever I'm going to my class, also my face-to-face batch or my live batch, I'm always in formals. I do not wear t-shirts or jeans, as a matter of practice. The reason is very simple. I can easily wear t-shirts and jeans, but I want to imbibe this mannerism in hearts and soul of my students. That students, you are a professional. You are going to be a professional. If you are going to be a professional, then you have to. The first step is you have to look like a professional. You have to look like a professional. That is the first step in becoming a professional. Sir, so much of harsh provisions on us, so much of harsh restrictions on us. Yes, guys, because with great powers come great responsibilities. You are given the power of signing cost audit report. On the basis of your cost audit report, Ministry of Corporate Affairs will make its decision for the entire country. And you are telling me that you want to advertise your services using some actors and actresses on television? No, guys, not acceptable. Sorry. I won't permit this. Institute of Cost Accountants of India will not permit this. So yes, today the subject matter under consideration is that there are some behavioral guidelines, behavior related restrictions which are imposed, and these behavior related instructions are known as professional ethics, which every cost auditor is expected to obey, is expected to fulfill, because these are very, very core of any profession. Okay, now what is the objective of this code? Why is this code there? Sir, just dial, some firms are registered, it is also comes under professional ethics. No, just dial is okay. Just dial is not a problem. See, advertisement means public advertisement, television, radio, banners, hoardings, that is not permitted. Just dial is okay. Just dial is just like a directory. Okay, directory where you are informing that yes, if you want a cost auditor is here. So that is just a directory. Okay. Okay. So objective of this code, what is the objective of this code? Why is this code there in our profession? What is the objective of this code? Let's study. So the objective of this code, I have integrity, competence. The objective of this code is to imbibe certain virtues in you, is to imbibe certain good things in you. Yes. CPO PI. Aarti is giving a shortcut trick. Very good, Aarti. Aarti, where did you learn these shortcut tricks from? Very good. Superb. So yes, I'll also give you a shortcut trick of this part. Okay. So objectives of this code is to imbibe, is to give you certain virtues, certain good things for your benefit. What are those? They are integrity, competence, confidentiality, objectivity, and professional behavior. I have abbreviated as ICCOP. So guys, these professional ethics are just like cop. They are policemen, but they are behavioral policemen. They are guiding or they are regulating your behavior. So ICCOP. COP is policeman. Okay. So you can use this abbreviation ICCOP. ICCOP. That abbreviation you can use. Okay. So integrity, you should be straightforward and honest. First and foremost thing which is expected from an auditor is that he should be honest. If there's something hanky-panky going on in the financial statements or cost statements, you should be honestly telling it about it to the shareholders. So first thing is he should be honest and straightforward. Competence, he should be knowledgeable, he should be skillful, and he should be diligent. So three elements are added in competence. Competence means whether you are able perform as the role of the cost auditor or not. That is ability. Okay, so in case of ability, you have three things: your skill should be there, your knowledge should be there, and diligence. Diligence means you should be careful while doing your work. You should not be careless. You should be careful while doing your work. So competence has three elements to it. Confidentiality, very very important, guys. You should not disclose any information in case of any engagement to anyone. Okay, do not share any confidential information, because guys, as an auditor, you will be privy to some very very sensitive, price sensitive information. So you should not disclose confidential information to anyone. Confidentiality is a very very important virtue that these professional ethics will imbibe in you. Now I'll tell you my personal example of confidentiality, okay, and how sometimes doing some loose talks. Are you aware about what is loose talks? Loose talks or small talks. Small talks means gossips. How gossips or small talks lead to breach of confidentiality. I'll give you an example. Okay, so guys, I was auditing a very big garment manufacturing company, cloth, basically cloth manufacturing company. I was auditing that company, and during the course of audit, I came to know that this company is going to shake hands in case of a joint venture with a Japanese company. They both will join hand in near future. For that, they have also purchased a land whereby they'll be establishing a factory, and that Japanese company and this company will join hands and establish a company in that particular area. Okay, I came privy to this information. Why did I come privy to this information? Because I was the auditor. I had to check all the documents and all the happenings which are happening in the company. So I checked all the things. Okay, now this was a confidential information. This company was listed company, and this information was not out in market as yet. I wasn't aware about this fact. So once the audit was over, I came back to office, and once I came back to office, I was having just a normal chit chat, small chat over coffee with one of my friends who was in office, and he asked me, "Nikhil, where were you in audit for so many days?" I told him I was in this particular company, and this company is planning a joint venture with a very big company of Japan. This is the name of the company in Japan, and I came to know this. I in flow, in advertence, in flow, I talked about all these things to that particular friend, and that friend was a stock market investor. He immediately purchased some shares of that particular company, and he got profit, because once this information was public, at that point in time, the share price rose. So this information became public, share price rose. So this is how small talks means gossips, can lead to be breach of confidentiality. Guys, you should make sure that you should not do small talks or gossips about your client in your office or with your parents also. Some people have a habit of coming back home and saying everything to their mom, which is a good habit. Whatever happened during the day, you will tell you to your mom, which is a very good habit. But guys, even to your mom, any confidential information related to client must not be disclosed. Confidentiality is a very 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 important virtue. So confidentiality is a virtue which is there in professional ethics. Then objectivity means you should be fair, you should not be prejudiced or biased, you should be able to say what is milk, you should be able to distinguish between milk and water. Okay, that ability should be there, objectivity should be there in you. And professional behavior, this is the most important thing. Your act, your mannerism should be absolutely professional. I mean, professionals do not raise their voice when they're angry. Professional, in fact, keep mum when they're angry. They become silent when they're angry. So you need to demonstrate professional behavior. Just like I told you, at client's place, you cannot wear a jeans and a t-shirt. No, you cannot do that. So these are the virtues which we want to instill in you, and that is why this professional ethics is always given to the professionals who pass out a professional examination, so that they can adhere to the rules and regulations which are given in these professional ethics. Now let's come on to the rules and regulations. Rahana KK says, love from Kerala. Thank you so much, Rahana. Love to you also, to all the Keralites. All right. So now the contents of Schedule of CWA Act are briefly discussed. And now we come to the main content of this particular chapter. What are the activities which, if you do, it will be said that you are breaching professional ethics? What are those activities? Now we'll be discussing all those activities which come under category of breach of professional ethics. We'll start with the first schedule. So in total we have 4 schedules. We'll start with the first schedule. Okay, first schedule, part 1. So first schedule part 1 is related to professional misconduct in relation to cost accountant in practice. A cost accountant who has a COP. Okay, who's a cost accountant in practice? A cost accountant in practice is a cost accountant who has a COP, certificate of practice. Guys, yesterday I told you that once you become a qualified CMA, then you will be given an option. Either you can become a practicing cost accountant or you can choose to do your job. So in relation to cost accountant in practice, these professional ethics are applicable. These are not applicable in case of people who are in employment. For people who are in employment, for CMAs who are in employment, we have a separate schedule. This is for people who are in practice. Professional misconduct in relation to cost accountant in practice. For example, a practicing cost accountant should not. So what are the things that a practicing cost accountant should not do? He should not allow any person to practice in his name other than his CMA partners. So professional CMA cost accountant should not allow anyone else to practice on his name. So guys, sometimes what happens is, and this is a very common practice, people give their name. People retire and they give their name just for namesake. Sometimes empanelment of auditors, it helps if you have more partners in your CMA firm. Okay, so some people just give their name. They don't actually come to office. They don't actually come to work, which is not good. Okay, although if you give your name to CMA partners, that's okay. But if you are allowing any other person to practice in your name, so for example, if there's a lawyer and he needs valuation services, and you tell the lawyer, okay, you use my name, you perform the valuation services, you use my name for performing the valuation services. Absolutely wrong, absolutely wrong, not permitted at all. Okay, yes sir. कुछ लोग CS भी ऑडिट कर देते हैं, साइन CA से करवा लेते हैं. वाह वाह वाह, ट्विंकल रुस्तगी ने तो बड़ा कमाल की बात बोली है. यस, इनसाइडर ट्रेडिंग, नॉट ट्रेनिंग. शुभम भारद्वाज, इनसाइडर ट्रेडिंग, ट्रेनिंग नहीं, लिखा है ट्रेनिंग. ओके, नेक्स्ट, pay any share or commission or brokerage directly or indirectly in fees or profits of his professional work to any other person other than his partner. Now a cost accountant cannot share his fees with any other person. I'll give you a simple example. Okay, I am a cost accountant. Client came to me. Client said, I want complete services with respect to return filing, with respect to valuation, with respect to GST. I want complete services. I told the client that I can provide GST and return filing services to you, income tax and GST I can provide, but I don't know valuation. I'm not aware about valuation. So I will hire a valuer. You pay me the fees. I will pay the valuer's fees to him. This is not permissible. On behalf of client, you cannot pay fees to someone else. You cannot share your fees with some other professional. Yes, you can introduce the client to the valuer, but you cannot pay valuer's fees yourself. So you cannot pay any share, commission or brokerage in the fees or profit of his professional work to any other person other than the partner. You can share your profits with your partner, but not with any other person. So, if a lawyer is required, suppose a lawyer is required by the client, I cannot say that I will hire a lawyer, you pay me the fees, I will pay the lawyer. No, you cannot say this. You have to receive the fees which you deserve, and the fees which lawyer deserve, client will pay directly to the lawyer. Client will not pay to you. Client will pay directly to the lawyer. That is the principle. Okay. Third, accepts or agrees to accept any part of profit or professional work of any other person. Same guys, same goes, vice versa also is true. So if a lawyer is giving cost services to his client, and the lawyer asks you that you give services to lawyer, and lawyer will give services to the client, and lawyer will share his fees with you, you should say a no. You can't receive the money, you can't pay the money. Both ways the doors are closed. Neither can you receive the money nor can you pay the money to some other professional. Okay, we cannot do that. No. Enters into partnership with any person other than cost accountant in practice. This is a very, very important point. So any kind of partnership is not permitted with any other person apart from cost accountant. So suppose if I want to open a partnership firm with a chartered accountant, can I do it? Answer is no, I cannot do it. If I want to open a partnership firm with a lawyer, can I do it? Answer is no, it is not permissible. Although the Partnership Act or the Companies Act permits multidisciplinary partnerships. And to an extent, guys, Institute of Cost Accountants of India has also accepted this fact of multidisciplinary partnership. But still, there are still some open-ended points which are still becoming lacunas in this particular subject matter. Okay, so that is the point. Okay, let's see what is the next misconduct. Let me check your questions. Twinkle is saying पैसे के लिए कुछ भी कर देंगे sir. Abhishek says, sir, can professionals from all three institutes join together to open a partnership firm? So guys, as I told you, there's a concept of multidisciplinary partnerships, but it is not as prevalent as of now because there are some restrictions from some institute ends. Yes, it is applicable for Silver 2022 also. Yes, yes, yes. Your GST lectures are superb. Thank you, Rahana KK. Thank you so much. GST lectures. Okay. Okay. Next is secure professional business from any person other than his partner, employee, or from any source which is not open to cost accountants. Very, very important, guys. in a subtle way, they are also restricting advertisement. You cannot score any secure any professional business from any person other than your partner or employee, or from any source which is not open to cost accountants. You cannot secure business from any other source. You cannot advertise. You cannot ask a lawyer that, dear Mr. Lawyer, please, while you are giving services to your client, please tell about me also. You cannot secure professional business from anywhere. Next, solicit clients. Solicit means invite. Invite clients or professional work by circular, advertisement, personal communication, interview, or by any other means. So you cannot invite client by advertisement. Prohibited. Personal communication. You cannot call the clients and tell them, I am a cost accountant. Can I do your cost audit? No, you cannot do that. You cannot do that. Yes, you can meet the client. You can tell your credentials to the client, but you cannot actively, just like you get calls of insurance. Do you want to take insurance? Do you want to take credit card? You cannot, call people and say that, do you want to get your cost audit done? Do you want to file your income tax return? Do you want to file your GST return? No, you cannot do that. It's against professional ethics. Advertises professional attainments or services or uses any designation or expression other than cost accountant on professional document. So you should not advertise your professional attainments. That I do cost audit of Reliance Industries Limited. I do cost audit of Tata Communication Limited. You cannot do that. You cannot do that. And you also cannot use any expression other than cost accountant on your visiting cards. So on your visiting cards, you cannot write, I'm a tax advisor. On visiting card, you cannot write that I'm a expert in transfer pricing. You cannot do that. You have to write that you are a cost accountant when you are a member of a professional body. You have to write that I am a cost accountant. That is the requirement. Okay. All partner CMA matlab. Where have you seen this all partner CMA? Prajakta says when we register in Just Dial, we have to call the customer. No, not necessarily. Just Dial means that you will receive calls from your customers and you'll be connected to them. Just Dial won't call anyone. Suo moto. Okay. So this was, guys, first schedule part 1. Now we move on to first schedule part 2. First schedule part 2. Professional is in relation to members of institute in service. This is related to people who are doing job, not practice. This is related to people who are doing job. So member in service. Service means a job. So first schedule second part is dedicated to people who are doing job. What all they cannot do. That is the ask. Okay. Pay to any person any share and emolument of employment undertaken by him. So they cannot pay their salary to any other person. They cannot pay their salary to any other person. So I'll give you an example. Okay. Suppose I am a cost accountant and I am doing job in Tata Communication Services and I'm their chief cost accountant. Okay. I hire a cost accountancy firm and tell them that I don't want to prepare cost accounts of this year. You please prepare the cost account, and whatever salary I will get, I will pay 50% to you. Because this year I don't want to work. I don't want to go to the office. Therefore, you do the work on my behalf and I will pay 50% of my salary to you. Not permissible. Not permissible. You cannot share your salary with anyone. Then it says, accept any part of fees, profits and gains from a lawyer, cost accountant or broker engaged by such company, firm or person, agent or customer of such company, or firm or person by way of commission or gratification. Now, guys, what happens is sometimes, there is a dire misconduct, which is, suppose I'm CFO of a very big company. Every decision is in my hands. Who shall be the cost auditor? This is also in my hands. I'm the CFO. I'm a CMA and I'm also a CFO of the company. And who will be the cost auditor? This is in my hands. There are 4 firms who have applied as the cost auditor in my company, and I tell them, whichever firm is going to give me 5 lakh rupees, I will appoint you as the cost auditor. This is impermissible. This is corruption. This is corruption, guys. This is fraud. Impermissible. So you cannot accept any part of fees, profit and gains of lawyer, cost accountant or broker engaged by such company, firm or person or agent or customer of such company, firm or person by way of commission or gratification. You cannot accept any money from any such people. Okay. Next, first schedule part 3. First schedule part 3 is related to professional misconduct in relation to members of institute in general, which means that this part is applicable for both people who are doing job plus people who are doing practice. This part is applicable for both. So part 1 only to people who are in practice, part 2 only to people who are in job, part 3 to people who are in job as well as in practice. Both. Yes sir, both. So what are these? Act as a fellow of the institute if he is not the fellow of the institute. So guys, there are 2 levels of membership that you will get. First, you will get associate membership, ACMA, and then you will get fellow membership. Fellow membership you will get only after doing practice over a couple of years. After you do practice over a couple of years, then you are eligible for get your fellowship. Okay, fellow, you are a fellow. Suppose you are not a fellow. Fellow represent that you are very experienced. Fellowship means that you are experienced. Suppose you are not a fellow and you are telling people that you are a fellow. This is misconduct. You are a and you are telling people that you are a fellow. This is a misconduct. You cannot do that. If you are not a fellow, you cannot claim yourself to be a fellow. So a person who acts as a fellow of the institute, if he is not a fellow of the institute, fellow means this is a level of a membership, guys. Associate membership and fellow membership. These are 2 kinds of memberships which are there, and you cannot tell yourself as a fellow if you are not a fellow. Okay. So Gaurav is asking which schedule is important for this exam. So I think first schedule, not for this exam, but generally, guys, first schedule is the most important schedule. First schedule is the most important schedule. Okay. Then he should not act as a fellow. He should refrain from supplying information called for by the institute council or any of its committee. So he should not refrain from giving any information to the institute. If institute is asking for information about the company, he should be open and free in giving that information to the institute. Then he should not supply, gives information knowing it to be false while soliciting work from other cost accountants responding to tenders or bid. So he should not supply any misleading information, any wrong information to anyone. That is again a professional misconduct. If you are supplying misleading information or wrong information to anyone, then again you are under professional misconduct. Then first part, schedule 4. Guys, first part, schedule 4 relates to other misconduct. So there are 2 types of misconduct. Professional misconduct, which means while you are performing your professional duties, then you are doing something wrong. Another is other misconduct, which means even when you are not doing your profession. So, in the evening, you are absolutely free. You're roaming about in the streets and, you beat someone. Will institute take an action against you? Yes, police will take an action against you for sure. But will institute take an action against you? Yes, it will take action against you under schedule 4, which relates to other misconduct. This is not a professional misconduct. This is other misconduct. So schedule 4 relates to other misconduct of in relation to members of the institute in general, which means it's applicable for both people who are doing job plus people who are doing practice. It's applicable for both practice and job. But this leads to other misconduct, which clearly means that institute is not only regulating your professional life, but also regulating your personal life. There is nothing called personal life when you become a professional. If you are professional, there is nothing called personal life. Your every conduct, your every behavior should be under some ethical standards. There's nothing called professional life, a personal life. So if you say, sir, till 6 o'clock, I'm very, very decent man, and I do whatever is required by me, whatever is ethical, I do all those things. But after 6 o'clock, I become absolutely unethical. I become rustic villager. I drink and I smash public property. Not permissible from the institute side also. Cannot do that. So first schedule part 4 leads to other misconduct. What are these other misconduct? He should not be held guilty by any civil or criminal code for any offense which is punishable with imprisonment for a term exceeding 6 months. So that person should not be held guilty of any criminal offense for which he should be punishable for imprisonment exceeding 6 months. If he spends time in jail exceeding 6 months, then guys, this is a professional misconduct. He has done some professional misconduct. So if you are charged against the allegation of eve teasing, institute has all the rights to cancel your membership. Your membership will be cancelled. You might say, sir, but that is not no business of institute. Why is institute intruding in my personal life? That's my personal life. Whatever do I do in my personal life, that's my personal thing. No, guys, I've told you the golden formula. After you become a CMA, there's nothing called personal life. No, you cannot do anything wrong unethically in your personal life also. Mark it a point. सर बट इंस्टीट्यूट को क्या ये तो पर्सनल है ना, हमारा इसमें क्यों आएगा? ट्विंकल इज आस्किंग द सेम क्वेश्चन व्हिच आई हैव जस्ट रिप्लाइड कि पर्सनल लाइफ की वजह से प्रोफेशनल लाइफ में इफेक्ट पड़ता है. वेरी गुड आंसर गौरव अग्रवाल, क्योंकि पर्सनल लाइफ की वजह से प्रोफेशनल में इफेक्ट पड़ता है भाई. टेल मी what will be the institutes, what will be the newspaper headline next day? It will be CMA Twinkle Rustagi was found smashing public property. This is the headline. CMA will definitely be there. Cost accountant will definitely be there. Because to sensitize the newspaper, to sensitize any news, institute uses some professional body's name for sure. That is the reason. Yes. So he should not be held guilty by any civil or criminal code where he is allowed, where he is subject to imprisonment of more than 6 months. Then whatever brings disrepute to the profession, if you do anything which brings disrepute to the profession or the institute as a result of his action, whether or not related to professional work or not, whether it is related to professional work or not, if you do anything that will bring disrepute to the institute, that will tarnish the goodwill of the institute, anything open-ended, anything, if you do anything which tarnishes the image of the institute, then it will come under the category of professional misconduct, and institute has all the rights to cancel your membership under the fourth part of first schedule. Now we come on to the second schedule. So guys, just like there is first schedule, there's second schedule also. Now let me tell you a brief difference between first schedule and second schedule. What is the difference between first schedule and second schedule? I'll tell you the difference. Okay. इंस्टीट्यूट कहता है इज्जत से रहो, प्रोफेशनल हो, तभी तो सीएमए प्रीफिक्स दे रहे हैं आपको. पूरे इंस्टीट्यूट का नाम खराब होता है. ट्विंकल को बात समझ में आ गई, देर से समझ में आई लेकिन दुरुस्त समझ में आई. वेरी गुड ट्विंकल. ओके, second schedule part 1. Now I was telling you the difference between first schedule and second schedule. Okay, so guys, the difference between first schedule and second schedule is that first schedule covers offenses which are little less aggressive in nature, which are punishable to a lesser extent, which are a little less harmful. And the second schedule covers those offenses which are very, very aggressive, which are very, very harmful, which are of a very high cadre, which are of a very high level. So schedule 2 are offenses which are very, very strong offenses, which are very, very tough offenses. And schedule 1 includes those offenses which are relatively less heavier, relatively less punishable. That is the difference. So schedule 2 part 1. Again, part 1 relates to professional misconduct in relation to cost accountant in practice. So this is applicable to cost accountant in practice, not on the cost accountant on job. Okay, he should not disclose confidential information acquired in the course of his professional engagement. We have already discussed this. Confidentiality should be maintained by the cost accountant. Certify a report of examination of cost accounting unless the examination has been made by him or his partner. So a person cannot certify a report without examining the statements. Some people, just blindly sign the audit report without even seeing the financial statements, just in a greed of money. Should not do that. Should not do that. Certify report of examination of cost accounting unless examination is done by him or his partner. Permit use of his name in connection with an estimate of cost or earning which is contingent upon a future event. So guys, very, very important. As a cost accountant, you cannot vouch for, or you cannot certify, or you cannot sign on a report which tells about some estimate of future projections. You are a cost accountant. You are not a oracle, the divine god. You are not the divine god that you will estimate the future. So professionals are restricted from estimating the future. You cannot estimate future cash flows like we do in our valuation. You cannot do that. You cannot estimate that, and you cannot sign it. You can estimate it, but don't sign it. Don't say that I, Nikhil Gupta, the cost auditor with membership number so and so, certify that these future projections are perfect. You cannot do that. You can prepare it, but cannot sign it. So he should not permit use of his name in connection with any estimate of cost or earnings which is contingent upon future events, because in future whether it will happen or not, you're not sure about that. So that is not permissible. Express his opinion on cost or pricing statement of any business in which his firm partner or his firm has substantial interest. So again, restriction with respect to the qualification of the auditor. Similar restriction is there that if you have interest in the company, then you cannot be a cost auditor of that particular company. You should not have any financial interest in the company if you want to be the cost auditor of that company. We are not celebrities to give autograph on any document. Very good, very well said, Sharan, very well said. Twinkle says, yes sir, बाजीगर मूवी वहां खेल हो जाए अगर ऐसे ही करते रहे तो. नहीं समझ आए. Do you have to learn schedule from theory or it's only relevant for case studies? No, Shubham, even if it's for case studies, then you have to learn these schedules, no? You should be aware about in which schedule is what offense coming in. Finally. Tarun Jain is asking practical question का weightage क्या कितना होता है? Cost and management audit practical questions will come of about 35 to 40 marks out of 100 marks. Okay, this is the first schedule of second schedule of first part. Okay, then fail to report a material misstatement known to him to appear in the cost accountant. So if knowingly, okay, the word is knowingly, if knowingly he fails to report any material misstatement, the most important word is which is known to him, knowingly if he fails to disclose any material misstatement in the cost account, then he is subject to professional misconduct. Does not exercise due diligence, he is not careful in his work, or demonstrate gross negligence in the conduct of personal duty. So while you are conducting the personal professional duty, you should not be careless. Okay, if you show carelessness, then guys, you will be subject to these rules. Second schedule part 2, again professional misconduct in relation to member of institute generally, which means it is related to job plus practice. People who are there in job plus people who are there in practice. What does it say? Contravene any provision of this act or regulation made thereunder. So whatever is written in this act, in this particular professional ethics code, if you don't follow it, then you get covered under second schedule part 2, which is the professional conduct part. Okay, for members who are in practice as well as members who are in a job, for both of them. Okay, sir. How much marks this chapter carry? 5 to 6 marks. No. Shubham, you don't have to address the schedule by schedule number or part number. You need not remember schedule number or part number. That is not a required thing. Okay. So he discloses confidential information acquired in the course of professional engagement. Again, not permissible if confidential information is disclosed. Furnish incorrect information to the institute, council, or any other committee. So you should not furnish any incorrect information to the institute or council or committee. Defalcate or embezzle monies received in his personal capacity. So he should not embezzle the money which is received to him in his professional capacity. He should not make any illicit gains from the professional attainments. So I'll tell you a very interesting story. Okay, please don't publicize this story. Okay, I used to do my articleship in one of the small firms. Okay, I did this training, finance training. So whenever my boss used to prepare income tax returns, and suppose the income tax which is calculated at rupees say 30,000, okay, he would always tell the client that your income tax is 50,000 rupees. Give me 50,000 rupees and I'll file your return. Client used to trust him and give him 50,000 rupees. 20,000 rupees he used to put in his pocket apart from the professional fees which he is receiving from the client, and 30,000 rupees he used to deposit on behalf of the client. So this is what is prohibited over here. He cannot defalcate or embezzle money received in his professional capacity. So these small problems are there, but guys, I'll tell you out of my experience, please do not fall for such small greeds. These are small greeds. Don't fall for such small greeds. Otherwise, you will not grow in profession. If you don't show your trust in profession, then you will not grow in the profession. That is my request to all of you. Don't do that. सर जैसे टीचर होते हैं वो लोग प्रैक्टिस भी करते हैं और पढ़ाते भी हैं, तो सर ये इसमें आएगा क्या? किसमें, किसकी बात कर रहे हो? किसकी बात कर रहे हो? कहाँ लिखा है कि आप पढ़ा नहीं सकते जब आप प्रैक्टिस कर रहे हो? तो ये कहाँ लिखा है? तो भाई पढ़ाने का क्या रूल होता है मैं आपको बता देता हूँ कि इफ यू आर प्रैक्टिसिंग मेंबर ऑफ एनी ऑफ द इंस्टीट्यूट्स एंड इफ यू वांट टू टीच along with your practice, then you just have to intimate the institute that along with my practice I also want to teach. You get a permission from the institute. That is not prohibited, it is allowed. Today I am pushing myself and focusing, sir. Today my CS final exam went bad, sir. Open book, but entire paper was out of syllabus. Even after that much effort, paper was like that. Tejasvi, don't worry about this, okay? Professional examination is like that only. This is the heart and soul of professional examination. Don't worry, prepare for the next examination. Job or practice, sir, पढ़ाना भी अगर किसी कोचिंग में. Job or practice you cannot do together. No, 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 no. Okay. Perfect. Let's move on to part 3. Second schedule, part 3. Second schedule, part 3 is other misconduct apart from professional misconduct of member of institute in general, which means it is applicable to people who are doing job as well as people who are doing practice. It is applicable for both of the people, whether you are doing job or practice. Second schedule, part 3 is applicable to you. A member of institute, whether in practice or not, shall be deemed guilty of other misconduct if he is held guilty by any civil or criminal court for an offense which is punishable exceeding 6 months. So again, guys, this default is featuring in first schedule as well as second schedule. Both the schedules are featuring this particular clause. Why? Because if there are very grave offenses which a person has done, then he'll be covered under second schedule. If there are very small offenses which the person has done, then they will be covered under first schedule. Okay. So what is the escalation matrix? Once any default in these schedules are found, who is to be who's the adjudicating authority who will tell what is the punishment? In case of schedule 1, complaint is referred to board of discipline, which is an internal committee which is formed in the institute. Schedule 2, big offenses, okay, big miscompliances, complaint referred to disciplinary committee. This is a very, very strong committee. Okay. Following actions may be taken: reprimand the member, scold the member, remove name of the member for 3 months, fine up to maximum 1 lakh. In case of schedule 2 offenses, reprimand the member, remove the name of the member permanently. Please underline the word permanently. You can be devoid of your degree permanently, and fine up to maximum of 5 lakh rupees. That is the offense. Okay, so here I've tried to tell you the seriousness of disciplinary committee, guys. Okay, so board of discipline, a person with experience in law having knowledge of disciplinary matters, 2 council members and 1 director discipline. Okay, member of disciplinary committee should be, the council shall constitute disciplinary committee consisting of president or vice president of council as presiding officer. So who is the presiding officer? President or vice president of the council, very senior person. 2 members to be elected amongst member of council, 2 members to be nominated from central government. Look at this, how serious second schedule offenses are. Central government person will be there, person of eminence having experience in field of law, economics, business, finance or accountancy. That is the gravity of the second schedule. Second schedule is very, very grave, guys. Very, very grave. Okay. So these are common sections, guys. What are the penalties? On first conviction, what is the penalty? Subsequent conviction, what is the penalty? These are common sections. These I don't need to run past them. Okay. Now let us do some practical questions and let's see if you are able to solve these case studies or not by yourself. Okay. You need to solve these case studies by yourself. Okay. One by one, we'll be seeing these case studies and let's see who gives me answer first. A part. Okay. Let's start with A part. A part says, a cost accountant in practice takes voluntary retirement from his employer and starts his practice. He continues his association with the previous employer as an advisor on a monthly retainer basis, whether it is categorized as professional misconduct or not. Whether it is professional misconduct or not. Guys, he is in employment, okay? and while being in employment he is also doing his practice, whether this is misconduct or not. A part, I want the answer. Pooja Shinde says some faculties who teach in our institute, they also practice as a CMA. That's not a problem. It's just that the institute is to be made aware of this fact. It's a misconduct or not? Everyone is saying it's a misconduct. Amitesh is saying it's not a misconduct. Prajakta is saying misconduct. Padma says no misconduct. Aarti says no misconduct. Suman says misconduct. Lakshmidhar says no misconduct. So the answer is it is not a misconduct. Why? Because he has broken all relationships with respect to his employment. And after that, he is associated with the previous employer as an advisor, not as an employee. Not as an employee. So it is not a misconduct. This is perfectly fine. It is perfectly fine. It's not a misconduct, guys. It is not a misconduct. Okay. Part B. A practicing lawyer specializing in anti-dumping cases comes to an informal understanding with the independent practicing cost accountant to assist him in preparing accounting statement to support his cases and agrees to share his fees on a percentage basis. So a lawyer comes to you and agrees to share his fees on a percentage basis with you, whether it is a professional misconduct or not. Whether this is a professional misconduct or not. Yes, Twinkle, very right answer. Whether it is a misconduct. Supreet says it's the misconduct. Who else? Yes, misconduct. Prajakta says misconduct. Abhishek says misconduct. Yes, guys, very right. It's a misconduct. You cannot share your fees with any other profession, and you cannot even receive fees from any other profession. It is absolutely a misconduct. Yes. Very good. Ghoshal has given an extended answer, and I would like to display Ghoshal's answer on the screen. This tantamounts to informal partnership and it is prohibited. It's a professional misconduct. This is the perfect answer Ghoshal has given. Very good, Ghoshal. Very, very good. Okay, next. C. Cost accountant gives a certificate of cost for product manufactured by SSI unit owned entirely by his son. So cost accountant is giving some cost certificate to a firm which is owned by his own son, whether professional misconduct or not. Please think through properly. Let's see. Everyone is saying it's a misconduct. Everyone is saying it's a misconduct. Abhishek saying misconduct. Gaurav is saying misconduct. Prajakta saying not. Very good. So guys, this case. So this case, guys, this is not a misconduct. This is not a misconduct. Why? Because if you have any substantial interest in that business, only then are you prohibited to audit that particular firm. But if your son has substantial interest in the business, then there is not a problem according to the professional misconduct schedule. It might be a problem according to Companies Act. It's not a problem for this particular schedule because the schedule says that you cannot audit a firm in which you have substantial interest. So not a misconduct. KC. Cost accountant gives certificate of cost of production for attaching with a tender for a cost plus contract. He comes to know after signing the certificate that his client has won a case with supplier on account of which the client is entitled to get a refund of substantial portion of purchase price of raw material. The certificate is not corrected. So, you gave a certificate to one of your clients regarding the purchases or whatever. Subsequently, you came to know, after you get the certificate, you came to know that the cost that has been approved by you is going to get refunded from the supplier. It is going to get refunded. Okay, so your in a nutshell, your certificate is incorrect, whether it's a professional misconduct or not. Whether it's a professional misconduct or not. D part. Part C. So guys, in part C, we are saying that son is owning the SSI unit. So son has substantial interest in the SSI unit, but father doesn't have any substantial interest in the SSI unit. Father doesn't have any interest. So father can issue a cost certificate to the SSI unit. That is what. Yes, very, very good, guys. So, the cost accountant was not aware about this particular development when he was signing the certificate. So, this is not a misconduct. But as a good practice, he should now issue an addendum to his certificate telling about this particular event which has happened. X is a shareholder in PQ Limited and holding 100 shares. Company's paid up capital is 500 crores. X accepts certificate work from the company. So, X is a shareholder who's holding 100 shares in the company. Okay, the company's paid up share capital is 500 crores. X accepts certificate work from the company. X is doing certification work for the company where he is also a shareholder. So please tell me whether this is misconduct or not. Whether this is misconduct or not. He's a shareholder of 100 shares. Whether this is a misconduct or not. Absolutely. No, this is not a misconduct. No, it is not a misconduct. Why? Because to qualify it as misconduct, you have to have substantial interest in the company. You have to have substantial interest in the company. And X only has 100 shares in PQ Limited out of 5 crore share capital, 50 lakh shares. He has only 100 shares. But sir, we had read somewhere that, even holding one share is problematic. Guys, that is in case of Companies Act. In case of Companies Act, holding even one share by the cost auditor is problematic for the cost auditor. Yes. Yes, perfect. Practicing cost accountant brings disrepute to the profession as a result of his action in his professional work. Of course, yes. If he is bringing disrepute to the profession, of course, this is professional misconduct. Practicing cost accountant for his personal advantage shares certain confidential information acquired from costing or cost auditing. Professional cost accountant has acquired some professional information and he is supplying this professional information. He is using the professional information. Absolutely a misconduct. Firm of cost accountant undertake cost audit of a company. The audit work is conducted by one of the partners and two assistants. A report is, however, signed by another partner. A report is signed by another partner. Permissible or non-permissible? H. So work is done by one partner. Report is signed by another partner. So permissible or not? Permissible, guys, permissible. If the report is signed by his own partner, who's a cost accountant, permissible. If the report is signed by some other person who's not a cost accountant, not permissible. So this is permissible. I, practicing cost accounting accept assignment previously held by another cost accountant in practice after duly communication with him. So before accepting any assignment of cost statements, cost audit, the new cost auditor must communicate with the old cost auditor to ascertain why did the old cost auditor lose the business. Okay, that is a courtesy letter which is required to be issued. So no professional misconduct. A practicing member firm maintains branch office in India, each under separate charge of member of ICI. No misconduct. So having a branch in many cities, not a misconduct. Personal discussion or correspondence with prospective client relating to achievement and capabilities of practicing cost accountant. So you are doing a personal chit chat, you are doing a personal discussion with your prospective client, with your future client regarding your achievements. You are telling your achievements. So guys, a personal discussion is not a problem. A personal discussion is not a problem. Issuing a memorandum or issuing a certificate or issuing your advertisement is a problem. If personally I'm discussing my achievements with a client, not a problem. So it is not a misconduct. It is not a misconduct. Next, press publicity, not an advertisement regarding appointment as an auditor. You are doing press publicity, which means you have invited press and you have told them that I have become the cost auditor of Reliance Industries Limited. Wow. Not permissible. Not permissible. Whether it's an advertisement or through any other means, you cannot publicize your professional achievements. Not permissible. An advertisement notifying change in address or partnership. Advertising where change in partnership or change in address is denoted. Absolutely no misconduct, guys, because this is a usual thing. Mr. Jain, a practicing cost accountant, takes up job as full-time lecturer in XBL Management Institute in Jamshedpur, affiliated to Ranchi University. Same case as we had discussed, guys. A person who is into practice, he has obtained a lecturership in a college. Will it tantamount to professional misconduct or not? What is your answer? I'm at part N. What is your answer? Answer is very simple, guys. It's only that the practicing cost accountant should obtain permission from the institute for acting as a teacher. That is the requirement. If he has obtained permission from the institute, no problem. If he has not obtained permission from the institute, problem. He has to convey to the institute or take permission from him. Perfect answer. Tinkle. Okay, next. Mr. Pidhar, a cost accountant, uses visiting card in which he designates himself besides cost accountant as tax consultant. Not permissible. Not permissible. Mr. P. Nandkarni, a cost accountant practice in India, entered into partnership with RD Homes, CMA USA. CMA India having partnership with CMA USA. Not permissible. Not permissible. A certificate of practice is not required to be taken in case of CMA US. Then CMA Anusuya, a cost accountant practice, published a book, gave her personal introduction as an author. Details also mentioned her professional experiences and her association as partner with PKR and Associates, firms of cost accountant. So a person has issued a book, that is an authorship of a book, and that person has also told about his her association with the partnership firm, which is PKR and Associates, whether professional misconduct or not. Please tell me. Yes, it is a professional misconduct. Very good. Because she shouldn't have mentioned that she's a partner with CMA firm. He shouldn't have mentioned that, because this is tantamounting to advertisement. This is tantamounting to advertisement. This is advertisement, guys. This is a misconduct. Very good. I think first of all, no, before we go ahead, you should, guys, clap for yourself. Clap for yourself. Put that clapping emoji in the chat box. Clap for yourself, because you guys are really doing it well. It seems that you are absolutely prepared for your cost audit examination, and yes, you are going to get 80 plus marks in your cost audit for sure. So just give me a clapping emoji on the chat box. Next, Messrs. R.K. Bhatia and Associates, a firm of cost accountant practice, develops a website, bhatia.com. The color chosen for website is very bright yellow, where names of the partners of the firm along with their various professional attainments and major clients were to be displayed on the website. So it has opened a website, but very bright yellow color is there on the website. Very bright yellow color is there on the website, which is very, very eye-catchy. And on the website, all the partners' names and their attainments are written. So guys, what should be your answer? Please tell me, is it a misconduct or not? Abhishek says not permissible. Twinkle says no misconduct. No color is defined for website. Shubham, very good answer. Shubham Bhardwaj, very good answer. First of all, guys, no colors decided for website. Institute cannot tell us what color should we use for our website. So website color is our choice, and it's okay. No professional misconduct in that respect. But guys, he has he has publicized his professional attainments on the website. That is prohibited. You cannot say that, I have audited this client. You cannot say that. You cannot name the client. That is professional misconduct. So on the website, you cannot say that your professional attainments are that is impermissible. Then D.R. Radhakrishnan, a cost accounting practice, takes up appointment as managing director of Anukriti, a public limited company. Can a cost accountant take an employment in any company? Can a practicing cost accountant take employment in any company? Answer is no. Answer is no. So is Radhakrishnan under professional misconduct? Yes, he is under professional misconduct. Okay. So guys, if you take up employment now, in some cases, the institute permits it because it is a matter of prestige. So suppose you are hired by, say, one of the Navratnas as their nominee director. Okay, in that case, it's a pride and privilege for the institute also. So you have to approach the institute, tell them that I'm getting employed over here because of this reason. The institute will give you permission. Apart from that, it is a misconduct. If you don't do that, it's a misconduct. B. Horia and Company, firm of cost accountant, was appointed by company to evaluate the cost of various products manufactured by it for information. One of the partners of the firm were non-executive director of the company. Problem. One of the partner of the partnership firm was a director of the company. Professional misconduct or not? This is a very, very tricky one. Tricky one. Yes, it is a professional misconduct. Perfect answer, guys. Substantial interest. Very good answer. Very good answer. Yes, it is a professional misconduct. Mr. Arun, CMA's working manager, cost accounts for PQR. He accepts 10% of profit from his friend, Mr. Raju, a lawyer. He is doing job on retainership basis. Can a member in job accept any emoluments, accept any part of profit? Yes or no? Answer is no. Is this a misconduct? Yes, this is a misconduct. Then S, a CMA in practice certifies a cost and pricing statement of manufacturing of pipes for the supply relating to contract. The statement is prepared by Mr. T, who is not a CMA or an employee of S. So Mr. S, practicing a cost accountant, is certifying some cost, and that analysis is done by a third party who's not even a cost accountant. Permitted or not permitted? Not permitted. It's a misconduct? Yes, sir, it's a misconduct. Arun Maya, the practicing cost accountant, engaged 2 trainees undergoing training under his guidance for audit job. Since the job was voluminous, he agreed to pay them, in addition to stipend, 10% of audit fees. 10% of audit fees is paid by that particular person to the audit assistants. Wow, we should also get such principals who pay us, apart from our stipend, they pay us audit fees percentage. Such a generous, cost accountant is he. So is it a professional misconduct or not? Please answer in the chat box. Yes, this is a misconduct. Very good answer. This is a misconduct. Any practicing cost accountant cannot share his professional fees with anyone other than his own partner. This person, the article assistant, is not a partner. Therefore, this is a professional misconduct. Yes, this is a professional misconduct. Very good answer, guys. Very, very good answer. Perfect. So yes, you have done all the questions very, very well. Okay. So yes, there are certain similar. These questions are very easy, guys. These questions are very easy. Certain similar questions are there from your past year's examination also. If you do these questions, then it will be done. So guys, yes, very, very, very important chapter from an exam standpoint. 4 marks, 5 marks, 6 marks. And trust me, nothing apart from whatever is given in your study mat of the institute will come from this particular chapter. So very, very straightforward and easy chapter. If you do all these case studies well yourself, you'll be able to absolutely clear your examination with flying colors with respect to this particular chapter. So you need not do anything else apart from whatever is written in your study mat. That's it. It's such an easy chapter. Yes, these PDFs will be shared with me in the link in the description box. I think my team has not put the link as yet, but I think tomorrow this link will be up and running. You will get your PDF of first, second, and third, all the 3 chapters in the link which is given in the description box below. So yes, link will be there and PDF will be sent to you very, very, very soon. Okay, guys. So yes, that's all for this particular chapter. We'll be meeting in our next session, guys. We'll be meeting in our next session. Yes, that's all for this particular section, guys. We have covered one of the most important chapters of our syllabus, which is professional misconduct. So we'll be meeting in our next session with more such chapters. And yes, probably in the next session, we'll be starting with cost accounting standards. Yes, one of the most important chapters of your syllabus from both theoretical and practical perspective. So yes, next class will be dedicated to, and next few classes, 2-3 classes will be dedicated to cost accounting standards. So get geared up for the cost accounting standards. We'll be starting cost accounting standards in our next class. So that's all for this particular session. We'll be meeting in our subsequent sessions. Till that time, all the very best and happy studying. Bye bye. See you in the next session. And today we are going to start this amazing topic, which is cost accounting standards. Let us start cost accounting. Okay, there was an echo. You could have heard an echo. Okay, yes. All set, guys. All set for this particular chapter. This is a very, very important chapter from an exam standpoint, cost accounting standards. And before starting this chapter, let me ask you a question. What do you mean by standards? Okay. Forget about cost accounting standards. Okay. Forget about accounting standards. Forget about ICDS, which are the income computation disclosure standards. You have studied so many standards in your entire course. Forget about all those standards. Now, please tell me, guys, what do you mean by standards? What do you mean by standard? I am just wanting to ask you one question. What do you mean by standard? What is the meaning of this word standard? Please confirm me in the chat box. What do you mean by standard? What is the meaning of the word standard? Wah, wah. Dialogue coming from Abhishek Kumar Sarmaha. सर आपकी स्माइल ने मेरे ट्रैवल के कम कारण हुई थकान को मिटा दिया. वाह वाह. और एक बात बताऊं, जब सीएमए बन जाओगे ना तो सारी थकान, ये जो थकान एफर्ट्स की स्ट्रगल्स की थकान है ना, ये सब मिट जाएगी एक सेकंड में. Yes, very good answer by Mahendra Reddy. Guidelines. Standard means generally accepted way of doing something. Very good, Neha. Vivek Lambate says rules and processes. MN King says uniformity. Keep uniform in all industries. Very good set of rules and regulations. Very good. Certain principles or rules which need to be followed to maintain uniformity. Very, very good. Standard means principle to be followed. Perfect. Level of basic or minimum quality to adhere. Very, very good answer. To work according to that rules and regulations. Very good. Attainment as per expectations. Very good answer by all of you. Standards means something what you've written in the chat box. Standard means the most expected way of doing a thing. So there can be 2-3 ways of doing everything. Okay. The most expected way of doing that particular thing, the most obvious way of doing that particular thing is known as standard. I'll give you a simple example. Please comment in the chat box. What is C plus O2? One element of carbon multiplied by 2 elements of oxygen. What is C plus O2? Please write in the chat box. What is C plus O2? What is the meaning of word? What is the resultant, resultant part of this equation? C plus O2. Yes, Abhishek, the basic parameter to measure or limit something. Carbon dioxide, CO2, perfect. Now here my next question. I want to do C plus O2 not in Delhi. Currently, I was doing it in Delhi. I want to do it in Maharashtra. In Maharashtra, what is C plus O2? C plus O2 in Maharashtra, not in Delhi. Currently, I was doing it in Delhi. Okay. In Maharashtra, what is C plus O2? Ashutosh Mitra says water. वाह. केमिस्ट्री कहां से पढ़ के आए हो आशुतोष मिश्रा? आशुतोष मिश्रा कह रहे हैं C plus O2 is equal to water. वाह. जबरदस्त. So in Mumbai, Maharashtra, what will be the result? Everyone is saying the same. Okay, now I change the city. What will be the change? What will be the result if I do the same experiment in Chennai? Chennai this time. Okay, down south, Chennai. Also same. Perfect. Also same. Perfect. All right. Forget about India. I'm going abroad. I'm going to United Kingdom. I'm going to London. And I do C plus O2. What is the resultant figure in London? What will be the result in London? C plus O2. What is the result in London? Please comment in the chat box. C plus O2 in London. What is the result? Net result? No change occur. Absolutely. So all of you agree that C plus O2 done anywhere in the world will remain as C plus O2. These are universal principles of science which do not change. These are universal principles which do not depend on anything. They would be constant around the world, around the clock. at any hour of the given day, if you do these experiments, they will remain the same. They will always be the same, and they won't change ever for anything. They will always be the same. That is the that is the conclusion that we draw out of our discussion. Perfect, sir. Yes, that is the conclusion which we draw. Perfect. Now my question number 2 is, I opened a grocery store in Delhi, and it's a big hit. It is earning me several crores of profits, and it's an amazing hit. I've opened a store. I've also opened an online store. I've done several things around that store, and it's a big hit. Now I want an answer from you. If the same store is opened in Chennai, Mumbai, or anywhere in the world, would it give me the same profits, or the profits might vary? Please answer in the chat box. Please answer in the chat box. Would it vary from cities to city or country to country, or will it remain same around the world? Please answer in the chat box. I've opened a grocery store, an amazingly profitable grocery store. Will it vary? Will it remain the same? Yukta says profit will vary. Dugi Reddy says it will vary. The profit might vary. It will not be the same. No change. Ajna says no change. Kushwan says it will vary. Joshika says it will vary. Now I ask you, why will it vary? Why can't the result be same, just like C plus O2 is equal to CO2? Why can't the result of a grocery store, which is a commercial transaction, be the same in the entire world? Why can't it happen? The reason of why it won't vary, why it will vary, why it won't remain the same. What is the reason? Why will it vary from country to country? Why will it vary from cities to city? What is the reason? That's what I want to ask you in the chat box. Please comment in the chat box. Absolutely very good answer. Based on the market conditions, based on the economy of that particular country, based on the environment where that grocery store has been opened, based on the per capita income of the people who are staying around that place, based on the utility, how useful is that particular grocery store to that particular area or that particular country or that particular state. Depending upon all these several factors, guys, we will actually find that our commercial transactions vary from state to state, individual to individual, country to country. However, scientific principles do not change ever. They will remain the constant. They will yield the same result. So science doesn't need standards, because there's only one way of doing things. In science, there is no need of standards, because there's only one way of doing things. But in case of commerce, we need standards, because we have multiple ways of doing things. The output might vary according to the inputs that we are putting in. So everything might change in commercial world. However, in scientific world, things don't change. So in case of commerce, depreciation is also leviable on straight line method or WDV method. In commercial world, inventory valuation can also be done using three methods: weighted average, LIFO, FIFO. Another method, new method, is specific identification method. So in commercial world, there is no one best way of doing things. There are several ways of doing things, and outcome might vary from thing to thing, from person to person, from individual to individual. Outcome might vary along all these transactions. Under such a situation, guys, there is a dire need, there is an urgent need for standards, because we do not want everyone to be doing some different thing. Someone valuing their inventory using FIFO method, someone valuing their inventory using LIFO method, someone calculating depreciation according to SLM method, someone calculating depreciation according to WDV method. We don't want variability in treatment of a particular thing in the commercial world. And that is exactly the reason why we need standards. We need standards to choose one most acceptable way of doing thing, so that everyone can do that thing commonly and everyone can follow that standard, and our financial statements are identical and they can be compared. Because if financial statements are made using varied policies, using different policies, they are not comparable. And the most important analysis which we want to do in our financial statements is that we want to compare two financial statements from company to company to company, from year to year, from industry to industry. We want to compare the financial statements. That is what we want to do, and that is the reason why financial statements are actually prepared. And guys, for maintaining uniformity, for maintaining consistency in the way commercial transactions are executed, the way commercial transactions are done, we need standards. And that is why you see standards in case of accounting. Accounting also has standards because there are various ways of doing accounting. Similarly, you see standards in cost accounting also, because in cost accounting also there are various ways of, like for example, absorbing overheads, absorption of overheads. There are various ways of absorbing overheads. There are various parameters which you can use. There are various keys which you can use to absorb your overheads, to charge your overheads in the cost sheet. There are various ways to it. And that is the reason why we need standards. We need principles to set our things right, to set our calculations right, to set our methods of doing things right. And that is why standards are required. Standard will tell us that, if there are multiple ways of doing a particular thing, which one do you choose? Now, let me tell you a very important thing. Just because standard has chosen that method doesn't mean it's the best method. It just means that it is the most popular method of doing that particular thing. That's it. It doesn't mean that that is the best method and other methods are worst or other methods are not good. No. So standard picks up certain ways of doing things based upon the industry practice. Whatever practice is there in the industry, whatever practice is there in the economy, according to those practices, standards pick up certain things and they execute those things, and they tell you that yes, you need to follow this thing. So which means that, can I choose a different thing from standard? Whatever standard is saying, can I say, no, I'm not following standard, I will choose a different thing? Can I do that? Please answer in the chat box. Can I do something which is different from what standard is telling me to do? Can I do that? If I can do that, under what circumstances can I do that? Please answer in the chat box. Can standards, can I overcome standards, or can I override standards and say, no, I do not do this thing, I want to do something else? Can I do that? So guys, these are normal FIKs for your knowledge, which are not very, very important from an exam standpoint. So I am skipping it. I'm directly going to CAS-1. Yes, sir. All right. Can we do? Everyone is saying no. Tejas says no. Rasmi Nijan says no. Lakshmidhar says no. Ankita says no. MN King says no. Jyotika says no. Mahendra Reddy says no. Bikash Monti says no. Oh, wow. Ankita has now given the right answer. Very good, Ankita. Very good, Ankita. Ankita has given the right answer. All right, guys. We can choose a different path from what standards are telling us. Because I've told you, there's no best part. There's no right or wrong. Okay. Standards have chosen something which industry is practicing currently. If you feel that your particular company is different from industry, if you feel that your particular company needs a different standard or needs a different way of doing that particular thing, you are open to refute standard, but you have to prove that why are you saying so. Would doing that thing in your industry makes a lot of sense, or will it make cost statements better in terms of their accuracy, in terms of their correctness? Will they make cost accounting statements better? You have to prove this fact. If you prove this fact to Government of India, to the MCA, or to the cost auditors, you can choose a different way of doing things apart from cost accounting standards. So each and every cost accounting standards has a clause which says that if a different standard, if a change in policy is there, if a different policy is being followed apart from the policy which is given in the accounting standards, then it may be justified using any of the following methods, that it is the change is required as per law, or cost accounting standard has in itself has suggested some change, or the change will lead to a better presentation of cost statements. If you prove that it is so in your case, then guys, you can easily change your accounting policy as compared to cost accounting standards. But in generic terms, cost accounting standard policies are mandatory. You cannot change it unless until there's dire need for it, there's urgent need for it, only then it can be changed. Otherwise, the application of cost accounting standard is mandatory. But yes, the application is subject to your fulfilling the condition that there's no other best way of doing this thing in your company. Okay, in your kind of a transaction, there's no best way of doing something. You have to prove that particular fact, and if you prove that particular fact, then yes, you are free to choose whatever you want to choose as a method of accounting, as a method of cost accounting. All right, so let's start our first cost accounting standard, which is the cost accounting standard on case of classification of cost. And yes, fondly I call this cost accounting standard as mother cost accounting standard. This is known as mother cost accounting standard. Why do I call it as mother cost accounting standard? Because guys, this is the basic cost accounting standard. This will teach you every aspect of costing from the basics. So, but we already know the aspects of costing from basics, because in intermediate and final, we have had 100 marks paper of costing, and they are really humongous. We already know them. Yes, guys, you know them practically. But do you know from which law are they coming? Do you know the exact wordings of what law says about those things? Where is it written? Do you know that? Answer is no. So, cost accounting standard 1 will tell you, what do you mean by abnormal cost? A simple thing, abnormal cost. And what do you mean by cost? Cost accounting standard 1 will tell you. What do you mean by absorption of cost? Cost accounting standard 1 will tell you. So, but we already know this thing. No. Knowing practically is different from reading it from theory, where it is originating from. Everyone says we know Companies Act well, but you need to read Companies Act before understanding its critical provisions. You have to read it. Similarly, guys, you have to read cost accounting standards to understand what are the provisions of cost accounting standards and what are the exact words of cost accounting standard. Only then can you practically apply those cost accounting standard, those words, in your cost accounting. So this is the mother cost accounting standard, which is the basic cost accounting standard, and it will teach us some basic stuff about cost accounting. Some basic stuff like, what do you mean by abnormal cost? What is abnormal cost? So yes, these definitions are very, very important from an exam standpoint also, guys. Abnormal cost is an unusual or atypical cost. Atypical means it doesn't typically happen. It sometimes happens, sometimes it doesn't happen. So it is a unusual cost. It is not usual that this cost is being incurred. And it's an atypical cost. It is not a typical cost. It is an atypical cost which occurs in an irregular and unexpected and abnormal situation. So the key words over here is that it's an unusual cost, atypical cost, which occurs irregularly. It doesn't happen regularly. It occurs irregularly, or unexpectedly it happens. You don't expect it and suddenly it happens, and it occurs in an abnormal situation. That is known as the abnormal cost. Next, administrative overheads. Very, very important definition from an exam standpoint also, and please underline whatever I'm asking you to underline. So very, very important definition, guys. What is abnormal cost? Okay, abnormal cost we already studied. Now coming on to administrative overheads. What do you mean by administrative overheads? Okay, so administrative overheads, cost of all the activities. So administrative overheads, cost of all the activities relating to general management and administration of an entity. Now please underline these words: general management and administration of an industry. Please underline these words: general management and administration. Okay, administrative overhead shall exclude production overhead, marketing overhead, and interest and finance charges. So admin overhead doesn't include production overhead, marketing overhead, and interest and finance charges. Administrative overheads do not include administration costs relating to production, factory, works, or manufacturing. So whatever administration is happening in a factory, that is not administrative overhead. So if there is a reception at the factory and receptionist is sitting there, that is not an administrative overhead. It's a production overhead. That is what is meant from this particular line. Okay, that is known as administrative overhead. Okay. And yes, to to make you learn these things, there are certain charts which are there, which of course you can draw on your register also, so that you're able to remember things well, guys. So what I've done is entire cost accounting standards has been put in a chart. You can also take a screenshot on your phone. Please don't ask me to send these charts to you, okay? Because I don't have it in PDF form as of now, but I'll send it to you. That's not a problem. But yes, if you make these charts from cost accounting standards, you'll be able to remember them, because the key important point is remembrance. You have to remember these cost accounting standards well. So to remember them well, these charts will be very, very useful to all of you, okay? So cost accounting standard 1, I've covered the entire cost accounting standard in this particular chart. You can take a screenshot and you can draw this chart on your register, and you'll be, one day before the examination, you'll actually be, through with this particular chart. If you read this chart, you'll be absolutely through, okay? So what are the parts that we are going to study in cost accounting standard 1? Definitions we are going to study. Principles of classification of cost we are going to study. Basis of classification we are going to study. What is the basis of classification? Then we are going to study presentation and disclosure. What will be the presentation and disclosure in this particular cost accounting standards? So all these we are going to study in cost accounting standard 1. And yes, these cost accounting standards will definitely come in examination, theoretically or practically. Both aspects are important, theoretically as well as practically. Now, have you noted this point, guys? Administrative overhead, it does not include the administration part in production, factory, works, manufacturing, wherever, if any administration part is there, which means a reception is there at our factory. That is not administration. That is not administration. That is production overheads, okay? Then classification of cost. What are the types of cost? What are the classifications of cost? Classification of cost is arrangement of items in logical groups having regard to their nature. So whatever is the nature of a particular product, our particular cost, according to the nature, if we classify the cost, that is known as classification of cost. So bonus to manufacturing staff, if you provide bonus to manufacturing staff, it's an employee cost, and it will go to cost of production because it's of manufacturing staff, okay? It's an employee cost which will go to cost of production. Bonus relating to selling staff, it's an employee cost but it will go to selling cost. That is the difference. Although it is an employee cost, but it will go to selling cost. Bonus to quality control staff, it's an employee cost, but will go to cost of quality control activities. So this is how we classify our cost according to their nature, according to their purpose. We are going to classify our cost. Okay. What do you mean by conversion cost? Conversion cost means the production cost. When we convert our raw material into finished goods, what are the costs that are incurred? Cost, amount of resources that are used in manufacturing of a goods or producing services. Guys, I know you know these basic things very well. I know you really understand these basic things very well, and these are on your tips, okay? And you need not, study them to really understand them. But think from a legal standpoint. We need everything which is there in our practical life as a theoretical part. We need everything where someone can refer to it, where someone can read. What do you mean by abnormal cost? Oh yes, by logic we all know everything. But not by logic, by law. What is law regarding abnormal loss cost? What is law regarding administrative overhead? And that is why we need these standards whereby it's written what is abnormal cost. Okay. Okay, sir. Himanshu Jain, welcome, welcome, welcome for such beautiful comments. All right. So cost centers are the entities or the areas where all the cost is accumulated, all the cost is collected. So accumulative of all the cost in a particular unit or in a particular way is known as cost center. Cost center can be of two types: personal and impersonal cost centers, operating and supportive cost centers. These are ways in which cost centers can be classified. What is personal cost center? Any cost center which is directing towards a particular person. Okay, that is known as personal cost center. The personal cost center is consists of person, group of people, basically human resource of an organization. Like imagine, I have various classes, and those classes are divided into teachers. Okay, so Nikhil sir teaches this subject. Okay, Mr. A teaches this is a subject. Mr. B teaches. So if we have cost centers according to the teachers, then that is personal cost center because they refer to some person. And what is impersonal? Impersonal means if we classify our cost according to the levels. So foundation students cost is this. Intermediate students cost is this. Final students cost is this. If we divide according to the according to their class or something else, then they are impersonal cost centers. So personal cost centers, impersonal cost centers. So what is the reason of creating a cost center? It is to accumulate the cost, because the cost is to be classified according to the cost center and nature of the cost center. Okay. Then operating and supporting cost accounting standards. I hope this you must be aware of. Some cost centers are there where actual production is happening, actual manufacture is happening, actual provision of services is happening. That is known as operating cost center. And the cost centers which are supporting those main manufacturing cost centers, like human resource, HR is a supportive cost center, finance is a supportive cost center. So any cost center which is supporting the main cost center is known as supporting cost center. So operating cost center and supporting cost center. This is a diagram of operating and supporting cost center. Cost object is easy, cost of production is cost unit. Now please be aware about cost unit. What do you mean by cost unit? Cost unit means the unit in which you measure a particular thing. Like milk, you measure in kgs. This ruler, you measure in inches or yards. Gallon, okay, ounce, pound, tablespoon. This is all cost units. The unit in which you are actually measuring that particular thing. There are certain examples also, and guys, these examples are directly lifted from the cost accounting standards. So cost accounting standards giving you standards of cost units. What should be the cost unit? In case of automobile, the cost unit should be number. Cable, rope, road construction wire should be meter or kilometer, etc. These are the unit numbers, the unit which can be said that okay, this particular product should be measured in this unit. These are the units. Next is prime cost. Prime cost is an aggregate of that material cost, employee cost, and direct expense. You already are aware about it. Still, we are studying it because it is in black and white over here. Okay, production overhead, very, very important. Any indirect cost involved in production of a product or rendering services. Very important line, please underline this line. Production overhead includes administration costs related to production, factory, or works and manufacturing. In administrative overhead definition, I had shown you that any production place where admin stuff is being handled, it is not administrative overhead. Because if it's a production place and if administration is happening over there, it is not administrative overhead. What is it? It is production overhead. So if we have a reception at the factory, if we have the administration room at the factory, that will not be classified as admin overhead, it will be classified as production overhead. Okay. Then what are semi-variable overheads? Overheads which are constant till a particular point and variable beyond that. What are variable overheads? We all know that. Standard costing. Okay. Now comes the broad classification of cost. How can cost be classified according to the measurement rules which are given in the cost accounting standard? Classification of cost, that is what we are going to start today. Yes, milk on liters, correct. What is the difference between cost center and cost object? Very, very good question by Ajnaz. What is the difference between cost center and cost object? Okay. Now, cost center means a particular position, a particular area where cost is accumulated. For example, I have the departments according to the levels of CMA, CMA Inter, CMA Final, CMA Foundation. These are the three cost centers where I'll be accumulating all cost, and I'll be saying that yes, my CMA Final teachers or the classes or the classrooms or the infrastructure which is being used is costing me this much. This is cost center. Okay. Next is cost object. Cost object means the subject for which the cost is being incurred. For example, if I am incurring some expenses on, say, infrastructure, I'm buying AC, I'm buying a fan, or I'm buying any kind of utilities inside that particular cost center, then those things are cost objects for which the cost is being incurred. Like students who are sitting here, they are consuming the cost. They are the cost object. So within cost centers, there are cost objects. That's the difference between cost object, and cost center. Okay. And this is the next word, guys. Cost unit. Do you understand this word also? Cost unit means the unit which is related to production. How many goods are you producing, and how are you allocating cost? What is the unit you are using for allocating the cost? That is cost unit. So these are three words: cost center, cost object, and cost unit. Okay, now comes a very, very important classification, guys. So cost accounting standards has given you cost the basis on which you can actually classify your cost. Your cost can be classified according to these bases which are given by cost accounting standards. So cost can broadly be classified in the following basis: nature of expense. What is the nature of your expense? That is the first way in which cost can be classified. Material, employee, and overheads is the ways in which the cost can be classified. So nature of expense is one way in which your cost can be classified. Okay, now why are we doing this? Why are we classifying our cost? What is the need of classifying our cost? Guys, the need of classifying our cost is that we want to prepare a cost sheet where we want to segregate our cost according to some commonalities, according to some bulk, according to some bunch. We want to segregate our cost according to some common points. We want to segregate our cost. We don't want to flood our cost sheet by writing all the costs together. We want to club certain costs which are of similar nature, and that's the reason why we are classifying the cost. So we will classify all our costs according to material, employee, and overheads. All the costs which are there, they'll be clubbed according to this nature. The material, employee, and expenses, all three will be clubbed together according to their nature. So first way to classify the cost is nature of expense. Now you are free to choose any of these ways. Okay, any of these ways can be chosen by you. Cost object could be a specific activity, customer, project, as opposed to cost. Very good, very, very good. Yes, cost object can also be a specific activity, some specific customer, some specific project. That can also be a cost object. So object means that the place or the purpose for which cost is being incurred, that is the cost object. Perfect. Okay, the nature of traceability to cost object. Now, according to the nature of traceability to the cost object, whether we are able to trace our cost according to our cost center or not. So direct expenses and indirect expenses. Direct expenses are those expenses which are directly attributable to a particular cost center. Indirect expenses are those expenses which are not directly attributable to a cost center. They are indirectly attributable to a cost center. That is known as indirect expense. So direct expense, directly attributable to a cost center. Indirect expense, not directly attributable to a cost center. By functions, what functions are you performing? According to that, we can classify our cost. For example, if you are performing production function, then all the costs which are related to production are clubbed in this head. If you are performing administration function, then all the administration function which you are performing, they'll be classified under this head. So these heads are according to function. If these heads are according to function, then our cost will also be according to these functions. Yes, sir. Then by behavior. Behavior means fixed, variable, semi-variable. There are three kinds of costs which are by behavior. By nature of production process. What kind of production process do you have? Batch costing, process costing, operation costing, contract costing, joint costing. Now this is very, very important, guys, because this is a little tricky. This is a little different kind of a classification. Okay, batch cost. Batch cost means wherever the production is happening on the basis of batch, which typically happens in products like eatables. Okay, like bread which we consume. That bread which we consume, that bread is produced in batches. They are not produced in according to where they supplied. North India, South India, West India, they're not really costed according to that way. They are costed on the basis of a batches from which they are produced. Okay, so batch 120, batch 130, batch 140. So all accumulated together, all the raw material accumulated together will be produced at one go, and that one go production will be actually named as the particular batch. And where is it relevant? Now I'll tell you where is it relevant. Okay, so guys, long back, there were only one kind of cell phones which are available in market, which were Nokia. Okay, and because of some manufacturing defect, Nokia, some model and a part of that particular model, because of some defect, those Nokia phone batteries were bursting. You put the Nokia phone inside the socket for charging, they will burst. Okay, because that lot, because that bulk, because that bunch which is being produced by Nokia, that was faulty. There was some fault in it. There was some error in it. And that is why that entire batch was withdrawn from market immediately by asking the customers for their batch numbers. That is what happened in Nokia. So Nokia was facilitated, was it was easy for Nokia to call back the defaulty production, because they knew that this production happened in this month. according to this batch. So entire batch was withdrawn from the market. So this is the benefit of batch costing, that even if you want to withdraw anything, so if the bread is faulty, the bread doesn't have proper flour in it, so if that kind of thing happens, that entire batch can be recalled. And that these industries like FMCG industries work purely on batch costing, which means they will accumulate all the cost relating to a particular batch at once. That is batch costing. Process costing. Process means according to the process you can actually club your cost. For example, a particular engineering product, for example laptop, laptop is being produced using 10 processes. So for every process you can have a cost center. For every process you can classify your costs separately. That is known as process costing. Next one is operation costing. Guys, operation costing means that processes are further subdivided into sub processes, and those sub processes are known as operations. Small operations. So for highly technical industries like laptop industry, like camera industry, like mobile phone industry, we want to drill down to the lowest level, to the narrowest level. Where is the problem coming from? And in that goal, in that achieving that objective, operation costing is very, very important. We can easily calculate, or we can easily compute now what are the errors, what are the lacunas which are there in each of the process or each of the operation, and we can club it out. So operation costing is very, very important in case of highly technical goods, which are very, very technical, and they go through several rounds of operations in production, etc. They are known as operation costing. Contract costing, typically used in real estate sector, where the costing is done according to a particular contract, according to a particular project, so known as contract costing. Joint cost. Joint cost means wherever you are producing two goods from one raw material, and it looks something like an inverted Y. Look at this inverted Y. So from a common raw material, you are producing two finished goods. In this case, the common cost which is there, that is to be allocated to the two goods. And that is the reason why we use joint costing in this particular case. So whatever we produce is from a common raw material, and we have some common cost which is required to be used in that particular finished goods. So if you use this cost in the finished goods, then these costs will be actually used and will actually be utilized. So this is known as joint cost. So guys, depending upon your purpose, depending upon your product, what is your product, depending on all these things, you choose the relevant cost which is suitable to you. Okay sir, got it. So yes, these were the kind of costs which are there. Okay, and I've discussed them all with you, not in detail, but in very, very small measurement. But yes, it will be very, very helpful to you. All right. So now our discussion on the joint cost. Discussion on the joint cost. So guys, this is a joint input, which is crude oil. It is processed and three things are made from it: oil, gasoline, chemicals. Now the common process which is having common cost, is required to be analyzed, and the common cost is to be distributed amongst the three products which are being produced. That is the objective. That is the ask. And to split this particular cost into three different cost centers, we need some allocation key. And this allocation key is given by the cost accounting standard itself. They say that the joint cost incurred up to the split off point. Split off point means this is the split where three products are being split separately. So joint cost which is incurred should be allocated to the three products, to the three common products, joint products, in the proportion of their price at the split off point. So at this split off point, whatever is their price, according to that price. So if these things were sold immediately when they are split off, then that price or that cost is representative of joint cost. So sales value, the revenue and the split off point will be the value in which the cost is to be split into three parts. That is the most important thing. Okay, sir. So these are the joint cost. Okay, presentation disclosure. Guys, presentation disclosure largely remains same in all the 24 CAS. You learn one, copy paste all in all the CAS, but barring some application of mind. Okay, because there's some words which are different, there are some things which are different, small things. Otherwise, broadly you can apply the disclosures and presentation, all across broadly you can classify it. Okay, so yes, presentation classification should be done on the basis of relevant classification. So what is the classification you need to present, and you need to disclose it to the users of the cost statement. Classification of cost items should be followed consistently from period to period. It should not change every period. It should be changed only once in a while. So country to country it should be constant. Period to period it should be constant. Disclosure, a change in classification should be made only if it is required by law or for compliance with the cost accounting standard, or change would result in more appropriate presentation of the cost of an enterprise. Now you have to prove that I have changed this particular policy, and look, my presentation has become much better. My disclosure has become much better of my revenues, etc., because I'm splitting or following a particular thing apart from the cost accounting standard. So yes, you can refute to choose the standards which are given in cost accounting standards, but you have to prove that. Why are you doing so? If you prove, perfect. If you prove, then perfect. Okay. Okay, sir, got it. So yes, guys, there are certain practical questions also which are related to this particular chapter. Specifically from this chapter, calculation of abnormal cost is a practical part which can come in your examination. So abnormal cost calculation. Abnormal cost calculation. This is an important topic which can come in your examination. The calculation of abnormal cost. So you need to really be upfront in calculating these abnormal cost. Okay, so guys, one question, let's do one question of calculation of abnormal cost, and then probably you can do the rest yourself. Okay, let's do one question of abnormal cost. So it says that illustration number 1, we are starting. Okay, there was a strike from 13 September 2007 to 16 November 2007. So there was a strike in our factory in a company of which you were the cost auditor for the year ended 31st March 2008. So the financial year is ending in 2008. So the year started from 1st April 2007 to 31st March 2008. That is the year. Although the company began working from 17th November 2007, so company started working on 17th November, but production could effectively begin only from 5th December 2007. The expenses incurred during the year ended 31st March 2008 were salaries direct, salaries indirect, power variable, depreciation, other fixed expenses. See, these are the expenses which have been incurred during this period, during the entire year. Okay. Detailed examination of records reveal that of the above, the following relate to period from 13 September to 2007 to 16 November. Okay. So out of all these expenses, there are certain expenses which are incurred exclusively in this period. These are those expenses: salaries and wages, depreciation, other fixed expenses. Calculate the amount which in your opinion should be treated as abnormal for exclusion from production cost. Now what is the ask? Ask is that we need to compute the abnormal cost according to your best judgment. What will be the abnormal cost? That is what we need to compute over here. Okay, sir, got it. So let's compute the abnormal cost. Okay, so putting a heading, putting the exam, putting the question number, very, very essential. But yes, since we are doing it quickly, so I might lose certain formatting mandates. Okay, I might lose them, I might not draw them, or I might not write them, but you should write them for sure. Computation of abnormal cost. You need to compute the abnormal cost. Okay. Now guys, wherever a question from abnormal cost comes in your examination, the first thing you need to do is you need to prepare a timeline. Do prepare a timeline. Okay, and plot all the events which have happened during this particular period. So I'm drawing a timeline, and what will I do with this timeline? I will put some critical events on this timeline. Whatever are the critical events, I will put all those critical events on this timeline. Okay. Okay, so first of all, the year start date, 1st April 2007. Then the year end date, 31st March 2008. Okay. We'll write it. Yeah. Let us first of all do a timestamp chart. Timestamping is very, very important in these questions. Okay. So guys, on 13 September 2007, the strike started. Okay. Then on 16 November, strike ended. But on 5th December, the work resumed. And the rest was the normal period. Okay. So this is the normal period. And this is the normal period. I will call it as period A. I will call it as period D. This is period B and this is period C. I've named all these periods because in my question I'll be using them. Okay. So this period, period B, is the strike period and also the abnormal period. And this period C is the non-strike period. There is no strike in this period, but this is a abnormal period also because work couldn't start. Although it is the non-strike period, but it is abnormal. It is not normal. It is abnormal. Although strike ended, it is a non-strike period, but it is abnormal. It's still abnormal. It's not normal. Please understand the difference because in the question I'm going to ask you and ask you to apply different methods of computing cost according to the nature of these periods. So if you have been able to understand this time chart well, please write yes in the chat box. Okay, so these are the timestamp. Now guys, I'll tell you what do we need to compute. We need to compute the cost which has been incurred in period B. We need to compute the cost which has been incurred in period C. We will total these two adds and our abnormal cost will be in our hands. Simple as that. That is the objective. Okay, sir, got it. So let's now compute the abnormal cost. Okay. So what is the abnormal cost? We are going to compute that now. Okay, sir. Let's compute the abnormal cost. So what is the abnormal cost? Let's compute it over there. Okay. Now, guys, first of all, the cost which has been specifically incurred during the abnormal period, that of course will be the abnormal cost. There's no doubt about it. Okay. So what is the cost which we have incurred only in the abnormal period? What is that cost? I'll tell you what is that cost. Let's read the question once again. Okay. So please observe this cost. This is the cost which has been specifically incurred during the abnormal period only, which is 13 September to 16 November. This is the abnormal cost which has incurred during the abnormal period only. So this is obviously the abnormal cost. There's no doubt about it. So we are going to first of all write the total of this cost because this cost is of course the abnormal cost. Yes, sir. What is the total of this cost? Total is 220. Cost incurred in period A and B only. So the cost which has been incurred in period A and B only, that is the abnormal cost. This is the particulars and the amount. Okay. Total is 220 lakhs. So this is but obviously the abnormal cost. Okay. There's no doubt about it. Since there's no doubt about it, so we are going to add it. So why depreciation not included in cost? Depreciation is not included. Where is depreciation not included in cost? Of course, depreciation is included in the cost. Where is it not included? Okay. So now, sir, now we need to calculate the other cost. The cost. Now this is the specific cost. Okay. This is the specific cost. Now guys, what are we going to do? Now we are going to calculate the cost which has been incurred during this entire period. We will divide it by the total number of days. We will multiply it by the number of days which are abnormal. And we will compute the generic abnormal cost also. So in this question, the abnormal cost is total of two costs. Specific cost plus general cost given together. Now let's see how will we compute the generic cost. Yes, guys, in the chat box, you can actually throw your questions and I'll be able to answer them after seeing the question. Okay, so let's make a working note to compute the generic cost. Okay, second is cost incurred in period A and B. Okay, general cost. It is the general cost. Okay, sir, got it. So we'll prepare a working note for it. Working note. Computation of generic abnormal cost. Okay, so first I'm going to take the total expenditure which has been incurred during the year. The total expenditure which has been incurred during the year, I'll start with that figure, and then I will keep on reducing the irrelevant cost. Okay, I'll tell you how. First of all, tell me what is the total expenditure which has been incurred during the entire year. Guys, it is a sum total of these numbers. Please let me know sum total of these numbers. Please let me know the sum total of these numbers. Please let me know the sum total of the total cost. Okay. The sum total of total cost is 300 plus 200 plus 120 plus 180 plus 240. The sum total of total cost is 1040. 1040 is the sum total of cost which has been incurred during the entire year. Okay. During the entire year, this total has come. Okay. Okay. Now, guys, please see. We have already considered 220 lakh. 220 lakh is the expense which has been incurred during our strike period. This is the expense which has been incurred during our strike period. Since it has been incurred during our strike period, which is period B, we have already taken it completely. So we need not take it again as a generic expenditure. So I'm reducing the less expense incurred during strike period. I'm reducing, the first thing that I'm reducing is expense which is incurred during strike period. Let's reduce the expense which is incurred during strike period because that has already been taken into consideration. So I'm reducing 220 lakhs from this particular amount 1040. Okay, sir, perfect. All right. Now guys, look at these costs. Look at these costs. We need to really find out what are the costs out of these costs, what are the costs which have specifically been incurred during abnormal period. Because there are certain costs which happen evenly throughout the period. So that would obviously take place in abnormal period also. So we want to see what are the costs which have been incurred in abnormal period. To understand that, we need to understand the nature of each of the costs. Now I'll explain one by one. Okay, let's start with salaries. Direct salaries. Direct salaries. Direct salaries means salaries related to labor. Salaries related to labor who are doing our production. Okay. Now I'll ask you a very simple question, guys. Very, very simple question. During the strike period, will direct salary be incurred in our organization or not? Will direct salary be incurred in our organization or not? During strike period, which is period B in our case, Will labor cost, direct labor cost be incurred or not? Please write in the chat box. Salaries and wages direct. Okay. Will it be incurred or not? Yes or no? Oh wow. Ghoshal Dake has already written the answer also. So please tell me whether 300 will be incurred during the strike period or not. Whether it will be incurred or not. Answer is no. During strike period, it will not be incurred, because during strike period, when laborers are on strike by their own sweet will, they will not be paid the direct wages. So this expenditure will not have incur in strike period, and therefore this expenditure is not there in the strike period list. Perfect. Question number 2. Whether salaries and wages indirect, will it take place during strike period and non-strike period, that is during period B or period C? Will it take place or not? Will it take place or not? Will it take place or not during strike period and non-strike period? Answer is, sir, it will definitely take place. Yes, because these are indirect. Indirect means they are never on strike. They are indirect staff, which means they are on finance, payroll, HR. All these things are indirect. They will not stop. They will continue working. Okay. So direct, they will not be there during strike period. But my next question is, please tell about direct. Once again, I'm coming back to direct. Will direct expenditure be there in non-strike period? Will direct expenditure be there in non-strike period? When the strike has ended, but the production has not effectively started during that period, will direct wages, direct salaries be there or not? Yes, they will definitely be there. During non-strike period, the direct salaries will be there. But during non-strike period, indirect salaries will definitely be there. During strike and non-strike period, indirect salaries will definitely be there. So both of these things will be there during non-strike period. Okay. And guys, please see, out of this indirect expenses, 70 is already taken as salaries or wages over here. It's already included. Okay, next. Power variable. So please tell me, power variable, whether it will take place during strike period or not. And during non-strike period, whether this power variable will take place or not. Answer is no. Why, sir? But fan, AC, tube lights, all these will be running. Guys, power variable doesn't mean that they are referring to the fans, ACs, and lights which which are illuminating our room, which are providing air to us. They don't mean about. They don't. They are not referring to that. They are referring to our machines. Whatever power is being consumed in production, whatever power is being consumed by our machines, that is the power variable. All these electricity expenses like tube light, fan, AC, these are not the real power expenditure which is there in our business. These are very minuscule element of power. What are the major elements of power? Our machinery, which is running. Okay. So now my question is, whether power variable, whether this expenditure will be there during strike and non-strike period. Answer in a yes or a no in the chat box. Whether power variable will be incurred in our strike period or non-strike period. Answer is no. It will not be incurred during strike period. Neither it will be incurred during non-strike period. Why? Because during strike period and non-strike period, machinery has not effectively started. Production did not begin during non-strike period, which is the abnormal period. Production has not started. So power variable expense will not be there in both the cases. No, in both the cases. Okay. So guys, what I'm going to do is, I'm going to compute the common cost, and then I'm going to do the pro rata. So next thing I'm going to reduce from here, because it has not been incurred at all, is power variable. Because why should I prorate power variable in period B and C? Period B and C. Why should I allocate? Because this has not been incurred. When this has not been incurred, then I should not allocate also. So power variable should not be allocated. So I'm reducing it from the total cost. What is the amount of power variable? What is the amount of power variable? It is 120. Yes, 120. I'm not going to allocate power variable to strike or non-strike period, because power variable has not started during strike or non-strike period. Okay, I will not be allocating it. I have reduced it. Okay, okay, sir. Next, machinery chali nahi. Bilkul, Twinkle Rustagi says machinery chali nahi. Good. Okay, next expenditure. Now, please tell me depreciation, whether depreciation was incurred during strike or non-strike period, whether depreciation was incurred or not. Sir, what if machinery was closed? No, sir, machinery was closed, sir. How can depreciation happen? Wear and tear happens only when machinery was running. When machinery was closed, you said power variable was not there. Of course, depreciation was also not there. Please offer your comments in the chat box. Please offer your comments in the chat box whether depreciation would have been incurred during strike and non-strike period or not. So Mahendra Reddy says there was no wear and tear, so depreciation has not incurred. Twinkle says depreciation to lagega. Sandeep Mishra says yes. Anyone else? Anyone else? Any other answer? Interesting. Very, very interesting. Any other answer, guys? Yukta says no. Payal says no. Nikhil Gaikwad says depreciation incurred. Chandrasekhar says no. Guys, depreciation definitely will be incurred. Whether during the strike period, this is the strike period, or during the non-strike period, depreciation would definitely have been incurred. So yes, depreciation will definitely be allocated to the non-strike period, abnormal period also. Next, other fixed expenses. Please tell me whether other fixed expenses would have been incurred. Yes, fixed expenses like rent will be incurred even if you are on a strike. Even if your company is on a strike, the rentals will definitely be charged. Twinkle says, "अरे sir, depreciation तभी लगना चालू हो जाता है जब put to use हो और वो पहले ही हो गया होगा." Twinkle says, "Very very good ज्ञान." Okay, Goshal. Depreciation has been charged from the time you put the asset for use. You can't stop it arbitrarily. Very good answer. Ankit, has incurred. It's not matter whether machine is put to use or not. Very good. So depreciation is annual amortized. So it should be there. Very good, guys. Very good answer. So yes, depreciation would have been incurred. So I want an allocation of depreciation to my non-strike period also. Other fixed expenses, yes, it would have been incurred. So I want the allocation on my, the non-fixed period also. So these are the expenses which have been allocated to the strike period. And now this is the sum total which I have concluded that out of this total, I'll be finding out the expense which have been incurred during period C. Okay. Abnormal cost, generic abnormal cost. This is during period C. So what is the total number of amount which is to be allocated? 10 minus 220 minus 120. So the total cost is 220 minus 120. So the total cost which is to be allocated is 700. As this is the cost which has been incurred for the entire year. Now we need to compute the cost which has been incurred during period C. Period C. So why only period C? Why not period B? Because guys, period B expense we have already calculated over here, 220. That is period B abnormal expense. Now using this method, we'll be computing the period C abnormal expense. Okay. Okay, sir. So now I need to know what are the number of days in the year excluding strike period B. Sir, why are we excluding strike period B? Because strike period B is also already considered in 220. So I'm excluding the total number of days. I'm reducing strike period from the total number of days. Okay. 700 is the total number. Okay. Let us see. 220. Okay. Now we need to find the total number of days, which means this means A plus C plus D. A plus C plus D. So the entire year, guys, entire year has got 366 days. We will reduce the days which are there in period B. Okay. What is period B? Period B is 13th September 2007 to 16th November 2007. This is period B. Okay. So you calculate the number of days. Okay. For September, for October, for November. Okay. So for September, there should be 30 minus 13 plus 1. There should be 18 days for September. Okay. For October, there are 31 days for October. Okay. 18 days for September, 31 days for October. And finally, for November, what are the number of days for November? 16 days for November. 16 is included. So 16 plus 31 plus 18 comes to 65. So 366 minus 65. This becomes 301. These are the number of days in the entire year. The number of days during period B. Number of days during period C. So what are the number of days during period C? That is what we need to compute now. Okay, period C. Number of days during period C. Period C is starting from 17th of November. Okay, starting from 17th of November. So 14 days of November and 4 days of December, because from 5th production started. Okay, so 14 days of November, 4 days of December comes to 18 days. So days during period C is 18 days. Okay, now expense for period C. What is the expense for period C? It's 700 divided by 301 multiplied by 18. That is the prorate. Divided by 301 multiplied by 18 comes to a figure of 41.86. Comes to a figure of 41.86. So we'll write 41.86 lakhs over here. We'll just aggregate these two numbers. And here we've got the abnormal cost. The total abnormal cost is computed by us. The total abnormal cost which is being computed over here is 261.86 lakhs. 261.86 lakhs. That is a very, very easy question. Okay. It will fetch you, say, about 6 marks, 6 to 8 marks it can fetch you. And definitely an important one. It can come in the examination for sure. Yes, there might be slight variations to this question when it comes in the examination, but largely it will be this kind of a question. So you need to practice this kind of question from CAS-1. So from CAS-1, definitions can come for sure. Practical question like this can come for sure. These are the two most expected things from CAS-1. Okay. Again, these are the various questions of the calculation of abnormal cost which have been given in your study mat. And what I've done is I've accumulated all the past examination questions also of abnormal cost in my study mat, so that you can revise as many questions as possible, because practicing these questions is the key in the examination. If you don't practice them, then you will be at a loss for sure. All right, so let's start our next CAS. Before we start our next CAS, how's the Josh in the room, guys? Please tell me, how's the Josh? Yes, Josh is high. So 16 strike ended, but when did work start? Work started on 17th, Abhishek. How's the Josh? Very, very high, very, very interesting. Very nice, superb. Guys, it's really important to do these standards well, because these standards are definitely going to be of use to all of you. They'll be of use and they will, fetch you good marks in the examination. Excellent, full stuff, very good. बताओ किसको पीटना है? ये पिटाई की बात कहां से आ गई, नालायक? अच्छा, जोश की वजह से पीटना नहीं, पीटना नहीं है। जोश से इतनी पढ़ाई करनी है कि सबकी रैंक आ जाए और कॉस्ट ऑडिट में 90 प्लस मार्क्स आ जाए। ऐसा जोश होना चाहिए. हमें फिजिकल वॉयलेंस नहीं करनी, हमें मेंटल वॉयलेंस करनी है. इतना माइंड को स्ट्रांग कर लो, इतनी मेंटल स्ट्रेंथ बना लो, इतना मेंटल जुनून अपने अंदर ले आओ कि लाओ क्या क्वेश्चन लाते हो दुनिया वालों. हम नहीं डरते किसी मुश्किल से मुश्किल क्वेश्चन से, हम नहीं डरते मुश्किल से मुश्किल थ्योरेटिकल पार्ट से. लाओ, ले आओ जो क्वेश्चन लाना है, हम विजयी होकर ही दिखाएंगे. वो जोश चाहिए भाई, फोड़ने फाड़ने वाला जोश नहीं चाहिए. हाँ. Okay, let's start the next cost accounting standard, cost accounting standard 2, which is capacity determination. Again, a very, very important cost accounting standard from an exam standpoint. Both theoretical and practical questions come from this particular exam, this particular cost accounting standard. Question is, why do we call it as a father cost accounting standard? Guys, the reason why we call it as a father cost accounting standard, because the entire costing is based out of this one element, which is capacity determination. Capacity means kshamta. Capacity means your capability of producing something. If a organization's capability is not good enough of producing something, then it's bound to go into losses. To avoid any organization from going to losses, we make sure that the capacity of that particular organization is full enough, the capacity of that organization is good enough, and the capacity is up to the standard which is required of the production. And if capacity is there up to the standard which is required for production, then we are going to achieve our fullest profit. Suppose if capacity is too high and the demand is too low, then also it's a waste for us, because maintaining that particular facility is very expensive. So our profits will be eaten up in maintaining of that infrastructure. So capacity should not be very high, should not be very low, should be medium, it should be average. That is how capacity works. Okay, so let's start cost accounting standard number 2, capacity determination. Okay, sir. So guys, these are the various kinds of capacities. So first we need to understand what are the various kinds of capacities, and for making you understand various kinds of capacities, I'm going to delve into this chart which we have prepared. So this is the summary chart of the entire cost accounting standard. Okay, this is a summary chart. Now we are going to see the chart which is made in the book. Yes, this is the chart, very, very important chart. And there's an old cost accounting standard also, which we are not going to refer to because it has changed completely. Guys, in the class on a safer side, I also teach old cost accounting standard, because, you know, on a safer side, I want you to study it. But frankly speaking, it's not required now. Revised cost accounting standard is what you need to understand. Okay. Okay, let's start. Let's start cost accounting standard 2. So what is cost accounting standard 2? Cost accounting standard 2 relates to capacity determination. So there are primarily 3 kinds of capacities which are there in cost accounting standard 2. It says installed capacity, normal capacity, actual capacity. These are the 3 kinds of capacities which are there in our cost accounting standard 2. Okay, what do you mean by installed capacity? Guys, installed capacity means the capacity which our machinery has if it is run 24/7 non-stop. Yes, it is not practically possible to run our factory 24/7, but still we compute this installed capacity. Assuming that our factory, our plant will run 24/7, 7 days a week without even a single off, and 24 hours per day. Suppose if our plant runs 24/7, what is the capacity that it is going to achieve? It is not practically possible. Only very few industries are there where it is practically possible, which industries which work on shifts, 3 shift basis, and works on 24 hours basis. So sometimes it definitely happens that the capacity runs in that way, but practically it is not generally possible. Okay, now the thing is that installed capacity is manufacturer's specification. I'll tell you what is manufacturer's specification. Guys, manufacturer specification, which is given on the manual of the machinery. Any machinery's manual, it is given. Okay, so for example, when I bought this laptop or mic or camera, it said that this camera can work for, say, 8 hours without battery, without changing battery. It can work for 8 hours. That is the maximum capacity which can be achieved. It is a manufacturer's capacity which can be achieved. But when I make use of this camera for 8 hours, sometimes it gets heated up. Yes, it gets heated up. So installed is not practical. Installed is if on an hypothetical basis, on an assumption basis, we make use of this plant machinery 24/7, then what will be the capacity? and generally, usually, it is not achievable. It is not practical. Usually, sometimes it can be. So that is the first capacity which we need to compute. Second capacity is the normal capacity. Normal capacity means now you need to ascertain what are the practicalities. Obviously, guys, you will not work on Sundays. Obviously, you will not work in lunch hours. You will have to give some tea time. Sometimes you will not work around the clock. There will be some inefficiencies. So what is the normal capacity? So forget about installed capacity. It's a distant dream. Installed capacity is a dream capacity. Normal capacity is the achievable capacity, the practical capacity which can be achieved. That is normal capacity. The practical capacity which can be achieved. That is the normal capacity. So what should be our target? Should our target be installed capacity utilization or normal capacity utilization? It should be normal capacity utilization. That is the capacity which we can attain, which we can actually think that we can achieve. Okay. Last one is actual capacity. So usually things don't work the way we want them to work, or the way we think those things will work. Things don't work that ways. So whenever we have normal capacity, the actual capacity might be a little different because of inefficiencies. There might be inefficiencies which might reduce our normal capacity to actual capacity. So normal capacity minus the abnormal inefficiencies that will lead to the actual capacity. So to say, if we reduce the normal reductions in capacity from installed, it will give us normal capacity. Normal reductions means Sunday has to be off. 1 hour lunch hour has to be given. Planned maintenance will definitely happen. These are normal losses. So when we reduce from installed capacity the normal losses, it will give us normal capacity. And when we reduce all other losses like abnormal losses, we will get actual capacity. Sir, how is actual capacity determined? Guys, the actual capacity is determined according to the number of units which that plant machinery can make. So for example, if I tell you that, there's a very big factory of producing calculators. They have machines, they have plants where calculators are produced. And the capacity of that particular plant is to produce 1 lakh calculators per month. This is the capacity. 1 lakh calculators per month. This is the capacity. So that is the definition of the word capacity. And installed capacity, normal capacity, actual capacity. Okay. Now, what is the significance of these arrows? Guys, these arrows A, B, and C will give us what is the lacking in capacity, what is the downsizing of capacity, where we have not been able to achieve capacity. What is that? What is the differential between installed capacity and actual capacity? That is what is denoted by these arrows. Okay. So arrow number 1 is the idle capacity. Till what time have been wasted? Idle capacity. Okay. So arrow number 1 is the idle capacity. Installed capacity minus actual capacity. That is the idle capacity, the time during which our machinery has stopped working and has not worked efficiently. That is abnormal. That is idle capacity. Now we know that out of this idle capacity, some capacity is normal idle capacity, which is this capacity. This had to happen. We had no control over it. This is normal capacity. And what is abnormal capacity? C is abnormal capacity. Normal capacity minus actual capacity is abnormal capacity. C is abnormal capacity. B is the normal idle capacity. C is the abnormal idle capacity. So normal idle capacity, abnormal idle capacity. Now, which one should we try to control? C, abnormal idle capacity. Which one we can't control? B we can't control. It is the normal idle capacity. B we can't control. C we can control. So where should be our focus? Our focus should be on C, abnormal idle capacity. So that is how capacity, idle capacity is bifurcated into normal idle capacity and abnormal idle capacity. Normal capacity is past reduction for maintenance, planned, holidays, change over batches. Very good. Goshal has learned the examples also. Idle time maintenance less from installed. Very good. Actual capacity is the actual volume production vis-a-vis installed capacity. Very good. Very good. So guys, I hope you understood this particular part well. In the exam, you will be given data to calculate the installed capacity, to calculate the normal capacity, and to calculate the actual capacity. By reducing these respective capacities, you will be able to find the idle capacities also, and according to the idle capacities, you will be able to find the normal capacity utilization, etc., etc. So I'll discuss those also in brief detail. So idle capacity is installed capacity minus actual capacity. That is idle capacity. Installed capacity minus actual capacity is idle capacity. Normal idle capacity is installed capacity minus normal capacity is normal idle capacity. Abnormal idle capacity is normal capacity minus actual capacity. That is abnormal idle capacity. Actual capacity utilization. What is the utilization in percentage forms? Actual capacity divided by installed capacity is the actual capacity utilization. Idle capacity utilization, idle capacity divided by installed capacity. Normal and abnormal respectively. So denominator will remain the same, installed capacity, and whichever capacity you write in the numerator, it will become that capacity, utilization. So these are important formulas which will definitely come in your examination. Need to learn the formulas well and need to learn the definitions of the capacity as well. That is the ask. That is the very, very important thing. Okay, sir, got it. So yeah, these examples I'm not going to discuss because these are just plus minus, guys. Plus minus. These are not very useful. Now, one very important thing, guys, in your cost accounting standard as well as in your study mat, there are some commonly used units for capacity determination. So what are the units which are used for determining the capacity? So in case of a spinning mill, spindles, the round xylos kind of thing, they are used as the capacity measurement. Hospitals, number of beds is the capacity measurement in case of hospitals. Airports, capacity of passengers during the peak time, that is airport's capacity. Port, now facilities available for maintaining that particular port, etc., etc. So these are the various capacity measurements which can be used in various industries. So these are capacity measurement. Okay. Now presentation and disclosures. How do you present or disclose certain things? You need to present installed capacity, normal capacity, actual capacity utilization. You need to present basis of arriving at the capacity. You need to present changes in installed capacity and normal capacity. You need to present. In some machines are taken on lease, then the additional capacity that you have leased, taken on lease, that is to be presented. So these are the things which you need to present during calculation of capacity determination. These are things which you need to present before in the cost audit report. These are the things. Okay. And in the practice question, I've given you the past examination questions which have come, and certain other questions also which have come in your study material. Okay, sir, got it. So yes, guys, this was cost accounting standard 2 for all of you. Cost accounting standard 2 for all of you. Okay. Now let's move on to the next cost accounting standard. Very, very interesting cost accounting standard. Amazing cost accounting standard. The ghost cost accounting standard or the bhoot cost accounting standard. So guys, I've given these names just to make you remember the numbers and the context of the cost accounting standard. Okay. These weird names have been given to just tell you the context. Okay. This is the ghost cost accounting standard or the bhoot cost accounting standard. Okay. Okay, so now what are overheads? Okay, what are overheads? What is the definition of overheads? Can you please tell me in the chat box what is the definition of overheads? Please tell in the chat box what is the definition of overheads. Please tell in the chat box what is the definition of overheads. Definition of overheads I want in the chat box. What is the definition of overheads? Vivek Labhate has directly written the most important words in the definition. Wrong answer by Mahendra Reddy. Manufacturing cost. Wrong answer. Ajnas says total of indirect expense. Overheads means indirect expense only. But what is the definition of overheads? What do you mean by overheads? That is what I want to ask. No one? No one? No answer, guys? No answer? So overhead means wrong answer by Ankita Murarka. Guys, you guys are CMA finalist. CMAs are expert in costing. And if I ask you what are overheads, you're not able to tell me what are overheads. So guys, overheads means any expenditure which is not directly allocable to a particular cost center. And it relates to multiple cost centers. Overheads are the indirect expenses that are not directly allocable to a particular cost center, and they are they will be indicative of multiple cost centers. So cost which has been incurred for multiple cost centers is known as overheads or indirect expense. Now guys, overheads which are attributable to multiple cost centers, those overheads, when we say this definition that which we are not able to allocate to different cost centers, we are not defining it well, because we need to write that overheads are those indirect expenses which are not allocable to a particular cost center in an economically feasible manner. These words are very, very important, because I'll tell you what, there's nothing called overhead in this world. Every expenditure can be allocated in a in the cost centers, even if it is used for multiple cost centers. I'll give you the example. I have admin staff in my academy who works for CMA Foundation, CMA Inter, CMA Final. All three of them, their cost is usually treated as overheads because they're working for all three cost centers. Now, the ask is that the cost should not be directly allocable to a particular cost center. But guys, I can ask that person to allocate his cost according to the time which he spends in CMA Foundation, CMA Inter, and CMA Final. I have a receptionist who spends time all three of them. I will give a gadget to that receptionist. Receptionist will start working on CMA Foundation. She will feed in the time that this is the time which I've spent on CMA Foundation on a daily basis, on an hourly basis. Then whenever some inquiry comes for CMA Inter, she will quickly feed in the time that 15 minutes I've spent on answering this query. Then I will ask her to feed her time according to the hourly basis in this particular tracker. I will be able to allocate this overhead into the cost centers. I have 3 cost centers. I'll be able to allocate. So principally, there is no overhead. There's nothing called overhead. It is bhoot, it is ghost, it is not there. It is only the fact that, what is the cost that I will be incurring on allocating that particular cost center to cost objects? It will be humongous cost of that software and gadget. Will it justify my costing procedure? Suppose the salary of the receptionist is 20,000 rupees, and that gadget will cost me 30,000 rupees. Is it practically useful to allocate that indirect cost into direct cost? Answer is no. It is not practically useful and practically relevant. So we will leave it. There is nothing called overhead. It is just because the cost benefit analysis is not realized. That is why some expenses become overheads. And that is why the most important thing is in this particular cost accounting standard is the definition of overheads. Overheads means the indirect material, indirect labor, and indirect expenses which are not identifiable or allocable to a cost subject in an economically feasible way. If you do not write these words, then your definition is incomplete. Because every expenditure can be allocated to the cost centers. There's no expenditure which cannot be allocated to a cost center. Every cost can be allocated to a cost center. That is the fact. Yes, Ghoshal Dake has given very beautiful definition. So I'll display it on the chat, on the screen as well. Basically, any cost can be allocated, but cost of allocation should not exceed the cost of actual expense. Hence, some costs are treated as overheads, cost and benefit analysis. Very good definition by Ghoshal Dake. Yes. And guys, so whenever you define indirect cost, always write these 3 words in an economically feasible way. So indirect costs are not allocable in an economically feasible way. But indirect cost can be allocated if we want to allocate them. They can be allocated. Yes, it is not impossible to allocate indirect cost. Okay. Now, overhead costs are of 3 types, which we all know already. Okay. Production overheads, absorption of production overheads, we already discussed. Yes, this is the part. Okay. Now, principles of measurement. How do we recognize or how do we calculate the amount of indirect expense? How the amount of indirect expense can be calculated? How the amount of indirect expense can be calculated? How the amount of overhead can be calculated? Number 1, production or operation overheads represented procurement of resources from outside the organization. If we are purchasing the indirect expense from outside the organization, if we are purchasing the overheads from outside the organization, if we are doing that, then what will be the total of cost that will be incurred? It will be the invoice or the agreed price, including the duties and taxes and other expenditure directly attributable thereto net of discount. So whatever total invoice or agreed price we have paid for this particular expense for incurring this particular expense, we'll add on all those expenses and we'll reduce any discount other than cash discount. Cash discount will not be reduced because it is in the nature of finance income. Tax and duties refundable or to be credited should be reduced. That is how our entire overhead will be calculated. Okay. Now, if the overhead, production or operation overhead, representing utilization of resources within the organization, which means we have in-house way in which we can incur these expenses. These overheads are being incurred within the organization. For example, we have a different repair and maintenance department. We have it within the organization, which is doing repair and maintenance of all the machineries which are there in the plant. All the machineries which are there in the plant, all the cost centers which are there, repair and maintenance is being done by our repair and maintenance cost center. Then what will happen to the cost? We will include cost incurred in connection therewith. Whatever cost is incurred for repairing, for maintaining that particular cost center, that cost will be accumulated. For example, machinery spare fabricated internally or repair job carried out internally includes cost incurred on material, employees, and expenses. So whatever cost has been incurred internally on these overheads, that will be accumulated. Okay, so these are the overheads representing utilization of resources within the organization. Okay, then guys, these are very, very important principles, and these principles will be repeated in the next few cost accounting standards. All the 24 cost accounting standards, these principles will be common. So if you remember one principle, then you will not be required to required to remember other principles. So just remember the principles which are stated over here, and you will automatically be able to remember the other principles, the principles which are given in other cost accounting standards. Oh, good evening. Mr. Pediwal is here. Nikhil SH. These costs are economically not traceable. Very good answer, Nikhil SH. Mr. Pediwal has joined the live session a little late today. Good evening, Mr. Pediwal. All right. Any abnormal cost where it is material or quantifiable shall not form part of production overheads. So we only recognize production overheads when it is material and quantifiable. Okay. So abnormal cost where it is material and quantifiable shall not form part of overhead. Abnormal cost always goes in costing P&L account. We never add it in our cost sheet. So that is very, very important that abnormal cost goes in that cost sheet and not in the production overheads. Production or operation overhead shall not include imputed cost. Imputed cost means notional cost. Notional cost means, suppose I have an organization and my production manager resigned. My brother knows some technicalities of production. So I appoint him as my production manager without any salary because he's my brother for 6 months. Then he leaves after 6 months. Okay. Now he did not take any salary, but in my cost sheet, I am adding this amount of salary. Not permitted. This is notional or imputed cost. This is imputed cost. So not possible. This is absolutely not possible. So imputed cost shall not be included. Production overhead variances attributable to normal reasons. So there can be some variances. If you are using standard costing, then there can be some variances. Variances attributable to normal reasons shall be treated as part of production overhead. So normal variances should be treated part of normal production overhead. Overhead variances attributable to abnormal reason. When you attribute the overheads due to abnormal reason, then it shall be excluded from production overheads. Okay. Any subsidy, grant, incentive which is received from government shall be reduced. Received from government or anyone. Okay. Fines, penalties, damages should never be included in your cost, and we will follow these principles in all the cost accounting standards, guys. In all the cost accounting standards, we will follow these principles. Credits or recoveries, if you are making some credit or recoveries from these costs, then we will reduce it. Any change in cost accounting, very, very important, guys. Very, very important principle. If you want to change your cost accounting standard, yes, you can do it. Only if 3 conditions are satisfied. Number 1, it is required by law. Number 2, it is required for compliance with cost accounting standard. Number 3, the change will result in an appropriate presentation or representation of cost statements. If any of these 3 conditions are satisfied and you are able to satisfy your cost auditor that yes, a change in cost accounting principle is required, only then this change can be done. That is the bottom line. Okay, sir, got it? Assignment of production overheads. Now, how do you assign production overheads? Okay. Assign means you need to actually club the entire overheads and you need to allocate them according to the cost centers. That is known as assignment of overheads into various cost centers. Okay. So what is the principle that you will derive during assignment? Cause and effect relationship. So, what is the reason, which is the process, operation or activities that has led to incurrence of this cost? That is the first principle. So suppose if, oil has come in our factory. Now, oil has been consumed, 5 kgs oil has come. 3 kgs have been consumed by production cost center A, 1 kg by B, 1 kg by C. So the cost will be incurred according to the incurrence of cost. Whatever consumption has happened, according to the consumption incurrence of cost, the cost shall be allocated. So whosoever has consumed more, he shall be he shall be given the credit of that particular cost. So cause means for which cost center are we incurring this expense? For which cost center has this cost be incurred? That is the prime principle. Principle number 2, what are the benefits received by the individual cost centers? So according to the benefits, cause and effect and benefits, there are 2 principles in which assignment is need to be done. What are the benefits which each and every cost center has derived from consuming this particular product? So what are the benefits which are received? So benefits received and cause and effect, these are 2 ways in which our cost accounting standard, our cost can be allocated to various cost centers. That is how the assignment is done. This is the assignment of production overheads. Assignment is done in these 2 ways. Okay. Then in case of facility created standby, cost shall be assigned on the basis of expected benefit. That is perfectly fine. Absorption. Okay. Then guys, that's it. Okay. So yes, that's it guys. Cost accounting standard 3, again an important cost accounting standard. Cost center को असाइन करेंगे या कॉस्ट ऑब्जेक्ट को? अरे भाई जो होगा उसको असाइन करेंगे. अगर तो कॉस्ट सेंटर्स हैं, कॉस्ट सेंटर्स मींस जो आपके फिक्स कॉस्ट सेंटर्स हैं, जैसे हमारे केस में क्या है, हमारे केस में है फाउंडेशन, इंटर, फाइनल. ठीक है, 3 कॉस्ट सेंटर्स हैं. वी विल एलोकेट अकॉर्डिंग टू द कॉस्ट सेंटर्स. ठीक है. नाउ वी हैव 4 सब्जेक्ट्स इन द कॉस्ट सेंटर ऑफ फाउंडेशन. ओके, 4 कॉस्ट सब्जेक्ट्स, कॉस्ट ऑब्जेक्ट्स आर देयर. 4 कॉस्ट ऑब्जेक्ट्स इन cost center. Okay, now if we are making our cost sheet according to the cost center, which is foundation, intermediate, final, then I will allocate according to the cost center. But if I say that no, I want to make my cost sheet according to the cost object as well, then I will further allocate my expenses according to the teachers who are teaching these 4 subjects: economics, maths, law, accounts. So cost object means within a cost center, what is the particular area in which cost is allocated? Or cost object sometimes also means the different projects which are there. So I have multiple projects going on as a real estate person. I have different projects which are going on at various places. They are my cost objects. So it depends on what kind of industry are you. Okay. So yes, guys, this was cost accounting standard 3 for you. So I've quickly revised cost accounting standard 3 because it's very, very important to revise it at the last moment so that you remember it during your examination. And when you remember it during your examination, guys, there's a high possibility that things click. Okay, so revise these as many times as possible because these marathon videos are purposed in that way that you need revision of these every time you are studying for it. So revise as much as possible, and yes, you'll be able to see the results in your favor very, very soon. So yes, that's all for today's session, guys. Cost accounting standard 1, 2 and 3 we are able to discuss. In the next session, we'll be continuing with our rest of the cost accounting standards, which are cost accounting standard 4, 5, 6, as many as I can do in one session. I'll try to finish and cover as many cost accounting standards as I can in one session. And yes, our exams are quite near, so we'll be ready for our examination as well. On that positive note, all the very best and happy studying. Bye-bye. See you in the next live session. Bye. One of the most important topics of your syllabus. What is the topic? Topic is cost accounting standards. Again, from a theoretical standpoint as well as practical standpoint, both the standpoints, these cost accounting standards are very, very, very important. So yes, we need to do them in depth. We need to do them absolutely, threadbare, and we should be aware about all the provisions which are there in cost accounting standards. And the cost accounting standard which we are going to start today is cost accounting standard 4. Yes. Amresh, good evening. Good evening, everyone. And for these notes, guys, check out the description box or check out the comment, the pinned comment. The pinned comment would have the notes in the PDF format. All right. So let's start cost accounting standard 4. Now let me give you a brief background of cost accounting standard 4 before I start. Cost accounting standard 4 was earlier named differently, worded differently. Why is this cost accounting standard changing so frequently? What is the history behind this cost accounting standard? And why is this cost accounting standard so important? So guys, one of the most important cost accounting standards for you, from an exam standpoint as well as from a practical standpoint. Why? Because this cost accounting standard would affect the revenue of government of India directly. Yes, this cost accounting standard has been referred in the GST Act, and therefore whatever is the GST collection of the country, that will be impacted by this cost accounting standard. And yes, the earlier cost accounting standard, which was there prior to this particular cost accounting standard, that was also relevant from a sales tax standpoint. In sales tax, there was a reference to this particular cost accounting standard, and that is why sales tax collection of the country was dependent on this cost accounting standard. And that is why I have named this cost accounting standard as the Demon cost accounting standard or the Rakshas cost accounting standard. Why? Because this cost accounting standard can suck your blood. So what is blood for a business? Just like we have blood in our body, what is blood for business? It is finance. It is funds. It is incomes and expenses which are there in a business. That is the blood of any business undertaking. And that blood is extracted out of the business using this cost accounting standard. Yes, this cost accounting standard, if you apply it wrongly, then you will have to pay additional GST. Even penalties and interest would also levy on you. So yes, this cost accounting standard would impact your GST collections directly. Yes, very good. As per Rule 30, Supreet Saluja says. Shubham Bardwaj says Rule 30 of valuation. Very good. Sudarshan says Rule 30 of valuation. Neeraj Chopra says 110% of cost. Perfectly pointed out, guys. The Rule 30 of the CGST Act refers to this particular standard and says that if through other means of computation of value, you fail to compute the value of a particular product, then you need to value it using cost accounting standard 4 and then add 10% of statutory profit margin in it to compute the value of that good which is eligible for GST. So because of its reference in GST Act, because of its prevalence in GST Act, this cost accounting standards becomes pain in the neck of any CFO of the country, any finance manager of the country would definitely want to follow this particular cost accounting standard very, very, very carefully, which is the reason why this particular cost accounting standard is so very important. So let's start. What is cost accounting standard 4, which is revised? It is cost of production, acquisition or supply of goods or provision of services. How to compute the cost of production, acquisition or supply of goods or production of services? How to compute it? We are going to test that thing in this particular cost accounting standard. Yes, and we refer to Rule 30 of the CGST rules. It says that value of supply of goods and services of both based on cost, where value of a supply or goods and services of both is not determined by any of the preceding rules of this chapter, the value shall be 110% of cost of production or manufacture or cost of acquisition of such goods or cost of provision of such services. So owing to this particular clause, we say that this particular cost accounting standard directly affects the GST collection. So if GST collection is to be monitored by the GST officers, then guys, this cost accounting standard is mandatory to be followed. Although this is a residuary method, which means that if all other methods fail, then this method comes to play. This is a residuary method, but still it's a very, very, very important method of determination of cost of production. Okay, so guys, very generic definitions which are given in the cost accounting standard. What is cost of purchase or acquisition? It is the purchase price, import duties, and other taxes, transport, handling, storage cost, other costs which is attributable to goods and services. Similarly, what is cost of production? Cost of production is material consumed, direct wages, direct expenses, direct works overhead, quality control cost, research and development cost, packing cost, administrative overhead relating to production. Guys, we prepare cost sheet. Okay, this is nothing but a performer of cost sheet. The items which are there in cost sheet is given over here. Cost of provision of services. Similarly, we prepare cost of provision of services. Then cost of production or acquisition of goods or provision of services shall be measured for each type of goods and services separately. Now, this is a clear mandate from the cost accounting standard that each service and product should have a separate measurement of the cost. Cost should be separately measured by each and every goods and services. The material cost of normal scrap or defectives shall be included in the material cost of goods produced or services produced. So if there's a normal loss, okay, normal scrap. What do you mean by normal scrap? Normal scrap means which arises due to normal reasons. Okay, so any scrap which arises due to normal reasons, we will include them in computation of the cost itself. We will, so normal loss is to be loaded in the remaining cost. Okay, that is the principle. Normal loss is to be loaded in the remaining material, remaining products. Okay. Okay, sir. Next is the material, the realized or unrealized value of scrap shall be deducted from determination of cost of production. So if there's any scrap which is produced during production, that is to be deducted while calculating the cost of acquisition of goods or provision of services. Material cost of abnormal scrap or defectives should not be included in material cost, but treated as loss after deducting the realizable value of scrap or defectives. Any kind of material cost which is attributed to abnormal scrap, so you produce something and it became scrap due to abnormal reasons, then that material cost shall not be included in the material cost. Material cost shall not be included in that particular cost, because guys, in any which ways, abnormal loss also we separate out from the cost. So any material cost which is attributed to abnormal cost, that is also to be separated out. If goods are transferred or dispatched or supplied duly packed, cost of such packing shall be included in cost of dispatch or transfer. Okay, so cost of packing is to be included over here. High value spare, very very important, please mark, very very important. A question is going to come from this particular concept. It has been repeating for many times, so please mark this very very important part. High value spare shall be recognized as property, plant, equipment when they meet the definition of PPE and depreciated accordingly. Very very important provision of cost accounting standard. Please mark it, underline it, and I'll explain you. Okay. Okay, so I'll reduce the brightness is little high in the screen, I guess, so I'll reduce the brightness a little bit. Screen is already okay. Now a little better. Now is it better? Okay, so high value spares, guys, there are certain spare parts in every machinery. Okay, those spare parts may be categorized into two parts. One is high value spare, second is low value spare. The high value spare means which are costly spares. So a machinery which is costing worth rupees 1 crore rupees, there can be some spares which might be of 20 lakh or 30 lakh rupees. Okay, those are known as high value spares. And guys, high value spares are definitely to be included in the cost of machinery itself. They are not to be included as inventory. They are not to be included as any other thing. It has to be included as cost of machinery, and they have to be depreciated along with the machinery. So yes, they should qualify the definition of PPE. PPE is a term which is extracted from IFRS, property, plant, and equipment. I hope that you have studied this concept of PPE. So first, these high value spares are to be analyzed whether they qualify for PPE or not. If they qualify for PPE, then you need to capitalize these high value spares and have to be depreciated accordingly. Now this is a very important mandate, because many companies were actually putting these high value spares as inventory. No, not permitted. High value spares cannot be put as inventory. They are not your inventory, guys. Okay, so this is the principle, very very important principle, please underline. Otherwise, such items are classified as inventory and recognized in the cost. So if they are low value spare, or they are not recognizing the concept of property, plant, and equipment, then you can actually value them as inventory and can write off accordingly. So this is an important principle, please underline it, because this has come in examination many a times. Depreciation of an asset begins with when it is available for use. Whenever the my asset is available for use, that is when it is in the location and condition necessary for it to be capable of operating in the manner intended by the management. Please underline this word, intended by the management. Whatever is the management's intention, if the asset is available for use according to that intention, then depreciation is eligible. Now I'll ask you a question, and then you will tell me whether intended use, the good is ready for intended use or not. Okay, so I bought 5 ACs for my coaching academy, until the year, the ACs were inside my coaching academy, but till the year end, the ACs were not installed in my coaching and academy. Can I claim depreciation? Is this definition of depreciation fulfilled, that the asset should be available for use and that it should be in a location condition necessary for capable of operating in the manner intended by the management? The most important words are intended by the management. Okay, so ACs are not installed. Can I capitalize them? Yes or no in the chat box. They are ready to use. Yes, yes, they are ready to use. They are in the boxes. Obviously, ACs are always ready to use, man. They are bought and they are kept in on the floor. They are not installed as yet. I will just install them and work for them. Okay, they are not installed, but I have purchased them before the year end, before 31st March. I have purchased them. They are not installed. They are installed on 5th of April. Can I claim depreciation on 31st of March on these ACs? Yes or no? Yes or no? Everyone is saying no, but Yukta Rupalia is saying yes. So guys, they are not in a condition to use by the management in the intended manner. They are not. Why? Because those ACs which are kept on floor in the cartons, I cannot switch on the AC and they will start throwing cool air on me. No, they will not. Unless they're installed. How can you say that they are available for use in the condition which are capable of operating in the manner intended by the management? They are not. They are not. So very, very important that the AC or the plant or the equipment or the asset should be ready to use, which means it should be installed. It should be, everything should be done, which requires a working of that particular AC or that particular machine. So everything should be done in an appropriate manner. Only then can we say that it is ready to use. The very, very important definition. Please mark important over here. Okay. AC is not installed and not ready to use. Very good, Sundareshan. Supreet Saluja, they are not in a condition to use. Very good. Till they don't use, depreciation can't be charged. Very good, Ankita Murarka. Very good. Superb. Perfect, guys. So yes, this is the correct answer. Okay. Now the point is, I've seen a practical applicability of this particular clause in a very, very big telecom sector. Okay. I was in KPMG and I was working in statutory audit. Do you want me to share a practical insight on this particular line which has been drawn for accounting standard 10? Do you want me to share a practical insight on this particular concept? If you want me, then write a yes with multiple S. If you want me to disclose a practical insight on this intended use principle, which has been exactly written in accounting standard 10, it has been exactly extracted from accounting standard 10 and has been put in cost accounting standard 4 as well as the cost accounting standard on depreciation and amortization. Yes, yes, everyone's saying yes. Okay, perfect. So guys, a very, very big telecommunication company, a telecommunication giant, and all of you know about it, so I will not name the telecommunication giant. 10 years back, it's a story of 10 years back when I was working for KPMG in the statutory audit division. They had TV towers, they had telecommunication towers which were installed. Those towers are very, very expensive towers, guys. Okay, those towers were installed in various parts of Delhi, and those were absolutely in a ready to use condition. They were installed, the machinery was installed, engineers has given us the completion certificate, everything was done. It was just a button to be pressed and those telecommunication towers would have emitted signals and they would have started working. They were in an absolute put to use condition. They were in a perfect condition which is available for use, capable of operating in the manner intended by the management. Okay, there was only one lacuna, there was only one drawback. What was that drawback? The drawback is license from Telecommunication Regulatory Authority was not received by the company as yet. The license was received after 2 months. License from Telecommunication Regulatory Authority, because to run a telecommunication tower, you need a license. Okay. License was not there in place. License was not there in place. Now the question is whether those telecommunication towers were available for use and could the CFO of that company claim depreciation on it? Yes or no? Yes or no? Please tell me in the chat box. The towers are absolutely ready. They're absolutely in a condition where only button is to be pressed and they'll be started working. Okay. They'll start working. Okay. Please tell me whether depreciation can be claimed or not. Yes, a practical insight. Vriksh Mera Jeevan. Who's this student? Vriksh Mera Jeevan. Please tell your name also, huh? Thank you so much, sir. What you are doing for our students who are in CMA Final is really commendable. Thanks so much. We all were waiting for revision lectures by you, our CSE CMA NIkkhil. Sir, yes, I'm here with the revision lectures. So, Twinkle says yes. Supreet Saluja says yes. Everyone else says no. And those who say no, please tell me, why are you saying no? Because the tower is absolutely no available to use condition, put to use condition. It is absolutely ready. It is installed. All the technology is fit in. It's absolutely ready to use. Why are other students saying that, sir, it should not be eligible for depreciation? Why is a no there in your answer? Please tell me. Location and condition are satisfied. Umang Pipalwa. Umang Pipalwa. Location, it is in the right location. It is installed in a place where it should have been located. And it is also in a good condition. It is in a condition whereby it's all installed, engineering work has been done, just a button press and it will start working. Why are you saying no? Why are you saying no? Why shouldn't it be capitalized and depreciation should be claimed on these TV towers? You know how expensive these towers are. Depreciation of these towers are huge. They are in several crore rupees. How expensive they are. Not put to use by management. No, put to use is not the condition. Condition is available for use. Now, Sandeep Mishra is trying to digress the matter. Sandeep Mishra is trying to digress the matter. Don't digress the matter. The condition is not put to use. The condition is available for use. If it is ready for use, I will claim depreciation, whether it is put to use or not. That is the condition. Okay. Harshit Verma, it is not put to use. But the question is not of put to use. Without license, it cannot be used and hence not capable of being operated as intended by the management. Nice. Business not started. Amitesh, that is irrelevant whether business started or not. License not there. So license not there. Okay. Perfect answer given by Sundareshan Nagaranjan. Sundareshan Nagaranjan. I have displayed the answer on the computer screen. Without license, it cannot be used and hence not capable of being operated as intended by the management. What is the intention of the management? Intention of the management is not to dry their wet clothes over that tower. They have not installed that tower to dry their wet clothes. They will not hang their wet clothes over there and allow them to dry. No. The reason of installation of those towers is telecommunication services. And can telecommunication services be provided unless and until the license is received by the management? Answer is no. So the asset is definitely available for use. Asset is definitely available for use, but it is not available for use. It is not capable of being operated in the manner intended by the management. First condition, satisfied, available to use. Second condition, not satisfied, capable of operating in the manner intended by the management. And that is why we gave an opinion to the very famous telecommunication giant of the country that, dear sir, dear CFO, you will not be able to claim depreciation on this particular TV tower, telecommunication towers, although they are erect, although they are installed, although they are perfectly in a running condition, but still they are not capable of being operated in the manner intended by the management. Therefore, not possible. Perfect answer by Sundareshan Nagaranjan. Very good. Shubham says depreciation is allowed as it is available to use at location. No, Shubham, wrong answer. Ankita Murarka also gave it right. Twinkle says ऐसे तो हमने गर्मी में गीजर लगवाया, चलेगा तो सर्दी में ही ना सर, ये गलत है. नो, इट्स नॉट रॉन्ग गाइस. सो अगर आपने गर्मी में गीजर लगाया, लेकिन गीजर को ऑन अगर आपको गर्मी में भी करना हो तो आप कर तो सकते हो ना. ऐसा तो नहीं कि आपको किसी की परमिशन लेनी पड़ेगी गीजर को ऑन करने में. गर्मी में मैं कई बार गर्मी में गर्म पानी चाहिए होता है, मेरी मदर को चाहिए होता है, जो मेड आती है वो बर्तन धोती है गर्म पानी से, तो हम गर्मी में भी कई बार गीजर चलाते हैं, है ना. तो ऐसा नहीं है कि गीजर चलाना ना चलाना इज रेलिवेंट. ये देखना है कि क्या आप चला सकते हो. क्या गीजर आप गर्मी में चला सकते हो? आंसर इज यस, यू कैन रन गीजर इन समर्स ऑल्सो। तो अगर आप चला सकते हो, परफेक्ट, क्लेम डेप्रिसिएशन। यहां तो चला ही नहीं सकते, लाइसेंस ही नहीं मिला था भाई, चलाओगे कहां से? लाइसेंस ही नहीं मिला था। लेकिन ये जो घरेलू एग्जाम्पल दिया ना ट्विंकल ने, बड़ा जबरदस्त है। गीजर का घरेलू से एग्जाम्पल होता है ना, बच्चे घरेलू एग्जाम्पल देते हैं, मस्त एकदम, वेरी वेरी गुड, परफेक्ट। Okay, okay guys, these are small examples which you can do yourself, so I'm not going into these small examples because it'll take a lot of time. If I touch base each and every example, it'll take a lot of time. Okay, cost incurred for production or acquisition or supply of goods and services after split of point shall be measured for each type of joint or byproduct for resources consumed. So wherever there are joint or byproducts which are being produced, the cost of production which is incurred after the split of point, that is to be taken into account for joint and byproducts. Okay, royalty, technical know-how, all these shall be included in the cost of production. Royalty, then quality control cost incurred for in-house for the production or acquisition or supply of provision of services shall be aggregate of cost of resources used in quality control activities. So whatever quality control cost has been incurred by you, all should be taken into consideration while calculating the cost of production. Then production or operation overhead represents procurement of resources shall be determined on the basis of invoice or agreed value. So how will you take what are the cost of the resources which have been consumed? The invoice value, whatever invoice you have raised, that should be taken into account. Then industry specific operating expenses, if there are some industry specific operating expenses, which means certain industry needs a certain expenses to be incurred separately, those should be clubbed as a separate accounting head, as a separate costing head. Any abnormal cost where material quantifiable shall not form part of cost of production. So guys, there are certain common principles which we will study in every cost accounting standard. One of them is any abnormal cost should be excluded in calculation of cost. Interest finance charges shall be excluded from cost. Impairment loss of asset shall not form part of cost. Now this is very very important. Impairment loss of an asset shall not form part of cost of production. What do you mean by impairment loss? Guys, impairment loss is when we analyze the two things. Okay, the book value of the asset versus whatever is recoverable from that asset. The book value of the asset versus whatever is recoverable from the asset. This is an accounting concept. Accounting standard deals with this concept of impairment, and it always compares the book value of the asset and whatever is recoverable from that asset in the form of sales proceed or the goods that particular asset can sell in market. Okay, if you think that the amount of recoveries which the asset can do is lesser than the book value, then you have to write off the book value. This is the impairment loss. Okay, an impairment loss is not included in the cost. Always impairment loss is not included in the cost. So Sandeep Mishra is asking if geyser MCB off. You're still stuck on the geyser concept. Okay, so if geyser MCB is off, then guys you can on it at any point of time. You need not take government's permission. That government, Mr. Narendra Modi, please instruct if I can switch on my geyser. You will not take government's permission to switch on your geyser. Okay, so guys, it is available for use. It is available for use. Geyser MCB switch on, switch off doesn't matter. Okay, sir. Then again, guys, some common points. Common points you can remember once. They are applicable for all the cost accounting standards. Do not repeat them again and again. And over here also, you can cut the common points. Common points are absolutely not to be done each time again and again and again. Okay. Now, cost of production shall include cost of inputs received free of cost or a concessional value. So, if the cost of inputs are received free of cost, then also the cost shall be included in the cost of production. Cost of production shall also include cost of rework, reconditioning, retrofitment, any kind of job work that is required to be done, that is also included in the cost of production. Subsidy or grant should be reduced from cost of production. Any grant as deferred income in the financial statement shall also be reduced from the relevant element of cost of production. So, if you are receiving a grant in a deferred manner, which means you'll receive a grant at a later point in time, that should also be reduced from the cost of production. Cost of production or acquisition or supply of goods or services shall be determined based on normal capacity or actual capacity, whichever is higher. Very, very important. Please mark a tick over here. Very, very important. Always the cost of production or acquisition shall be determined on the basis of when you are absorbing this cost. Okay, then it is to be absorbed on the basis of normal capacity or actual capacity, whichever is higher. And the unabsorbed cost shall be treated as abnormal cost. Okay, so very, very important. Fines, penalties, damages, demurrage shall not be form part of cost of production. Okay. Forex component, very very important, guys. If there's any imported material which has been bought, if there's any imported input that has been bought, then that then imported material can also have some forex element in it, which means that you purchased the imported material when the forex rate was 48, but you made the payment when the forex rate was 52. So difference between 48 and 52 is the forex loss which you have incurred for this particular product, okay, for this particular cost. Okay, now the question is whether that 48 to 52 cost should also be absorbed in the cost sheet, shall also be taken into the cost of production. That is the question which we need to answer now. So forex component of imported material and other material of cost shall be converted at the rate on the date of transaction. The date when the transaction has entered into place, that date the cost should be recognized. In my case, it is 48. Any subsequent change in exchange rate till payment or otherwise shall not form part of cost of production. Any change at a later point in time, any change at a later given point in time shall not form part of cost of production or cost of acquisition or provision of services. So which means net, which means that the difference between the rate which was there when the transaction was entered into versus the rate which was there when payment was done, difference between these two dates, the amount is shall not be included in cost of production or cost of services. Amount shall not be included. Okay, so this is the fundamental thing. Okay, then again, credits and recoveries, if there are any credit and recovery, they should be reduced from the cost of production. Work in progress stock shall be measured on the cost computed at different stages of completion of stage basis. Now very very important, if there's any work in progress, okay, work in progress means 60% work is done, 50% work is done on the raw material, it is not complete, a part of it is still left. Okay, again, the work in progress is to be the cost should be included as per the stage of completion. Whatever is the stage of completion of that particular work in progress, according to that stage the cost should be included. Opening and closing stock of work in progress shall be adjusted for computation of cost of production. Whatever is the opening and closing stock, that should be adjusted in the cost of production. Scrap of waste, please mark, very very important on this particular part. 4 marks the question can be asked from this particular part. What is the treatment of scrap or waste? Okay. Okay, if in case the scrap has ready market and realizable value can be determined. So if the scrap has ready market and realizable value can be determined for that particular scrap, which means that scrap can be sold in market and some amount can be fetched from that particular scrap, then realized or realizable value of scrap shall be reduced from the cost of production. Even if it is not realized, then also realizable value shall be reduced from the cost of production. In case scrap does not have any ready market and it is used for reprocessing, so sometimes what happens is scrap is reprocessed in any other process also. So for example, if sugar is being made and sugar cane is being crushed and bagasse has been generated, then bagasse can be used as fuel, right? We need not sell bagasse. Bagasse can be used as fuel also. In that case, when bagasse can be used as fuel, in that case, value of input cost at the stage at which it is recycled. So value of the input cost value at the stage when it is recycled is to be taken as the value of scrap. Very very important concept. Very very important concept. So whatever fuel is replaced by bagasse, whatever is the cost of that fuel which has been replaced by bagasse, the cost of bagasse or the realizable value of bagasse should be the same as the input which it has replaced, which is fuel, which is coal, which can be diesel, which can be anything. So the value of input cost on the stage at which it is recycled is to be taken as value of scrap. Value of scrap will always be the value of input cost. The scrap value of scrap produced during the period calculated at the rate as explained above may be deducted from the cost of production. So very very important principle, guys. Now guys, the point is that I in this particular revision video, I cannot go into the each and every line and each every nitty-gritties of this particular concept, but please mark this concept as very very important. And yes, whatever practical questions you have done on this concept, or whatever analysis you have done on this concept, you should be thorough with it. Okay, sir. Then assignment of cost, it is very very simple, guys. How to assign the cost, how to assign cost over various cost centers. This is straightforward method. Assignment has 2 principles which we have discussed in our earlier cost accounting standard: cost and effect and benefits received. According to these 2 principles, the cost can be assigned. So these are simple. Presentation and disclosure, Again, what disclosures are required to be made? How to present this statement in the cost statement, that is the point under consideration. Okay, disclosures and presentation. Okay, guys, very very important. Okay, don't ignore presentations and disclosure. Sometimes a question may be asked that what are the 4 areas of presentation which is needed to be taken care in case of say material cost, or in case of say labor cost, or whatever it is. Okay, so very 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 important. Okay, sir, got it. So yes, guys, this was your cost accounting standard 4. Yes, this is the practical question which comes in the examination also sometimes, guys. A very easy and straightforward one, so I'm not dealing it with over here, but you in your register, in your practical part, please solve this question. Okay, a very easy straightforward one. Acha, one more thing, illustration number 3. These kind of questions are very very frequent in the examination from this particular chapter, whereby all your costs will be given. You just have to add that cost and you have to compute the cost of production. Cost of production is required to be computed, or you have to compute the valuation for the purpose of CGST, which means that cost of production plus 10% should be the value. So these kind of questions are very very common in the examination. Please do them, and these are certain practice questions. Okay, sir, got it. So yes, a 6 marks question, 7 marks question can be there in the examination from this particular chapter. Important, guys, important from a practical standpoint as well as theoretical standpoint. Both the standpoints, this cost accounting standard is important. Okay, now cost accounting standard 5. Not a very important cost accounting standard, but yes, sometimes a question might be asked. Okay, not a very very important cost accounting standard. Mark it as not very important. Okay, and please answer me, guys. How's the Josh in the house? Are we all set to rock our group 4 CMA final, and are we all set to affix those 3 exclusive alphabets before our name, which are CMA? How's the Josh in the house? Please comment in the comment section. Yes. Hi, sir. Yes, sir. Hi. Yes. Very high. Good. Prajakta. Vivek Lambate. Good. Nice. Okay, now let us start determination of average equalized cost of transportation. Okay, now transportation can be of many types. Even one product can be transported using 2 or 3 mediums, which means that through rail it can be brought from one city to another city, and then through bullock cart or through some truck or some trolley, it can be brought from the city's railway station to the factory of the supplier, the manufacturer. So this can easily happen. In this particular case, guys, when when more than one kind of transportation is used, then what we do, we average out all the transportation cost and load it in the cost of production. So that is why the name of the cost accounting standard is determination of average or equalized cost of transportation. This is the average or equalized cost of transportation. That is the name of this particular cost accounting standard. So transportation cost is an important element of cost. Transportation cost is an important element of cost of procurement of material of production for distribution of product for sale. When we distribute our product for sale, then cost of transportation becomes an important element. Okay, inward cost and outward cost, both the costs are there. The inward cost is to be added in procurement of material. It is treated as procurement of material cost, and the outward cost is treated as the cost of sales of finished goods. Okay, that is inward and outward cost. Okay. Okay, sir. So these are generic things. Yes, this is the most important thing. What all should be included in cost of transportation? It is cost of freight, cartage, transit insurance, cost of operating fleet, and other incidental charges which are paid to internal or outside agencies. So any kind of transportation cost, any kind of cost which is incurred, including the insurance cost or the cartage or the operating fleet. Operating fleet means when you have your own trucks, you have your own trolleys to transfer the goods, then you have cost of operating fleet. So transportation cost includes all of these. Now 2 things are not included in transportation cost, which is the demurrage charges and the detention charges. Now demurrage charges and detention charges have been demonstrated by me in in this diagram. When you fail to unload your full container and the container is situated on the port, and you fail to unload it within the stipulated time, then you pay demurrage charges. and when your fully unloaded container, which is the empty container, you fail to remit it back to the authorities, to the port authorities, then you pay detention charges. Both the charges are not to be added in cost of transportation. That is the important thing. Okay. Inward outward cost of transportation, we have already studied. Freight cartage, these are definitions which are simple definitions. Now this is a very, very important table, guys. So guys, in my book, okay, in my book, whatever I have given in form of a table, that is a very, very important element of that particular cost accounting standard, especially after cost accounting standard 10, where I've given only the uncommon points in the tabular format. Rest everything will be in running font, and this tabular form means this is something unique in this particular cost accounting standard. So the examiner, when it gives questions from CAS-10 to CAS-24, then it gives irregular information or uncommon information. So that uncommon information is given to you by me in form of these tables. So tables, high priority in all the cost accounting standards. Now, what are the details to be disclosed in case of transportation cost, and what are the details which are to be maintained by each and every businessman? So businessman has to maintain these details and has to maintain a bureau of these details. And what are those details? In case of own transport fleet, if the businessman has his own trucks, has his own trolleys, has his own mode of transportation, in that case, guys, the records which are to be maintained is salaries and wages of the driver, cleaner, cost of fuel, license fee, permit fee, insurance of the vehicle, lubricant, grease fees, amortization cost of tires, battery over its useful life, repair, maintenance, depreciation. All these things are required to be maintained, because if you have your own vehicle, if you have your own transportation fleet, then of course, guys, you will have to incur expenses on that vehicle, on that transportation fleet, and you have to provide all the expenses are to be total to compute the transportation cost. But if you have hired transportation, which means that it's not your own transportation, it's hired by outside agency. So this is hired and this is own transportation. Okay. In case of hired transportation, which means you don't have your own trucks, you hire a transport agency and they provide you transport services. In that case, charges incurred for dispatch of goods, date of dispatch of goods, type of transport used, description of goods, what are the goods which have been transferred. Okay. Then destination, name of consignee, challan number, etc., etc. So these certain details are required to be populated by you when you have your hired transportation and not your own transportation. Okay. So all these things are required to be documented and maintained by you, because these are to be seen by the tax officer, the cost accounting officers. Okay. Then treatment of cost, very, very important. Inward transportation cost to be treated as cost of raw material, okay, procurement of material. And outward transportation cost to be treated as cost of sales. Very, very important distinguishing point. When you have inward cost of transportation to be treated as cost of material, when you have outward cost of transportation to be treated as cost of sales. Okay, sir. So volume basis may be used for in order of priority for apportionment of outward transportation. Oh, that is very generic thing. Okay, yes, this was our very small, very small cost accounting standard, which is cost accounting standard 5, which is equalized transportation cost. And yes, as I've already told you, not a very, very important cost accounting standard, because in the past examination also it has seldom come in the examination. Okay. Now next cost accounting standard, very, very important. Sixth and seventh. Okay. Material cost and labor cost. I fondly call them as brother sister CAS. Why do I call them as brother sister CAS? Because, guys, brother of the family is usually busy in gathering material for the family. Material means the basic infrastructural facilities, food for eating, food, water, and shelter. And the sister of the family is usually engaged in labor. Labor means she would maintain the house well, she would cook food for everyone in the house. So not a stereotypical stereotyping that I'm trying to do over here, but yes, just to make you remember which one is 6, which one is 7. 6 is material cost, which is brother cost. Okay. 7 is sister cost, which is labor cost. So material cost and labor cost, two costs, both are brothers and sisters. They both go hand in hand, and wherever you see material cost, obviously the labor cost will definitely be there, and wherever you see labor cost, material cost will always be there. So both these costs go hand in hand. CAS-6 and CAS-7 deals with these two costs, and very, very, very important from an exam standpoint. Both the cost accounting standards. Please write in your notebook. Very, very, very important cost accounting standards. All right. Okay. First of all, let's understand the difference between certain definitions, certain words which are given in the cost accounting standard. Now, what are reworks? Reworks are defectives which can be brought up to the standard by putting in additional resources. Reworks are some things which are damaged, some material which are damaged, some raw material or some finished goods which are damaged. But if we want to rectify them, then we just have to employ some additional resources. We just have to do something, some steps in the in those material, and they will be revamped. They will be rectified. They are known as reworks. Okay, these are also known as defectives which can be reworked. Then what are rejects? Rejects are defectives which cannot be reworked, which have been damaged to an extent that they will never meet quality standards, even if I put in additional resources. Even if I do something additional, then also they will not be meeting the standards. So they are known as defectives. What are intermediate products? Intermediate products are products that are that require further processing before it's saleable. So these are somewhat known as the products which are work in progress kind of products. Okay, so these products need further processing. They are half baked, half produced. These need further processing before they can be further used. Scrap is discarded material having no or insignificant value. These material have no value or insignificant value, that is scrap. Waste is material lost during production or storage due to various factors such as evaporation. We always face this problem of wastage. Waste means some product gets normally lost. Normally lost means due to evaporation, due to leakage or something like that, it normally gets lost. That is weightage. Spoilage. Spoilage doesn't mean the dimensional quality standards in a way that it cannot be rectified economically. In an economic manner, it cannot be rectified. That is spoilage. Property, plant and equipment. What is property, plant and equipment? It is derived from Ind AS, guys. The tangible assets which are held for use for production, supply of services, rental to others, administrative and selling distribution purposes are expected to be used during more than one accounting period. So they are for a long term with you. They are known as property, plant and equipment. Okay. Then type of materials are, of course, you should read them, but not very, very important. I'm not going to cover them in the marathon because not very important from an exam standpoint. Okay. So an important principle, which is CAS-6 does not deal with packing material cost. Now, very, very important principle. CAS-6 does not deal with packing material cost. Packing material cost is dealt with in cost accounting standard 9. Although cost accounting standard 6 also deals with material, but not packing material. Okay. Packing material is not to be included in cost accounting standard 6. It is to be included in cost accounting standard 9. So if a material is acquired in exchange of another material at cost of material acquired plus other applicable costs like freight. Okay. So when you acquire some material in exchange for another material, so whatever material you acquire, like fish is being acquired. Okay. Cost of fish plus any other cost like cost of freight or movement of goods from one place to another place, that kind of cost is to be added in the cost of fish, and that is the cost of this particular piece. Okay. So exchange of other material, value at cost of material which is acquired, that is the first cost, and then any other cost like freight, etc., both should be added to compute the material cost of barter system or exchange of goods system. Okay. Then valuation of material receipt, whatever material is received by you, whatever material has been purchased by you, how to value it, the purchase price including duties and taxes. Okay. Very, very important. Whatever price at which you have purchased them, including any kind of duties, taxes, GST, any kind of taxes which you have paid, that is to be added. Freight inwards, insurance, other expenditure directly attributable to procurement. Okay. Very, very important. Freight inwards is included. Freight outwards is not included. Obviously, freight outwards is cost of sales. Freight inwards is cost of material. So freight outwards is not included. Okay, then self-manufactured material. If you have any self-manufactured material, then guys, cost of direct material, employee cost, expenses, factory overhead, administrative overhead, all these things are to be included in the self-manufactured material cost. Okay, sir, got it. And then types of spares is easy, not very difficult. Okay. Then guys, those common principles which I've already told you that you should remember once and should not repeat them again and again. Common principles. Normal loss is to be absorbed in the balance material. Loss due to shrinkage, evaporation they are normal, they should be absorbed. Then demurrage charges or detention charges shall not form part of cost of material. They should not be included in cost of material. Subsidy, incentive, grant shall be reduced from the cost. Any kind of subsidy, any kind of grant shall be reduced from the material cost. Okay. Then finance cost is to be excluded, shall not form part of material cost. This is a common, statement. Some miscellaneous points to remember for principles of valuation of inward cost. Very, very important. Please mark it as very, very important. Okay. Cost of material is determined as per invoice. Whatever is the invoice value of the material, that is the cost of material. Okay. Whatever is the invoice value. If supply of material is X works of purchaser, there will be no freight cartage charges in the invoice. In case inward freight is incurred, it shall form part of cost of material. Preparatory cost, very, very important. Guys, I'll make you highlight certain important parts. Preparatory cost. If you are preparing your raw material, so for example, when you prepare wine, then before preparing wine, the grapes are to be fermented. They are to be stored somewhere. That is known as preparatory cost. Okay. So the cost incurred for bringing the raw material to the place of manufacture and to get it ready for manufacture, that is known as preparatory cost, and it is to be included in cost of material. Then handling cost up to works of factory gate, whatever is the loading, unloading charges, any kind of charges which are used to bring the material till the factory gate, that is to be included. Incoming inspection is to be included. Insurance cost, then cost of container, if it is chargeable, then it is to be included cost of container. So all these things are to be included. Normal loss is to be absorbed over the other products. Abnormal loss is to be excluded. It does not form part of cost of material. Okay. These are imported material and these are pretty fine. Okay. Now guys, how to value your material which is issued, the material which is issued to the factory line. How to value it? Three methods are there: LIFO, FIFO and weighted average. Okay. Now, LIFO is not permitted as per the cost accounting standard, as per the accounting standard itself, both. LIFO is not to be used. Only FIFO or weighted average can be used. And most of the companies are using weighted average as on today. Okay, sir, got it. Valuation of material, this is done. Okay, assignment of cost. Again, two bases of assignment of cost. It should be done on an economically feasible basis. That is one of the most important principles. Then it should be allocated on the basis of benefits received and cause and effect relationship. Okay, then presentation and disclosure is very, very common thing. Presentation and disclosure. Okay. Okay. So guys, again, from a practical standpoint as well as theoretical standpoint, an important cost accounting standard. Practical as well as theory, both of them are important cost accounting standard. From both perspective, they are important. Okay. Practice questions. Okay, sir. So guys, since the practical questions of these cost accounting standards are very straightforward, they're only plus minus plus minus plus minus. Therefore, I'm not dwelling into it in great detail. Wherever I would feel that yes, this practical part I need to do in the class, that I will definitely do, as I've done in my last classes also, cost accounting report rules and record rules. But where I feel that it's just plus minus, then I'll not do those practical questions. Okay. Employee cost, again the sister cost. Okay. Sister cost is the employee cost, and whatever employee cost is there, that is to be accumulated and it should be absorbed to the different cost centers in an economically feasible way. Okay. So agreement, employer-employee, employee. In case of contract employee, agreement should be employer-employee. In case of contractors employee, employer-contractor has the agreement and contractor and employee has the agreement. Payroll, employees on company's payroll, contract employees on company's payroll. Contract employee is on contractor's payroll. Okay. Number of employees, one, the company. Number of employers. Okay. Contract employee, there are multiple companies, so there are multiple employers because one contractor can work for more than one company as well. In case of contractors employees, there's only one employer, which is the contractor. Relationship with the company, permanent relationship is there with the company. Contract employee, temporary relationship, and contractors employee, temporary relationship with the company. So this is the distinguishing factor between employee, contract employee, and contractors employee. So primarily you need to understand the two differences: contract employee and contractors employee. Okay. Contract employee is the employee which you have hired on your roles on the basis of a short-term contract, and contractors employee who is not hired on your roles, but he has been hired on someone else's role and he has been given to you for working. That is known as contractors employee. Okay, sir, got it. So these are type of employees which are covered. So all the employees are covered under the employee cost CAS. Now, the most important part. Again, I've told you guys, wherever you see a table, please pause and learn or understand that particular part carefully. Wherever you see a table. So, classification of employee cost. What shall be the classification of employee cost? It can be current employee cost or future employee cost. It can be current employee cost or future employee cost. Okay. Now, current employee cost includes salaries, wages, allowances, dearness allowance, bonus, all kind of benefits which are given to the employee currently, which are paid to or payable currently. And future benefit are the post-retirement costs which you will pay to the employee once he retires after his retirement. So it is not paid or payable now, it is paid and payable at a later point in time. Okay. On the basis of relationship with the cost center, direct and indirect employee cost. Okay. Then principles of measurement. Again, guys, pretty straightforward and repetitive. You need not learn all of them again and again. Repetitive. Employee cost would include components of labor as an stated in CAS-1. Employee cost should be ascertained, taking into account gross pay, including everything. Okay. In case company to which India supplies, remeasurement of cost recognized in other comprehensive income shall not form part of employee cost. So, guys, OCI is a concept. OCI, which you will study in your CFR. So, if any cost is related to OCI, then that cost is not to be included in employee cost. Remuneration payable to non-executive directors shall not form part of employee cost. Okay, if any non-executive director are there, non-executive directors which do not perform anything in the company, they don't do anything in the company, they are non-executive directors. So those non-executive directors are the directors which are whose salaries not form part of employee cost. Employee cost shall not include compensation paid to employees for past period on account of any dispute or court order. So if any past compensation is given to the employee in the current year, then cost shall not include that past compensation. Provisions of prior period made up in the current period shall not form part of employee cost in the current period. So whatever provision are there in the prior period, which are made in the current period, they shall not form part of employee cost. So any prior period expenses shall not form part of employee cost. Does not include workers hired through contractor, does not include imputed cost, cost of idle time. If it is normal idle time, then it is the normal cost added to the cost. If it is abnormal idle time, then it is charged to costing P&L account and not debited to the material cost. Okay. Okay. So any subsidy grant excluded, penalties, charges excluded, cost of any perquisite shall be added to the cost of labor. Then assignment of cost, how to assign the cost. So the employee costs are not directly traceable to the cost object. These may be assigned on a suitable basis. Kind of if the the employee cost is direct cost, then it is directly to be assignable. Okay, if it is not a direct cost, if it is not related to a particular kind of cost center, then you allocate it on a suitable basis. Now there are certain costs which are to be seen specifically. Okay, certain costs which are to be seen specifically. Recruitment cost or training cost, it is treated as overhead. It is not added in labor cost. Okay, recruitment and training cost dealt with accordingly. So it is treated as overhead, which means it is to be treated as indirect expenditure, not to be added in direct labor cost. This is recruitment training. It is to be treated as overheads. Overtime premium, it is treated as labor cost, but the cost center due to which overtime has been done, it is to be added to that cost center. Okay, so if overhead has been done in case of say a product 1, then the overtime cost shall be added to product 1. That is the case. Overtime premium. Then idle time cost, whatever is the idle time cost where you have not done anything, and there can be some normal idle time also, like lunch breaks, holidays, public holidays. So all those are to be included in cost depending upon whether they are normal or abnormal. If they are normal, then they are to be added to the cost. If they are abnormal, they are not to be added to the cost. Then separation cost, which means voluntary retirement. Okay, so voluntary retirement means the employee is either leaving the job, or he has been forced to leave the job, asked to leave the job, or he is leaving the job. In case of separation cost related to voluntary retirement, retrenchment, termination shall be amortized over the period benefiting from such cost. Very, very important point. It is to be amortized over the period benefiting such cost. So whatever time period is this cost being benefited, then that is to be amortized over that period. Now guys, in question you might be given this fact that it is benefiting say next 4 years or 5 years. It can be said like that. So you just divide the entire cost by 4 or 5 and you can amortize over the period of 4 and 5 years. That is the way to really write this particular answer. If the question is silent about the number of years in which it is to be amortized, then you simply do not add it to the cost. You simply do not add it to the cost. That is very, very important. Okay. Abnormal idle time is charged to costing P&L. Yes, it is to be charged to costing P&L. Okay. Then separation cost. Separation cost. Separation cost again means the due to discontinued operation. Okay, this time the separation cost is due to discontinued operation, which means that some part of your organization has been discontinued. What will happen to the separation cost related to that part? Employee cost should be charged to P&L account. So it has to be directly treated to P&L account because that particular part of that particular section has been stopped from working. So it will not form part of your cost. Presentation and disclosure. Again, guys, presentation and disclosure are similar things which you can do yourself. I'm not repeating over here. Okay. Plethora of practical questions which you need to actually do, because practical as well as theory, both aspects can come in the examination from this particular chapter. All right. Next, cost of utility. So brother sister CAS is over. Brother sister cost accounting standard is over. Now cost of utility. Okay. What is cost of utility? Cost of utility is just like mango pickle. It can go with anything and everything. It is comfortable with everything. It can be added on to the main course. It goes with every form of food and shared with relatives, friends, neighbors extensively. These are known as utilities. So what are utilities, guys? Utilities are common things which are used by every cost accounting standard, which are used by every cost center. Okay. So for example, I have HR, I have product A, I have product B, I have product C. Multiple departments are there. So every department will use the utilities. Okay. Utilities means water, or if you the plant is using some kind of a oxygen or carbon dioxide, then that oxygen or carbon dioxide for running the plant. Okay. So any kind of thing which is used by everyone for every process, like even fuel, a thing as simple as fuel, like coal, like sort of steam, any kind of fuel, any kind of utility that is to be used in any kind of business, that is included in cost of utility. Mango or pickle cost accounting standard, just to make you remember this. Okay. So do you remember it? And especially the way to remember it is, see, this is forming an 8. This is forming an 8. This pickle bottle. So this is cost accounting standard 8. Just a lame way of remembering things, guys. That's it. So yes, cost of utilities are to be included in the cost of production. Principle of measurement. Now this is the most important thing, guys. I've told you, table means important. Table means distinguishing factor and important. Table means that there's something different. Power, yes, power is also cost of utility. Yes. So it says that cost of utility which is purchased, if you have purchased cost of utility, if you have not generated it yourself, you have purchased it, which means I have purchased electricity. Then cost of purchase, duties taxable, transportation cost, insurance cost, other expenditure directly attributable to procurement. These are the cost of utility. If it is self-generated, if I have produced my electricity myself, I have produced my steam myself, I produce my water myself, if it's self-generated, then direct material cost, direct employee cost, direct expenses, and factory overheads. This is to be added. Now, suppose if utilities are generated and they're distributed within the organization within different units, inter-unit transfer, then you add all those things which were written over there in the above column, and you add one more thing, which is distribution cost. Apart from all these things which are common things, you also add distribution cost if it is an inter-unit transfer, which means if the material is being transferred from one unit to another unit. If this is an inter-unit transfer, then apart from all these other things, you also add distribution cost to it. Then cost of utility generated for intercompany transfer. If there's an intercompany transfer, which means the transfer of utility has happened from one group company to another group company. It is all within the same group. Okay, it is all within the same group, but within from one company to another company, the utilities have been transferred. Then, guys, all the above things which are above, additional is distribution cost is to be added. Another thing is share of administrative overheads is also to be added. So two extra things to be added. One, share of distribution cost. Number two, share of administrative cost. And if cost of utility, if the utility is generated and sold to a outside party, third party, if it is sold to a third party, outside party, then, guys, three things to be added: distribution cost, share of admin overheads, and marketing overheads, plus the margin, apart from these common cost. So how to ascertain cost of a particular utility to add it in the costing P&L? This is what we have discussed now. And yes, every aspect has some logic to it. That's why it is being added. Every aspect has some logic to it. Okay, sir, got it. So this was utilities. Principle of measurement largely remains the same, guys. Subset of utility, not required. Assignment of cost. Assignment of, again, economic physiognomy is the guiding principle. Presentation, disclosure. Common points. Common points alarm. Common points alarm. These are common points. Yes, some practical question, and from this particular chapter, practical questions can also come in the examination. But yes, guys, again, straightforward. Add all the expenses. That is the kind of practical questions which come in the examination. Okay, let's move on to our next cost accounting standard. Before we move on to a cost accounting standard, next cost accounting standard, write in the comment section, how's the energy in the house? How's the Josh and how's the energy in the house? Are we tired? Are we feeling sleepy? Are we saying no? We need to conquer the upcoming examination of CMA Final. That's why we cannot afford to be sleepy. Yes. Hi, sir. Hi. No, not feeling sleepy. Yes, good. Hi, sir. Very high. Superb, guys. Superb. Supreet Saluja says hi. Ajnaz, hi. Good. Nice. Okay. So next cost accounting standard is cost accounting standard 9, which is packing material cost. Again, not very, very important cost accounting standard, a reasonably important cost accounting standard from an exam standpoint. Theoretical part comes in the examination more often. Practical part doesn't come from this particular cost accounting standard because there is no practical part in this cost accounting standard. Okay, packing material cost, as you can see that, these are the normal material which we use for our packing. Packing is an important aspect of our entire process, production process. So packaging can be of two types: primary packaging and secondary packaging. Primary packaging is the first level of packaging which is done, like in case of these blister strips. This is primary packaging which happens. Okay, this is the primary packaging which is essential to hold the product. Please underline, it is essential to hold the product and bring it to the condition in which it can be used or sold to the customer. It keeps contents of the goods fresh and sterile. That is the objective of primary packaging cost, that it is necessary to hold the good and to bring it to the condition which can be used by the customer. Second, in case of primary packaging only, there are reusable packaging also, like these bottles are there which are reused. Okay, these are reusable bottles. Okay, then what are secondary packaging? Secondary packaging are packaging which are there to facilitate loading, unloading, transportation and storage of the goods. Loading, unloading, transportation and storage of the goods, that is facilitated by secondary packaging. Like pharmaceutical industry, cartons are used to hold the strips of tablets. These kind of cartons. Okay, the purpose of secondary packaging is transportation. The purpose of secondary packaging is to make the goods secured and to make it sent to the relevant person in an absolute safe manner. I mean, we don't want our goods to be leaked. We don't want our goods to be punctured or broken in any manner. Just to ensure safety, just to ensure transportation properly, that is the purpose of secondary packaging. Okay, so secondary packaging in case of pharmaceutical industry, textile industry, confectionery industry is very, very important. Okay, now most important question, guys: primary packaging, under which cost it is to be included? It is included in cost, the direct material cost. Okay, the direct cost, the cost of production will have this primary packaging, and secondary packaging is cost of transportation or cost of sales. It will not be included in cost of production because, in case of primary packaging, production is not possible without primary packaging. However, secondary packaging, it facilitates transportation. Therefore, transportation cost, it will be included in. Cost of transportation is the secondary packaging, and cost of material or cost of production is primary packaging. That is the differentiating factor. Accordingly, the item of cost is also to be included accordingly. Okay. Okay, sir, got it. Classification of packing material cost. On the basis of source of supply, self-manufactured or purchased. Some people manufacture their own packing material, some get it supplied from outside agency. On the basis of use, primary or secondary packaging. This is difference between primary and secondary packaging. Then principles of measurement, packaging material. Again guys, box means unique thing. So packaging material cost which is purchased shall include purchase price including duties, taxes, freight, inward insurance, other expenditure directly attributable thereto. Self-manufactured, if you have manufactured your own packing material, then whatever direct material you have used, direct employee cost, direct expenses, or any other cost which is directly attributable to making that packaging cost, that is the self-manufactured packing cost. Finance cost directly incurred in connection with the acquisition of packing material. Again guys, common point, finance cost not to be included in packaging material cost. Normal loss to be absorbed in other material loss cost. Demurrage or detention charges not to be included in packaging cost. Subsidy grant to be reduced. Transportation to be added. Standard cost, normal loss to be absorbed. Abnormal cost, loss to be excluded. Credit and recoveries to be excluded. Imported, this is not very important guys. These are the imported material cost which is related to imported material, not very important. Assignment in the same manner. Okay, now guys, these are common points. I mean, just understand, you just need to learn, first 8 cost accounting standards. Learn each part of it, each hook and corner of it, each line of it should be learned. First 8 cost accounting standards. Cost accounting standards from 9 onwards, don't learn it entirely because 70% is the same, only 30% is different. So don't learn it entirely. Okay, best revision classes. Thank you Mr. Pediwal. Aarti Jain, link mein CAS wali PDF. Arey, everything will be there, don't worry. Distribution cost, selling distribution cost, primary packaging cost of production, secondary packaging cost of sales. Yes, Dhruv Rustagi, very good answer. Perfect. Presentation and disclosure is the same. Yes. Wah, my favorite, matri. This is the direct expenses cost accounting standard 10, and direct expenses cost accounting standard 10 is represented by matri. We all eat matri, okay? We enjoy matri with aam ka achar, pickle. Pickle was utilities. So utilities and direct expenses go hand in hand. Utilities and direct expenses go hand in hand, and that is why I've connected both of them. So direct expenses, deep fried salted cookies, maybe sumptuous alternative to go with pickle. So guys, I have linked all these cost accounting standards in a way that you will be able to remember all of them at one go. That's how I've linked them. Okay, so mnemonics have been developed so that you remember them according to the CAS numbers also, because it's important to learn the CAS numbers also. It's important to learn the exact name of the cost accounting standard also, and with that objective I've linked all the cost accounting standards. Okay sir, this is the direct expenses, and guys, direct expenses means expenses which is directly relatable to production, which can be said that okay, this direct expenses attributable to this particular product or this particular cost center. That is direct expenses. That is the objective. Okay, principle of measurement, identification of direct expenses. So direct expenses can be identified on the basis of traceability in an economically feasible manner, which means that in which cost center the direct expenses is to be attributable, that is to be traced in an economically feasible manner. We need to know where is it directly attributable. That is the traceability. Okay, now direct expenses incurred for the use of bought out resources. When direct expenses is incurred from bought out resources, which means we have purchased the direct expenses, then whatever cost has been incurred, that is the cost of direct expenses. Wherever we have cost of in-house direct expenses which we have developed in-house, then cost determined on the basis of amount incurred in connection therewith. Whatever amount we have incurred for those cost those direct expenses, that is to be added. Okay, R&D expense, direct expenses, royalty, finance charges to be excluded, direct expenses, abnormal, normal, subsidy, grant, incentive, penalty, damages. Guys, see, 70% of the cost accounting standard is the same. 70%. Please see and appreciate and understand how less do you need to work. You need to work really less. Okay, you need not work a lot. You need to work really less. You need to work really less. Okay, let's jump on to our next cost accounting standard, which is administrative overhead. and the abbreviation is Police Cost Accounting Standard. It protects you. Administrative overhead protects you. Police Cost Accounting Standard or the Police Cost Accounting Standard. This is our policemen and administration held the fort as first line of defense and war against Corona. So during Corona time, our administrative warriors, people who were standing tall, were policemen, and that is the linkage which I've done in this particular cost accounting standard, administrative overhead. So now I'm starting the Corona cost accounting standards. Yes, these are known as Corona cost accounting standards. Okay, first one is administrative, which is related to administration expenses. What is administration? What is administration? First of all, we need to really understand the definition. Two words, very, very important, which I've also bold and underlined over here. General management and administration. So word which is important is general management. If there's general management of any organization, if there's any general management which is there in the organization, then general management is related to administrative overhead and administration is administrative overhead. It should exclude production overhead, marketing overhead, finance cost, etc., etc. So general management is the administrative overhead. Now, very, very important, if the administrative expenses are performed in-house, if they are performed in-house, then aggregate of cost of resources consumed in the activities relating to general management administrative organization. It usually represents cost of shared services, cost of infrastructure, general management cost. Administrative overhead comprise items like employee cost, utilities, etc. And administrative services procured from outside. If it is procured from outside, then whatever cost has been incurred for procuring these administrative overhead, their invoice value is the cost of administrative overhead. Straightforward principle, guys. Okay. Treatment of software treatment is okay, not very, very important. Treatment of leases. Now, guys, there are small points, which you should read. Not very, very important. Okay, from an exam standpoint. Treatment of lease, treatment of software, etc., etc. Then leases are of two types. Again, credit recoveries, fine, penalties. Credit recovery is to be reduced. Any change in cost accounting principle is to be done only when it is required by law. Then assignment of cost, it is to be traced in a economically feasible manner. Again, cause and effect relationship is important, and benefits received is important. These are two guiding principles for assignment of cost. Assignment means we are allocating the cost to the relevant cost centers, to the relevant cost objects. That is the assignment of cost. Presentation and disclosure is there over here. Okay, so yes, again, not a very, very important cost accounting standard. Cost accounting standard 11. Not many questions have been asked from cost accounting standard 11 in past papers. Okay, so yes, guys, that's all for today's session, because this particular cost accounting standard is very, very important. So I don't want to start it now when your energies are little low, you are little tired. So yes, that's all. CAS 11 till CAS 11 we have finished today. Tomorrow we are going to finish all the cost accounting standard from 12 to 24, and then we'll be moving ahead in our marathon lectures. Okay, so yes, that's all for today's session, guys. Please comment in the comment section if you liked this particular session, and if you want some details of the session, if you want to know anything about these particular video lectures or the notes which are there or anything, you can just feel free to ping on the numbers which are given in the ticker below. You can log on to the website cscscmanikhilgupta.com. That is also that can also be done. So yes, that's all for today's session, guys. Quickly, I've made you revise certain cost accounting standards, and I've made you highlight those important parts of the cost accounting standards which are important from an exam standpoint. So yes, that's all for today's session. We'll be meeting in a subsequent session. Till that time, all the very best and happy studying. Bye-bye. See you in the next session. Today, we are going to start an important cost accounting standard, which is cost accounting standard on repairs and maintenance. Cost accounting standard 12 is on repairs and maintenance. And yes, repairs and maintenance means any kind of wear and tear which happens in the machinery. If that wear and tear is actually rectified, is actually amended, that is known as repair and maintenance. Whenever wear and tear, the asset is rectified or it is repaired, which means it is mended, then repair and maintenance expenditure occurs. So before even I start this particular topic, guys, I want to ask you a question. I'll give you a practical scenario, and I'll ask you about whether it's repair maintenance or not. Okay, So I'll give you an example. I've not even taught repair maintenance cost accounting standard as yet. Before even teaching cost accounting standard, I am going to ask you certain question. Let's see who's going to answer this question. Yes, sir. All right, let's see. So, guys, I have a machinery. Worth rupees 1 crore. Okay. What I did was I incurred certain expenses on that machinery. I incurred expenses on two occasions. I incurred certain expenses on two occasions. Okay, obviously to repair, maintain the machinery, to to just mend it. Now, on one occasion, I spent about 10 lakh rupees to repair that machinery, and on second occasion, I only spent 50,000 rupees to repair that machinery, to amend that machinery, to do certain necessary wear and tear rectification of that machinery. Okay, now you need to tell me, out of these two expenditure, let us call this expenditure as A, this one as B. You need to tell me which one is repair and maintenance and which one should I add in the cost of that particular asset. So you have two options. One, capitalize the cost. Number two, put it in repair maintenance and put it in P&L account. Now you need to tell me whether from A and B options, which one would you like to capitalize in the assets value, which one do you want to write off in the profit and loss account. Please answer in the chat box. That's my question. Abhishek says he's been sick since morning. So Abhishek, this will happen now. Some roadblocks will come in your way. Some obstacles will come in your way now. Your health might suffer. Anything might suffer. But this is the test which government is giving you to ensure that you deserve those three alphabets which are called CMA before your name. This is the test. This is the testing time. If you qualify this test, then the future is yours. The degree is yours. If you do not qualify the test, then you are actually at a loss. Yes. All right. Answers are here. B. Chenna Keshava says B, repair maintenance. Joshika says 10 lakhs to be capitalized. Niti Pathak says 50,000. Supreet says 10 lakhs to be capitalized. A is repair, Ankita says. Supreet says 50,000 write-off. MN King says both. Both what? Both. Ashutosh says A capitalize, B will be P&L account. Ajnaz says capitalize. What capitalize, Ajnaz? Sundareshan says 10 lakh capitalize as it is substantial. It depends upon usage of that part. B is the answer. Both capital. MN King says both capital. Ankita says B is repairs. Ankita says B is repairs. Huh. Any other answers, guys? Because as of now, all the answers are incorrect. All the answers are incorrect. The answers which I have received till now, all of them are incorrect. Any other answers which anyone else wants to give? My simple question is, which expenditure to be capitalized, which expenditure to be put in repair and maintenance? That is my question. Khushal Sahu says he's in CMA Foundation. Okay, Khushal Sahu, all the very best for your CMA Foundation examination. And yes, do come in intermediate and final. And yes, let's rock CMA Intermediate and final together. Any other answer? Please repeat the question once again. The question is, machinery which I have in my factory is worth 1 crores. I spend some expenses on repairing that machinery or maintaining some machinery. 10 lakh rupees is spent on first occasion, which I call it as A. 50,000 rupees spent on second occasion, which I call as B. You need to tell me which one out of these is capital expenditure, which one is repair and maintenance and to be put in profit and loss account. Because we are going to start the CAS on repair maintenance. That's why this question I'm asking you. Any other answer? Okay. So guys, let me tell you. Should I disclose the answer? Or is anyone else giving the answer again? Niti Pathak says 10 lakh capital expenditure. Incorrect answer. Incorrect answer. Okay. So guys, Always while deciding whether an expenditure is repair maintenance or not, or whether it should be capitalized or not, please remember, amount is not relevant. Amount is not relevant. Even a 50,000 rupees worth of expenditure can be capital. Even 10 lakh rupees worth of expenditure can be repair and maintenance. So principle number one, amount is irrelevant. Amount is not relevant at all. Amount is not to be the relevant criteria. So amount, if you see the amount and say 10 lakh is huge and that is why it should be capitalized, wrong analysis. If you tell me 50,000 is very less as compared to the cost of the machinery, therefore repair and maintenance, wrong analysis, guys, wrong analysis. The correct analysis is, if an expenditure increases the estimated useful life of the asset, or it increases the productivity or efficiency of the asset. It increases the productivity or efficiency of the asset. If either these two conditions, either one of these two conditions is satisfied, then that expenditure is termed as capital expenditure. So to term any expenditure as capital expenditure or property, plant and equipment, PPE, you need to fulfill any of these two conditions, which are the expenditure has resulted into increase of estimated useful life of that particular asset, or the expenditure has resulted into increase in the productivity or efficiency of the asset, or both of them. If these conditions are met, only then I will say that expenditure should be capital in nature. Amount is irrelevant. Only the amount is irrelevant. That is the first principle that I'm going to give you today. So I have not given you the enough information that can actually decide whether these expenditure are capital or revenue. I'm not given you enough, material, enough facts in this particular case. And now I'm going to give you enough fact of the case. Okay, what are the facts of the case? Please listen to the fact of the case very, very carefully. After incurring this 50,000 expenditure, the machinery which used to produce 10,000 units, so the machinery used to produce 10,000 units, it started manufacturing 12,000 units. The machinery was originally producing 10,000 units. After doing this 50,000 rupees of expenditure, it started producing 12,000 units of finished goods. So tell me, is productivity increasing? Yes. Is efficiency increasing? Yes. So will 50,000 be capital or revenue? It will be capital expenditure and not repairs and maintenance. And not repairs and maintenance. Now, my next example. Rupees 10 lakh was spent on this machinery. Okay. This machinery was originally producing 10,000 units. But subsequently, due to passage of time and due to overuse of machinery, we were using machinery a lot. Its efficiency got reduced to 8,000. Okay. Its efficiency got reduced to 8,000. And after incurring this 10 lakh rupees, the efficiency was restored to 10,000. From 8,000, it was restored to the original efficiency, which is 10,000. Guys, in this case, neither the efficiency is being increased nor the estimated useful life is being increased. Now you will say, sir, efficiency is being increased. No, 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 no. Efficiency is not being increased. Efficiency is just being restored to the previous level or restored to the original level. And therefore, this 10 lakh rupees is an expenditure of repair and maintenance. So what is repair and maintenance? Repair and maintenance is any expenditure that will restore my machinery to the original position which it was there earlier when I purchased it. That is known as repairs and maintenance. So always, guys, do not get confused by the amount. If the amount is huge, sir, then it is capital expenditure. No, 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 nothing like that. If the amount is huge, then it is going to be capital expenditure. Nothing like that. Even if the amount is small, then also it can be a capital expenditure, depending upon what purpose is this particular expenditure solving. So this is the fundamental of our cost accounting standard, which is repairs and maintenance cost accounting standard. And I have given it a mnemonic, which is mnemonic, which says that, it is a doctor nurse cost accounting standards, because doctors and nurses are responsible for rectifying patients. Similarly, repair maintenance is responsible for rectifying the machinery. Therefore, repair maintenance expenditure has been equated with doctor and nurse CAS. Guys, just a way to make you remember all the cost accounting standards, okay? If you just learn the cost accounting standards using these names, then you will be able to remember them with their numbers. That is the only benefit. Yash Mungale. Okay, Yash. Great, Yash. Thank you for such beautiful comments. Efficiency here refers to original efficiency at the time of purchase of asset. Very good, Abhishek Kumar Sarma. Very good. Yes, efficiency refers to the original efficiency. So repair maintenance is an expenditure which is incurred. Look at the definition. The cost of all activities which have the objective of maintaining or restoring. Please underline this word, restoring, in the definition of repair maintenance. Very, very important. An asset or equipment to a state in which it can perform its required function at the intended capacity and efficiency. To restore back the asset, that is repair and maintenance. That is the most important line over here. Okay. Okay, sir. Perfect. One DIY. Let's see who's gonna do it. Okay. Please do it fast. DIY. Adarsh Private Limited manufactures steel billets through an imported machinery which was bought 2 years back. The machinery was reaping an output of 10,000 units when it was purchased. After 2 years of continuous use, the output declined to 8,000 units owing to normal wear and tear during usage. Hence, during third year, an expense of 1 lakh rupees was incurred on replacing an old part in the machinery, which restored the machinery to its original output of 10,000 units. Further, during fourth year, the company spent another 2 lakhs for repairing the machinery. The time the engineer suggested replacement of critical parts which could enhance the capacity to 14,000 units. So in the second repairs, the enhancement of efficiency happened. Suggest which expenditure to be treated as repair and maintenance. Please tell me whether 1 lakh rupees is to be treated as repair and maintenance, or whether 2 lakh rupees is to be treated as repair and maintenance. You have two options, 1 lakh rupees or 2 lakh rupees. Which one is repair and maintenance? Please read it carefully and answer the question. Which one should be treated as repairs and maintenance? Perfect. Perfect. Very good answer, guys. First is repair maintenance. Very good. 1 lakh is repair maintenance. Absolutely. You got it right. Yes. This is what I was trying to explain you. Amount is irrelevant, guys. Don't ever look at the amount. 1 lakh, 2 lakh, 10 lakh, 12 lakh. Don't look at the amount ever. The important criteria is useful life. Perfect. Perfect, guys. Let's move on. Okay. So it also includes, so repair maintenance also includes planned maintenance, breakdown maintenance, repair or overhaul of an asset which results in restoration of asset to its intended or original condition is known as repair maintenance activity. Major overhaul is a periodic, generally more than 1 year repair work carried out to substantially restore the asset to its intended working condition. So major overhaul means you spend huge expenditure once in a while to restore the asset to its original condition. Again, repair and maintenance and not capitalization. Okay. Classification of repair maintenance cost: preventive or routine or planned maintenance. So how do we classify repair maintenance? What are the kind of repair maintenance which are there? Okay. Number one, routine, preventive, planned maintenance, corrective maintenance, total productive maintenance, breakdown maintenance. Okay. There are 4 types of maintenance. Preventive or routine or planned means before any adverse situation happens, then if we maintain the plant, then it is known as preventive. Second is corrective. Corrective means, if some lacuna has happened in the machine, some small problem has happened in the machinery. After that, if we maintain, that's corrective maintenance. Total productive maintenance is that, on an annual basis, you completely overhaul all the machine, all the equipment which are there in your factory, so that they work in the efficient manner. That is total productive. And breakdown means where there's a major obstacle, or there's a complete halt of plant machinery, that is known as breakdown maintenance. So these are kind of maintenance. Okay. Workshop types are not very, very critical. Okay. Now, very, very important point, guys. whatever is given in the table is important. Okay, that is the principle which you are following for all the cost accounting standards, especially to those students who are studying it from my book. If you are studying from my book, wherever you see a table in the cost accounting standards after cost accounting standard 10, you should automatically understand that this is an important part. Okay, and past examination questions will also suggest this. So cost of in-house repair maintenance. If you are having a in-house repair maintenance department, which is an engineering department which does your repair maintenance in-house, so cost of in-house repair and maintenance activities, cost of material, spares, manpower, equipment, utility, any other resource which is utilized in such activity. So obviously guys, if you have in-house repair maintenance department, that means you have employed your own employees, you're giving them salary, material is also used, spares is also used, utility is also used. So whatever expenditure attributable to such activity is there, that should be accumulated to find this particular cost of in-house repair and maintenance activities. Now cost of repair maintenance activity carried out by outside contractors. Now what will happen if I don't have an in-house repair maintenance department? I hire a contractor, ask him to take the machinery at his premises, rectify it and give it back to me. Although I will always prefer that he comes to my premises, rectify my machinery and goes back. Okay, I always will prefer this. But still, if he insists, then no, this machinery has to be taken to my premises. So if he takes that machinery to his premises and then if repair maintenance happens, then guys, what kind of cost is to be ascertained? Okay, outside contractors inside the entity. So first option is when the outside contractor is coming inside the entity. Second option is when the outside contractor is taking the machinery at his premises. Okay, so once when it is in our premises only, then charges payable to the contractor, then cost of material, consumable, spare, manpower, equipment, all the things. If it is in our premises, then guys, all these things will be utilized as per our our expenditure will be incurred additional to the charges which is payable to the contractor, because whatever else is required in rectifying that particular machinery, the contractor will ask from us if the machinery is at our premises. If the machinery is at the contractor's premises, if the machinery is at the contractor's premises, then guys, invoice or agreed price, whatever contractor will take from us, and even the travel cost of the contractor, a technician or anything, that will be taken from us. Okay, in this case, no cost of material will be incurred by us because everything will be provided by the contractor because the machinery is at the contractor's premises. So no additional cost like cost of material or utility like it was there over here, manpower, utility. No such additional cost is there. Only the invoice which is raised by the by the contractor will be there for us. Okay, so this is the principle which we can say is there. Okay. Now an important point guys, which we have just studied, cost of spares replaced which do not enhance future economic benefit from the existing asset beyond its previously assessed standard of performance shall be included in repair and maintenance cost. So guys, there are certain spares, certain additional things which are there, certain spares are there which do not enhance the cost of the asset. If they do not enhance the cost of the asset, then of course those spares cannot be treated as capital, they have to be treated as repair and maintenance. So any spare which do not enhance the performance of the asset beyond its initial established standards, then it will not be treated as capital expenditure, it will be treated as repair and maintenance. High value spares when replaced by a new spare. Now this is important guys. There are certain high value spares. High value spares means which are very expensive spares, where even one spare accounts for about 60% or 70% of the value of the entire asset. Okay, so high value spares when replaced by a new spare and is reconditioned shall be recognized as PPE when they meet the definition of PPE and depreciated accordingly. So the high value spares are to be treated as PPE, which is property, plant and equipment, only when they meet the criteria of PPE. And criteria of PPE is that this particular asset is going to reap us benefit for a longer period of time. So that is the principle. Okay. Okay, sir. This is easy. And then guys comes the generic part. Okay, generic part means all these are repetitive provisions which are repeated again and again. Any subsidy grants to be reduced, abnormal cost should be reduced, credit recovery should be reduced, cost of major overhaul shall be amortized, finance cost should be reduced. All these are generic parts. Now, guys, do remember that once you have studied these general provisions in one cost accounting standard, they will be same for all the cost accounting standards. Therefore, it's very, very easy to actually revise all the cost accounting standards in one go, because especially from cost accounting standard 10 to 24, only few parts are different. Rest all the parts are the same. And the different parts I've given in a tabular form in my book. So you'll be able to really understand it. Okay. Niti Pathak is asking, what is FYKGN in your notes? So Niti Pathak, FYK means for your knowledge. So always while teaching cost audit and BVM SPM, I follow this practice that I don't only teach from a standpoint of examination, qualifying the examination, but I also give students certain practical insights into every topic. Now, since for marathon purposes, those practical insights are not relevant, they are relevant for your practical future career. Since for marathon purposes, they are not relevant because they won't come in the examination. Therefore, I'm not discussing them over here. So FYK means for your knowledge only. For your knowledge means it is just for your knowledge that you should know it. And GN means guidance note. So there are guidance notes which have been released by the institute. According to those guidance notes, these concepts are displayed. Okay, next is cost of service cost center. What is cost of service cost center? Sir, can you explain high value spare once? Yes, high value spare means a spare which is taken as a spare, which is kept as a spare, and it is replaced when the original or old spare is worn off, is torn off, is actually not working properly, and is reconditioned. The old spare is reconditioned and the new spare is put in the machinery for the time being so that the work is not halted. Now, the question is that high value spare is treated as capital expenditure or is treated as part of fixed asset only when it meets the criteria of PPE, property, plant and equipment. So if it is giving you benefit for more than 1 year, then that high value spare is to be capitalized. Otherwise, it is to be treated as a revenue in nature. That is the concept. Okay. Now, next, cost of service cost center. Guys, there are service cost centers which are there. Okay, these are support staff of any organization. Like production is the production center. Okay, these are the main centers, production centers. Revenue centers are there, production centers. Cost centers are service cost centers are service cost centers like HR department, finance department, tool, engineering and tools department. All these are service cost centers who support the original manufacturing department, which support the original manufacturing department. They are not the manufacturing department. They just support the manufacturing department. That is known as service cost center. Okay. So service cost center, the cost of service cost center is what we are going to study in this cost accounting standard 13. What mnemonic have we, placed on it? It is the essential services. During Corona, there were essential services which are permitted to travel from one place to another place, like doctor, medical staff, police staff, blood donation camps, etc., etc. So these service cost centers are also like those essential services which are required by every organization under any circumstance. No organization can survive without a finance department. No organization can survive without an HR department. Now, the question is, these are common departments. When these are common departments, then their cost is to be apportioned over the main manufacturing or the main cost centers. And how is it done? That is enumerated in this particular cost accounting standard. Okay. So support service cost center, these are the centers which are auxiliary service center. Please underline this word, auxiliary services. Auxiliary services means secondary services or supportive services that are known as auxiliary services. So these are cost centers which provide auxiliary services. Now, principle of measurement, again, the most important part is the part in the box. How do you measure your service cost center cost? Because first you have to measure, then only can you apportion. You cannot apportion before measuring. So first you need to measure the cost of service cost center, and then you will apportion it over the different cost centers which are the revenue cost centers. Okay. So how do you calculate the cost of service cost center? That is the question which you are going to delve in now. Okay. So cost of in-house service cost center. If you have in-house service cost center, so guys, HR department, some people have in-house HR department and some outsource their work to outside agencies. Both is possible. So we are discussing about in-house services. When HR department is our own department, which is there in our organization. In that case, material consumed, consumables, stores and spares, manpower engaged, equipment usage, utility consumed, all the expenditure which is directly allocable or directly related to the service cost center, all those expenditure will be added to form the cost of in-house services. Then cost of services rendered by the contractors within the facility of the entity. So there's an outside contractor which is coming inside the entity, which is coming inside the inside the organization and giving us services of say HR or finance or anything. Okay, then the charge is payable to the contractor and whatever material, consumable, store, spare he uses in our premises. In our premises, that is known as the cost of service. Okay, next is cost of service rendered by contractors at their premises. At their premises. What if contractor doesn't come to our premises? It it provides services from their premises. So guys, there's a fashion which is going on right now in corporate world, which is that the finance department is always outsourced. So there's an external agency which is there with the finance department, and that finance department is always using that particular finance department is outsourced, and some other party is doing finance for our company. Happens a lot. Okay, so in case the contractor is giving services from their premises to us, then the invoice which is chargeable by the contractor, whatever contract has charged from us, then any other expenditure which is attributable to the expenditure, and this cost shall also include cost of resources provided to the contractor. So everything which we have incurred for purchasing these services, that will be added to form my cost of services. Then cost of services for the purpose of inter-unit transfer. If you are doing an inter-unit transfer, which means there's a company A, it has two units, unit X and unit Y. Okay, company A has two units. Company A has two units, unit X and unit Y. Now, if X has a service cost center, say HR department, and that HR department is exclusively working for X. Now, X can provide those services to Y also, saying that okay, Y, you need not have a different HR department. I will share my HR department with you. Sharing is possible within the unit. Similarly, any other service cost center like finance, okay, like any other tools, engineering tools, there's a room which maintains tools which are required in the organization. So any kind of service cost center, if it is services are transferred from one unit to another unit of the same company, then there's only one additional thing which is to be added, which is the distribution cost. Guys, it is very similar to what we had seen yesterday. Okay, so all the things which are there, they are obviously there: material, labor, equipment, utilities, other resources, they are there. One additional thing is distribution cost. Whatever is the distribution cost of that particular utility, that will be added while computing the cost. Next is cost of services for the purpose of intercompany transfer. Intercompany transfer means within same group there are two companies, company A and company B. Okay, company A has an HR department. Company A tells company B, oh look, company B, I already have a HR department. Why do you want to have a different HR department and hire additional cost? Don't do it. You take services from my HR department only and it will serve you for company B also. So if this kind of an arrangement is there, that you are sharing your service cost centers, one company is sharing their service cost centers with other, then two additional costs are added. One is distribution cost, which is already included above, plus administrative overheads. Two additional costs to be added. Then in case the services are rendered to any third party, that is outside party, in that case, guys, marketing overheads are also added apart from distribution and administrative overheads. That is how the addition in cost happens in case of these three areas. Okay, guys, this is a very plus minus kind of question. Okay, now we come on to the generic part, which is the same, guys, like finance cost is to be excluded while computing the cost. Imputed cost shall not be included. When the cost of service cost center is accounted at standard cost, price and usage variance shall be treated as price of cost of services. Usage variance due to abnormal reason shall be treated as part of abnormal cost. So if price variance is there, price variance, whether it's abnormal or normal, it is to be treated as cost. But usage variance, where it is normal, it is to be treated as cost. Where it is abnormal, it is to be treated in costing P&L account. Okay, subsidy and grant to be reduced. Okay, cost of standby service utilities, committed cost, easy penalty damages done, credit recoveries, any change in cost accounting standard done, assignment and presentation. Okay, so guys, all these things are very common and quite simple. Okay. So now you understand why I told you in the beginning of the lecture, of cost accounting standard, I told you that don't worry about the number of cost accounting standards. Don't worry about that. Just see 70% of all the cost accounting standards are absolutely the same. Only 30% is different. So when this is the case, then how do you say that cost accounting standards are too lengthy, sir? We get bored of doing cost accounting standards. There are so many, there are 24. What makes you think that? What makes you think that? It is not 24. It is much less than 24 because 70% of the provisions are the same. Okay, next is pollution control cost accounting standard. Again, this is one thing which Corona has curtailed or Corona has controlled. That is pollution. So pollution is CAS-14 and Corona has curtailed this pollution. Corona, during Corona times, pollution levels were extremely low and they were very, very soothing. They were very, very pleasant. So pollution control cost is the Corona control. One thing which came under control during Corona is pollution. Now again, guys, in pollution control cost, there are these definitions which you should read. Air pollutant, air pollution. It will remind you of your civics class during your ninth standard. Okay, civics class. So pollution control cost definition, soil control definition, and the important part is this. Yes, box again, guys. Box again. What box? Very, very important. Please underline or highlight that it's very, very important over here to learn all these types of pollution control cost and their treatment in cost sheet. That is what we are going to analyze now. What are these kind of pollution control costs and what are their treatment in the cost sheet? That is the question that we are now answering. Okay. Inter-unit, intercompany, outsider, same as CAS-8. Yes, absolutely same as CAS-8. Ditto same. Utilities, ditto same. Okay. Now, please understand these costs, guys. These are very, very important costs. Pollution control costs may be of different types. Okay. There are certain costs which are related to future as well. What is the treatment of those costs? This is what we are going to discuss now. Okay. Number one, future remediation or disposal cost. Now, there are certain pollution costs which have not been incurred during the current period. It will be incurred during the future period. Okay. And in the future period, it is very, very sure that is going to happen. So, for example, if you are producing some hazardous waste, and that hazardous waste is to be treated before it is thrown in the river or thrown in the garbage. It is to be treated. You tell your people that I will treat it once in 5 years. Why to treat it every year? So you have scrap. You are just having a scrap dumping ground, and you're dumping your scrap over there. Okay. And you tell government of India, look, government of India, yes, I am going to treat it before flowing it in river, but I'm going to treat it together for next 5 years. I'm not going to treat it every year. So I'll accumulate it, pile it up during next 5 years, and then I will treat it together. This is known as future remediation cost. Today, there is no pollution control cost. There is no treatment which you are doing to this hazardous chemical. Today, there is no cost that you are incurring. But in future, there is a guarantee, there is a surety that you will incur this kind of an expenditure. There's absolutely surety. After 5 years, whatever tons of wastage has been accumulated, you will definitely treat it. You will definitely incur expenses to make it clean, and then you will throw it in the water or wherever. Okay. This is known as future remediation, means rectification or disposal cost. Now the question is, the cost is going to be incurred in future. 5 lakh rupees is going to be incurred in future. Should I do anything about it today in my cost sheet? That is the question. Please understand the question. If you are with me, just write yes in the chat box. Are you guys with me? Or have you slept? Because now I'm doing very, very important part of our cost accounting standards, guys. Very important parts. These are very, very important part. See, a question is going to come from these parts. They have been repeated in past also. They will be repeated in future also. Are you with me? Yes, you are. Great. Awesome. Jyoshika says yes. Keshava says yes. Good, guys. Good. All right. So this is future remediation cost. The question is, the cost is going to be incurred after 5 years. Should I do anything about it today? Because today I have not incurred any cost. This is a future pollution control cost. Should I do anything about it today? Answer is yes, you should recognize this repair maintenance cost on a pro rata basis, on a proportional basis in your cost sheet today. So you know that you will be incurring 5 lakh rupees after 5 years, and it will be accumulation of 5 years scrap. So you should recognize 1 lakh rupees as pollution control cost. You should make a provision for it. Undoubtedly, you have not paid it, but you will make a provision for it and put it in your books of accounts. So cost shall be estimated. The first step is you estimate the cost. What is the total cost? I've estimated 5 lakh rupees will be the cost, and accounted based on the quantum of pollution generated in each period. So whatever is the quantum of pollution which is generated in the each period, according to that pro rata basis, you will recognize this cost in the you will recognize the future remediation cost or disposal cost. You will recognize in your cost sheet. Next, contingent future remediation cost. Again, next part is future remediation cost, but there's one more word added to it: contingent future remediation cost. Very, very interesting concept. Very, very important concept. Okay. Yes, this cost is also future cost. It has not been incurred today. It will be incurred in future, but it will depend on some contingency, on some event which is likely to happen in future. The event has not taken place now. Event will take place in future. So this particular cost will depend on the contingency or an event which will happen in future. So although this is a future remediation cost, but dependent on a event which will happen in future. So guys, in this case, we will not recognize even a single rupee today, because it is not ascertained. It is not certain whether that event will happen or not. It is not certain. So over here, we shall not treat it as cost unless the incidence of such cost is reasonably certain. Once incidents happen, once contingency takes place, once contingency happen, then we will recognize this cost in our cost sheet. But before the contingency happen, we will not treat it as cost in our cost sheet. That is the guiding principle. Okay, sir, got it. Next is cost of in-house pollution control activity. So some organizations have in-house pollution control departments who take care of this fact that, you know, any hazardous material which is produced as a waste, it should not be drained in water without treatment. This is known as in-house pollution control activity. So if you have in-house pollution control activity, then of course the cost will include material, labor, consumables, spare, utility, any other expenditure. And if this pollution control cost is carried out by outside contractors inside the entity, if this pollution control cost is carried out by outside contractors inside the entity, so outside contractor is coming inside the entity, and then this pollution control cost is being incurred, then charges payable to the contractor and cost of material, consumable, manpower, equipment, utilities. Guys, ditto same as repair maintenance cost and as utilities cost. Ditto same. There's no difference in it. And you tell me that cost accounting standards are very lengthy, sir. We are not able to remember them. They are so lengthy. You tell me this. Where is the length? Where is the length? There's no length. It's all repetitive. It's all logical. Pollution control costs, jobs carried out by contractor at his premises. Contractor is taking our waste at his premises. He's treating them there. Okay. Then it shall be invoice or agreed price or other expenditure directly attributable thereto. Whatever is attributable to those expenditure, that will be added over here. Now, some kind of common points. Each type of pollution control cost shall be treated as distinct activity. So if you have air pollution, if you have air pollution control activity, if you have water pollution control activity, each activity should have each head, each subset head. Okay. Then finance cost not included, imputed cost not included, price variances to be treated, usage variance and price variance, subsidy grant not included, abnormal, if pollution control cost resulting from abnormal situations not to be included in cost, finance penalties, damages not to be included, credit recoveries to be reduced, research and development to be taken into account, change accounting policy, assignment and presentation. Perfect. So guys, this is how you need to revise your cost accounting standards. This quickly, this should be speed. Before your examination also, this should be the speed of revising your cost accounting standards, because speed is of paramount importance. You need to really buck up with respect to your speed. Okay. Next one is Selling and distribution overhead. And this is one thing which again got controlled during Corona. Second thing which has got controlled under Corona was selling and distribution. People were not selling anything. Distribution channels were blocked. Okay. So selling and distribution cost. Okay. These are general definitions, guys. Again, the different part. Okay. The different part is selling and distribution incurred in-house. If you have in-house selling and distribution department, in-house, then it is cost of resources which are consumed to provide the selling and distribution activities. Post-sale costs such as warranty cost, product liability cost, after sale services shall be estimated. Selling and distribution overhead procured from outside party. If you have hired someone to do your selling and marketing, then guys, what will be the cost? Cost of resources procured from outside at the invoice or agreed price. Whatever invoice he has raised on you and you have made the payment to the contractor for doing your sales, that is the total amount of cost. Selling distribution overheads. Selling distribution overheads are the benefits of which are expected to be divided over a longer period of time, shall be amortized on a rational basis. So if there are overheads, overheads means indirect expenses. If there are indirect expenses which are relating to future distribution efforts, then it is to be amortized over a rational basis. Then cost of after sales services. After sales services provided in terms of sales agreement for a class of transaction shall be determined on rational and scientific basis net of recovery. Okay. Then again, does not include imputed cost, subsidy to be reduced, abnormal cost to be excluded, demurrage and detention charges to be excluded, credit recoveries, any change. Then again, guys, presentation, disclosure, etc. Yes, sir. Now let's come on to cost accounting standard 16. In-house means, so Lavanya asks what is in-house. So in-house means that I have some resources or a department which is inside my factory, which is inside my company, which is doing the repair and maintenance activity, or which is doing the selling and distribution activity. That is known as in-house. In-house means I'm not asking anyone from outside, a third party, to do repair maintenance of my machinery. I have my own engineers who are there on my roles. They understand the machinery and they do repair and maintenance. That is known as in-house repair maintenance department or in-house selling and distribution department. That is the meaning of word in-house. Okay, Lavanya. Okay. Next one is depreciation and amortization. Now, guys, yesterday we had discussed depreciation and we have also discussed when should the depreciation be eligible to be levied. Okay. Put to use is not the relevant factor. Relevant factor is ready to use or available for use as per the intention of the management. And I hope you remember the example given by me with respect to the depreciation, which was the opinion which was given by us. Okay. So these are normal definitions, guys. Definitions. I'm not going to do what is amortization, what is depreciation, what is useful life. All these definitions are very, very, very simple, and you are well versed with these definitions for sure. Okay. Now, yes, the principles of measurement. Principles of measurement means how to value depreciation, how to compute the depreciation. To be measured on the basis of depreciable amount and the useful life. So two things are to be taken into consideration. The depreciable amount, which means the book value, and the useful life, for how long will this asset be there in our organization. Then in case of regulated industry means where government has got strict regulations with respect to the length up to which this work can be carried out or this factory can be run. Okay. So the amount of depreciation shall be the same as prescribed by concerned regulator. Concerned regulator will also tell the amount of depreciation. Now, depreciation of an asset begins when it is available for use, and it ends, it ceases, depreciation ceases at the earlier of the following: the date the asset is classified as held for disposal. The asset is no more usable. We are going to sell it in future. It is held for disposal. And the date when the asset is derecognized, the date when this asset is actually sold and is removed from the fixed asset register or the books of accounts. That is the period when the depreciation should be ended. Vivek Lambate says regulated sector insurance claim. Yes, insurance claim is a regulated sector for sure. So in case of regulated sector, the depreciation rates to be used by these companies, which are insurance companies, which are banking companies, is also decided by the relevant act under which these organizations are established. Yes, that is the regulated sector. Okay, sir. Then asset which is used only when need arises, but always held ready for use, like fire extinguishers, standby generators, safety equipment. So guys, how many times have you seen fire extinguishers of your coaching institute being used or your school being used? Almost never. But then what happens to the depreciation of these fire extinguisher when they're not being used? Guys, even when they're not being used, then it is considered to be an asset in use. We will consider that this asset is being used, and assets will be considered to be put in use when commercial production of goods and services commences. So yes, the depreciation is allowed, and depreciation is to be put even when the assets are non-working assets. Depreciation of an addition or extension of an existing depreciable asset. If addition becomes an integral part of the asset, it is based on the remaining useful life of that asset. If the addition or extension retains a separate identity capable of being used after expiry of the useful life of the asset, shall be based on estimated useful life of that in addition or extension. So additional extension will be capitalized and to be amortized over the period of the original machinery, or if they are to be used even after that, then the depreciation is to be computed accordingly. Okay. Intangible assets is not very important. Amortization. Then here comes the simple repetitive principles which are there in this particular cost. Okay. Depreciation, presentation, and disclosures. So guys, I'm also considering in my mind while I'm teaching you these cost accounting standards, I'm also considering which cost accounting standards are more important than others, because I want all you to also know that which accounting standards are coming regularly in the examination, which one are not coming regularly in the examination. I want you to know that also. So I'm making you mark in your register that write that this particular chapter or this particular cost accounting standard is very important. Next is interest or finance charges. So guys, during corona time, yes, interest rates suddenly dropped. Finance charges also dropped because the economy was under a downturn. So everything was at halt. Okay. So interest and finance charges which are incurred, those are not to be included in any of the cost. Okay. They are not included in employee cost. They are not included in individual material cost, labor cost, anywhere. These costs are not to be included. But yes, when you are computing the cost of sales, then this cost will be included as an adjustment. So let's read. Principles of measurement. Interest and finance charges shall be measured according to the accounting standards issued by the Government of India and under the accounting standards rule with Indian accounting standard notified under Companies Act. So whatever is government saying about interest and finance charges, those are to be followed religiously. Those are to be followed properly. So first principle is that the finance charges are to be recognized in the according to the accounting standards and also the Indian accounting standard rules. Okay. कॉस्ट शीट में इंटरेस्ट नहीं आता है क्या सर? नहीं नहीं, बिल्कुल आता है. कॉस्ट शीट में इंटरेस्ट आता है, लेकिन कहां आता है वो रेलेवेंट फैक्टर है. क्या वो मटेरियल कॉस्ट के साथ आ जाता है? नो. क्या वो लेबर कॉस्ट के साथ आता है? नो. क्या कॉस्ट ऑफ प्रोडक्शन में आता है? नो. वो आता है कॉस्ट ऑफ सेल्स में. बस ये तो बात है ना, प्लेसमेंट की बात है. आएगा तो है ही है, ऐसा नहीं कि हम छोड़ देंगे, आएगा तो है ही है, खर्चा तो हुआ है भाई. ठीक है. सो interest directly attributable to acquisition of any asset, then it should be added to the cost of asset. Shall not be included in imputed cost, subsidy grant, penalty. Everything should be added as a mandatory duty. Okay. Cost accounting standard 18, research and development cost. Now very important cost accounting standard, again from a theoretical standpoint. A question can come from a theory standpoint over here. What is the difference between research and development? What is the difference between research and development? Please someone tell me on the computer screen, because I want to know what is there in the computer, what is there in your mind. What is the difference between research and development? What is the difference? Or is it the same? You can also say, sir, both of them are same, there's no difference. You can say that also. I'm fine with that answer also. So either you tell what is the difference, or you tell me, sir, both are same. In the chat box, I'm waiting for your answer. What is the difference? Now, wow, Niti Pathak is absolutely right. Very good, Niti Pathak. Niti Pathak is absolutely right. Lavanya. So, guys, research means when you are developing a new product, you're developing something unique which is not there in the world. You're developing something which is out of the league. No one has ever imagined this kind of a technology. That is research. So, research is to find out a good technology which can serve the humankind. Second is, you also sometimes attract negative uh, negative feedback for your research, and I'll tell you how. So I was doing audit of a company long back. Now this is a common trend in India, but 20 years back it was not a common trend. So I was doing some kind of a audit of a company. It was a Dubai based company, and it introduced one very interesting concept in India, which was temperature regulated toilet seats. Temperature regulated toilet seats. And at that point in time, 10 years, 15 years back, this seat was costing 1 lakh rupees. So although the research was perfect, the utility was there. It was as a result of a research or some continuous work that this has happened. Absolutely fine. Research is there, but guys, it cannot be developed in India because India was not ready to pay 1 lakh rupees for a toilet seat at that point in time. Today, India is spending that kind of money on toilets. It is, but at that point in time, 20 years back, there was no scope that India could do it. So research was perfect, but development, the feasibility study of the product and how feasible is the product, this development is, guys, a different thing as compared to the research. Research means doing research for a new product, and development means redesigning the old product. Okay, Ankita is close. Research means doing research for new product, and development means redesigning the old product. Research means investigation, and development finds new knowledge. Wrong. Okay, I hope you understood the difference between research and development. This is the difference. Okay, sir. Now, definitions I'm ignoring, guys. Definitions I will definitely ignore because they are not very difficult. Now comes the assignment of cost. When should the assignment of cost be done in case of research and development? So research and development are attributable to a specific cost object. If we know that the research and development is done for this particular product, then we will entirely assign it to that particular cost object. Research and development costs that are not attributable to specific product shall not form part of product cost. The research cost which is not attributable to specific product, they do not form part of product cost. They are to be treated as overheads. Research development costs incurred for development and improvement of existing process, which continues for a longer period of time, but less than 1 year, included in cost of production. You include it in cost of production even when it is not a short term, even if it is long term, then also you increase in your cost of production. Research development activity related to improvement of existing process or product continues for more than 1 year, then again, guys, you will amortize your cost over a period of time because it is accumulated amount of funds which are given to the employee for any exigency. Okay, then presentation and disclosure. Simple, guys, simple. Then comes the joint cost. Okay, joint cost means that cost which is incurred for making two products. So I'll tell you what. This is oil. What is this? This is oil. Oil gets split into two parts. This is oil. Suppose it gets split into petrol and diesel. Okay. Now the question is, the common cost which has been incurred. This is the common cost. The neck, you can see the neck of the inverted Y. The neck represents the common cost. Common cost means cost incurred on petrol as well as diesel. Now the question is, this common cost is to be loaded in diesel or is it to be loaded in the petrol? That is the question. Please answer my question. Where should this joint cost be apportioned? Should be apportioned in diesel or should be apportioned in petrol? Where should it be apportioned? The answer is, cost accounting standard has given you an answer. Guys, for these common costs which have been incurred together for diesel and petrol, you assign this particular cost using a very innovative, very simple allocation key. and the allocation key is that the joint cost is to be added to respective products depending upon the price at split off point. Selling price at split off point. So whatever is the selling price of these two products at the split off point, the moment they are separated, what is the price that these two products will fetch in market? According to that ratio, we will add the joint cost, the common joint cost under petrol or diesel. That is the reason we are doing this. Okay. Okay, sir. So that's a brief background about the joint cost. Okay. Yes. Principles and methods for measuring joint cost. Number one, up to split off point. If joint cost incurs up to split off point, then as stipulated in the cost accounting standard, which is on the basis of the sales price at the split off point. Cost incurred after split off point, further processing of joint product or byproduct. So guys, after we purchased the video, then they come back to us that we need to further processing of joint cost incurred after split off point for further processing of joint cost or byproduct. So whenever after the office hours, which is after 5, these guys are made to work, okay, then they are paid overtime. They are paid. What price at the split off point? Price means whatever is the selling price of those two goods at the split off point. Nitish says, what short form written below? Joint cost. Joint cost short down. What kind of joint cost? Where is the short form written, guys? There's no short form which is written. Where is the short form written? No, there's no short form. So next is cost incurred after the split off point for further processing. So whatever cost is incurred after the split off point, then guys, cost shall be measured for resources consumed by each joint. Then there's no problem. If cost is incurred after the split off point, then there's no problem. We will allocate those costs according to the different accounting treatments. Okay. Then cost of further processing carried out by outside party. Then whatever invoice he gives, that will be the cost of. Then common points, guys. Common points, assignment and presentation. Same. Okay. Perfect. So next is royalty and technical know-how. What do you mean by royalty? When someone allows us to do something, when someone allows us to, when someone allows us to use his own manufacturing unit or his own manufacturing technique or his brand name, logo, that is known as royalty. And what is technical know-how? Technical know-how means how to do these, how to do the how to perform the activity. So if I give you a license that okay, you start making videos of CMA Final, but I don't know how to make them. So how to make them is know-how, technical know-how. And what is to be done for that? I'm paying royalty. So if I take a franchisee of McDonald's and I say that I want to open a McDonald's in India, then guys, I will pay royalty to that McDonald's for attaining the franchisee. But again, I will tell them that, sir, you need to send your technicians to India to make me understand how to fry the potato wedges. That is know-how. That is know-how, technical know-how. So these are two important words which are there. Okay. So royalty and technical know-how. Principles of measurement, very, very important. Royalty and technical know-how, fee paid or incurred in lump sum. If it is paid in lump sum, which is one time, if it is all paid in one time, if it is paid in lump sum, which is in one time, or which are in the nature of one-time payment, shall be amortized on the basis of estimated output or benefit to be derived from the related asset. So it is to be split. Okay, royalty technical know-how is a deferred revenue expenditure. It is to be split over the period of time in which such royalty will benefit you. That is the key point. Okay. Then example is there. Amount of royalty technical know-how shall not include finance cost. Finance cost not included. Imputed cost not included. Subsidy grant incentive to be reduced. Okay. Penalty damages not to be included. Credit recovery is reduced. Any change in cost accounting plans principle possible. Only 3 conditions are satisfied. Okay, sir. Then presentation and disclosure. Simple thing. Presentation and disclosure. Next one is quality control cost. Again, guys, quality control cost is the cost which is very, very important from an exam standpoint and from business standpoint also. Because if we do not produce quality, then our products are not going to be very popular. So quality control cost is the cost which is there for controlling the quality of a particular product. So again, two types of quality control costs are there, which are incurred in-house. If you have a quality control department in-house and they manage everything. Aggregate of cost of resources consumed, which is the material, labor, overhead, utility, anything which is related to quality control department, everything will be added over here. And if cost of resources procured from outside, if you are hiring another agency to do your quality control, in that case, the invoice price or the agreed price, which is paid to the agency, that will be the quality control cost. Okay, sir. Then quality prevention cost and quality appraisal cost. Very, very important. We first prevent quality. We try to prevent any mishappenings due to quality control, and then we try to appraise it, whether we are doing everything fine or not. In case of failure, we need to ascertain what is the cost of the failure. So 3 kinds of costs which we can incur in case of quality control. Preventive cost, appraisal cost. Appraisal means time to time looking whether the quality is being maintained or not. That is the appraisal cost. And then the cost of failure. What if failure happens? What if our products does not meet the standard? What cost will we incur then? That is the cost failure. Okay, sir, got it. Again, guys, common points: assignment, presentation, disclosure. Perfect. CAS-22 says it want to learn all the definitions given in cost accounting. Not all. It is not important to learn all the definitions which are given in cost accounting standards. Not important, guys. Manufacturing cost. What will be the manufacturing cost? That is the subject matter of next cost accounting standard. By the way, guys, this cost accounting standard overlaps the cost accounting standard 4. Cost accounting standard 4 was cost of production, cost of services. Okay, and what is this? This is manufacturing cost. So it overlaps. Somewhere it overlaps cost accounting standard 4. It is very similar to cost accounting standard 4 as well. Okay, sir. So over here we need to understand certain principles. Manufacturing goods of each good shall be measured separately. Manufacturing cost of each good shall be aggregate of direct and indirect costs relating to manufacturing activity. Material cost of normal, scrap, defective, which are rejects, shall be included in the material cost of excisable goods. Realized value of scrap is to be reduced for determination of cost. Abnormal to be excluded. Interest finance charge not to be included. Subsidy grant reduced. Royalty paid to be added. Penalties, fines, credits, everything is given. Assignment, presentation, and disclosure. Okay. Then comes cost accounting standard 23. Very, very important. Please mark very, very important in this cost accounting standard, because it is very, very important from exam standpoint, because this is an industry specific cost. Overburden removal cost is specifically incurred by the mining industry. So this particular cost is a industry specific cost. This is a industry specific cost. And this cost is to be separately disclosed in the cost sheet. This to be separately disclosed in the cost sheet. Overburden removal cost. Now, please understand what is overburden removal. Now, whenever mining is done, then you know a lot of soil, a lot of mud is there on the surface. That is to be extracted. Okay. Then you go inside, deep inside the earth, towards its crust, and you find precious material, minerals, metals, diamonds, any kind of precious stones, semi-precious stones. But to make them good look, you first need to remove the soil from that particular resource. And that removal of soil, that removal of the unwanted elements which are pasted over that particular metal or mineral, this process is known as removal of overburden cost. Please understand the meaning of this particular overburden removal, and then you will be able to understand the context of it. Okay, sir. So that is the removal, overburden removal cost. So please look at this diagram. Okay, please look at this diagram. We need to extract coal. Before extracting the coal, we need to remove the topsoil. This is known as overburden. And whatever cost is incurred to remove this topsoil, this is known as overburden removal cost. Okay, sir. Overburden removal cost. Principle of measurement. Now, very, very important, guys. Very, very important. Overburden removal cost attributable to developed area of mine. So whichever area is developed area of mine, which means that we have already extracted, we have already dug holes in the mine, and we are ready to good to go inside the mine and extract minerals out of it. Now, overburden removal cost attributable to developed area of mine charged to production of ore at the standard stripping ratio. So standard stripping ratio, what do you mean by stripping ratio? Stripping ratio means proportion of overburden removal versus the mineral which is extracted. Proportion of overburden removal versus the mineral which is to be extracted. That is known as the stripping ratio. Now, overburden removal cost is to be attributable to the the cost in the ratio of stripping ratio. Now, guys, I'll tell you what happens is, when you are at the top of the surface, then overburden ratio is more, mineral ratio is less. As soon as you go to the bottom of the surface, then overburden is less and mineral is more. Deeper you go, highly profitable will it be. So the stripping ratio changes from length to length. So at 10,000 square feet, the stripping ratio will be something else. At 20,000, 50,000, 1 lakh, it is to be different at each level. That is why it is to be treated like this. Overburden removal cost attributable to development phase of mine, when it is probable that future economic benefits will flow. So whenever mine is being developed, it is not sure that future material profit will flow or not, but it is estimated. It is expected that future economic flow will happen. Okay. Capitalized as non-current asset, in other words, the cost of advanced stripping activity whose economic benefit is likely to flow in future. Benefit we will derive in future. Then, guys, the overburden removal cost shall be capitalized and amortized over the future time period. Cost of overburden removal cost carried out by outsourcing. So if you have hired a mining area and you have given it to some laborers, contractors who will mine that area, then agreed price as per the contract cost invoice, that will be the price of the overburden removal. Okay, so then, guys, the common point: subsidy, grant, abnormal circumstances, fine, penalty, interest, all the common points are assignment, disclosure, presentation. Assignment, disclosure, presentation. Okay. So, guys, it is not very lengthy. You are thinking that cost accounting standards are so 24 cost accounting. No, not 24, only 10. Rest 11 to 24, absolutely same, except for the portion which I have given in box. So for 11 to 24, if you just read the boxes, you are done. I've given you a shortcut. Okay. I've given you a shortcut to study all the cost accounting standards within a very, very short span of time. Okay, guys, before I come to the last cost accounting standards, how's the Josh in the room? Are you now less afraid of cost accounting standards? Because earlier you were very afraid of cost accounting standards. So please comment in the comment section. Are you less afraid now? Are you less tense now about the cost accounting standard? Because many students come to me and tell me, so there are 24 cost accounting standards. We are not able to revise them. We are not able to read them. I don't know how to retain them. But after this marathon lecture, are you little more comfortable with cost accounting standards? Are you little more confident that yes, I'll be able to do cost accounting standards well? Are you little more confident and comfortable? Please write in the chat box. What is your feelings about cost accounting standards? Yes, more comfortable. Perfect. Yes, it is Much more comfortable. Very, very good, guys. So now last cost accounting standard, which is the revenue cost accounting standard, treatment of revenue in the cost sheet. Although cost sheet, as the name is itself suggests, is related to cost, okay, but still guys, we also give revenue in the cost sheet so that costing profit is required. Costing profit is to be computed. So what are the principles to treat revenue in the cost statement? That is what we are going to understand now. Okay, now this is important. Revenue from operations. Let us start with the table itself, because we'll cover the revenue from operations in the table also. Okay, so revenue from sales of goods, revenue from sales of goods or services. Whenever goods or services are being sold, revenue which is derived from sale of goods or services, how will that be recognized in the cost sheet? That is the question. Okay, you made it easy, sir. Thank you, sir. It is so helpful. Marathon, as your every subject marathon too. Thank you. More and more confident. Yes, MN King. As a self-study student to a gem, sir. Okay, perfect. Great, guys. So guys, after listening to your views, I get confidence. Okay, I also feel good, and I get confidence that yes, I'm able to help you. Even a little bit, if I'm able to help you, I'll be more than happy. Okay, so from revenue of goods or services measured based on the net sales realization during the repeated reporting period. So whatever is the net sales realization during the reported period, that is how we are going to calculate the revenue from sales of goods. Then revenue from joint products, measured separately for each main product or service sold. So whatever revenue is there from the joint product, each of the product revenue should be disclosed separately. Sales realization of defectives, second grade products, reject, scrap, spoilage, waste product to be adjusted against cost of production of related goods. So wherever there are scrap, wherever there is reject, whatever is realized, it is to be sold, no, and the amount is to be realized. Whatever is realized is to be reduced from the cost of production of related goods. Other income, what happens to the other income shall not be considered in determining profit and loss as per the cost. So any other income is not, guys, operating income, so not to be recognized in the cost sheet. Revenue from sale of inputs, utilities, intermediate products, shared or support services. So whatever revenue is there from inputs, sale of inputs, utility, intermediate, shall be adjusted against cost of purchase. Whatever is the cost of purchase of those inputs and utilities, they should be reduced. Okay, not to be recognized as revenue separately, it is to be reduced from the cost of utility. So for example, if I purchased, say, water for my business, and I sell some part of the water to a third party because they needed it, then I will reduce the cost. I will not recognize the sale as revenue. Cost is reduced. That is the principle. It makes sense also, guys. Revenue generated from utilization of assets created under CSR program. Now, very, very important, guys. So sometimes what happens is corporate social responsibility is a mandatory thing in India. You need to, according to corporate social responsibility, you need to spend a certain amount of your profits for corporate social responsibility, which is charity. Okay, now if I suppose have a company and I have funds and I have created a school out of those funds, okay, and the school fees which is accrued to me, that is an income to me, right? So that is what we are going to talk about over here. Revenue generated from utilization of assets created under CSR program, they shall not be considered in determining the profits and loss of for the cost account, because this is not the main business of the company. This is not the main business of the company. So this is by chance that I am earning revenue from those assets. It is just by chance. This is not the main source of earning for the company. So it is not to be included as in the profit and loss account. Rest, guys, common points. Any subsidy grant is to be reduced. Any change in cost accounting principle, presentation, disclosure remains the same. And yes, that is the end of your cost accounting standards. That is the cost accounting standards. Cost accounting standard 24 for all of you. Cost accounting standard for all of you. Okay, guys. So yes, see, in 3 classes, merely in 3 classes, we have completed all the cost accounting standards. I have also in the class done some practical questions of the cost accounting standards, a few of them. And yes, theoretically, we have discussed all the cost accounting standards very, very, very quickly. Again, the key is 11 to 24 cost accounting standards, repetitive in nature, not to be done in detail. First to 10th cost accounting standard to be done in detail, whether practical or theory. That is the fundamental to understand or to learn the cost accounting standards very, very quickly, and to revise them also. Okay. So yes, guys, these were cost accounting standards for all of you, and that's all for today's session. We'll be meeting in our subsequent sessions with more sections, more provisions, more concepts of cost accounting of cost audit, cost and management audit. So till we meet again, all the very best and happy studying. Bye bye. See you in the next session. Yes, guys. So today we are going to start the theoretical chapters of our syllabus. Now, 3 theoretical chapters which are very, very important: internal controls, internal audit, management audit, and management audit in different functions. These 3 chapters are most important theoretical chapters of your syllabus, and 20 marks are at least reserved from these 3 chapters. These 3 chapters we are going to pick up tomorrow. Okay. Today we are going to pick up small miscellaneous chapters which hold very high importance from an exam standpoint. So, okay, we'll be covering theoretical chapters today. Hi, sir. Hi. Yes, guys. Very high, Yogesh Sharma says. Brilliant. Okay, so let's start the first theoretical chapter of our today's session, which is documentation. So guys, documentation is one of the most important element of any audit. Unless you are able to document your work well, you won't be able to prove to any authorities that you did the work. So you need to maintain a file. Okay, a proper file is required to be maintained, and whatever steps you have done during the course of your audit under the different account heads, under the different heads of balance sheet and profit and loss account, you should actually prepare the entire detailed documentation describing what have you done in those sections. So suppose if you have reviewed, say, revenues, okay, so you need to document that yes, in revenues I have seen these things. These are the steps which I have undertaken during the audit of my revenue section. So you need to critically list down all the things that you have done in your audit, and that is the relevance of documentation. Because guys, if your audit is not well documented, then we will assume that you have not done audit. And trust me, after 6 months or after 4 months, you're going to forget whatever steps you have taken during the audit process. So what is going to save you when you will be alleged that you have not done your work well? That audit file will be able to save you, because that audit file will be self-explanatory. It will tell the authorities that yes, you did your cost audit well. So documentation, documenting entire audit procedure, who all did the audit, who reviewed the audit, what steps did everyone take to perform audit. All these documentation are very, very important from a cost auditor standpoint. If you don't do these documentation, then you are bound to fail in your audit procedure. So you need to prepare your documentation well. If you prepare your documentation well, then guys, your audit is complete. So documentation is an essential element of audit, and if you do not do documentation, then your cost audit is absolutely not complete. So today's topic of discussion is cost audit documentation and audit process. What is the process of audit, and what are the documentation that are required to be prepared and kept in the file, in the audit file. There has to be an audit file, and all the documentation should be kept in the audit file. Okay, so what is audit documentation? It means material such as documents supporting audit assertions of the management. So documents which tell you what is management saying. So management is saying that our debtors are completely recorded, our revenues are completely recorded. Management is asserting that our cash is absolutely complete, our cash balance is absolutely checked and complete. Okay, these assertions which management has, these assertions, documents supporting these assertions should be there in the audit file. Evidence of checking of various heads of financial statements. So guys, once management asserts that everything is complete in our financial statement, the auditor needs to check it. Okay, so how did you check it? What supporting documents did you ask for from the management? What evidences have you gathered? All those things are to be kept in your file. So evidence for checking of various heads of financial statements is the next thing that you need to actually put in your audit file, prepared by and obtained by the cost auditor. Okay, what is audit file? Audit file means folder or other storage media, either in physical form or electronic form. Guys, today the concept is of e-audit. E-audit means you don't prepare hard files. You do not take printouts of each and every document. You will just prepare your working in Excel format, uploaded in the audit software. So special audit softwares are developed where file is not required to be made. All the documents which you have prepared during audit, all the workings which you have done during audit. So for example, if you have calculated one depreciation number, okay, so how have you calculated? How have you checked the supporting documentation? How have you checked the Income Tax Act or Companies Act? Every step is required to be written in that Excel file, and that Excel file is uploaded in the system, in the audit system. That is how documentation actually helps you. E-documentation is helpful. Okay, so auditors might prepare physical files, auditor might prepare e-files, but every document should be there in physical file or in the e-file. Audit working papers means documents, the detailed trail of all the working papers which are there, which you have checked, and all the documents which are relevant from an audit evidence standpoint, that this is the evidence that this particular transaction has happened. So any document which is evidencing any transaction, that document is to be stored in the audit file. Just a second, guys, a technical problem is there. Okay, done. Okay, so that is audit working papers for you. Audit working papers, documents which record all audit evidence obtained during audit is known as audit working paper. Now, what do you mean by engagement letter? Engagement letter means, guys, there has to be a contract between the auditor and the auditee. Now, there is nothing called trust in today's world. Okay, trust, or you say verbal commitment, these don't hold good in today's world. We need written evidence of whatever has been agreed between the management and the auditor, be it the fees, be it the scope of audit work, be it where the audit will be carried out, and what documentation will be provided to us by the management. Anything and everything is to be written in the contract, which is known as the engagement letter. So engagement letter should be signed before starting off audit between the management and the auditor, and this engagement letter must be authenticated, must be reviewed by both the auditors and the management in a proper way. So the entire scope of terms and conditions of fees of audit is to be described in this engagement letter. So engagement letter, auditor agrees with the client's management in writing about the scope, terms and conditions of the audit engagement in an engagement letter. The purpose of such letter is to minimize any possible misunderstanding concerning the scope and terms of the audit engagement. So any misunderstanding should not remain. Okay, what is the scope of audit engagement? How far did we had to go in the audit engagement? All these things are to be written in the engagement letter, so that tomorrow no one is able to say, oh, this was not in my scope. Auditor should not say this was not in my scope, or management should not say to the auditor, you should not check this because I told you in the earlier instance only that this is not your scope. So scope, work, everything should be very, very crystal clear in the audit engagement. Okay. So engagement letter is required to be prepared. And also one important thing, guys, what is the form of report or communication which is the result of the audit? So what kind of audit report are you going to issue? That is also forming part of audit engagement. So whether you'll issue an audit report according to the Companies Act, or whether you'll be issuing it in a PPT, how will you issue the audit report? That is also an important element of the engagement letter. Now, audit stages, guys, there are these 3 stages of audit of cost statements. Number 1, planning. You need to do planning. Then you will perform, which means you actually do the task. And the third is reporting. You will report to the relevant authority. So if shareholders have appointed you, then you report to the shareholders. If central government has appointed you, you will report to central government. If management board of directors have appointed you, then you will report to the board of directors or the management. So planning, performing, reporting. Planning involves, what is planning? Planning means you gain understanding of the client. The first important element of planning is we need to obtain understanding of the client. Because, guys, many a times it happens that client is belonging to a very different sector, which means he's a banking company. So to banking company, not only Companies Act is applicable, but also NBFC norms, banking norms are also applicable. Similarly, if you are auditing a NBFC, non-banking financial corporation, then apart from the normal Companies Act, he will be exigible to the RBI prudential norms for NBFC also. So you need to be aware about those prudential norms of RBI. So the first and most important thing is, please understand your client. Who is your client? What regulations are applicable on it? So for example, if it's an insurance company, then IRDA is applicable. IRDA regulations will be applicable on that particular client. You should be aware about it, aware about your client. That is the first thing in planning. Second, identify objectives of audit. What is the objective of audit? Whether it is statutory reporting that you need to report to say Companies Act or GST Act or Income Tax Act, it is statutory reporting, or it is just that management as a routine process has asked you to audit. Okay, that understanding is very, very important. Identifying factors and account heads that may have risk of material misstatement. Now, the next point is, guys, we will identify what account heads are maybe materially misstated, what account heads are actually stands a risk of misstatement, stand a risk of error. That is what you need to identify. So factors and account heads which stand a risk of error, that is what you need to identify. Performing a risk and materiality assessment and developing an audit strategy. So performing the risk and materiality assessment, which means that you will see what kind of risk is there in this particular client. Okay, and how do you see the risk? Test internal controls. Once you test internal controls of a particular client, then you will be able to know what kind of risk does this client have, and according to the risk which this client has, you will identify the accounting heads which are at a very high risk, and you will pay more attention to those accounting heads which have a very high risk. So you identify the account heads and factors which have a very high risk of material misstatement. Performing risk and materiality assessment and developing an audit strategy. Identifying nature, timing, and extent of procedures to be performed. Please underline this. NTE. The short form is NTE. NTE. Nature, timing, and extent of audit procedures to be performed. Three things are required to be perfect while performing the audit procedures. Number one, nature of audit procedure. Number two, timing of audit procedure. And extent of audit procedure. Extent means to what detail will audit procedure be applied. So NTE is to be ascertained in the planning phase. And of course, guys, who is going to perform these audit procedures, that is also relevant. So team, the staff, you need to prepare what kind of staff is required. Do we need CMA qualifieds, or do we need only interns? Interns will be able to do, or do we need a mix of CMA qualifieds and interns? This is what we need to identify. So this is the planning phase. Second is the performing phase. This, of course, is the actual activity which you do, actual action which you take place during the audit. And the first step is to test the internal controls. First step is to test the internal controls. If internal controls are working fine, then your audit procedures will be less lengthy, will be less detailed. So first step is to test the internal controls. If internal controls are working fine, then your audit procedures will be less lengthy. Next is substantive testing. Substantive testing means the detailed testing. So after your control testing is done and you are reasonably sure that controls are working fine, so we can rely on the controls, then you will identify those account heads where you need to go in depth and you need to understand the nitty-gritties and detail of those account heads. For example, revenues. Even if controls are very, very strong in case of revenues, the auditors do not leave revenue like that. They would deep dive into revenues. They will in detail discuss revenue and audit revenue. So revenue is something where substantive testing is definitely required. So there are two things: control testing and substantive testing. Now I'll give you an example of control testing and substantive testing. Okay, so I'll give you an example of these two things. Okay, so guys, I have a student in my class. Okay, and that student has got a girlfriend, and that girlfriend is a little obsessive girl, and she doesn't trust the boyfriend a lot. Okay, so boyfriend says that I'm going to Nikhil Gupta sir's class, cost audit, and early in the morning 9 o'clock class starts. 9 to 12 is the class. So he comes to Lakshmi Nagar at our coaching institute and he takes the class from 9 to 12. Okay, now his girlfriend is actually not trusting him, and his girlfriend is inquisitive that where is he going early in the morning. Okay, so now to audit this transaction, whether he is going to the right place or not, she can take two steps. Okay, step number one, control testing. How will control testing be done? She will call up the sister of the boyfriend and ask her, has he left? Sister will say, yes, he's left from home. Okay, then she will call the receptionist at the coaching institute and will ask her, has he come to the coaching today? Receptionist will say, yes, he's come to the coaching and he's sitting in the class. Soon as the class is over at 12, she will again call the receptionist and ask her whether he is left. Receptionist will say, yes, he is left. So then she will call up back to her sister at home and will inquire whether he has reached home. Yes, he has reached home. So this is how control testing is done. Control points are identified of a particular transaction. Control points are identified of a particular transaction, and only those control points are tested not the entire transaction. Not the entire transaction, only the control points are tested. This is known as control testing. Now I'll give you a real life example or a professional example of this control testing. What is the real life example of professional control testing? Material is being purchased by the company. Raw material is being purchased by the company. When raw material is purchased by the company, it will first of all be entered in the inwards register, which is kept at the gate. Then it will go to quality control department and entry will be done there. Then it will come to warehouse and then to production. So if we only test these 4 checkpoints regarding the movement of the raw material, we can be very sure that raw material has been purchased and it is an actual transaction. This is known as control testing. Now, what is substantive procedures? What is substantive procedures? Substantive procedure means that, that guy is a very, very shrewd guy whom I was talking about, okay? He is having another girlfriend inside my class. So even when control testing was done, it was ineffective. Or he bribed his sister and the receptionist at my coaching institute. So control testing failed at that point in time where the management, who's in this case is the guy, has overridden the controls, has cancelled the controls, has bribed the controls. So when this happens, the auditor has to appoint substantive procedures, has to do substantive procedure. What will be the substantive procedure? The substantive procedure is that now that girl will be having a detective, full-time detective employed by her, and that detective will be tracing that boy from every angle, from every point, and will be giving a real-time report to the girl. This is substantive procedure, where you are checking the entire transaction. You are not only checking the control points. You are not only checking the control points, but you are checking the entire transaction, because control testing can fail. Controls can fail. Those checkpoints can fail. That is the whole problem. Management can itself override controls. He can bribe the control points. He can change the control points, guys. Okay. So in that case, substantive procedures can be employed. Now, one drawback which is there in case of substantive procedure is that substantive procedures are very expensive. Hiring a detective is not, very, very cheap. It's very expensive. Secondly, it's very time taking. It's very time consuming, because to hire a detective and then tracking his movement, then tracking, taking update from him, taking report from him, and this entire process is very, very time taking, very, very time consuming. So substantive procedures cannot be done in 100% of the account heads. You need to choose where you need to do substantive testing. So wherever you feel that risk is high, do substantive testing. Wherever you feel risk is low, do control testing. It's up to you. It's upon the auditor. Now I'll come to a professional example in case of substantive testing. So guys, raw material is purchased. I will not trust on the control points only. I will audit the entire transaction. I will see the transporter's receipt, which is there. Okay. I will see material which has flown in. I will see, obviously, I will see the control points for sure, but I will also see other things if I'm doing substantive testing. So control testing is, a brief method of doing it, a very quick method of doing it. And substantive testing is to test everything in detail. But unfortunately, substantive testing is very costly, very time consuming. So substantive procedure cannot be employed in each and every cases. It can be employed only and only in cases where control testing fails, or case where risk is very high, like revenue. In revenue, always substantive testing happens. Okay. And the last stage is, the third stage is concluding and reporting. We need to conclude our audit and we need to report. We need to issue an audit report, evaluating the results of detailed testing and forming an opinion on fair presentation of entity's cost statement. You need to form your opinion and give it in by way of an audit report. That is the reporting requirement. You conclude your audit and your report in the relevant form. That is the final third stage of audit documentation. Okay. And all these things, guys, all these things, you need to prepare a document for it. You need to write it down. Right from planning stage, what did you plan? In what account heads did you plan control testing? In what account heads did you plan substantive procedure? Everything you need to write down on a document, on a Word document, and to put it in audit file, so that tomorrow if someone asks you, what did you do in revenue? What procedures did you employ in revenue? You should be able to answer that particular question using the documentation which has been prepared for auditing revenue. So everything needs to be really documented. That is the most important part of documentation. Okay. Then these are minute steps of auditing, which are details of planning and execution, what we have done. So this can be easily done by you. So this was, guys, audit documentation. Okay. This was audit documentation for all of you. Okay. Now let me start the second theoretical chapter, which is forensic audit. Now, guys, forensic audit is relevant only for syllabus 2022 students, not relevant for 2016 students. Forensic audit is only relevant for December 2022 students, forensic audit. So, sir, should the students of 2016 syllabus go? No, don't go. I will be taking one more chapter, which is cost audit program, which is relevant to 2016 as well as 2022. Yes, this chapter is relevant only to 2022 syllabus students, forensic audit. This is the new insertion which has been made in syllabus 2022. So this chapter only relevant for syllabus 2022 students. Okay, forensic audit. क्लास में अपने दोस्त को भेज देगी लड़की, ये देखो ट्विंकल रुस्तगी. ट्विंकल रुस्तगी भाई ये बहुत खतरनाक लड़की है. इसने जासूस की जो वैल्यू थी, जासूस का जो रोल था वो खत्म कर दिया. अपने किसी दोस्त को ही भाई वहां पर भेज दिया लड़के की जासूसी करने के लिए. वेरी 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 गुड. ट्रस्ट इश्यूज इतने ज्यादा क्रिएट हो जाते हैं ना. चलो, next topic is forensic audit. Guys, a newly inserted chapter in syllabus 2022. An important chapter considering today's scenario. Today's scenario, a lot of fraud is happening in market. A lot of bad elements are coming into picture, and frauds are happening. Financial frauds are at its peak. Mishappenings are happening in financial statements. Misreporting are happening in financial statements. Wrong statement is given by the auditors. Wrong statement is given by the management. Sometimes we feel that management and auditors are conglomerating together to do financial frauds. So a lot of hanky-panky stuff is happening in financial statements today. To address all these issues, we need to have forensic auditors. Forensic auditors means investigation. It means that it is not normal audit procedure, but it is investigation, which means in-depth investigation will happen in this particular case, forensic audit. Now, first of all, I want you to tell me what is the difference between investigation and audit. Is there any difference between investigation and audit? Then I'll tell you my practical example where I enter into investigative procedures while I was doing audit. So what is the difference between investigation and audit? Please write in the chat box and I'll start my story. Okay. Now, please understand the difference between investigation and audit, and I'll tell you my personal experience when I was auditing a very big firm. So there was a company which I was auditing, and that company had 5 crore worth rupees of marketing expenditure in their P&L account. When I audited that P&L account, 5 crore rupees of marketing expenditure, then guys, I asked for vouchers, I asked for bills. Please give me bills of these expenditure which you have undertaken. Marketing expense of 5 crore rupees was not an easy expenditure, was not a small expenditure. Therefore, I was skeptical already, and I asked for bills. Okay. Soon as I received the bills, guys, I observed some fishy things in the bill. For example, the bill, the name of the company was suppose ABC Motors Private Limited. So it was supplying motor parts, and the bill was made of banners supplied, which are to be put in the entire city. Banners, okay, banners on cloth, they are supplied, and it was put in the entire city. Why would a motor part company supply banners to this particular company? That was incomprehensible. I couldn't understand what is the logic behind it. Then there was another bill by name of an individual, Mr. Dalvinder Singh. He supplied canopies. Canopies means those temporary structures which are inserted on footpaths of the roads. People are sitting over there to give demo of the product to the general public. Canopies, again, sold by individual. Why? 5 lakh, 10 lakh rupees, big, huge expenses were recorded by this name. I was surprised to see all these things. So difference between investigation is a post-mortem, audit is like health checkup. Wrong answer by Ratatoli, Veda Raghu, Ankita. Audit is systematic examination of records, and investigation is to investigate when there is some suspicious happening. Good. Pooja Shinde. Audit is process of verifying the books and accounts, but investigation is done in case if any doubts in transaction happens. Okay. Okay. So let's continue my example. Okay. Now, I was absolutely skeptical that there is something wrong going on in the in this head, which is marketing 5 crore worth of expenditure. I thought it is absolutely fake. What did I do? I called up that Mr. Dilvinder Singh and I asked him, sir, I want canopies for my company. Do you supply canopies? Mr. Dilvinder Singh said, no, I don't supply canopies and I don't know what are canopies. What are you talking about? My skeptical mind had a proof that a fraud is happening in the company. I again call up the motor company, which ABC Motor Company, okay, and ask them, I want banners for my company and I want to put it in the entire city. Please tell me the price. She said that this is a motor part company. We don't supply banners. What are you talking about? What are you talking about? I was absolutely sure that something fishy was going on in the company. I called for more invoices. I called for more evidences to substantiate my suspicion. And yes, in every expenditure, in every invoice, there was some hanky-panky stuff. There was something wrong in every invoice. I got very excited. You know, naturally, that hat, the detective hat, came on my a virtual hat came on my head. A virtual cigar came on my lips. A virtual coat came on my body, the long coat, okay? And I felt that I'm an investigator. I'm a Karamchand Jasoos. I felt like that. And I was so excited because I had unearthed a 5 crore rupees fraud in first year of my professional journey. I was so excited. I was so happy. But I told myself that, Nikhil, let me gather some evidences, some more evidences to prove that this fraud is happening in the company. Next day, early morning, I went to that motor part company and with that bill, and I showed to them, ma'am, this is your bill. You have supplied banners to one of the companies. I want the banners too. The receptionist was confused. Why? Because the bill was original, but the items which are written over there were not supplied by that particular company. So the receptionist was also confused. The receptionist said, sir, we do not sell motor parts. We only sell, we do not sell banners. We only sell motor parts. So, sir, I think you are mistaken. I think you are mistaken. So this evidence was enough evidence for me to, you know, feel proud on myself. Okay. Then I went back to my company. I went back to my boss and I told my boss, oh boss, I have today unearthed fraud worth rupees 5 crore rupees. And I told them the entire sequence of events which I did, the cold calling which I did, the visit to the site which I did. I told them everything. And I was scolded thoroughly. I was scolded thoroughly. Job of the auditor is not to investigate, not to do cold calling. No, you cannot do that. You cannot go to the premises of the vendors. You cannot go to the premises of the people who have by whom the company has purchased any material. Yes, you can take a confirmation from them. In loop with the management. Management should be in loop. Management should be aware about what you are doing. It is not investigation. It is not secret investigation. It is audit. It is not a secretive process. You should make management aware about whatever is happening. So audit is not investigation. You cannot do it in secrecy. Management should be aware whatever you are doing. So audit is a compliance. It's not a investigative procedure. So guys, while you are on audit, do not control your investigation vibes. Control the investigator in you, because you are not the investigator. That's the difference between investigation and audit. So forensic audit is sort of an investigation. It's not normal audit. It's not compliance. It's wherever any fraud has happened or skeptical for fraud is going to be taken place. Fraud might happen over there. Forensic audit happens. Okay. What is forensic audit? Forensic audit is investigative activity to find supporting evidence to fraud which may be used in courts. So, even forensic auditors can be asked to go to the courts. Okay. So it can be used as evidence in the courts. So it is an investigative activity where supporting evidence are required to be produced in the courts. Expert witness during trial. So forensic auditor can also be called as a witness. Okay. So it's an investigative activity. When does forensic audit, when is forensic audit required? It is required in case of fraud. It is required in case of corruption, closure of business, extortion, bribery, bankruptcy, conflict of interest. So in case of fraud, the forensic audit can be required. Asset misappropriation, some employee has stolen the assets of the company, be it cash, be it bank balance, or laptops, or any other asset. So in case of fraud, forensic audit is required. Asset is misappropriated. Financial statement fraud, FSF. If FSF is there, financial statement fraud, which means the revenue is worth 1 crore and you have shown it in your books of accounts as 10 crores. You have inflated the revenue just to impress your shareholders. Then it's a fraud and it requires forensic audit. Second is the case of corruption. Corruption, guys, wherever you think that this particular bridge has been constructed using a low grade material, because the person who was preparing this bridge had given a certain amount of money to the authorities, and therefore the material was downgraded, then guys, corruption can also be unearthed during forensic audit. So forensic audit is applicable in case of corruption also. Yes, Abhishek. Abhishek says, I heard this same example which you told in one of your videos, lectures of initial chapter. You named the term scolding as brutal verbal thrashing in that lecture. Brutal verbal thrashing. Good. So corruption is another case where forensic audit is required. Then extortion or cybercrime. If any cybercrime happens, if any extortion has happened, if someone is, actually forcing you to give money, illegitimate source, then extortion and cybercrime also is subject to forensic audit. Bribery, of course, forensic audit is required, and bribery and corruption are similar things. Conflict of interest, wherever there's conflict of interest, which means the business is undertaken by the director, and director's wife is actually the owner of that particular company where business is being given. So a company requires certain things for the company. ACs are required. Now those ACs are procured from the company which is owned by the wife of the director. Then obviously it will be purchased at an expensive rate. This is known as conflict of interest. So wherever there's conflict of interest, forensic audit is required. Okay. Bankruptcy. Wherever there's bankruptcy, wherever the company is declaring that I don't have enough money to repay my liabilities, my net worth is less than my liabilities, in those cases, forensic audit is required to ascertain what is the level of money that the company can actually accumulate and pay to the creditors. That is the case where forensic audit is required. Then why is forensic audit required? What is the reason why forensic audit is required? Theft of business information. Wherever business information is stolen, there forensic audit is required. Issues raised by whistleblower. Whistleblower is a person who gives insider information to the outside world about the company. So if whistleblower has highlighted certain issues, then forensic audit is required. Reconciliations are not matching properly. Bank reconciliation statement is not matching properly. Then forensic audit is required. Suspicion or illegal activities or negative profits despite of good sales. Sales is very high, but profits are negative. Again, calls for forensic audit. So forensic audit can be used in various situations, and not necessarily only when law requires. So there's no law which requires forensic audit. Forensic audit can be carried out by normal in any circumstance. Whenever you think that there's need for forensic audit, then forensic audit can be actually ordered. Okay. What is the difference between normal audit and forensic audit? We have already discussed it. It is a investigation. It is a specialized investigation. And yes, guys, you can take screenshot of these screens, and you can write these diagrams and these charts in your register, so that you will be able to remember it well. So I've summarized the entire chapter in few slides so that you can remember them well. Okay. So audit is normal routine setup. Okay, routine procedure. However, investigation of forensic audit happens only once in a while, where there is a suspicion that suspicious activity has undertaken or suspicious transaction has undertaken. Only there the forensic audit happens. So difference between audit and forensic audit. Okay. Then okay, what are the functions of forensic audit? What are the functions of forensic audit? I mean, what are the things what forensic audit does? Okay. So first function is to plan. What do you need to plan? We need to plan what team members should be taken to the forensic auditors. What are the team members which are to be selected, and what are the procedures which are to be employed? NT, nature, timing, extent of audit procedures, they are to be decided. Okay. So the first function of forensic audit is to plan what is to be done. Okay. Second function is to collect the evidence. What evidence are required to be collected to substantiate our claim? Okay. Substantiate our claim of accuracy. Now the audit evidence should be sufficient and they should be appropriate. SA, they should be sufficient and they should be appropriate. Sufficient means they should cover a whole gamut of population which we are testing, and appropriate means they should be suitable. They should be as per the requirement. So that is the second function of forensic audit. Third is reporting. Forensic audit should report on the crime which has been taken place. Written report should be there on crime. Written report should be there, and if legal case is required to be filed, then legal case should also be filed. Finally, forensic auditors also can be called to the court as an evidence. Forensic auditors can be called to the court as an evidence of wrongdoing of a particular company. So in court proceedings, forensic auditors are actually produced as an evidence. That is the thing. Okay. Investigation methodology of forensic audit. Forensic auditors employ certain steps for doing forensic audit. What is the methodology which they adopt? First step is to accept the engagement. You need to accept the engagement. Whatever engagement is there, you need to accept the engagement letter, which means you need to sign the engagement letter. That is the first step. Second, evaluate the allegation and suspicious engagement. Whatever allegations are there on the company or whatever suspicions are there on the company, you need to evaluate that and test whether they are correct or not. Make a list of all the suspicions or all the allegations which are there. Conduct due diligence. Before starting the actual audit or actual forensic audit, you should conduct the due diligence whether there are any pending cases in case of promoters of the company, whether they are already involved in some fraud in past, whether there's any pending cases which are filed in case of promoters. All the due diligence work you need to do. Then you need to do the preliminary investigation. You start with the preliminary investigation. You collect all the evidences, you collect all the information, you talk to employees who have been involved in fraud. You need to talk to the top management, the below management, everyone you need to talk and to conduct the preliminary investigation. Then you carry on the external investigation. So apart from talking to the management, to the promoters, you also talk to the vendors of the company. You also talk to the outsiders to ascertain, what kind of fraud is taking place and what is the extent of the fraud. External investigation. Gathering proof and evidence. You gather all the proofs and evidence against the financial fraud. Reporting on the finding. You prepare a report, and if need be, then court proceedings you need to attend as a part of the forensic audit. When I talk about whistleblower, it reminds me of the Enron scandal, which you explained in the lectures. Yes, guys, absolutely. Yes, whistleblower. Okay, so these are the elements of forensic audit. Now, what is fraud triangle? Okay, very, very important concept. What do you mean by fraud triangle? So, guys, fraud happens when all these three things accumulate or join hands. Fraud happens when these three things accumulate. It is known as fraud triangle. Fraud happens when these three things come together. Then fraud happens. What are the three things which come together for fraud to accumulate? So three things are: number one, there has to be an opportunity. First thing which is required for any fraud to take place is opportunity, which means that the employee should have the opportunity to do these fraud, which means internal controls should be weak. When internal controls are weak, then employee get an opportunity to do the fraud, and when employee get an opportunity to do the fraud, then fraud happens. So first thing is opportunity, which is required when fraud happens. Second is rationalization. Rationalization means the employee needs to be satisfied that he's doing the right thing. Okay, so he might say that, okay, I'll pay back to the company, I'll give this money back to the company when my work is done. Or he might say that I deserve this because my pay rise was very less this time, company did not pay me well, so I deserve this. That is the second rationalization which an employee can put to his mind. Third is it's for a good purpose. I'm using it for my own benefit. So it's for a good purpose that I'm doing this fraud. It will benefit me and my family. So it's for a good purpose. So it's okay to do it. So second thing is rationalization. You need your employee to have some rationalization. Third thing is pressure. There should be some pressure on the employee that he's doing this fraud, which means he should be addicted to some bad things. Therefore, he needs money, or his family is under a very bad situation. He's under immense loans. He's taken a lot of loans. His credit card bills are not paid on time. Any of these factors can lead to fraud. So fraud needs these three things. If you accumulate these three things, then there's a high probability that fraud will happen. Rationalization, opportunity, and pressure. If these three things are there, then fraud might happen. Next, what are the red flags? What are the indications that the fraud might happen? So there are certain indications. Yes, the employees also give indication, and there are certain management related indications also which highlight that some fraud might happen. Okay, employee related indication which highlight that some fraud might happen. Suddenly there's a lifestyle change in the employee. Employee is able to afford iPhone 14 Pro Max. Then we are under suspicion that something hanky panky is going on. Second is significant personal debt. If employee has a lot of personal debt, he has taken a lot of loan from various people, then guys, we take it as a red flag that employee can do fraud. High employee turnover, wherever the employees are leaving very quickly, that can be an indication that there's some fraud happening in the company, because after doing fraud, employee would want to leave the company and join another company and do same fraud in another company. So high employee turnover is also indicative of that fact. Refusal to take a vacation or sick leave. Now, if employees are too regular to the office and they do not take leave, then that is also an indication that something bad is going on, because the employee would not want anyone else to know about the fraud which he has done. So he will not take an off. He will not take a vacation. That is an indication that something hanky panky is going on. Then lack of segregation of duties in a vulnerable areas. So wherever segregation of duties is not there, wherever entire transaction is being handled by one employee only, there is a possibility that fraud can happen. Entire transaction happens by one person itself. There's a possibility that fraud is happening over there. So these are certain indications which will tell you that yes, there might be a fraud situation. There might be a fraud situation. Okay. Next, the indications from management side that management is doing some fraud. This was the indications where employees doing fraud. Now we'll come to the situation where we think that management is doing fraud. So management overrides control. Wherever management overrides control again and again, they foul on their own controls. They miss on their own controls. Wherever they're doing this thing again and again, there's an indication that management is trying to do some fraud. Significant disrespect for regulating bodies. So regulatory bodies, the management is not taking care of regulatory bodies, which means that they're not paying taxes on time, they're not filing challans on time, they're not following the statutory compliances, they're not following the statutory dates. This also indicates that management has got something wrong is going on in the company. Then weak internal controls. Wherever there are weak internal controls, there management can be held responsible. Inexperienced and incapable employees. Wherever there are inexperienced employees which are hired by the management, there's an indication that fraud might be happening. High employee turnover. If turnover of the employee is very high, then we can say that management might be involved in some kind of fraud. Photocopy or missing documents. So if there are missing documents in the financial statements in the audit file, we can say that something is wrong. Then reluctance to provide information. If management is saying no, we will not provide you the necessary information, then we can say that management is doing some fraud. So guys, a small question of 5 to 6 marks can be asked from this particular point, that please tell us the indications of fraud, indications where fraud is happening or where the forensic audit is required, indication where it is there. Okay. Sincere employees also there who work with commitment. Yes, sincere employees also there. But if certain employees show certain kind of traits, then we are more susceptible to fraud. So those traits are to be identified and those traits are to be seen, just like the traits which are given over here. Okay. Now, financial forensics and forensic audit. Now we focus on financial forensic audit, which means the forensic audit which is related to financial statements only. Now, forensic audit can also be related to a non-financial statement kind of a thing. But we are now dealing with the financial statement forensic audit, where forensic audit will be required for financial statements, within balance sheet, P&L account. So what is it? It is a combination of accounting and investigation. So accounting and investigation both combined together, we'll say that it is financial forensics. So financial forensic is forensics which are applicable for the financial statements. Okay. Ajnaz is saying it is applicable for 2016. No, this chapter is not applicable for 2016, but the next chapter which I'll be doing, cost audit program, that will be applicable for 2016. So 2016 students, please hold on for say half an hour more. what it is, a combination of accounting and investigation. Then when is it done? When is forensic audit required? When there's a financial theft by employee, customer, or any other person. If there's something which has been stolen, then financial forensic happens. Securities fraud, if some securities fraud has happened, which has duped the investors of their money, critical earned money, then securities fraud, financial forensic happens. Money laundering, if any money laundering happens, your money is you have earned the money from illegal sources, and now you're trying to hide that money, then financial forensic happens. Corporate valuation disputes, if there's valuation dispute, if a company is being sold, the company is saying I'm worth 200 crores, and the purchaser says no, you're not worth 200 crores, you're less than 200 crores, then financial forensic comes into play. Tax evasion, wherever there is evasion of tax, wherever tax is being evaded, tax is not being paid on time, there the forensic audit is required. And why is forensic audit required? Why is forensic audit required? Forensic audit is required because of certain reasons. Okay, why is forensic audit required? In case of financial crimes, wherever financial crimes are happening and financial frauds, there forensic audit is required. New and innovative for fraudulent activities are identified, like today, these days, the mobile phone fraud activities is at peak. Okay, you will get a link through your SMS or WhatsApp. You will click on that link, and then you will reach to a place where your bank statement will be emptied. All these innovative fraud techniques have been innovatively designed, so that is the need. Then prevention, for prevention also the forensic audit can be done, where we want to be sure that forensic fraud doesn't happen in our case. Qualities of a forensic auditor, what are the qualities which we expect from a forensic auditor? What should be there in the forensic auditor? He should be knowledgeable. First of all, he should have knowledge of financial aspects, internal financial controls, and accounting aspects. He should be knowledgeable person. He should have appropriate knowledge of the financial aspects. Obviously, guys, if he is going to do audit of financial statements, naturally he should be aware about how balance sheet is prepared, how profit loss account is prepared, how cash flow is prepared. Everything should be on his tips. Second is, he should have a logical mindset. He should be logical in his thinking. He should be able to comprehend where the logics are being defeated. Okay, he should have relevant experience. He should have experience in auditing. He should have experience in doing audit of forensic audit of companies and firms. Attention to details. He should be very vigile on the details which are there in the financial statements, and he should be able to pick up the relevant details and draw an analogy from those details. So he should have attention to details. Then he should be high on moral principles. His principles should be very high. His morals should be very high. He should be ethical person. Okay, it's not that the management would bribe him and he would give a wrong report. That should not happen. So morally he should be a very upgrade person. Inquisitiveness, he should have the spree of asking questions and seek answers and explanation for everything. That is known as inquisitiveness. So he should have these traits. Then last is, he should be spontaneous. He should be able to understand spontaneously what kind of things are required from this particular audit, and he should be spontaneous. He should be able to ask questions spontaneously and instantly. He should be spontaneous. So qualities of a forensic auditor. So as again, 4 to 5 marks can be there from this particular theoretical portion. So you need to really understand it well. Okay. Now, what are the techniques of forensic accounting? What are the techniques of forensic accounting? So techniques of forensic accounting are, number one, reviewing the public documents and conducting background checks. So the first step of doing forensic accounting is you need to review the public documents. Before going to the client, just log on to website of MC and download the financial statements of that particular company. You'll be able to see the documents which are publicly available. So review the public documents which are available and conduct a background check of the company. See what frauds have the company been involved in the past. Are the promoters involved in some frauds in the past? Are the promoters or directors have they went to jail for some fraud? Do proper background check. Okay. Second, detailed interview of management. He should understand the depth of the fraud through management. So he should have detailed interview with the management where he'll understand all the facts, and he'll assess the depth of the fraud. So till what extent has the fraud crept in, he should understand that. Identify the culprit. Finally, he should be able to identify who has done the fraud by doing these steps. Next is gathering evidence. So guys, just identifying the culprit is not sufficient. He should gather evidence so as to prove who are the culprit, who has done this fraud. To identify who has done this fraud, he need to gather evidence against that particular person. So evidence should be from a trustworthy and confidential source. Evidence should be from a trustworthy and a confidential source. Analysis, analyzing the evidence gathered. Whatever evidence has been gathered, you need to analyze those evidence and draw some fruitful results from those evidences which you have collected. Okay. Then surveillance. He should physically monitor the entire factory, the entire space where the alleged fraud has happened. He should do the surveillance. Physically, he should go there. He should monitor the official emails and messages of the employees who have been involved in this fraud. He should do this. Then going undercover. This is an extreme measure. Undercover means just like I did in my case, guys. I went to the shop without telling that I'm an auditor of the company. I went to the shop and I asked for the evidences. Okay, that is going undercover. And this is an extreme case where you actually go undercover. So, you become the employee of the company and to understand what is the fraud being happening in the company. So you become an employee of the company. That is the undercover. So these are the techniques in which forensic audit happens. Okay. Now, there are certain ethical considerations in forensic audit. What are ethical considerations in forensic audit? Ethical consideration means, while you are doing forensic audit, you need to take care of certain steps. You need to take care of certain things ethically. Okay. Legally, it might not be required. Legally, you might be doing the right thing while you are doing forensic audit. But ethically, you should take care of certain things while you are doing forensic audit. Number one, there should not be any harassment or discrimination. There should not be any harassment or discrimination. So if an organization is doing some harassment or discrimination, for example, they are preferring male employees over female employees, or they are not giving appropriate benefits to the female employees in case of, say, maternity, or in case of critical requirements, then guys, there's a harassment or discrimination which is going on in the company, and this discrimination calls for forensic audit, and it shall be subject to penal implications. So physical abuse, mental abuse, and discrimination on the basis of age, sex, race, religion is absolutely not permitted, and in this case, forensic audit might play a very important role. Health and safety. Now, appropriate, suitable health and safety measures should be adopted by the company who's doing the work, and if these measures are not there in the company, then it calls for forensic audit, and it calls for auditing the entire system once. So fall protection, hazard protection, respiratory protection, ladders should be proper, electrical wiring, psychological hazards should be avoided. Then accounting practice. Now, accounting practices are to be perfect. I mean, accounting practices should not be disgruntled, which means that the audit software should be such that if anyone deletes an accounting entry, its trail is available to the auditors. So such accounting practices should be there. If they're not there, then forensic audit is required to be done. So accounting practices, accurate bookkeeping practices, and no cooking in the books. Cooking the books. Cooking the books means you are actually stating something which is not there in your accounting books. Non-disclosure or spying. Your current and former employees might be stealing information. Your current and formal employees might be stealing information. In this case, forensic audit might be required. IP theft, intellectual property theft might be there. Okay, your critical data, which contains your critical analysis and critical details, they might be under a risk. IP theft might be there. Non-disclosure agreement should be there. So the auditor should sign a non-disclosure agreement with the client that whatever information auditor will get during the course of forensic audit, it will not be disclosed to a third party. So non-disclosure should be there. Then financial penalties in case of violation. If any disclosure happens by the auditor in outside world, then financial penalties should be levied on the auditor. Then next is technology or privacy practices. Monitoring the employee activity may lead to privacy violations. So sometimes when auditor or the forensic auditor, when he evaluates the employees, when he evaluates what employees are doing, and he evaluates when what employees are emailing to each other, mobile phone tracking happens, all these things may lead to privacy breach of employees. So the auditor should take care that privacy laws should be taken care of while the audit is being done, forensic audit is being done. So that breach of privacy of the employees should not happen. Okay, sir, got it. Okay, next is how to address ethical issues. How to address ethical issues while doing forensic audit. Okay, so how to address ethical issues in business. So the responsibility of ethics lies with the top management. Top management should be proactive in giving training to the employees, in monitoring what unethical practices are going on, and to take steps which will curb the ethical practices. That is the responsibility of the top management. Second, become aware about the harassment and anti-discrimination laws in the country. Every employee should be made aware about the harassment laws which are there in the country, which anti-discrimination laws which are there in the country, and the penal provisions which follow thereon. This is again responsibility of top management to make the people aware about these laws. Then provide written policies and processes to the employees. Employees should be provided with written policies of anti-harassment and anti-discrimination which is there in the company. Communication is the key, guys. Communication is the key. You should train your employees about the harassment laws or the unethical practices which are there. You should train your employees. Training is very, very important. Re-evaluate and revise when needed. Wherever a revision is required in the training or in the ethics manual, you should revise the training manual, ethics manual. Next, what are the challenges in implementing ethics policy? Whenever you are implementing ethics policy, what are the challenges which you face as a management? Resistance from the employees. Employees generally do not like change. They generally resist change. So even when ethical policy will be implemented, employees will resist it. The way to deal with it is, please communicate with the employees properly. Tell them the importance of these ethics policies and tell them why these ethics policies are being floated in the organization, and do communication properly. Then high cost of training. So sometimes the cost of training is very high. Okay. Cost of implementation is also very high. Therefore, implementing ethics policy becomes little difficult. It's costly also. Then inability to determine the ROI, return of investment. What is the return of investment if we employ these ethical policies in the company? There's no return on investment. There's no tangible return on investment. There's intangible benefits which are there, but tangible return might not be visible to the management. So spending lakhs and lakhs of rupees without expecting any return is a difficult proposition for the management. Okay, next is threats to auditors' independence. Threats to auditors' independence. So guys, auditor is generally independent. The first feature, the first definition that I had taught you of audit was that audit is an independent examination of the books of accounts, right? That is the first definition which we had taught in our first lecture. Now, what is this independent? Independence means that auditor should be free from any force, free from any bias. So what are the threats to independence of the auditor? Threat number one is self-interest threat. Wherever auditor or his holding or his relatives are holding some financial interest in the company, then there's a self-interest threat. Auditor will not disclose the hanky-panky stuff which is going on in the company, because he will be afraid that his own money will be lost if he discloses all those things to the people. So this is known as self-interest threat. His interest is there in the company, therefore he is reluctant in disclosing the right information in the auditor's report. Second is self-review threat. Self-review threats means that if auditor is the internal auditor of the company and he's also the cost auditor of the company. So guys, we have studied in cost audit. Internal auditor cannot be the cost auditor of the company, right? We have studied in our initial chapter. Internal auditor cannot be the cost auditor. What is the risk? Self-review threat. He will review his own work, not permissible under law. Next threat is advocacy threat. Advocacy threat. So when an auditor is involved in promoting the company, it is promoting the company, then that particular auditor is engaged in an advocacy threat. So for example, if the auditor is the commission agent of the company and he's promoting products of the company, then he is actually running a risk of advocacy threat, because he is himself promoting the company. How can he say that the company is not good? Self-advocacy threat. Familiarity threat. the auditor and the client are so familiar to each other, they are so known to each other that sometimes it becomes challenging for the auditor to do proper audit. So familiarity threat means auditor and the client are very familiar to each other. This is known as familiarity threat. And last is intimidation threat. What is intimidation threat? That the client is so powerful that is going to pressurize the auditor. The client is so powerful. So I'll give you an example, guys. Suppose an auditor's fees is not paid to the auditor for past 5 years. Auditor will always be under a threat that if I report anything wrong about the client, then he will not give my fees. So this is known as the intimidation threat. Client is actually overpowering the auditor, and auditor is afraid of the client. This is known as intimidation threat. Afraid of the client. Okay. Standards of professional ethics. So professional conduct standards are there. Integrity and objectivity is one of the standard. Professional competence is one of the standard. Due professional care, understanding and communication with client. So these are, guys, professional standards, professional conduct standards, which means that how professional behavior impacts the audit and how professionally you should carry on the audit. So what are the professional standards? These are the professional standards which are there in your syllabus. Okay. So yes, that's all for this particular chapter, guys. This was the chapter on forensics audit. Now let us start the next chapter. Next chapter is cyber security. Next chapter is cyber security. Then Money Laundering Act, and then Cost Audit Program. 4 important chapters of your syllabus we are going to cover today. 4 important chapters, and the entire marathon will be dedicated to these theory chapters, and you'll be able to revise everything very, very quickly in this short marathon session. Okay. Now, what do you mean by security? IT security audit. Okay. IT security means information technology, and guys, entire business is dependent on information technology. If information technology is not securitized, then our entire business is at risk. So in this particular session, we are going to study the IT security risk. What is the information technology risk which is there? Information technology risk means our systems are not up to the mark. Our servers are not up to the mark. Our password protection are not up to the mark. This is known as IT risk, and this leads to cyber security crimes. Cyber crimes are very common in the country, and what are the reasons for cyber crime? They are the risk which is posed by IT security system. So IT system is weak, therefore cyber crimes are at its peak. So IT security is to be maintained. What do you mean by IT security? Let us read that. Okay. So objective of IT security audit is to have a comprehensive examination of enterprise information security system. What is information security system? Guys, the softwares which you use, the hardwares which you use, the password protection system which you use, do you have an antivirus or not? All these are information security system. So information security system, to safeguard the information security system, we are doing IT security audit. What are the benefits? It identifies the weak spot in IT infrastructure. Whatever are the weaknesses in IT infrastructure, it identifies that. Then verifies the security status and control. It complies with data security laws. So it verifies what are the security status controls are proper or not with respect to security of the data. It identifies that, and it complies with the data security law. See, the data security law which is there in the country, it actually adheres to those data security law. Okay. Then what are the steps in IT security audit? Steps in IT security audit are, first of all, you need to identify what are you going to do. So define the objectives of the IT security law. The objectives of the IT security law, you should define that what you want to do. Then you plan. Plan means you need to ascertain what steps do you need to do during the audit. You plan. You perform the audit work, report the results, and take necessary action. So very simple IT security audit steps which are required to be performed in IT security audit. And guys, in most of the audits, same steps are required to be performed. Mostly same steps are required to be performed. Okay. Now, what is cyber security and what are cyber forensics? So now we are going to study what is the cyber security or what is forensic audit in case of IT. IT system in case of banks specifically, because guys, today banks are entirely dependent on IT. Any kind of fraud can happen in the bank if IT infrastructure is loose, if IT infrastructure is not strong enough. any fraud can happen in case of a bank. So it's very, very important to protect our IT infrastructure, information technology infrastructure of a bank. Be it the hardware, be it the ATMs, be it the debit cards, be it the swiping machines, everything needs to be absolutely perfect in case of a bank. So IT audit in case of banking sector, the objective is to safeguard the IT system of bank. We need our banks to be absolutely secure. The hardware, the software, the antiviruses, the people, the system, the documentation, everything should be absolutely secured. Data integrity is a very big issue with banks. No data should be leaked from a bank to any unauthorized person. The details, a list of the people who are holding accounts in the bank, that should not be leaked at any cost. So data integrity is another issue. Maintenance of system effectiveness. You need to maintain the effectiveness of the system. Input output ratio must be optimum. Whatever input output is being fed in the system, that should be appropriate. Maintenance of system efficiency. The system should work according to fullest of its efficiency. Okay. Then maintenance of system efficiency. These are the objectives. Okay. Scope of IT audit, information technology audit. What is the scope? We need to plan for the IT systems audit. Then we need to monitor the activities of information system. And then we examine the adequacy of the staff. Whatever staff is being employed, whether the staff is adequate or not, we need to actually ascertain that. Then information system audit approach. What are the approaches which we tend to undertake in case of information system audit? What are the approaches? Okay, so there are primarily three approaches: audit around the computer, audit through the computer, and audit with the computer. These are three approaches which we undertake in case of information system audit. Okay, audit around the computer means you check the output data, whatever output data is being produced from the computer, whether it is produced appropriately or not. So you check the data, output data from the required input which are given. That is checking the correctness of output data. That is audit around the computer. So we don't go inside the computer. We just see if the input and output are synchronized, are similar to each other. Then we say that this is audit around the computer. Then what is audit through the computer? We check the system in detail, hardware and software in detail. We go inside the computer properly. Audit through the computer. We go inside the computer properly. Then what is audit with the computer? Audit with the computer means, guys, audit can be done with the computer, which means audit tools are there inside the computer. There are certain softwares which are built for doing audits. We use computer as a tool for auditing the client or auditing the financial statement. That is known as audit with the computer. So audit around the computer, audit through the computer, and audit with the computer. These three approaches are there in case of systems audit approach. Okay, next is IT audit methodology. Guys, very simple. We have already discussed most part of it in our earlier chapter. Planning needs to be done, test of controls, test of balances, completion of audit. 4 steps in information system audit also. Planning, we need to plan the audit. What steps are required to be done, who will perform those steps, etc., etc. Test of controls, whether controls are operating fine or not. Then test of balances, what are the computation of loss which would incur if information system fails altogether, what are the probability that information system fails, and what is the probability of loss in that particular case. Finally, completion of audit. You complete the audit using this methodology. So framework or concerns in IT infrastructure. So what are the major concerns in case of IT audit? Safeguard of assets. First of all, we need to ensure that our audit assets are safeguarded. Hardware, software, data, everything is secured. That is the first concern. Data integrity is the second concern. Data should be secured. Business continuity planning. I mean, business should continue even when the audit, the IT is lapsed. IT system stops working, even then business continuity plan should be there. System effectiveness. System should be effective and efficient. And organization administration of the entire IT system should be there. Like who should be the personnel who do IT testing, who are there, whom we can help if IT fails, etc., etc. All the IT related audit needs to be done well. Okay, so this was the chapter on cybersecurity. Okay, second last chapter, anti-money laundering. This is a new act which has been introduced in your syllabus, cost audit syllabus 2022 students only, which is Prevention of Money Laundering Act. Okay, I'll be discussing this in brief in this particular lecture, but yes, in your syllabus, guys, it's in great detail. It's in great detail. Okay. So money laundering. We'll be talking about money laundering in this particular part. Okay. What do you mean by money laundering? Money laundering means hiding your money which is earned from illegal sources. So whatever money you have earned from illegal sources, if you try to hide that money, so suppose if I do smuggling, okay, and after smuggling I hide that money by purchasing some land or purchasing from some property somewhere, I try to hide that money, okay, that is known as money laundering. Money laundering means you earn money from illegal sources in cash, obviously not in bank, and then you hide it under some some source. So I'll give you an example. Okay, suppose I earn 2 crore rupees from an illegal activity. Now I don't know what to do with this 2 crore rupees, because I cannot spend this 2 crore rupees, because government will be asking me, where did you get it from? So I opened a fictitious dhaba at a highway, a restaurant at the highway, and I tell government of India that, look, I have earned cash income from this highway dhaba. I earned 1 lakh rupees per day from this dhaba and accumulated 2 crore rupees from the transaction. So this is an activity which is money laundering. So you look for certain avenues where you can tell to government of India that, these are cash businesses and we get cash, and therefore I earn cash from this particular business. This is the way in which money laundering is done. So money laundering means you hide money you earn through criminal activities. You earn this money through criminal activities, and at places where they appear to be legitimate, where they appear to be legal, you hide this money at that place. This is known as money laundering, and it's a financial crime. You look at this laundry. This is a laundry. You enter dirty money in this and you get clean money. So this is known as money laundering. Okay. This is an offense in India. Okay. Harmful effects. Of course, it is very harmful for the economy. Conversion of illegal money into legal money. It deteriorates the administrative order. The country as a whole gets harmed. Terrorist financing. Terrorists are financed using this money. Then importance of Anti-Money Laundering Act. It saves the taxpayers' money, fights terrorist financing, reports suspicious activities, etc. So these are benefits of money laundering and Anti-Money Laundering Act. Okay, these are typical anti-money laundering steps which are employed by any person who's doing money laundering. Okay, steps are: first you place the money, then you layer it using different transactions, then you integrate the money. First, you place the money at a place where it seems to be legitimate. Then you cover it by using various layers. You tend to rotate it as many times as possible. Then you integrate the entire money and use it for your purpose. These are the typical methods in which money laundering is done. Okay, let us discuss these ways in detail. Okay, first is placement. You inject the money into financial system. Whatever money you have earned through illegal sources, you introduce it in the financial system, saying that it is cash money which I've earned. This is the cash which I've earned, and I've earned it using legitimate sources. So you inject this money into the financial system. Second, you layer this money. Layer this money means you spread this money into various different kind of alternative schemes and transactions. And just to hide this money, okay, you layer this money, you spread it into different transactions which appear to be legitimate but which are not legitimate, and you spread this money. That is layering. Third is integration. Then you reintroduce this money back into the economy. You invest this money in real estate, you invest this money anywhere. So I'll give you a practical example. Okay, first of all, I need to find a business where I can place this money. So I will find a cash rich business which is done in cash, and I will place this money over there. Then what I'll do is I'll do some transaction within that business which can place this money, which can layer this money into different layers. For example, I will suppose purchase land from this particular land, sell that land, again buy a property, sell that property, buy a gold jewelry, and etc. etc. So I'll layer this transaction in a way that the tax officer is not able to reach to the ultimate transaction. Okay, I'll layer it. And last is I will reintegrate it, which means I will sell off the asset whichever I purchased last, and I will say that I've got this money from that particular asset and I reinvested in my business. No one is going to ask it. So these are the 3 steps in which money laundering is done: placement, layering, integration. Okay, next is a requirement of financial institution. Now guys, financial institutions are the hub where money laundering can be done and where money laundering can be controlled. Our banks, our NBFCs are the hub where money laundering can be done and money laundering can be controlled. Both things can happen through the financial institutions. So Guys, there's a organization which is Financial Action Task Force. It is FATF, which has been set up by IMF, International Monetary Fund. This FATF has instructed the financial institution of the entire world to take certain steps to stop money laundering. And in this particular chart, we are going to see those steps which FATF has told the government to do. General requirements. There should be a KYC of any customer who is coming to you and opening the bank account. KYC is a must. Large currency transaction reporting, if there is heavy currency which is being transacted within India or outside India, that should be reported to FATF. Suspicious activity should be monitored and reported to FATF. Then FATF says that you need to check the transaction parties against list of sanctioned individuals, companies, and countries. So, guys, there are certain list of countries and persons which has been released by the FATF. If any transaction happens with those countries or with those individuals, then it is to be reported to FATF. So you need to check your transaction parties very carefully. So by you, I mean banks. While releasing account in any account, then banks should be aware about this. Then ensure stability of international monetary system. That's the requirement of FATF. Technology, artificial intelligence is used by FATF. Filing suspicion activity report. SAR is suspicious activity report. This is to be filed to FATF in a proper manner. Maintaining track of client risk rating. If client is highly risky, you have to maintain a transaction-wise list of your highly risky clients. So how do a client become highly risky? Guys, if in past he has shown some suspicious activities, he has done some suspicious transactions, then that particular client becomes a highly risky client. Okay, so Prevention of Money Laundering Act. What is the objective of this act? To prevent the money laundering activity, which means to prevent any black money being converted into white money. Confiscation of property derived. Now, this is very, very important step of Money Laundering Act. Money Laundering Act authorize the concerned officer to confiscate the property which has been purchased from the black money. Attachment of property is possible in case of Money Laundering Act. We will attach your property. Attached property means we will secure the possession of that property and will not allow you to sell that property anyhow. Provision of transfer, disposition, conversion of property will be there. Then arresting powers are given in this act. This act is a very, very powerful act. So a person who's involved in money laundering, even the chartered accountants, cost accountants, and company secretaries who are assisting people in money laundering, they will also be arrested in this particular act. Summons, survey, search, this kind of repercussions are there in case of Money Laundering Act. Cross-border offenses, directly they go to the Union Nation Security Council, and those are discussed over there. So this is a very, very powerful act, guys, and this actually punishes the wrongdoers very, very severely. Very, very powerful act. Very powerful act. Okay, international standards on conducting money laundering and financing terrorism proliferation. Okay, so there are certain international transactions, international standards which various countries' government have introduced, to assess where any money laundering is happening. Okay, so assessing risk and taking actions. So first step is to assess the risk wherever there is a risk and to take immediate actions for the money laundering suspicion. National cooperation and coordination, guys, it's very, very important that all the countries must join hands against money laundering. Because what happens is that when countries are not together, then a person who's earned money in India from illegal sources, he will dump that money in Dubai. He will dump that money in Pakistan. He will dump that money in Canada or Russia or wherever. So international coherence, international coordination is very, very important in case of money laundering. So international standards say that every country should be related to each other, should be closely connected to each other with respect to the suspicious transactions. Penalty prosecutions are very, very high in case of such frauds and offenses. Financial institution secrecy laws should not constrain the FATF recommendation. So there are secrecy laws which are there in financial institution. Those secrecy laws should not be restrained to FATF consideration. So guys, there's a live example that we ask government of Switzerland to disclose the Swiss bank account details of the Indians which are there with them, but Swiss government denies it. Says that secrecy law is there in Switzerland, and that secrecy law is not allowing the Swiss government to give us the details of the people who are having Swiss accounts in Switzerland. So secrecy laws of a country should not interfere with the FATF recommendation. Customer due diligence is required. Reporting should be done in a proper manner. Nominee arrangement, transparency, beneficial ownership. All these are small steps which are internationally recognized by various countries to fight against money laundering. And it's really important to fight against money laundering, because money laundering has become a serious offense in any part of the world. It has become a serious offense. And if we actually don't stop money laundering, then money laundering can actually kill an economy. Money laundering has the power to kill an economy. Kindly explain the notification on including of all three professional in PML Act. Okay. So guys, recently there has been introduction in a PML Act. There's been notification in the PML Act. What does that notification says? That notification says, if any chartered accountant, cost accountant, or company secretary is found to be assisting a client in doing money laundering, then the provisions of the law, which means penalty, prosecution, will be applicable to that chartered accountant, company secretary, and cost and account management accountant also. So guys, primarily, who are the people who guide any client on how to do money laundering? Who are the people? They are the professionals. So recent notification is there in the in the public domain, that if chartered accountants, cost accountants, and company secretaries are found involved in assisting the clients with respect to money laundering, then definitely they will be sued, they will be punished. Surprisingly, I'll tell you a very interesting fact. Surprisingly, lawyers have not been covered under this category. Sometimes lawyers are also involved in suggesting hanky-panky stuff to their clients, guys, but lawyers are excluded from this notification. So if lawyer is involved in assisting the clients with respect to money laundering, he will not be charged to the PML Act. But if chartered accountant, company secretary, and cost accountants are involved in money laundering, then they will be charged to the Money Laundering Act. So that is the anomaly. That is I think this is a unfair treatment. This injustice to chartered accountants, cost accountants, and company secretary. Lawyers should also have been included over here. And why only lawyers? Any and every professional who is involved in assisting the client with respect to money laundering, he should be involved in this particular law. The definition should have been any professional. So that is the recent amendment on this particular act. Sandeep Mishra had asked this question. सर मेरा अभी सैलरी खत्म हुआ है, क्या इनफ टाइम है दिसंबर के लिए? Mohan is asking this question. Guys, December is a far-fetched dream. December is definitely very, very far. So enough time क्या? 4 बार syllabus हो जाएगा दिसंबर तक तो, नालायक. Okay. So guys, now let us start the last chapter of our theoretical discussion of today. Again, important for 2016 syllabus as well as 2022 syllabus. Both the syllabus has this particular concept called cost audit program. Now, what do you mean by cost audit program? Guys, it is a planning document, just like you plan whenever you go to a vacation. Suppose I'm going to Manali for a vacation. I will plan whatever places I need to visit. I need to plan how do I need to go, which bus do I need to board, how many people will be there with me, etc., etc. What budget is there? Everything needs to be planned. Similarly, cost audit program also plans how each and every specific section of the financial statements is to be audited. For example, if revenue is to be audited, then what are the steps which are to be taken for auditing revenue? If expenses are to be audited, then what are the steps which are to be taken to audit the those expenses? So all the planning, all the planning needs to be done during cost audit program. So cost audit program is a summary document which contains the plan of auditing each and every financial statement head separately. So there's a cost audit program for revenue, for expenses, for fixed assets, for depreciation, for debtors, for creditors. Every head of the financial head will have a separate cost audit program. This is known as cost audit program, nothing but a plan. So personnel, who are the people who will be doing the audit? First is personnel. Second is documentation, what documents need to be prepared, and how quality control is required to be done. These are the 3 essential elements of any cost audit program. Then audit of products. Okay, now these are certain examples whereby I'll be telling you how to audit a particular thing. So if you are auditing finished goods, then these are the 4 steps that you need to take. You need to check the inventory balances. You need to check the closing stock of previous year. You need to check the capacity utilization. You need to check reasons for abnormal capacity utilization. So these are certain these are certain steps which you need to take while you are auditing finished goods, audit of goods, finished goods. Okay. Similarly, guys, in this entire chart, I have given you steps which are required to be taken in auditing each and every account head, like audit of raw material. When you're auditing raw material, what steps do you need to take? Okay. These are auditing to raw material, auditing of raw material. Similarly, guys, in this entire section, I'm discussing the way audit is required to be done. Audit of packing material, how audit of packing material is required to be, which is very similar. Okay, like invoice is required to be taken, payment is made on time, this is to be ascertained. Then whether that good has been received in the company or not, this has to be ascertained. The very common steps, which if you read once, then you will be able to understand them well. Okay, so I need not go into each and every cost audit program separately. So yes, I'll be uploading these charts also in the Google Drive. Google Drive which you have, I'll upload these charts, and all the theoretical portion also PDF I'll upload it in the Google Drive. So don't worry about that. Just read them once, okay? Not a very difficult or a very lengthy or a very complex thing. Auditing steps are there. What steps are required to be done while you are auditing salaries, while you are auditing expenses, etc. etc. Only steps are there in this particular chapter, which is cost audit program. So let's not go deep dive into this particular chapter. It is pretty easy. Okay. So yes, guys, that's all for today's live session. Yes, we have covered 4 important theoretical chapters in this particular session. Tomorrow we'll be covering 3 important chapters, which is management audit, internal control, and management audit in different functions. And yes, then we are through with our revision of all the important chapters of cost and management audit. Okay, so that's all for this particular guys session, and we'll be meeting in a subsequent session with more such intriguing conversations on audit, cost audit, and other subjects as well. So till we meet next, all the very best and happy studying. Bye bye. See you in the next session. And yes, today we are going to start our marathon of cost and management audit. The theoretical portions is what we are going to touch base today. All right. So I would just like to highlight which all study notes are we going to cover in today's marathon. And guys, the total marks which will be in your hands after today's marathon will be approximately 30 marks. Approximately 30 marks will come from this particular theoretical portion which I'm going to cover today. So this is your study material. Okay. And we are going to cover the study notes, theoretical study notes of your syllabus. Let me mark them for your ready reference. All right. Study note number 9 we are going to cover today. No, not study note number 9. Yes, 10. Study note number 10 we are going to cover today. Study note number 10 we are going to cover today. Study note number 11 we are going to cover today. Study note number 12 we are going to cover today. Study note number 13 we are going to cover today. Study note number 14 we are going to cover today. That's it. That's it. So 10, 11, 12, 13, 14, 5 study notes we are going to cover today. Study note number 10 to study note number 14 we are going to cover today. 10 study notes. And guys, in all these study notes are theoretical study notes, and they will command about 30 marks in your examination. About 30 marks will come from these 5 study notes which we are going to cover today. If you are referring to my cost and management audit book, if you are referring to my book, then chapter number 8, chapter number 9, chapter number 10, these are the 3 chapters which will summarize today's discussion for all of us. So yes, today is a theoretical a marathon which we are taking. So obviously your question will be, sir, what about the practical portions? You have not taken marathon of practical portions, guys. Those who are not aware, I know most of you must be aware, marathon of basic of cost and management audit is already saved on my playlist in my YouTube channel. Study note number 2 already saved marathon on my study note on my playlist. Cost audit documentation already there in my study on my channel. Cost auditor professional ethics already marathon is there on the YouTube channel. Overview of cost accounting standards till cost accounting standard 4 I have covered the portion in my marathon videos. So all these marathon are already available on my YouTube channel, and if you are not aware where to look for these videos, let me share my screen with you, and let me share the place where marathons are already situated, because many of you are telling me, sir, when will you give us marathon of cost and management audit? Guys, cost and management audit marathon is already live on my YouTube channel. Please go to the playlist. This is the YouTube channel which all of you love. Because of your love and affection, we have been scaled this YouTube channel to a very high level. So yes, this is the YouTube channel. And if you go towards the end of this YouTube channel, in the playlist, you'll get a playlist of CMA Final Cost and Management Audit. Please see this playlist. You have to click on this playlist, or you have to just click on view the full playlist. Okay, view full playlist. Then you'll be able to view full playlist. Okay, this is the playlist of Cost and Management Audit. And guys, if you scroll down, these are the marathons of the practical portions of your syllabus, whereby I've covered maximum of the practical portions of your syllabus in these marathons. Please look at this. Company Rules 2014. Okay, these are again Company Rules 2014, again part 2, part 1 and part 2. Okay, then one very important thing, guys, these two videos, important amendments in cost audit, the two videos, the important amendments in cost audit videos, these two videos are very, very important from an exam standpoint. Please go through these two videos very well. Important amendments in cost audit, this is relevant for June 2022 and December 2022 attempt. So go through these two videos. Then we have Cost Accounting Standard 4, which I've discussed in details, and 7, which I've discussed in detail. Then rules part 2, cost audit program, professional ethics, cost accounting standards, cost audit basic concepts. Then the strategy video, most important video that you need today is the strategy video. Please go through this strategy video in detail, because in this strategy video I've told you how to study in the last few days of your examination, how to focus on the important points. So do take note of this strategy video of cost and management audit. Please see this strategy video along with all the marathon videos which are already saved on my YouTube channel. So yes, a marathon of cost and management audit has been live for a long time now. It's not today that I'm taking the first live session. The live session I've taken earlier also for these cost auditing, for the cost and management audit subject. Please share these videos with all your friends who are giving examination in the forthcoming examination, so that they also benefit from these marathon videos. All right, so now we're going to start the marathon of theoretical portion of cost and management audit. Mind it, this theoretical portion is going to fetch you 30 marks. Full 30 marks will be yours if you watch this marathon video completely. If you just focus on this marathon video, then 30 marks will be yours. Yes, you will be able to score 30 marks. So we'll be starting the first chapter for attaining these 30 marks. All right, let's start the marathon session. Yes, sir. So how's the Josh in the house? Please tell me, how's the Josh in the chat box? I want the answer. How's the Josh in the chat box? Are we all excited for this marathon videos and to score 30 plus marks in theoretical portion of cost and management audit? Are we excited? Are we excited enough? Please answer in the chat box. Are we excited to score good marks? How's the Josh in the room? That's what I want to know. How's the Josh, guys? All right. Hi. Everyone is saying hi. Okay, all right. Everyone is excited about it. Piyush, Shrikant, Shreyansh, Manish, Jyoti, Vivek, Shushmita, Saurabh, Suresh, Ram, Mansi. Brilliant, guys. Brilliant. Superb. All right. So let's start the marathon video of cost and management audit theoretical concepts. And we are starting with the concepts. All right. Before we start the concepts, let me just send you the link whereby you can access these PDFs. Okay. These PDFs you can access using a link. I'm just sharing a link with all of you. Please use this link to access the PDFs which I'm going to share right now. Okay. I'm just sending you the link in the chat box, as well as I'll save it in the description box also. Both the places I will save this link. Yes, sir. All right, here you go. I've uploaded the PDFs on the Google Drive, and I'll be sharing the link with all of you. Yes, uploaded. Done. All right. Okay. Guys, please check the message box. Please check the message box. I have typed the link of the Google Drive in the chat box. Please let me know if you have received that Google Drive link. That link will contain the PDFs which I'm discussing in the class. This PDFs will be available to you in that Google Drive link. You can download this PDF. You can even take a printout of this PDF to revise the entire theoretical portion of 30 marks of your syllabus. So these PDFs will be very, very, very useful to all of you. Also, in the description box, I'm saving the link of this PDF. That also I'm doing right now. I'm doing it so that you don't face any problem in accessing these PDF files, because PDF files are really, really important. So I'm saving the PDF files in the description box. Okay, in the description box, I'll be saving these PDF files for all of you. Just give me a second and I'll be saving it on the in the description box. Yes. So guys, I have saved the Google Drive link in the description box. You can access the video, the PDF files from the Google Drive link. You can access it, you can print it, you can do whatever you want to do with these PDF files. You can share with your friends. So all of you have received the PDF also. PDF is available on the chat box. I have sent the PDF. Then I've sent the PDF in the description box also. I've saved the PDF. So yes, PDF is now available with all of you. Now let us start the marathon lecture of cost and management audit, the theoretical portion. All right. So the first topic which we are going to start today in our marathon lecture is basics of management audit. Basics of management audit. So before coming on to the basics of management audit, I want you to understand, what do you mean by management audit? What is the meaning of management audit? Guys, meaning of management audit is that, the management of the organization takes various decisions for welfare of the organization. These decisions which are taken for welfare of the organizations, it is to be made sure that these decisions are taken correctly. Obviously, there is never a management which can take 100% decisions to the best of its ability, and there is no management in the world that can ensure that we will take 100% decisions absolutely correct. There is no management in the world. You take management of Reliance Industries Limited. Do you think that the board of directors decision is always correct? No, guys. Their decisions are also only 80% times correct. 20% times their decisions are incorrect. So no management in the world can take 100% correct decisions. But now the catch is that the management should not also be such that their, say, 60% decisions are incorrect. That's an absolutely unacceptable norm. If a management's out of 10, 8 decisions are incorrect, then there's a serious concern with that particular management. So what do you mean by management audit? Management audit means that we are going to appraise, we are going to audit the decision-making capability of management, and we are going to see where is the management going wrong. Why is the decision matrix of management of a particular company not going the way we want it to go? Why are they making wrong decisions? Why is company into losses? Why is company categorized as a sick company? All these things we need to analyze using the simple technique of management audit. Now guys, one thing which we should remember about management audit is that management audit is not a statutory audit. It's not an audit which is required to be done by law. It is not a statutory audit. The management audit, the people who are conducting management audit, they might or might not do management audit. Management audit is absolutely voluntary. What triggers management audit? Guys, mostly the shareholders of the company, they want to get management audit done of their board of directors, because shareholders are concerned that board of directors should make absolutely perfect decisions. Now, to make those perfect decisions, if the board of directors are not making perfect decision, then shareholders sometimes force management audit on the board of directors. This is what is the usual phenomena. So owners of the company want to know why board of directors are taking wrong decisions. Why are things not going the right way? And that is the reason why management audit emanates. So two important points which are important to be noted over here is, number one, management audit is non-statutory, which means it is not related to any statute. It is not governed by any law. Any Companies Act, any Income Tax Act doesn't mandatorily requires anyone to get management audit done. So management audit is non-statutory. It is a voluntary audit. If you want to do. If you don't want to do, no one will force you to get your management audit done. So that is the first point. So first of all, let's see what is the definition of management audit, and it has recurred many times in the examination also. Management is the process of appraising the performance of the directors. So the directors of the company, their performance is to be appraised. Appraised means what? Appraised means assessed. We need to assess the performance of the directors, managers, or in other words, appraising the performance of the management of the company. If we are going to assess the performance of the management of the company, the top management or the middle level management of the company, we are going to appraise the performance of the top level management or middle level management of the company. That is known as management audit. We are appraising, we are analyzing, we are scrutinizing, we are assessing the management of the company. We are assessing the decision making capabilities of management, top level management of the company. It attempts to look into all aspects of management performance. So wherever management is performing, whatever performance management is giving, management audit tends to challenge or tends to audit that particular area. For example, management is involved in production process. Management is involved in decision making with respect to the distribution process and everything. So all those areas are bound to get audited. We want to know whether our management is taking right decisions or not. That is the ultimate objective of management audit. It does not concentrate on financial matters alone. Guys, financial audit is only bothered about financial statements. Cost audit is only bothered about cost statements. Secretarial audit is only bothered about secretarial records. But management audit is not only focused on financial matters, it is focused on non-financial matters also. So, a very simple example which comes to my mind. Management audit will also have a section which will describe whether management of the company treats the employee in a good way or not. Whether the employees are treated in a good way or whether the employees are not treated in a good way in the organization. What is the behavior of the top management towards the employees of the company? That is also an important aspect of management audit. So effectiveness of management, how effective is our management? That is the point under consideration under management audit. Controlling the total activities of the organization in accomplishment of organizational objectives. So whatever are the objectives of the organization, those objectives should be fulfilled at the end of the day. Now, can you see a strange picture on your screen? Can you see a strange picture on your screen? Please tell me in the chat box, what do you see on your screen? What is this strange picture on your screen? Can you tell me? What is this picture on your screen? Tell me, what is this picture on your screen? What do you see on your screen? What is it? Please tell me. What is this picture? Please tell me in the chat box. In the chat box, please tell me, what picture is this? In the chat box, I want to know, what is this picture? Oh, good. Honeycomb, yes. Beehive, yes. Beehive, absolutely right. Sushmita is right. Beehive, yes. Yes, right. Beehive, honeycomb, okay. Beehive, okay. Great. Now, please tell me. You are absolutely right. Now, please tell me, if you touch this beehive, or you throw a stone on this beehive, can you see how many bees are there in this beehive? Yes, a lot of bees are there in this beehive. Now, my question to you is, if I pick up a stone and hit this beehive, or not even pick up a stone and hit it, even if I go near to this beehive and try to touch it, I'm not trying to hit it, I'm just trying to touch it, what will happen to me? In the chat box, what will happen to me? What will happen to me? Damyanti, Vidya, Moshmi, Pramod Jadhav, Jyoti, Shrikant, Vivek Lambate, Sangeeta, Shreyansh, Naga, Saurabh. Please tell me what will happen to me if I will try to touch this beehive or I will throw a stone on this beehive. What will happen to me? Severely hurt. Become a potato, sir. Ram is saying, sir, you will become a potato. Sushmita is saying severely hurt. Shamli is saying you will be hurt. We don't want to imagine, sir. Jyoti saying we don't want to imagine. Don't even dare. Sharon is saying, inject it. Saurav is saying, inject it. Yes, guys, you're absolutely right. If we even try to touch this beehive, it will be harmful for us. It will be very, very, very harmful for us, because beehive is not the thing where you should touch upon. Beehive is not a thing which you should even come closer to. It is even unimaginable. Okay, you're absolutely right. Similarly, guys, management audit is like touching a beehive. Top management of the company are typically the top notch people, the top shots of the company, and they are very, very strong and powerful people who have been in the company for a very long time. So if an external auditor comes to the company and he tries to do management audit and he tries to challenge the power and authority of the top management of the company, then then this activity should be done in a very, very careful manner, because it can also backfire. It can also backfire. They are very strong people. Management of the company are very strong people. If you do not have adequate supportings to your observations, if you're just making observations, management decision making is bad. If you're just making observations without any supporting examples or supporting documentation, it might backfire. It might backlash. Therefore, one thing which you really need to understand while you are doing management audit is that please be very, very careful in doing management audit. Please be very, very careful, because the top management might not like someone else challenging their authority, someone else challenging their decision making capabilities. So management audit is to be done in a very, very a sound manner. There should be adequate backup of everything which you speak. Whatever you are writing in your management audit report, you should have backup of everything. You should there is no statutory guidelines for conduct of this audit, so there is no methodology for conducting this audit, but the riskiness is very, very high on this particular kind of audits, because it might backfire. It might backfire. You are almost trying to touch this beehive. Doing management audit is almost like touching this beehive. So be very, very careful in doing management audit in any organization. That was the message which I wanted to give using this beehive. Okay, sir, got it. Now, what is the coverage of management audit? What all areas should management auditors see? Guys, there is no limit to the areas which management auditor should see. In case of financial audit, they only see balance sheet, profit and loss account, statutory compliances. They might see your vouchers, they might see your fixed assets, inventory, etc., etc. That's it. Everything centered around the financials of the particular company is the focus of financial audit. If you move to cost audit, that they only see your cost records, like your cost sheet, your cost statements, your reconciliation between costing profits and financial profits. That is all which a cost auditor would want to see in your books of accounts. If you move to secretarial audit, they only want to see your secretarial records. If you move to tax audit, they only want to see your tax records. But in case of management audit, there is no restriction on what a management audit can see. He can look at anything and everything, including whatever things I've just told you: financials, costing records, secretarial records. They can see anything and everything. So right from the organization, the people of the organization, administration of the organization, manufacturing function, marketing function, finance function, research function, development function, any function can be seen by the management auditor. Guys, I was very privileged to see one of the management audit reports of a particular company. Okay, and there was a very peculiar observation in that particular management audit report. What was that observation? I'll tell you the observation in a very, very brief manner. Observation was that the guards of the company are saying that when in the morning the owners or the board of directors, when they visit the company, we give them a salute, but they never salute us back. They never acknowledge our salute. So this was the acknowledgement. This was a mention in one of the management audit reports which I had seen long back. And yes, this is an evidence that management audit is not a restrictive audit. It is a full-blown audit which can have anything and everything in its purview. Nothing is away from management auditor's purview. Management audit has a very wide scope. It can see anything and everything. Even the emotions and feelings of the guards of the company were also recorded in the management audit report. So, right from administration, manufacturing, marketing, finance, anything can be looked at by the management auditor. The audit is expected to cover every activity of the organization undertaken in pursuance of organizational objectives, policies decided by the board of directors from time to time. So whatever policies and practices are decided by the board of directors, all those policies, whether they are being fulfilled on time or not, and in principle or not, this is the sole focus of the management auditors. The various plans prepared by the management, its policies, programs, procedures, their audit is management audit. So whatever policies, programs, procedures are prepared by the management, entire thing will be audited by the management auditor. So guys, these are the functions which can be audited by the management auditor. Now guys, I'll tell you one very practical insight about management audit. Usually during one management audit, the management auditor picks up certain parts of these functions. It is not possible to cover all the functions in one management audit. So they would, in consultation with the shareholders, would pick up certain parts and they would focus their audit on those parts in phase 1. Then they will come back next year, and next year they will focus on the rest of the parts. So they split their work because the scope is so wide that it's not possible to cover entire organizations, each of the departments working together. So they split their work. So management audits purview is always restricted to whatever has been agreed with the management of the company. That is why the scope can be, curtailed for the phase 1. It can happen in phases, in various phases. So this is the concept of management audit. Now, one very important theory of agency. Theory of agency. That agency theory is applicable to management audit as well. Now, sir, what is this agency theory and why is it applicable to management audit? I'll tell you the agency theory using a simple chart. Please see this chart which is there on your screen. And yes, this chart is there on the Google Drive. The link is given in the description box. Please go to the description box. Please go to the Google Drive. Download these entire PDF notes. I made them available to all of you for your quick reference. All right. This is the agency theory. Agency theory means what? Agency theory means if you have shareholders, so there are shareholders of a company, there are directors of the company, and they are managing the company. So this is the company. Okay. So the shareholders have appointed the directors to perform management of the company. So principal and the shareholders and the directors have got an agency relationship. Shareholders and directors have got an agency relationship, which means what? Which means that the directors are the agents of the shareholders. The directors are fulfilling the objectives which shareholders want to fulfill. So directors are the agents of the shareholders. This is the agency principle. So shareholders would ask the directors to do some work. What is that work? Managing the company. So directors are accountable to the shareholders. Shareholders are the principal and director is the agent of that principal. So director is not functioning independently. Director is functioning on the instructions of their principal, which is the shareholder. This is the concept of agency theory. Now guys, same theory is applicable on management audit. It's also. So the management auditors are the agent of the shareholders. And the objective of management audit is to ensure that the directors are taking decisions appropriately and suitably. So the management auditors are also nothing but the agents of the shareholders. And since there's an agency relationship between shareholders and the directors, this agency relationship is actually requiring the shareholders to vouch for the performance of the directors. Directors wants to the shareholders want to assess the performance of the directors, and shareholders are appointing the management auditors to assess the performance of the directors of the company. So this agency relationship which is there between the shareholders and the directors, this agency relationship triggers the management audit. So what is the basis of management audit? This is this agency relationship between shareholders and the directors. Since shareholders are directing the directors to do certain things as their agents, they want to appraise their performance also. A management audit is a way to appraise performance of the directors of the company. So it says an agency in broad terms is any relationship between two parties in which one is the agent and other is the principal, and the agent represents the principals on a day-to-day transactions. The principals or the principal have hired the agent to perform service on their behalf. Most commonly, that relationship is one between shareholders or stakeholders as principals and company executives as agents. So who are the principals? Shareholders are the principals. Who are the agents? Company executives. Company executives means board of directors are the agents of that particular principal. Principal is the shareholders. Management audit extends the examination of accountability between management and others at large. Audit mechanism ensures this accountability. So the directors, I've told you in my earlier diagram. Please see this diagram again. Please see this diagram again. Directors are accountable to the shareholders. Directors are accountable to the shareholders. Now, this accountability is to be tested whether directors are performing work to the best of their abilities or not. And this testing will be done by management audit. Since shareholders want to know whether directors are performing their work to the best of ability or not, therefore they hire management auditors. Since directors are accountable to principal who are the shareholders, shareholder cannot analyze all the decisions of the directors very well, so they hire management auditors who are the experts in this particular area. So this is the backbone of management audit. Agency theory, agency principle is the backbone of management audit. Now, what are the objectives of management audit? What are the broad targets or broad aims that we are wanting to see in the management audit? That is what we are going to see now. All right. Screen is not clearly visible. Is my screen clearly visible? Someone is saying screen is not clearly visible. I can see the screen clearly visible, guys. I don't see any problem. Please let me know if there's any problem in the screen. Okay. Now, what are the objectives of management audit? What is management audit focuses on? What are the aims which management audit tries to accomplish? Obviously, the first aim is to appraise the performance of the management. The words that I am highlighting, those words are very, very important from an exam standpoint also, guys. So appraise the performance of the management. What do you mean by appraise? Appraise means assess. Appraise means assess or to analyze. So the first objective of management audit is to analyze the performance of the management of the company. And who gets this analysis done? The shareholders gets this analysis done. That is the first objective of management audit. We want to know whether the performance of the management is appropriate or not. Second, it highlights the decisions and activities that are not in conformity with the organization objectives. So we want to know what are the decisions which board of directors have taken which goes against the objectives, overall objectives of the organization. What are the decisions which management has taken which goes against the objectives of the organization? And we want to know the reasons for those decisions. So if any decision is made against the company, why is just that decision made by the board of directors? That is what we want to know. So we want to highlight what are the decisions that are against the goals of the company, because the ultimate objective is to attain or obtain the goals of the company. Why are board of directors making such decisions which are going against the company? We want to know that. Ascertain that objectives are properly understood at all levels. So we want to know whether the objectives of the company which have been clearly stated by the shareholders, whether those objectives are being fulfilled or not, whether those objectives are being understood by the management or not. Because, you know, shareholders do not want profit maximization. Shareholders want long-term growth, and board of directors are working towards profit maximization. Although both of them are working for betterment of the company, but the goals are not aligned. The goals are not aligned. So the management should be aware. The management should know what are the goals which they need to pursue. If management are not aware about the goals which they need to pursue, then guys, there is a problem. So the management should understand the goals. Number 3, ascertain the controls provided at different levels are adequate, effective in accomplishing management objectives or plans of operations. So guys, yesterday in the yesterday's live session, I discussed in details about internal controls. You had studied internal controls in your intermediate as well. Control means how do we make sure that our objectives, management objectives are fulfilled. We need to have some checks and balances in the organization, because organization is so big that management cannot itself come to check each and every transaction. So all the transactions should be auto checked. It should be an auto check model. So controls should be such that they ensure that management objectives are fulfilled. For example, management wants to ensure that there is no leakage of inventory when it moves out of the company. It should be properly recorded. No one should steal. Sometimes employees steals the inventory, they sell it outside. Sometimes this happens in many companies. So management wants to ensure that this doesn't happen. So what are the controls which we will put? We will ensure that whatever material goes out of the company's gate, there should be a CCTV camera which captures each and every material. Who is taking that material out, whether he has taken authority to take that material out or not, whether he has entered in the gate outward register about these material or not. Everything should be controlled. So control should be very much in place. Evaluate plans which are projected to meet objectives. So the management auditor should see what are the plans which the board of directors have made to achieve the objectives. And if those plans are not good enough, then management auditor can tell the shareholders to change the plans. So what are the plans which the management has to obtain the objectives? They are also analyzed by the management auditor. Review the company's organization structure, that is assignment of duties and responsibility and delegation of authority. Very, very, very important point, guys. Usually, when a company has a very heavy organization structure, then management becomes difficult. So there are various verticals. MD sitting on the top, and there are several juniors to MD. Then there are several other juniors to MD. Then there are hierarchy, which is very lengthy hierarchy. Guys, the hierarchy which is very lengthy hierarchy, or if there are multiple companies, subsidiaries and step subsidiaries, and further subsidiaries, if there are hierarchy which is very lengthy hierarchy, then guys, that will definitely that will negatively affect the organization. So the management auditor should review the company's organization structure. Organization structure should be perfect. Organization structure should be absolutely correct in respect of the company. Organization structure can be reviewed by the management auditor. Then optimum utilization of resources. This should be analyzed by the management auditor. Man, machine, methods, money, material, everything should be optimally utilized. Nothing should be wasted. This should be analyzed by the management auditor. Then to highlight the efficiencies in objectives, policies, procedures, and planning. So whatever efficiencies can be gathered in objectives, policies, procedures, planning, whatever we can do efficiently, whatever work we can do efficiently in the objectives, whatever changes we can make to make our objectives, policies, procedure more efficient, management auditor should highlight. To suggest improvement in methods of operations. So if there's any operation which is carried on, and there can be some improvement in that particular operation which can reduce the cost or increase the revenue, this should be highlighted by the management auditor. To highlight weak links in the organization structure, whatever is the weak link in organization structure, whatever is weakness in the organization structure or internal control system, any weakness in the internal control system, that should be highlighted by the management auditor. Now I'll give you a very interesting an example about internal control system, which I usually give in the examination also to make you understand what is internal control system. Okay, so I want 2 volunteers. First volunteer is Saurabh Mukherjee, okay, and second volunteer is Sushmita Roy. Okay, Saurabh Mukherjee and Sushmita Roy. Okay, I have 2 students, Saurabh and Sushmita. Okay, now Saurabh and Sushmita are hypothetically in relationship with each other. Okay, and Sushmita is is aware that Saurabh is taking coaching classes of CMA in particular institute. Now Saurabh goes away from home at 7:30 in the morning, reaches the institute at 8 o'clock in the morning, and then he stays in the institute till 4 o'clock in the evening, reaches back at 5 o'clock at his home. This is the usual the tenure or the usual life of Saurabh. Now Sushmita is a little skeptical. Sushmita is a little little bothered about why such a long period of coaching is there for Saurabh. Okay, so what does Sushmita do? Sushmita would call up sister of Saurabh early in the morning 7:30 and ensure that yes, Saurabh has moved out of the home. So yes, sister confirms to Sushmita that yes, Saurabh has moved out of the home. Then Sushmita will call up the reception of the coaching institute and will make sure that Saurabh has reached the institute, the coaching institute. Yes, Saurabh has reached the coaching institute after a point in time. Okay. Then when Saurabh moves out of the coaching institute, then Sushmita will again call up the coaching institute, will ask the coaching institute people whether Saurabh has moved out. The coaching institute people will say yes, Saurabh has moved out. Then after half an hour or 45 minutes, she will call sister of Saurabh to ensure that Saurabh has reached home. Okay. So guys, this is an audit which is done by Sushmita of the activities of Saurabh. But Sushmita has not done complete checking. She has only done control testing. So whatever are the major controls, she has tested those major controls. That's it. She has not done complete checking. What if Saurabh has bribed her sister? Saurabh has bribed the receptionist, and Saurabh has bribed both of them. And Saurabh has committed that he will give Dairy Milk Silk to both of them if they lie to Sushmita. This can very much happen. The controls can go for a toss. Control can be lost. So what should Sushmita do to attain absolute assurance? What should Sushmita do? Sushmita should hire a private detective who can follow Saurabh in each of the classes, who can sit inside the classes and observe the activities of Saurabh. That is not control testing. That is complete checking of the transaction. So there are two ways primarily where audit is done. Number one is control testing. We test that controls are working fine, and if controls are working fine, then we are reasonably sure that the entire transaction is working fine. That is method number one. And method number two is a detailed analysis or scrutiny of a particular transaction. Method number two is much more expensive. Method number two is much more time taking. Therefore, that method is undertaken only for key or important areas. It is not taken for all the areas. So control testing, internal control testing is one of the major things that is being checked by the management, or that all the controls are working fine. Management should not bribe those control keepers to his favor. Management should not do that. Okay. So these are known as internal controls, and internal control system should work perfectly, because we can test internal controls more for more number of transactions as compared to checking the entire transaction. We cannot do that. So management auditor will ensure that internal control system is working fine, and management is not lapsing the internal controls. Management is not removing the internal controls. This will be ensured by the management auditor. So internal control should be working fine. To suggest management by providing health indicators and help prevent sickness or help curve cure in case of sickness. So if company is moving towards sickness means situation where the net worth of the company is less and the accumulated losses of the company is more. This is the situation where the company is said to be sick company. Sick company means where net worth is less, net worth of the company is less, and the losses of the company is more. In those situations, the company is said to be a sick company. Okay. So management auditor can suggest ways of treating this sickness. Management auditor is like a doctor. He's a doctor of management. Okay. He can tell you that for this particular sickness, you can take certain step to remove sickness. So this sickness can be treated by the management auditor. So it helps prevent sickness, helps cure in case of sickness. To anticipate problems and suggest remedies to solve them. Whatever problems can arise in a particular management, that can be analyzed by the management auditor, and management auditor can suggest the ways to improve those problems also. So these are the objectives of management audit. Management audit wants to pursue these objectives. Now, what are the needs or benefits of management audit? What benefits can be expected out of management audit? Guys, not a different concept. The objectives can turn into benefits. Okay, please be a little smart in studying theory. Okay, the objectives can only lead to needs or benefits. These are not two separate topics. Okay. Number one, it helps management in framing basic policies of the organization and to define objectives. Two simple things. Management auditor will tell you that you have this problem, your objectives are faulty. Please redefine your objectives. You will redefine your objectives. You will redefine your basic policies. Management auditor will help you in doing that. Number two, management audit helps in preparing a viable and achievable plan. So if your plan is faulty, if your plan is not directed towards the objectives of the organization, management auditor will help you to recreate that plan or to realign that plan according to your organizational objectives. Third, it helps in setting organizational framework to implement the plans. So the management auditor can also help you to implement the plan, how to successfully channelize the plan or implement the plan. That will also be taken care of by the management auditor. A management auditor can help you in designing the systems and procedures so that your work is not affected. So to design the procedures and systems, what system should be followed in production process, what system should be followed in distribution process, or what system should be followed in collection process of the money collection process, what should be the money collection process. All these things will be taken care of by the management auditor. So management auditor is a multifaceted person, guys. He will help you in many things. In your plans, in your execution, everything will be taken care of by the management auditor. It helps in designing and reviewing the management information system. So management information system is the digital system, guys, which gives appropriate information to the management. So if suppose management wants to know what are the sales for the period of June 2022, management information system will give the sales. So management information system is designed in such a way that it helps management in taking relevant decisions, and it gives information to the management of the company. It helps in coordination, motivation, and control of the operations. It assists in SWOT analysis. So management audit also helps in SWOT analysis, strength, weakness, opportunities, and threats. These will be analyzed by the management of the company if management audit is required to be done. It helps government in identifying improper or wasteful use of funds. So improper or wasteful use of funds will be treated if the funds are being wasted, if the funds are being misused by the company, then those funds will be that check will be done by the management auditor. So management auditor can also be hired by the government of the India. Okay, so government can have some mismanagement within itself. Government companies like PSUs can hire management auditor to ensure that the funds are not wasted, to check extravagant organization practices. If organization practices are too extravagant, they are spending huge amounts in unnecessary things. All these things can be checked by the government of India through management auditors. Okay, because guys, in government organization, you must have heard that spending is lavish. They don't bother about spending money. They don't feel pain in spending money because it's people's money, right? So management auditor can help in curb the wasteful use of funds, curbing inefficient use of physical resources. So the management auditor can also curb inefficient use of physical resources, especially in public accounts. Then Indian financial institutions, banks, Board of Industrial Financial Reconstruction (BIFR) have found management audit useful in monitoring sick industrial units and to help units in their rehabilitation. So now, what is the use of Indian financial institution or banks or Board of Industrial Financial Reconstruction organizations? These organizations are targeting the sick companies in India, and they help them in terms of monetary benefits, in terms of management related guidance. They help them to achieve their desired targets. So there are sick companies which are loss making companies. The management auditor can help them in reviving their sickness and making them profitable again. And who will make them revive? The Board of Industrial Financial Reconstruction, BIFR, will help them to reconstruct through management auditor. Management auditor will visit those sick companies and he will analyze why these sick companies are sick, and he will give you the suggestions to revive these companies. Railways of India have used management audit in their finances to open discussion by public to improve the resource mobilization, reduce cost of operations, and conserve their scarce resources. So Railways of India have found management audit very, very useful. They have employed management auditors to manage their operations, reduce the cost of operations, reduce the cost at various places, and mobilize the resources. Railways have used it. It can help in analyzing social cost benefit analysis for public projects like dams, powerhouses, national highways, etc. So guys, all these projects like dams, powerhouses, when you construct them, there is a social cost to it. You have to cut down many trees. You have to disturb the ecology of that particular area. Then the river flow, you will stop that river flow. If you make a dam over that river flow will stop. All these problems will arise if you if you don't do social cost benefit analysis of these things. Now, these problems can be curtailed if management auditor comes into picture, and he would analyze before the project starts whether this particular project will have any social ramifications or not. He will analyze it. It is essential whenever a unit is planned to be taken over, or amalgamation or merger with another unit is proposed. So whenever amalgamation happens, whenever two companies are joining hands, in that scenario, the takeover plan or amalgamation plan is not successful unless and until management auditor comes and analyze the organizations. Scope of management audit. What all areas can management audit touch? Guys, I've already told you. Unlimited scope is there. Unrestricted scope is there. Management audit can be very, very vast. It can be very, very vast. Okay. Since management audit is very, very vast, therefore, the scope is unlimited. So management audit does not have any predefined specific area of conducting audit. It is much wider in scope. So it is the decision of the person who's hiring the management auditor and the management auditor. To what extent will this management audit be done? Now, the suitability of plans, activities, decision of the organization with the desired objectives and aims. Now, the management and board of directors, all of them are following the policies to pursue management goals. Okay, so now the scope will be defined according to the plans and activities and decisions which are directed towards the desired goals. All the scope will be directed to those activities. Current image of organization among customers, general public, within its own particular industrial or commercial field. So what is the image of the organization amongst its members, amongst its customers? That image, whether it needs to change or not, this will also define the scope of management audit. So while determining the scope of management audit, we need to first consider the plans, objectives of an organization. Where does organization want to go? Secondly, what is the image which this particular organization carries in the market at large? Whatever image this particular organization carries, whether that requires a change, that is also a consideration while ascertaining whether management audit is required or not. Then efficient utilization of resources of the organization, that will be definitely a scope of management audit. Rate of return will definitely be a scope of management audit. Management audit will definitely check what is the return which shareholders are getting on their invested capital. Then management audit will check the relationship of the business with its own shareholders, investing public in general. Employee relationship will also be seen by the management auditor. What is the relationship between employer and employees? And I've already given you an example, guys, in my live experience. There was an observation of the employees of the company, although very, very small observation, but a grave observation, which came in the management audit report. The aims and effectiveness of management at its various levels, such as top level, middle level, and operational level. So what is the effectiveness of management at various levels? This will be scope of management audit. Financial policies, definitely finances will be one of the areas of management audit for sure. Controls, production, sales, distribution, any other function of organization will all be part of management audit. Then what will be the qualities of management auditor? What should management auditor possess? Should he be very, very expert in Companies Act? Should he be super expert in Companies Act? Should he be super expert in Income Tax Act 1961? What should be the expertise of the management auditor? What should management auditor do? What should be his expertise? No, guys, management auditor should not be a Companies Act expert. Management auditor should not be an auditing expert. He should not be a taxation expert. No, guys. See the qualities of management auditor. He should be able to understand the business problems first of all. He should be aware about what are the problems that a business face. Then he should have general understanding on motive, purpose, and objectives of the organization. What is the thing that organization is chasing? Is it chasing profitability or is it chasing long-term growth? That is the objective. Then he should be able to assess the program of the management. So management auditor is nothing but a programmer of the management. So he should be able to chase or align himself with the management's objective. Then he should have knowledge about principles of delegation of authority, because management is all about delegation. Of authority. So he should be aware about the principles of delegation of authority. Then he should be able to understand the internal control devices, flow charts, flow of work, etc. He should be able to understand. Then, of course, guys, basic knowledge of company law, custom law, labor law should be there with the management auditor. And if that is not there, then he will not be able to analyze the financial aspect of a particular transaction. So these understandings are definitely required by the management auditor. Ability to prepare reports to various levels of management. So the management auditor should have the ability to prepare reports to the various levels of management. Report writing is one of the very important skills which a management auditor should have. In brief, he should be able to write many things. Okay, report writing skills are very much required by management auditors. Capacity to adjust personnel of different types with tact. So he should be very adjusting in nature, which means he should be able to extract the necessary information from various people of the organization. So he should have the capacity to adjust the personnel of different types of tax, etc. Now, what are the functions of management auditor? The functions of management auditor will include marketing, manufacturing, human resource, personnel, finance, research and development, anything and everything. Anything and everything should be the functions of management auditor. He should venture into anything and everything. Of course, for once he cannot analyze everything, so he should in phases analyze things. So in first phase he can analyze marketing, human resource and research and development department. In the second phase he can analyze manufacturing, personnel and finance department. This is how he can divide his work, but his work is wide in scope. Okay, then I'll quickly come to sources of information to management auditor. Now this is an important point, guys. From where will the management auditor obtain the necessary information? Where will he get to know whether a management is doing production function properly or not? What is the source of information which management auditor will see to have knowledge about the information? So the sources of information of management auditor are: number one, management survey. Management auditor can prepare a questionnaire, can prepare a survey whereby management will answer certain questions, and based on that questions, management auditor will further analyze the situation. So, for example, survey questions can contain questions to the production managers and the production team, whether the input-output ratio is as per the industry norms. What is the input-output ratio of the industry, and what is the input-output ratio which is attained by the company? This quick comparison, if it is given by the production team, then management auditor will be able to know about the inefficiencies and wastages very, very easily. Simple, guys. If the management auditor takes care about the input output ratio, if it asks the input output ratio from the management, then definitely he will be able to understand whether production is doing fine or not. So this is the best way to identify possible control weakness. Through this technique, practical working information is obtained on functions and how it is actually functioned. So the management will be able to understand, the management auditor will be able to understand what are the difficulties in a particular area using management survey. Guys, you must have also seen, when you go to a particular facility like a hotel, a restaurant, they ask you to fill up a feedback form, whether the ambience of that particular restaurant was okay or not, whether the food was okay or not, whether the staff was courteous enough or not. All these things are in a checkbox manner, in a checklist. All these things are tick or not tick by you. That is management survey. That precisely is management survey. That is management survey. Okay, sir, got it. So this is a form which you will get in your management survey. Then management reports. So guys, there are various management reports which management auditor does not prepare. It is prepared by the management, or it is prepared by any other third party expert. For example, statutory audit report. Guys, even statutory audit report will give many hints to the management auditor with respect to the expenses and income of a particular organization. And then management auditor can tell that yes, your expenses are shooting up at a very high level. Why are they shooting at a very high level? Why is personnel expense at such a high level? Management can then question it. Management auditor can question it. So there are various management reports which, if given to the management auditor, he can take hints from those management reports, and the management auditor can actually start his working or start his analysis using the information which is given in management reports. The auditor's review of management and internal reports may be used to obtain information on progress, status, or accomplishment of work, and also on information of possible problem areas. Management auditor can obtain the management reports from the management. Management auditor can say, okay, give me last year's financial statements, an audited report. Give me last year's physical verification report. Give me last year's internal report. And then after reading that internal report or statutory report, management auditor can take a hint on how is the organization functioning. So yes, this is the second source of information of management auditor, which is management report. Then internal audit or inspection reports, guys, these are also management reports. Internal audit report or inspection report will give an insight on how the things which are there in the organizations, like the inventory, like the fixed assets, whether they are actually inspected and they are there or not, or is there any leakage in the system. Physical inspection, of course, the management auditor can physically visit the plant, it can physically visit the floor to ascertain what are the wastages which are there. Sometimes seeing is believing. Okay, seeing is believing means when you visit a particular office, then you are unable to understand what are the wastages which are there in this particular office. So physical inspection is also another technique of gathering information. Discussion with officials and employees, this is a very famous and a very simple way to start your management audit. You discuss your problems with the management or the employees, discuss their problems with you, so that you can put those problems into perspective and you can analyze what are the reasons of these problems. So discussions with officials and employees is a very, very important tool to analyze the requirement of management report. Then testing and procedure. Testing procedure and practices. Test checking of practices and procedures in the problematic area on a sample basis can be one of the areas of gathering information about the management. So we test the procedures whether they are working fine or not, we test the practices whether they are working fine or not, and these tests will be then evaluated for management report. So these are the ways in which management auditor can gather the information. Okay, guys, just give me 1 minute. I will just put charger on my laptop and I'll be just back. Give me just 1 minute. Okay, so the next is technique of management audit. What are the techniques in which management audit can be done? What are the analysis, the point of analysis which can be done by the management auditor? That is what we are going to study now. So management auditor can have accounting and economic techniques. Guys, these techniques are used by you also for analyzing the financial statements of a particular company, like break-even analysis. These are very basic accounting and economic techniques. Okay, these are not related to people, these are not related to non-monetary things, these are only related to monetary things, like break-even analysis can be done, budgetary control system can be analyzed, cost management techniques you must have studied in your SCM, strategic cost management. You must have studied the cost management techniques, discounted cash flow technique, net present value method technique, cost benefit analysis. So these are very basic accounting techniques which are used by management auditors to ascertain the financial health of the company. Please note that this only highlights the financial health of the company. Yes, sir. Then there are certain scientific techniques like computer models to take decisions on a material mix, product mix, make or buy decision. So guys, board of directors would have taken decision on material mix. X and Y both are to be mixed in which ratio to get the optimum output. This is known as the material mix. Now management would have taken the decision, but the decision is wrong. So management auditor should take this decision again using the computer models or using the scientific techniques to ascertain whether the material mix is appropriate or not, to ascertain whether the product mix is appropriate or not. So these are certain scientific techniques. The network analysis, then mathematical programming, linear programming, All these are scientific techniques whereby the management auditor can analyze whether the decisions which are taken by management with respect to production, with respect to selling are correct or not. Then there are statistical techniques. Statistical techniques means, guys, we had studied statistics in our, in our foundation level, and some bit of statistics we had studied in our intermediate level in form of OM, organization management. Okay, so those techniques can be used by the management to ascertain, by the management order to ascertain whether management is taking right decisions or not, like Monte Carlo simulation, right? Exponential smoothing, interfirm comparison, activity sampling. So these are certain statistical tools which may be used by the management auditor to know whether the decisions which are taken by management are correct or not. Then personal technique, which means people related technique. What is the attitude and aptitude of people? You can do a survey within the people. What is attitude of people with respect to the management of the company? Whether people are very angry with the management of the company, or whether people are very happy with the management of the company. This is personal techniques, aptitude test, attitude test, ergonomics, man-machine relationship, training methods, profitability, productivity measurement. Then there are certain general techniques like statistical theory of management is an attempt to emphasize what should be the practical approach to a problem. Brainstorming. You can simply do a brainstorming. Brainstorming means you can sit with various people of management. You can sit with various people of management and discuss what are the issues which they face, discuss what is the resolution of those issues. So brainstorming is a very normal general technique. Transfer pricing, management by objectives, management by exception. What is management by objectives, management by exception? This is whether management only focuses on the key areas which are relevant for the organization, or whether management wastes its time on taking very minuscule small decisions. If management focuses on very small decisions, then management's time is getting wasted, guys. If their time is getting wasted, then that is not a good indication for the organization. Then management evidence. What are the evidences which can be gathered by the management auditor? So, in case of financial audit, the evidence are very same, very simple. Like you get vouchers, you get invoices. But what evidence will you get as a management auditor for the decision-making capacity of the management? What evidence will you get? It is difficult to collect evidence in case of management auditor. In case of management audit, it is difficult to gather evidence. So what evidences will we gather for proving that this management is bad or this management is good? What are the evidence which we collect? The discussions with the people will be the first evidence. Guys, there are no tangible evidences. Discussion with the people. Whatever people have said about management, that will be the first evidence which we have against the management of a particular company. And guys, this should be recorded well. This should be in recording with you. This should be recorded by you properly, because you should not be in air saying that management is bad because we have discussed with the people. Second evidence is survey and review of various reports of the organization. When we had asked for various reports like financial audit report, then we are able to understand that current ratio is very bad of a particular company. Then guys, survey and review of various reports is again a very important tool to analyze the management of the company. Physical inspection. We can actually physically, wherever we have visited physically. So if we have visited the godown physically, then we are aware that in the godown, there is no system of inventory in and out. In and out bins are not there. Proper recording is not being done in the warehouse. All these things we will get to know when we physically visit the warehouse. Okay. So physical inspection is again a management evidence. Then test examination of various transactions. Whatever transactions have happened, the examination of those transactions, important files, is an evidence. Monthly performance review statement, minutes, notes to above all personal observations. So minutes, notes, monthly performance statements, all these are management evidence which management will give you. So what is the constituents of management audit team? Who all should be in the management audit team? Should all the CMAs be in the management audit team? Or should all the chart accountants be in the management audit team? Because guys, in cost audit, obviously there'll be all will be CMAs or CMA interns or CMA articles. All will be CMAs, right? In financial audit team, all will be chart accountants or articles of chart accountants. But in management audit, same profession people are not required. We need people from multi-disciplines. For example, we need chart accountants, we need engineers, we need MBAs, we need financial consultants, financial experts. So the team of management audit cannot be restricted to only CMAs. It has to be wide in scope. So marketing, finance, manufacture, expert of all these areas should be there in our team. Production, material, every area expert should be there in our team. Now, what do you mean by management audit program? First of all, what do you mean by program? Guys, program means plan. Program means plan. So whenever you go for a picnic, you plan out things. Plan out means where should you go? Who all from a family member should go? What food do you need in the picnic? What to drink do you need in the picnic? What do you need? You do need a mat to sit in the picnic in the garden. All these things are required to be planned, and this plan is known as program. So management audit is also required to be planned. How many people are required? What will be their qualification? What will be their responsibility? What will be their area of accountability? All these things should be predetermined. This is known as the management audit program. Now, first of all, we need to know the organization's objectives and plan. What are the objectives which the management is pursuing? That we need to know. Then we need to study the policies and practices of the management. What is management actually practicing? What is management actually doing on ground to attain the objectives? Critical review of organization structure. We need to know the structure. Study of systems and procedures. Evaluation of operations. Study of efficiency of use of physical resources. Maintain suitable monitoring system through management information system. Check the adherence to statutory obligation. Above all, review efficiency of manpower handling, which ultimately results in organization structure. So as all these things are required in the management audit program. First is the organization plan. Second is the policies which management is following in that organization plan. Third is the structure of the organization. What is the structure of the organization? Whether the structure is a suitable structure which is yielding profit or not. What are the systems and procedures in the organization? We need to evaluate the operations. Then what are the operations which are inefficient? What are the operations which are efficient? That we need to analyze. Then we need to exercise proper management control. Maintain suitable monitoring system through management information system. Management information system should be properly monitored. Statutory obligations should be adhered to. Then efficiency of manpower handling should also be done. Then what are the characteristics of a good management audit report? Now, how will you say that management audit report is perfect in all respects? Okay. It should be relevant. First of all, the management audit report should be relevant. It should not contain unnecessary information. So for example, if there's an information that at a very, very junior level, the salary of one of the employees was not disbursed, it was disbursed 2 months late. Guys, this information is not relevant for the top management. What would top management do of this information? That some junior level staff's salary was disbursed 2 months delayed. What would management do of this information? So this information is not relevant to the management. So the first thing that is to be there in the cost audit report, management audit report, is that it should be relevant. It should pertain to the purpose, pertinence. It should pertain to the purpose for which it is serving. Second is it should be comprehensive, which means it should cover all the aspects of the organization. All the aspects of the organization or all the aspects of the chosen area should be there in the management audit report. It should be comprehensive. So for example, if you have chosen production function as your subject matter of management audit, then all the departments of production function, be it a quality check, be it the people who are infusing raw material to the machine line, be it the people who are packaging the final product, be it the people who are transferring the final product to the trolleys and trucks. The entire aspect of production function should be analyzed. So the audit report should be comprehensive. Brevity, the audit report should be brief. Guys, I'll tell you very, very important thing, okay? As you move up the ladder means as you move to the different level of management hierarchy, your attention span reduces. So a CEO's attention span is very, very less, or a CFO's attention span is very, very less. He cannot listen to your lengthy story. You have to be to the point. You have to tell the exact point. You have to be to the point. They cannot, go on and on with your stories. They cannot go on and on. So your audit report should be brief. Your audit report should be concise. That is the point. Your audit report should be very, very brief. The audit report should be issued in a timely manner, which means audit report is to be issued within a few weeks of the conduct of audit. It should not so happen that audit report is being issued 2 years down the line, when all the problems which existed in the management have been resolved automatically. So, guys, in case of statutory audit, cost audit, and any other audit, there is a fixed timeline which is given. There is no fixed timeline in management audit, but it should be released in a reasonable time. It should be released in a timely manner. Motivating. So, management audit report should not be demotivating, it should be motivating. So you should not highlight all the negative points in the management. You should not say that the management of the company is very bad, it is not taking good decisions, it should be changed completely. No, it should not be written in a negative language, it should be written in a positive language. Example is given to you: the production planning was done inadequately. It may be written that the production planning may be improved by taking the following steps. So negative language should not be used, positive language should be used in your audit report. Formatting and presentation is very, very important, guys. Font size, spacing, font type, this should be adequate. Okay, because this enhances the quality of the audit report. Although the content of the audit report is most important, but its presentation is also equally important. So the font size, the font type, all these things are relevant in case of a management report. So all these things are taken into consideration. Now, contents of management audit report. What all things should be there in management audit report? So 4 important things which are required in management audit report is facts, person who are responsible for the areas which are being audited, person who is responsible for these facts. Then deviations, if any, in the actuals, performance standards, and effect of result of the financial and physical status of the organization. So these are 4 important things that a management audit report should contain. It should contain the facts, it should contain the people who are responsible, it should contain the deviations, if any, from the performance. So report must allow the management to, what is the objective which management wants to pursue? It wants to study the comparison. What was the cost earlier year? What is the cost current year? Comparison should be there in the management audit report. Review of organization to appraise the effectiveness of executives. What are the executives doing? What are the directors doing? What are the efficiency of the executives? Departmental weakness should be there. Then prudent management practices. How can we improve the management of the organization? That should also form part of management audit report. Help in change of management mindset. Indicate suggestions that come from people themselves and get solutions to the problems. So all the problems should not be written. The solutions to the problem should also be written in the management audit report. So these are the essential elements of the management audit report. Now, guys, in certain cases, in certain sectors, there are certain special reports which are expected from the management auditor. There are certain specific things which are to be introduced in the management audit report in certain sector. For example, if you are doing special audit of a bank, if you are doing management audit of a bank, then guys, they will definitely expect that the debt servicing bit of bank should be clearly disclosed. What do you mean by debt servicing? Debt servicing means how well is bank servicing its debts. Whatever debts bank has, how well is it servicing its debt? So for example, if bank has given loan to someone or has taken loan from someone else, then is the interest component which is being paid or which is being received is adequately done by the bank. Similarly, creditors want to know whether the statements which are made in the report are accurate and reliable. The statement of financials are accurate or reliable. Creditors want to know the creditworthiness of the company. So creditors also want to know all the statements by the auditor should be clear and positive. Explanatory notes should also be there. So guys, bankers and creditors want to additionally know the security due of debt servicing. What is the debt servicing capacity of a particular organization? So banks want to know if a loan has been given to the company, then banks want to know that whether that loan can be repaid by the company or not. So if you are doing management audit of on behalf of a bank, if you are doing management audit on behalf of a bank for a company, then you should necessarily include whether the company will be able to repay the loan or not. This aspect should necessarily be included in the management audit report. Naturally, guys, if bank has hired you as the management auditor, it will definitely want to know whether the loan which it has given to the company will be repaid or not. Then what would shareholders want to know from the management auditors? What would shareholders want to know from the management auditors? That is the next question. Guys, shareholders want to know about the organization's business, first of all. Okay. Full facts about the organization business, whether organization business is being carried on properly or not. They want to know right and correct message. They want to know right facts and correct facts. Okay. They want to know in the prospectus whether right information is given or not. In the prospectus, because shareholders are bothered about prospectus while taking the shares. So they want to know whether prospectus is showing the right information or not. Then shareholders also want to know between the line implications of auditor's report. So ultimately, the auditors, the financial auditors sometimes try to mince with words in the financial audit report. So the shareholders want to know the unknown facts. What is the between the line which is written in the auditor's report? So whenever you are hired by the shareholders as a management auditor, you should additionally keep in mind these important points. Okay. What would employees want to know? What would employees want to know from the management auditors? Guys, employees would want to know obviously the business employees want to know what is the business being done, is it done efficiently or not. Then the unions of the employees want to know if there is any misconception with respect to the management of the company, that management of the company does not give bonuses even when they have profits. Sometimes union feels that. So the management auditor would ensure that it sees the financials and sees that bonuses, where if they are not being given, then there's a reason why they are not being given. Okay, so management auditor will ensure that the report must gain confidence of the employee and earn respect of the statement. Report should be consider the needs of the employee. So whatever employee needs from the management audit report, that should be included in the management auditor report. Auditor's view will be expected to be totally unbiased. Small businesses. If some small businesses have hired you as the management auditor of some big business, okay, so if sometimes all the small vendors of Reliance Industries Limited want to know whether Reliance Industries Limited is treating the management properly or not. So small businesses want to know whether the big business is treating everything right or not. So they can hire management auditor with respect to Reliance Industries Limited. Report to be designed in a very simple way. If it is specifically directed to any person or small group of person, suggestions in the report must be based on proper appraisal of the problem. Okay, sir. And yes, we are moving towards the last topic of our chapter, which is management audit and operational audit. Now, guys, there are two words: management audit and operational audit. There are two words: management audit and operational audit. Now, operational audit means we want to ensure that all the operations are being done in appropriate manner, efficiently, without any inefficiency. The operations are being carried out. So operational audit is focused towards operations like manufacture, like production, like distribution, like finance. Everything should be done in a proper manner. That is the objective of operational audit. Now, what is the objective of management audit? Management audit focuses on operations as well as all other parts of the organization, like finance, like customer care, like creditors care, like shareholders care. Everything is included in management audit. So management audit, although has got a very important constituent as operational audit. Operational audit is definitely an important aspect of management audit, but management audit is wider in scope. Management audit is wider in scope. Operational audit is a part of management audit, but yes, operational audit is the major part of management audit. So if I were to tell you some number, 70% of management audit is operational audit. 60 to 70% of management audit is operational audit. So management audit and operational audit are two sides of the same coin. However, management audit is a little wider term because it includes financial audit, cost audit, company secretary audit along with the operational audit. So operational audit is just a part of management audit, but operational audit is a very big part of management audit. So management audit is wider in scope as compared to operational audit. Management auditor is concerned with management quality of management, whereas operational audit is concerned with quality of operations of an organization. Okay, so I'll show you a coin. Okay, this will tell you what is the relationship between. Acha, just underline one very important line, guys. Very important line. It is not that he just verifies the operations of control, procedure, fulfillment of plans in conformity with the prescribed policies. So the management auditor is not only analyzing the operations of a company, he is doing much wider role. So we can say that the two audits are complementary and supplementary to each other. This is the statement which I'm going to highlight. So management audit and operational audit are two faces of the same coin. This is the same. This is a coin, right? 10 rupee coin is there. Heads, tails. Management audit and operational audit are two faces of the same coin. They are complementary and supplementary to each other. Management audit is incomplete without operational audit. And operational audit will be little less if management audit is not there. Operational audit is not sufficient enough. Management audit will be incomplete without operational audit. So they both are, they both are congruent to each other. They both are aligned with each other. All right. And we move on to the last aspect of our topic, guys. Management audit, internal audit, and financial audit. The difference between these three kind of audits. Okay. Now, management audit appraises the management. Internal audit assists the management in identifying problems with respect to operations. Internal audit is typically focused towards operations. Okay. So it helps the management in identifying problems with respect to operations. Management audit identify problems in the management. Internal audit identifies the management, identifies the problem with the management. Let me repeat. Management audit identifies the problem in the management. Internal audit identifies the problems with the management. So that is the difference. Financial audit, cost audit, these are specific audit which are done in specific areas. Okay, like financial audit only focuses on financial statements, cost audit only focuses on cost statements, secretarial audit only focuses on secretarial statements. So these are specific areas audit. So management auditor is a friend, philosopher, and a guide. Internal audit is a policeman or a judge who will judge your performance. He's a friend, philosopher, and a guide, management auditor. And a normal audit is a watchdog or a judge. Okay. Outside team or management conducts management audit. Similarly, internal or external person does internal audit. So both of these are same. Both of these are same. Specifically designated person for these statutory audits because these are held by law. Force, voluntary. This is statutory in some cases, voluntary in some cases. This is mostly statutory, guys. This is mostly statutory. Area. Complete management is the area. Mainly these are procedural aspects which are area of internal audit, and statutory audit has specific objectives. Similarly, guys, effectiveness and quality of management is the evaluation which is being done. Quality of procedures is the main area of internal audit. In case of statutory audit, specific information is required, like financials are prepared according to IFRS or not. That is the specific information which is required. Period covered, past, present, future. Past and present is covered in internal audit. Mainly past is covered in statutory audit. Procedure, flexible, structured procedure, highly structured procedure. Flexible means you can adopt different procedure for different areas. There's no set pattern. There is a set pattern in internal audit. It has been guided by the Institute of Chartered Accountants of India. There's a set pattern according to which internal audit is done. And of course, statutory audit is highly structured. Companies Act 2013 gives a highly structured way of how to conduct statutory audit, like cost audit, like company secretary audit, etc., etc. Reporting is done to higher people, high level people. Operational people are the people who are given the reporting, and reporting is done to designated people. Like in statutory audit, shareholders are the reportees. In cost audit, board of directors are the reportees. Time span is futuristic. We focus on future because we need to improve the organization management audit. Current and immediate. Internal audit focuses on current period, and current and immediate past is the focus of statutory audit. Period regular. We do regular. Management audit can be done regularly. Internal audit can be done regularly. The statutory audit should be done annually. And yes, we come to end of first section, management audit of our syllabus, guys. So we'll be starting chapter number 2. Before we start chapter number 2, please tell me, how's the Josh with all of you? Are you all tired? Are you all tired, or should we continue with our marathon? Are we tired? Are we tired? Please give your answers in the chat box. Are we tired? Or how's the Josh? Oh, almost 80 people are live currently. And yes, 80 people with one objective, one goal in our mind. The goal is very, very clear. The goal is to qualify CMA in June 2022 attempt. To qualify CMA in June 2022 attempt. That is the goal which all of us are pursuing as of now. Yes, sir. That is the goal which are pursuing. And sir, we are not tired at all. Are we tired? No, not tired. Pramod is saying not tired. Rishita is saying no, not tired. Jayashri is saying no, fantastic lecture. Ashwin is saying no, continue, sir. Very high, sir. not tired. All right, that's the spirit, guys. So we are not taking any lengthy break. We'll just take a break for 2-3 minutes, guys. A water break, okay? A water break for 2-3 minutes. We'll come back after the water break. 2-3 minutes, maximum 2-3 minutes, not more than that. We'll take a water break and we'll be starting our chapter number 2, which is management audit and different functions. So yes, a break of 2-3 minutes. That's it. All right. So, yes, we are back with a bang for continuing the marathon lectures. And Saurabh Mukherjee is saying, full Josh, sir. Yes, I'm also having full Josh. Yes, we all are in full Josh and we all are wanting to score well in cost and management audit. And guys, I have not told you, but cost and management audit is the dark horse. Cost and management audit will help you score very good marks because cost and management audit is very, very scoring subject. Both BVM, SPM and cost and management audit are very, very scoring subjects. So both of these subjects should be done very well by you because these are the dark horses. And trust me, Group 4 will be qualified only because of these two subjects, because these two subjects will make your aggregate. These two subjects will be helpful in making the aggregate because these are very, very easy subject. Is this enough to score 60 plus? This is enough to score 80 plus, not 60 plus, 80 plus. All right. So let's continue, guys. Management audit and different functions. Okay. Now we need to understand certain elements of management audit, certain terminologies which are used in management audit. We need to analyze those terminologies, and only then we'll be able to understand the entire concept of management audit. Number one, corporate objectives. So, management works towards corporate objectives. Whatever are the objectives of the management would work towards them. So it's really important to understand what are the corporate objectives which the company is going to pursue. So I'll give you an example. McDonald's corporate objective is to achieve 100% total customer satisfaction every day in every restaurant for every customer. So the objective which McDonald's is pursuing is customer satisfaction. Customer satisfaction is the objective which McDonald's pursue. Guys, some companies pursue the objective of piercing through market. Market standing should be more. They should have more market standing. Some of the companies follow this corporate objective. Some of the companies follow the objective of profit maximization. Come what may, we need to increase the profit maximization. Some companies pursue the objective of increasing sales, increasing turnover. So there are different objectives which are pursued by different companies. So the first thing that management auditors needs to understand is what are the objectives of the organization that influences the direction of the corporate strategy. Because strategy or the plan will follow the objective. Whatever will be the objective, accordingly will make the strategy. So if your objective is to qualify CMA final examination in first attempt, you have to work very, very hard. You have to study. You have to study for 10 hours or 8 hours or 12 hours a day. That is your strategy. So the objective will be followed by strategy. You should have a clear objective, then that will be chased by strategy. That is corporate objective and strategy. Now, what is a corporate image? A very, very important word, guys. Corporate image, and an important concept from an exam standpoint also. Okay, image. Okay, image. So, when you see this sign, what image comes to your mind? When you see this sign, McDonald's, what image comes to your mind? To my mind, the image of a burger or a pizza McPuff. Okay, or that toy which we used to get in, that Happy Meal, that toy. All these things come to my mind instantly when I see this image, McDonald's. So what image do you want your people to carry about you? That is known as a corporate image. So for example, Tatas have a corporate image of being very philanthropic. They do a lot of charity. They do a lot of public service. They do a lot of social things. As compared to that, Reliance Industries Limited is more targeted towards profit maximization. They are more known for their business skills. They are more known for their profits. That's the difference between these two corporate world. Okay, so what image do you want people to see you as? That is known as a corporate image. So as a teacher, what image do I want to be seen as? Do I want to be seen as a person who just for money will sell the classes and will not solve the queries of the students, will not take phone calls of the students? Will I want to be seen myself like that? Or should I be seen myself as a person who believes in a fact that selling classes is a first step, and after that our role starts. We need to take calls of the students on a regular basis. We need to take test series. We need to take live sessions for the benefit of the students. What image do I want for myself in the market? Clear as that. And that reminds me, guys, Thank you so much for all the CMA final students. Thank you so much. For past 4 months, we were having a test series of cost audit and BVM SPM for past 3 months actually. And that test series has covered all the chapters of cost audit and BVM SPM. The details were given on my communities tab. And many of you have participated in that test series, and that was a ultimate successful test series. Yes, that test series will be pivotal in your results. You will see effect in your results if you have given that test series. Thank you so much for participating in the test series. So what is an image? Image is idea or procure formed in the mind of a person about an individual or an institution. So what do other people think about you? What do other people think about you? That is your image. That is known as image. What do other people think about you? As a company, what do people think about you? That is your corporate image. Corporations, like individuals, consciously build up images in minds of people with whom they come into contact. This is known as corporate image. So yes, you need to actually develop your corporate image to a very, very positive area. Sir, how do we know what is our corporate image? Just call your customers. You will know what is your corporate image. Just call your debtors. So if an individual is asking me, sir, how do I know my image? I will call up that individual's friends. I will call up that individual's teachers. I will call up that individual's parents to know what is that person's image. In case of a company, you can call up your customers to know your image. In case of a company, you can call up your shareholders to know your image. In case of a company, you can call your suppliers to know your image. You can call your bank to know your image. You can call Government of India to know your image. They will all tell about your image. So customers will tell you about product quality, prompt after sales services, regularity in maintaining supplies. Shareholders will tell your financial performance and prospect of growth. They will tell your image about both these things. Suppliers will tell you about company's liquidity, ability to honor commitments of the suppliers. They will tell you how fast are you in repaying their debts. Banks will tell you how fast are you in servicing debt, how fast are you in paying the EMIs of the bank. Government will tell you how fast are you in paying tax. Are you an honest taxpayer or not? Employees will tell you whether a career growth has been given by you to them or not. So, so image is measured by all these people. A corporate image is measured by all these people. All these people will tell you what is your image in market. That is known as a corporate image. A very, very important point. Evaluation of corporate image. How will you evaluate your corporate image? Which means how will you how will you know whether your corporate image is up to the mark or not? First of all, prepare a list of desirable attributes. See what you want to achieve as per your image. So as a teacher, I want to be known as a teacher who is very approachable to the students. That is one desirable trait. I want to be approachable to the student. I want to directly take calls and speak to the students. I want to be very approachable to the students. So first of all, list down all the desirable attributes which you want in your image. Step number 2, group them functionally and specify the qualifications. I will group them together on the basis of the functions. For example, teaching. I want my students to know me for my charts, for my easy language explanations, for my live sessions, for my tests. This is one category. I want my students to know me for my communication skills, for my approachability, for my resolution of their problems in a quick manner. This is another function. So all the attributes should be functioned in a similar way in a different segment. Assign weights to each attribute based on their relative importance. So whatever is the importance in your mind, assign weights. So the most important thing for me is to teach well. Okay, that is the most important thing. So I will assign 2 weight to that particular attribute. Involve experts in respective fields in rating qualification attributes based on facts, judgments, and interpretations. So involve experts. So I should hire some experts, some experienced teachers to show them my videos and check with them whether am I teaching well or not. So I should contact experts. Summarize the ratings under the selected groups. Present the composite evaluation to the management of the company. Ultimately, you will summarize all your understanding about the corporate image of a particular company, attributes, and its testing, and give it to the company and tell the company that this is your corporate image valuation. So evaluation is to be done on a very, very step-wise basis, on a methodical basis. First, we will define the attribute. Then we will club the attribute on the basis of their functions. Then we will give ratings to the attribute. We will rate the attribute, which is more important, which is less important. Then we will judge the attributes. Okay, we will judge what is going good, what is going bad. We will contact your customer of the company and see whether he is satisfied with your after sales services or not. We'll do that, and then we'll summarize it to the management of the company. Next is, what do you mean by corporate image? What is a corporate image? Oh, next is corporate culture. So guys, corporate culture means the culture which is there in the organization. So what is the experience and behavior of the people in the organization? That is known as corporate culture. So what are the values, beliefs, and behaviors on the basis of which people interpret experiences and behave? That is known as a corporate culture. What is the culture which you have in your organization? Is the culture of honesty, of integrity, of servicing the customer to its best ability, or the culture is of just chasing the profits? That's it. We don't want anything else. We just want profits. What is the culture? So culture is very, very important in any organization. What is the behavior of people in a particular organization? So guys, I'll give you a simple example. If you go to a local grocery shop, then in the local grocery shop, sometimes people are rude. Sometimes people will not give you importance, will not give you attention. You will ask for a product, they will say that this is for so much rupees. You pay the money and then take the product. They will not allow you to see the product and analyze it. As compared to this, if you go to a supermarket, then you will be able to see the product, take it in your hands, see its ingredients, price, everything else, and keep it back in the shelf. That is the difference in their culture. That's the difference in their culture. Culture of a supermarket is very different from culture of a local grocery shop or a local shop where all these things are there. So corporate culture, how are you defining culture, experience, behavior, values, beliefs of your organization, of your corporate, of your company? That is known as a corporate culture. Now, corporate culture comprises of following things: commitment to honesty, okay, planned performance and growth. You will plan your performance, you will plan your growth. It has to be informative, informing, and informed organization. The corporate culture should be of gathering information. Be informative. Gather a lot of information about your competitors, about what is the best culture which is being there in the market. Be very, very informed. Consideration for partnership with the organization. For others in the partnership with the organization. So any other person who's linked with the organization, how do you treat them? How do you treat your customer? How do you treat your employees? How do you treat your vendors? That is an important part of your culture. Participative management. Management should be participative, which means management should take views of the employees also in making decisions. Management should not just take decisions and give it to the employees. It should be participative management. Good employee relationship should be there. Good decisions and timely action should be taken. Quality should be of utmost importance. Cleanliness should be of utmost importance. Mutual trust should be there. Future looking should be there in the management. Helpful nature, interinstitutional towards neighborhoods. Neighborhoods should be happy with you. Cleanliness is something which is very much required in a corporate culture. So corporate culture means is an accumulation of various factors, various values, beliefs, and assumptions that an employee has about the organization. This is known as corporate culture. So our culture should be very, very conducive to work. It should be very, very conducive to growth. It should be conducive to profitability. That is known as corporate culture. Now, what do you mean by corporate services? Guys, corporate services means support services which are provided by a company. Support infrastructure which is provided by a company. So after the sales is done, is there any after sales services? If the customer wants to know about the details of the product or how to use it, is there after sales services? So for shareholders, if there's an ombudsman scheme or not? For the creditor, is there any contact person whom the creditor can contact about recoverability of their debt? For banks and financial institution, is there a person who can resolve the queries of the banks and financial institutions about their loans which they have given to the company? All these things are defined by corporate services. So corporate services are the support infrastructure of the company. Whatever is supporting the main activities of the business, that is known as a support infrastructure. So corporate services are the support infrastructure of the company. The activities in such areas include enterprise-wide support services which are required based on specialized knowledge, best practices, technology. There are various services which are related to technology, like IT services are required. We should have an IT department who, if if laptops are not working fine, then they should quickly come and rectify the laptops. Then serve internal customers and business partners. So internal customers are also required to be served. Internal customers means employees of the organization should have no problems in working in the organization. They should have proper infrastructure to work, right? Coordinate diverse organization units and help them focus on organizational goals. So the role of corporate services is that it should coordinate with the diverse organization units. It should give services to all the organization units. What are organization units? Organization units means HR department, finance department, production department, distribution department. All these should be knit together. For example, water services are required by production department, they're required by manufacturing department, they're required by finance department, quality control department, shareholders. Everyone requires water. So water services should be provided to all the organization units, irrespective of what functions are they considering. Exploit resources and develop core competencies that enable the organization to keep its edge over the industry competitors. So core competencies should be developed by using these corporate services. Combining operations with another competitor in same industry to increase competitive strength. We can also combine operations, right, with another competitor in the same industry to increase competitive strengths. So certain support services can be combined. So for example, I am selling laptops, and the shop which is next to me is also selling laptops. We can together have a call center to address all the queries which comes from the customers after the sales are made. We can have it combined, right? After sales services can be combined by both of us. So these kind of combinations can happen in corporate services. Then what are corporate services audit? So guys, again, management auditor will see whether your after sales services are absolutely perfect or not. It will see whether the employees are satisfied by your salary disbursement, employee welfare or not. All these things will be seen by the management auditor. So corporate services audit will cover the areas like, for consumers, quality of the good is right quantity and right price, right place is given to the customers. For employee, payment is given on time, training is given on time, safety is there, welfare is there. For shareholders, safety of investment is there, satisfactory returns are there, appreciation of investment is there, and yes, ombudsman scheme is also there for the shareholders. For the community, social cost benefit analysis should be made. For fellow businessmen, you should have ethics and fair trade dealings with fellow businessmen. Even if you have competitors, you cannot say bad words about your competitors, right? So fellow businessmen should also be treated well. Okay, corporate services. Government should be satisfied with you. You should be compliant with law. Fair trade practices should be there, and timely payment of taxes should be there. So this is the concept of corporate services. So corporate services audit is the appraisal that should consider the level of contribution a business entity is making to the society and its environment towards raising the quality of life through better product quality services rather than profit maximization. So the aim of corporate services audit is not to make sure that profits are being earned fine or not. The aim of corporate services audit is to make sure that the betterment which the company is providing to the society is there or not. Is there something benefit? Is there something beneficial which the company is providing to the society? That's the aim of corporate services audit. Okay. Okay, next word is very, very important. Corporate development. Okay. Now, before telling details about this particular concept, I will like to tell you the difference between development and growth. There are two words which are there, development and growth. What do you mean by growth? What do you mean by development? Okay. There's a fine line of distinction between growth and development. What is that difference? I'll let you know. Okay. What do you mean by growth? Growth means you are achieving your targets in a very, very streamlined manner. Okay. So I'll tell you a very simple example. So if you are a CMA student and if you have qualified your foundation, inter and final on time, that is growth. But what is development? Development means along with doing CMA, you are improving your communication skills, you are improving your Excel skills, you are improving your Word skills, you are improving your SAP knowledge, you are improving your tally knowledge, because you know that apart from clearing the examinations, you would need knowledge of all these spheres in future. You know about that. That is development. That is development. So if a business organization only focuses about profit and growth in terms of profit maximization, then it is targeting growth as its objective. However, if the management or an organization wants to target development, overall development, then it will always focus on things which are not related to profits as well, like customer satisfaction, like market share should be increased. Even if prices are low, market share should be increased. More people should be able to buy my product. So all these things are targeted by the people, by the companies. This is known as corporate development. So corporate development is the process of taking strategic decisions towards to grow and restructure one's business. Strategic decisions are to be taken to grow the business and restructure the business. For example, mergers and acquisition can be an important way of developing. You are into manufacturing of laptops. You venture into manufacturing of mobile phones as well. That is development. You're not only focusing on one thing, you are growing your market size. So growth of market size, this initially will lead to reduction in profit, but in a long run, it will lead to increase in profit also. So this is development. Now, the management auditor will focus on corporate development audit as well. Whether the management is focusing on developing its a business, or is it stagnant. Management should not be stagnant. Whatever it is doing, it is definitely doing, but the management should not be stagnant. It should focus on developing the business also. Otherwise, management will become obsolete. The management will become stagnant if it does not develop in terms of business. So it is an independent and objective study of organization's capabilities. So what is organization capable of doing? That is the important aspect of corporate development audit. It gives a comprehensive picture of status of corporate development effectiveness and highlights the developmental needs. So wherever corporate needs to develop, wherever corporate needs to grow, their corporate development audit is very, very important. And yes, management auditor is in a very favorable situation to do this corporate development audit. Management auditor can actually recommend that you are already into cloth business. Why don't you come into cotton business also? Management auditor can recommend development scope, development area. So what are the objectives which are pursued by corporate development audit? The various factors and forces constituting a corporate enterprise are right, kind, and quality. So first of all, management auditor will ensure that the factors and forces constituting corporate enterprise are right quality and right kind. All the infrastructure which is there in the organization is suitable for developing further. This is the first assurance. Second, communication is the key. Management is able to communicate well with the employees, because if you open a new wing, then the existing employees will be a little jittery. They will be a little awkward, because they'll be required to do more work. This can be a situation. Pattern of departmentalization is very, very important when you are considering corporate development audit. What are the departments that you have made? Okay. Personal problems are handled appropriately. That is an important aspect of development. Development cannot happen if personal problems persist. If your union is not supporting you, if your manpower is not supporting you, how will you develop? How will you enter into different spheres in your organization? Responsibility for planning, coordination, motivation at functional levels are discharged in proper spirit. So the planning, coordination, motivation, all these functions should be discharged properly if you want to develop. Then there are certain checklists in the areas of corporate development audit. If you want to develop your corporate development areas, then you have a checklist. You can check on certain things. You check on planning. Okay, so first of all, you do SWOT analysis. That will make you privy to the fact that what are your strengths, what are your weaknesses, okay, what are your opportunities in your business. Only then will you be able to develop more. Okay, once you know about your SWOT, then only will you be able to develop. So first is SWOT analysis. Then you need to know your corporate strengths and weaknesses in relation to price, quality. So guys, this SWOT analysis should be done in respect of price. This should be done in respect of quality. This should be done in respect of market share. So SWOT analysis should be a detailed analysis. Then what are the opportunities and threats? You need to know what are the opportunities and threats. Again, opportunities and threats with respect to rivalry, threats of new entrants in market, opportunities which are there, you need to analyze. So SWOT analysis is spread into these 3 points. How are the threats overcome, opportunities avoided in past? what is your corporate image, whether corporate image will improve in future or not, whether you want to improve in future or not. So guys, these are certain checklists. Okay, I'm not going through each and every point because you need not remember each and every point. If you just remember 4 points out of each of the category, it will be more than enough. Okay, but the ultimate aim is that we need to develop, as we need to develop further growth. Okay, we need to venture into more things, we need to expand our market share. What steps do we need to take to expand our market share? That is the ultimate objective of corporate development audit. So this is the checklist. You can just go through them. It's very, very simple. It's very, very straightforward. All right. Now we come on to a very, very important aspect of management audit and corporate development audit as well. It is personnel growth. It is personnel growth. Guys, people are the core of any organization. Unless and until you focus on people, your organization will not grow. If you want your organization to grow, you have to focus on your people. And people development is the core of any management audit. Fulfilling the needs of the people, the present and needs of the people is to be fulfilled. Only then the organization will grow. So if personal management is concerned with managing people at work, the personal management is a very, very important aspect of your management audit. Personnel should be happy from you. They should be absolutely happy and they should be absolutely satisfied. So what are the components of personnel management? First of all, organization should review and analysis what should be the appropriate work structure, what should be the roles and responsibilities of any organization, intra and inter department relationship. All these things should be reviewed and analyzed by the management first of all, or the management order first of all, to know where are the lacunas. Unless and until we know what is the existing organization, we will not be able to know the lacunas, the drawbacks. Okay, then manpower planning, recruitment, selection. Then the second aspect of personnel management is then we will plan how to recruit new employees or whether to move existing employees to new roles. Okay, once the roles are defined, then we will plan for manpower acquisition and putting them at the right places. Okay, right man at the right places. Third is manpower training and development. We will develop our manpower, we will train our manpower. That is the third aspect. Then we will appraise their performance. We will assess their performance. We will tell them where were they right, where were they wrong. Performance appraisal is the next part. Then remuneration should be fixed as per the job evaluation, as per the market standards. What will be the incentive payments? All these things should be determined. Employee remuneration is definitely the most important aspect of any personnel management. Employee services, are we providing employee services or not? For example, whether employee is getting provident fund or ESI benefit if it's working in your organization, whether employee is giving that or not. So social security plans, community development programs, his health, his welfare should be taken care of. Administration and records, so administration of the employees and documentation for all the employees, everything should be in place, everything should be fine, the documentation should be strong. Then industrial relations, what are the relationship that an employee has with the industry, people and institutional differences. It includes establishing appropriate procedure for resolution of personnel and institutional differences by means of appropriate measures and machinery. For example, standing orders, grievance procedures, conciliation, collective bargain, joint consultation. So wherever employee is having a dispute with the company, like unions and company have certain disputes, then guys, how to resolve those disputes? How to resolve those disputes? That is an important aspect. There are many mechanisms to resolve that dispute. There are reconciliation mediation centers. There are courts which are dealing with employee grievances. So all this should be in place. Auditing and research in manpower management. Then we will audit and research whether our manpower management is appropriate or not. Next aspect of management audit, again an important aspect, consumer services audit. Guys, consumer doesn't only want product from you, it also wants quality, after sale services, right price from you. And as you were aware, customer is the king. Customer is the king. That is a very old saying. So customer services audit is very, very important. We should understand whether company is providing adequate services to the consumer or not. So as I still remember, I bought this Lenovo laptop, and this Lenovo laptop came with a 2-year warranty. So within 2 years, guys, if any small or any big damage occurred in this Lenovo laptop, it was rectified by the company. The person would come to my home and give me on-shore services. On-site services. These are known as on-site services. The company gave me on-site services, and I was very, very happy with the after-sale services of Lenovo laptop. But yes, I had to purchase the additional warranty period card. So these are certain experiences which remain with us forever. Again, whenever I'll be buying a new laptop, I'll consider Lenovo as a preferred choice. This is the consumer services audit. So we need to be very, very sensitive towards the benefits, towards the needs of the customer. And what are the needs of the customer? Right quality, right time, right quantity, right place, right price. These are the needs of the customers. Please highlight the needs of the customers. Right quality, right time, right quantity, right place, right price. These are the needs of the customers. The consumer services audit critically examines and appraises management on these aspects of services. So the consumer services audit will analyze whether you are giving these benefits to the consumer or not. This is known as consumer services audit, and customer satisfaction is the key. Customer satisfaction is the key in any business. Okay. Now let us read what are the essential ingredients, important aspects of consumer services audit. Okay. Need of the customers are to be taken care of. Product price reasonable, and it should be consistent in quality. Product price should be reasonable and the quality should be consistent. Okay. If there is any added value, then it will be beneficial. What is added values, guys? Sometimes, we get free gifts along with the products. We buy a product and we get free gifts. Okay. That is known as added value. So added value can be given to the customers. So guys, as if you have purchased my my books or my video lectures ever, you would always observe that I always send a motivational quote to all of you in form of magnets. How many of you have those magnets in your home? Please write yes in the chat box. Do you have any magnet which I sent to you along with your course material? Do you have those magnets of motivational quote along with your course material? Do you have it placed somewhere around you in your room? Please write a yes or a no in the comment section. Do you have those magnets? Sunny Kaushik says, I do have. Who else have it? Naga says yes. Shubha says yes. Saurabh says yes. Yes. Who else have it? Sushmita says yes. Sunny says, I have it on my Almira. Absolutely, guys. So guys, these are value added things that can be combined with your product. Motivation or vigor is something which is very much required by every student. So that was a thoughtful thing which I deliberately keep along with my books, along with my course, which will motivate you towards your goals. And trust me, according to law of attraction, if you have something written in front of you, the probability of you getting it is much, much, much more than any other person. So, if I have some quote written in front of me like dreams, don't let your dreams be dreams, then whatever dream I have, I will be able to achieve it after a point in time. So yes, these are known as value added services. Yes, Suryavanshi, I have my classes both in Hindi and in English. I have my classes both in Hindi and English. Guys, in YouTube channel, I deliberately speak only English. Why? Because I have a lot of South Indian subscribers. On my YouTube channel, I only speak in English because I have a lot of South Indian subscribers. But my classes are available both in Hindi and English language. All right, so let's continue. Yes. After sale services are required by the customers. That is the important thing. Then you should consistently improve the product quality. Product value should be improved consistently. Guys, I still remember, earlier Kisan ketchup used to come in a glass bottle. Then came the plastic bottle. And now we see Kisan ketchup in a pichku small sachets, pichku sachet, where we squeeze it, it comes back to its original shape and it is not wasted. So these are the improvements in product and product quality that is desired over a period of time. Complaints are handled properly. Responses should be quick to the consumers. Then safety norms are followed like ISA, FSSA, BSS, etc. Then all the warranties are explicitly stated and the provision of invocation of warranties are stated unambiguously. So these are certain benefits which are, these are certain aspects which are covered under consumers audit. So consumers audit is a very, very important aspect, guys. Consumer services audit, and these aspects are covered in consumer services audit. Now, what do you mean by corporate social responsibility? CSR. Guys, we all know we are there in an environment right? We are there in an environment and we have air, water around us. It is our responsibility to conserve it. It is our responsibility to preserve it. That preservation of our society, our environment is an essential element of corporate social responsibility. And yes, as a management auditor, I would definitely want to see whether you have fulfilled your CSR properly or not. I will definitely want to see that. As a management auditor, I would want to see whether you are fulfilling the corporate social responsibility or not. I want to see that. As a management auditor, I will check it. Okay, sir. So whatever are the environmental things and whatever are the things which are required to conserve the environment, that is the key focus of CSR. Then waste management is something which is to be very much be in the purview, whether you are just floating your waste on land or in rivers, or you are treating it. So hazardous waste management rule may be practiced by practicing cost accountant. It can be audited. Conservation of environment needs no emphasis, guys. We need to conserve the environment. This is an important element of corporate social responsibility. Then marketing is an area which management auditor will definitely see whether you are doing right marketing efforts or not. Okay, maybe your product is very good, maybe your pricing is very good, maybe your distribution channel is superb, you have good distribution channel across the country, maybe everything is perfect, but unless and until your marketing efforts are good, your advertisement is good, people are in knowledge of your product, unless until that happens, all your efforts are waste. That's why advertisements are given, such expensive advertisements are given, because there's a very old saying, out of sight, out of mind. If you become out of sight, you become out of mind. Therefore advertisements are very, very important. So the management auditor will see your marketing efforts also. He will see whether you are targeting the right audience or not, whether you are marketing your products to the right audience or not. He will see that. The cost or the management auditor will see that. So marketing audit is an independent examination of entire marketing effort of the company. What is the marketing program? What are the objectives which are covered? Implementation, organization, for purpose of determining what is being done, appraising which is being done, and recommending what should be done in future about the marketing efforts. So what are the features of marketing audit? It is to be carried out at regular intervals. It is not once in a lifetime exercise. Every year, every 6 months, every 2 years, marketing audit is required, because marketing changes over a period of time. So it is to be done every year, regular intervals. Entire system and process of marketing should be taken into consideration while doing the audit. You should not leave any aspect. So selling is an aspect of marketing, distribution is an aspect of marketing, advertisement is an aspect of marketing. Sometimes promotional offers are an aspect of marketing. Everything is marketing. You should take care of everything. Then total appraisal of marketing efforts should be done. It is similar to point number 2. Then formal lines of authority and responsibility should be reviewed in marketing staff, the staff which is there, marketing head and marketing staff, the formal authority and responsibility, who's responsible to whom, that should be reviewed in marketing activity. Marketing audit covers the following broad areas. What are the objectives of marketing? What are the programs of marketing? Its implementation and organization. So what are the objectives? Objectives should be clearly established of marketing, whether you are wanting to increase your market size or whether you are wanting to increase profitability. These are the two different objectives of marketing. Which one are you pursuing? You need to clearly establish it. Then program. What are the steps that you are taking? What are the plans that you have made for marketing? Plans, programs, marketing program. Implementation. You will then implement the marketing program. Organization, then you will organize your marketing plan in a way, execute it in a way that it reaps benefit for the organization. Oh, next is very, very important topic, guys, and it has been recurring since ages. It has been recurring. One of the favorite topics of the examiner: energy audit. Energy audit. Okay, so guys, I'll explain energy audit using this particular chart. Okay, suppose you are an organization who's using various energy equipments which is consuming energy. Okay, now these various energy equipments, if you do some minor changes in this equipment, their energy consumption will reduce. Just do minor changes. For example, use a solar panel to generate electricity. If you are located in a state where electricity is in abundance, like Gujarat, you can have loft insulation on your ceiling, so that your energy is conserved, your temperature effect is minimized in your organization. You can use thermostat to set low temperature inside your organization. Then you can switch off the appliances when not in use. So these are certain simple steps which you can take to conserve energy. But guys, more often than not, we are so careless. Forget about office. When we are in our home, we are so careless that we don't bother to close the lights and fans and all the electronic equipments. When we do brushing in the morning, then our tap is running water. 1 2 3 liter water runs for just brushing, because our tap is open when we are brushing our teeth. We are so careless. Energy audit aims to check this carelessness of the company and to infuse some energy efficient techniques. Like guys, for example, the old kind of bulbs which we used to use in our house, those yellow light bulbs, you remember those yellow light bulbs which had a wire connecting other wires inside the bulb? Those are very, very energy inefficient. Please use LED bulbs in your homes to be energy efficient. So this is one area which statutory, which the management auditor will definitely see in your organization. So the entire aim, the objective of this particular audit is to institute energy efficient programs in the organization. Conservation opportunities are to be identified. Conservation of energy should be done by the organization. That is the objective of this energy audit. And yes, management auditor will definitely check this particular aspect of your organization. This is known as energy audit. Wherever energy saving is possible, wherever there's an opportunity to save energy or reducing wastage of energy, it will be adopted by the management auditor. This is energy audit. Okay, sir, got it. What are the functions of energy audit? Quantification of energy cost and quantity. How much energy is being consumed, you will quantify that. Then we will qualify which product is consuming maximum energy, which department is consuming maximum energy, which consumer is consuming maximum energy. We will correlate the trends of production and activity to energy cost. We'll focus on possible sources of conserving energy. Then we will institute those energies, like these are the sources of reducing energy consumption. So guys, these are the elements of energy audit. Next is productivity audit or efficiency audit. Guys, this is very closely related to operational audit. Okay, we are doing operations. Okay, we need to ensure that our operations are done in a perfectly optimized manner, in an efficient manner. So productivity should be high in our audit, in our working, that is to be ensured by us. So productivity audit or efficiency audit aims at increasing the productivity and efficiency of our organization. For example, raw material is being bought 2 times a day, once in the morning, once in the evening. Okay, raw material we are purchasing. Half of the truck goes is bought in the first half of the truck is bought in the second half. There's no rocket science in suggesting to that company, why are you sending the truck twice? Send the truck once and load it fully. Why are you loading it half in the morning, half in the evening? Load the truck fully once in a day, maybe in the afternoon. You will save your cost. No rocket science in suggesting this. This is known as productivity or efficiency audit. We need to increase our productivity. We need to increase our efficiency consistently. Consistently, we need to increase the productivity and efficiency of our operations. And that is why productivity audit forms core of management audit. This is the core of management audit. The ultimate area where management audit focuses on is productivity and efficiency, and yes, it is closely linked to operational audit. Okay, so this is productivity audit. It is basically the analysis of productivity of resources. Please underline these lines. Analysis of productivity of resources. How efficiently are the resources reaping benefits? That is the productivity audit. Okay, so got this is the difference between economy, efficiency, and effectiveness. You can read it. It's very, very simple. So what are the twin objective of productivity audit? To obtain optimum results and to improve on benchmarks. Whatever targets we have set for ourselves, what are benchmarks? Benchmarks are targets. Whatever targets we have set for ourselves, we need to achieve those targets, and whatever results we want to attain, that should be attained. Audit would generally comprise of comparing the performances, guys. Okay, actual return versus expected return, optimum utilization of resources, benchmarks should be achieved. Now, what are the areas where productivity audit functions, or what are the ratios which productivity audit uses to analyze? Guys, very simple ratios which we have done in our costing and cost audit also, chapter number management reporting chapter. There also we have done ratio analysis, capacity utilization, productivity analysis, material consumption analysis, capital employed analysis, gross profit, net profit, debt equity ratio, net worth. All these are ratios which will tell whether we are productive or not. Productivity is definitely a function of production versus profits. So these ratios will be very useful in our productivity analysis. So productivity audit is nothing but analyzing the productivity of an organization. Now we come on to a very, very important aspect of our syllabus, which is propriety audit. Propriety audit. Okay. Now, I'll give you an example to explain propriety audit, and then it'll sound really, really easy to you, because it is actually very, very easy. Okay. Propriety audit is very, very easy and straightforward. Okay. Now, I go to audit. I go to an audit, and that audit is of Reliance Industries Limited. I go to an audit of Reliance Industries Limited, and that audit is carried out by me. And I have learned that Reliance Industries Limited have bought glasses for their board of directors meeting. One glass is for 50,000 rupees each. One glass is for 50,000 rupees each. They're showing me the bill. They're showing me where they've purchased from. They purchased is from Swarovski crystal, which is very, very expensive. They want to drink water in a glass which is worth 50,000 rupees each. Board of directors have taken this decision, and they have bought glasses which is worth 50,000 rupees each. Now, as an auditor, can I ask them that, why have you done such a big blunder by purchasing such expensive glasses? In my home, the glasses are worth rupees 5 each. We get glasses worth rupees 5 each or 10 rupees each. Why have you spent 50,000 rupees for one glass? Can I ask this question from a person who's owning a private company? Answer is no. It's his company. You are no one to challenge the aspects which are dealing with rationale of any expenditure of that particular company. You are no one to challenge it. Who are you to ask the rationale of a particular expenditure? Management wants to spend in that particular area, he's spending in that area. You are no one to challenge the rationale or prudence of an expenditure in a private concern. However, in a government concern, guys, if you are doing audit of a government company, like if you are doing audit of, say, PSU, some Maharatna, some Navratna company, then definitely you can ask the prudence of a particular expenditure, because that is public money. That money is public money. And a government company cannot spend their money as it is, without considering what is right, what is wrong. Government company cannot do that, because that is public money. So, what is propriety audit? Propriety audit is nothing but prudence audit. And prudence audit is typically relevant for government audit. Now, my question to you is, if you are the management auditor and not the statutory auditor, let me repeat, please hear the question very, very carefully. If you are the management auditor and not the statutory auditor of a particular company, then can you ask the prudence of an expenditure from a private company also? Answer in the chat box. Answer in the chat box. Let me repeat my question. If you are a management auditor and not a statutory auditor, I've already told you statutory auditor cannot raise question on prudence of an expenditure. It is businessman's perspective. What has he spent on what? Okay. You cannot challenge, why have you spent so much of money? This thing is available in cheap. No, you cannot do that. If that is a valid expenditure, you have to approve it, okay, as a statutory auditor. But if I'm a management auditor, can I raise question on prudence of a particular expenditure even when I'm auditing a private company? Can I do that? Yes or no in the chat box. I want yes or no in the chat box. So propriety audit is typically relevant for government audit. But if I'm a management auditor, then can I apply propriety audit in private concern also for a private person? For Reliance, can I ask this question? Answer is a clear yes. Sushmita Sharan. Very good answer. Very good answer. So guys, management auditor is under no bound to not to talk about propriety. It can challenge your prudence. Management auditor can challenge your prudence. Statutory auditor cannot challenge your prudence. Management auditor can challenge your prudence. So the meaning of the word propriety means whether the expenditure which meets the test of public interest, commonly accepted customs and standard of conduct, particularly as applied to professional performance requirement of government regulations and professional codes. So only in government organization there is a concept of prudence. There's a concept of a conduct which is as per the authorization metrics, or which is as per the norms which are given by the management. Okay, I've got many more answers. Wow, everyone is saying a yes. Superb. Very good. Everyone saying is yes. Absolutely. Absolutely correct you are. All right. So, guys, propriety audit is a very, very important element of management audit, because management auditor is in no bound to not to challenge your prudence. Management auditor is there to challenge your prudence. Management auditor is there to challenge your prudence. That is the role of management auditor. Whether planned expenditure is designed to give optimum results, whether the expenditure is directed towards results, whether the size and channel of expenditure were designed to produce best results, whether return from expenditure is appropriate, whether you are getting appropriate benefit of the expenditure or not. All these things can be asked by the management auditor. Management auditor can question your prudence. Okay. Now, what are the three important, or rather four important elements of this prudence concept of propriety audit? First of all, whether the expenditure should not be more than what occasion demands. It should not be excessive. Expenditure should not be excessive. Then, expenditure should be sanctioned. It should be approved by the relevant authority. That is the second point which you need to consider as a management auditor in huge expenses, in the expenses which are heavy expenses. So, the expenditure should not be utilized for benefit of a particular person. The expenditure should not be utilized for particular benefit of a particular person. So in a private company, a board of directors is buying a car, it is using company's funds to buy a car. Not allowed. Not allowed. Then amount of allowances should be regulated. Amount of allowances, whatever benefits are being received by the top management, they should be regulated. So guys, management audit is direct challenge to management. Simple. Management audit is a question mark to the management in any possible way. In any possible way. So propriety audit forms part of management audit also. Propriety audit is not a part of financial audit. Financial auditor, cost auditor cannot challenge propriety. But management auditor can challenge propriety, can challenge prudence. CSR audit. Yes, in this particular audit, guys, we need to see whether the CSR program is appropriate or not. So what are the CSR programs? Let us read it in brief. Human rights, business behavior, human resources. These are certain elements of your CSR program. So just read through these areas of CSR program and you'll be able to understand them. Nothing really difficult about it. Yes, very, very important. Guys, in 2013, CSR has become mandatory. So earlier, CSR was optional. Okay. So a company wants to contribute to society or not, its company's will. But now, after advent of Companies Act 2013, CSR is mandatory. You have to mandatorily spend out on your society if you want to continue business. Okay. It's like forceful donation. It's like forceful donation. You are forced to donate. Okay. That is corporate social responsibility in case of Companies Act. Section 135 is the section which deals with CSR in case of a company. And yes, 2% of average profit of the company is to be spent mandatorily on CSR. So guys, Ministry of Corporate Affairs have given certain areas where CSR expenditure can be done, like eradicating poverty, promoting education, promoting gender equality, ensuring environmental sustainability. All these things are the as per the Committee of Ministry of Corporate Affairs, all these things are very, very directed towards society. So expenditure should be done in these respect only. So guys, you can remember any 6 of these. Okay, don't remember all, but remember any 6 of these. All right, and the last checklist, which is last topic, which is a very, very important topic of our syllabus, guys. Sample checklist for various functions of audit. Guys, checklist can come in your examination. It has been repeatedly coming in your examination from past. What do you mean by checklist? What do you mean by checklist? Guys, when you are studying a particular chapter, a subject like cost and management audit, whenever you study a particular subject like cost and management audit, then guys, you have an index in front of you. You tick mark on that index. that yes, I have covered the rules, I have covered the basics of management audit, I have covered the chapter on cost accounting standards, I have covered the chapter on the professional ethics. That is a checklist. Similarly, while auditing different functions or while auditing different elements of your financial statements or your management audit functions, you prepare a checklist that yes, I've checked this point in my management audit purview. This is known as checklist. What all things you have to check, and you will put a tick before whatever things you have checked. Okay, that is known as a checklist. So it is not a very difficult thing, it is a very simple thing. What steps can you think of doing a particular audit, and whether you have done those steps or not, that is the simple checklist of audit. Let's take an example. Sample checklist for management audit. While you're doing management audit, what steps would you consider doing? Okay, now you will take a production plan. First of all, how is the production plan prepared? You will see whether the production plan which is prepared is adequately prepared or not. Okay, then what should be the product mix? What should be the mix of two products which you should consume? What is the product mix? What is the optimum profitability which you want to attain, whether you have checked that or not? Okay, what is the mix of standard product or the tailor-made products? What is the mix in your sales? Whether the infrastructure like machinery, material is adequate or not, so that your production is uninterpreted. So you need to check each of these points. As a management auditor, you need to check each and every point in the organization. Then, are there constraints to achieve maximum capacity utilization? Why are you not able to achieve the maximum capacity utilization? Why are you underutilized? Okay, what is the percentage of scrap waste in your production? Is it reasonable? Is it unreasonable? So guys, these are certain points that you will check while you are conducting management audit of a particular organization. And yes, need not remember all of them, remember any 10. And guys, let me tell you, don't worry, if you read these thrice, you will automatically be able to remember. It is nothing very complicated. Students say, sir, checklist कैसे याद होगी? Checklist तो याद हो ही नहीं सकती, इतने सारे point हैं, इतने अलग-अलग point हैं. Sir, checklist कैसे याद करें? It is very difficult to remember checklist. It is not difficult to remember checklist. It is common sense. It is common sense. Please understand this fact. Checklist is only common sense. You have studied management audit chapter. Now, whatever you have studied management audit chapter, summary of that is given in this checklist. That is the point. Okay, sir, got it. Similarly, guys, there is a checklist for purchase management. So purchase function, what is the purchase function? What is the purchase policy you need to see? How the purchase requirements are told in the purchase schedules and the department. How the suppliers are selected. How the purchase authorization happens. How the suppliers are, whether suppliers are dependable or not. What are the price trends? All these things are there in this particular checklist. Similarly, when you are dealing with personnel management, when you're auditing personnel management, what is the organization of personnel department? How is personnel department, HR department, hierarchy is there? What is the hierarchy? Is it adequately staffed? What is the organizational hierarchy for your entire organization? What is the promotion policy? What is the remuneration policy? Okay, all these things are required to be seen. So just read them thrice and you will be able to understand and remember the major points. The only ask is to read them thrice. Okay, these are the checklist of individual areas of audit, like inventory control function. Okay, what are the checks? What are the checklist? So these are the the control points. Okay, now let me tell you, this time which you are having right now, the 1 week which you have now, this is an opportune time to read these checklists, because these checklists, if you revise again and again, whatever you have revised in past, that will be out of your mind. Okay, if you read them again and again, then you will be definitely be able to remember these checklists in the examination, and you will be able to perform well in the examination. So don't worry about this checklist. One such checklist I will also teach you in the next chapter, internal controls. Okay, they are also not difficult. Please remove this notion from your mind that checklists are very, very difficult. Checklists are not difficult. Please remove this notion from your mind. It is a false notion that is there in your mind. And yes, from checklist, at least one question will definitely come in the examination, whether from chapter number 9 or whether from chapter number 10. Okay, guys, so that's all for this particular chapter. And yes, are we energetic enough? How's the Josh? How's the Josh, guys? How's the Josh? Are we energetic enough? We have covered almost 60% of our theory portion, guys, and we are equipped for examination to cover the 60% of our portion. And yes, now we'll be moving towards the internal control, internal check chapter, and that chapter is by far even more important than management audit. Internal control, internal check, that chapter is even more important than management audit. It is a very, very important chapter of your syllabus, which we are going to start now. How's the Josh? Are you feeling tired? Are you feeling energetic? Okay, Samir Kundra is there. Samir Kundra, have you started doing CMA? Huh? Samir Kundra, I'm a fan of you. You are not a big fan. I'm a fan of you. Okay, guys, let me tell you, Samir Kundra is my colleague when I used to work in KPMG. Samir Kundra is my colleague and a regular follower of my YouTube channel. All right, how's the Josh, guys? How's the Josh? Should we continue with our marathon lecture of the next chapter? Next chapter is internal controls, internal weaknesses, and internal audit. And yes, slightly low, sir, to be honest. Obviously, Ram, it is tiring, undoubtedly. Reading theory back to back. Reading theory back to back is definitely tiring, but we have to make our spirits strong, because this will fetch us 30 marks. This will fetch us 30 marks. 30 marks will be ours if we do this theory portion. Okay, so important to do this theory portion, very, very important. Okay, so before we start our next chapter, let's take a small break. We'll be meeting after the break, and then we'll be starting our next chapter, which is internal controls, internal checks, internal audit, etc., etc. So we'll be meeting after 5 minutes, maximum 5 minutes break. Hello, 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 hello. Can you hear me properly? And can we start the session back? Are we all energetic? Please respond on the chat box. Can we start the session? Can we continue? And are we energetic enough? Are we superbly charged to clear our CMA final examination? Please message on the chat box. Yes, I am able to hear you properly. Sorry, I'm able to see your chat messages. So please message on the chat box whether we are energetic and whether we should start the session back. Are we ready to continue with our next topic? Yes, everyone's saying yes, yes, recharge, sir. Yes, guys, even a 2-3 minutes break, recharges you. 2-3 minutes break. Yes, it's like a power nap. Power nap, recharges you completely. So this 2-3 minutes of break is a power nap, even for you and for me also. Continuously speaking for 2 hours, 3 hours, make a toll on your throat, and just taking a power nap really helps. It has helped me. Now I can teach you further till the time we complete our entire course. We can teach you further. We can start our conversations. Yes, let's rock it. Ram Narayan says, let's rock it. Yes, let's rock it. Absolutely, guys. Let's rock it. All right, let's start. Internal control, internal audit, and operational audit. The most important topic of our theoretical part, guys. And from this particular part, in your December 21 attempt, almost 15 marks question was asked from this particular part. This particular portion was 15 marks in your examination. So very, very important portion of your examination: internal controls, internal audit, and operational audit. Before I start this chapter, please understand the meaning of internal controls. What do you mean by internal controls? And I had just now taken an example. I'm taking that example again to start your to start the chapter. Okay, what do you mean by internal controls? Okay, guys, internal controls, I've taken an example today only. In the morning I've taken this example. I'm repeating that example. So if Saurabh and Sushmita are in relationship with each other, Sushmita wants to make sure that Saurabh goes to coaching class daily in the morning. He is in the coaching class for a long period of time. She wants to ensure that there's no hanky-panky stuff going on between Saurabh and someone else, and she wants to audit this entire transaction. She has two ways. Number one, checking the internal controls. What are the internal controls? What time did Saurabh leave home? What time did he reach office? What time did he reach the coaching institute? What time did he leave the coaching institute, and what time did he reach back to home? These are the checkpoints. These are the control points which Sushmita can check to audit this particular transaction and to be sure that yes, Saurabh is going outside only for coaching. These are internal controls. Similarly, management of an organization establishes such internal controls. For example, whenever raw material is coming inside the factory, there is a register in the entry gate. That register will be filled with the amount of raw material which has come in. When that raw material reaches to the production floor, there is a register on the production floor which will tell that this much raw material has reached the production floor. Whenever that is converted into finished goods, it is sent to go down. There's an entry which is done in the go down that this much has been received as the finished good. Whenever the finished good goes out of the factory, then factory gate has a record of how many finished goods have been sent outside the factory. So if I want to make sure that the raw material accounting is perfect, then I can just see these checkpoints that yes, 100 kgs has been written in entry register, 100 kgs on the production floor, finished goods were made. Suppose 50 products were made, 50 products reached the go down, 50 products were sold. If I tally these controls, then I'm fairly reasonably sure that the transaction has flown in well. The transaction is right. I need not go into details of that particular transaction. If the controls are working fine, then I need not go into the details of that particular transaction. I just need to figure out whether controls are working fine or not. These are the internal controls. And management makes sure that these internal controls are instituted in the organization so that the organization is working fine, so that organization is accounting well, their systems and procedures are doing, everything is doing well. The management institutes these controls at a relevant point in time. These are known as internal control. I'll give you another example. There's a person. I have a big store. Okay. I sell clothes. There's a person who collects the cash at the end of the day and deposits it to bank. Now I have a fear that, that person collects cash worth rupees 1 lakh and he's depositing only 90,000 in my bank. And the next day he would say that, oh, I collected cash of 90,000 rupees only. So now, guys, to check or to have an internal control with this transaction, I will employ someone else, and this particular person will only collect cash, count it, put it in that cash book, hand it over to the person who's going to the bank, and that person will deposit the cash to the bank. So if I segregate the duties, if I split the duties between two people, chances of fraud reduces. Chances of error reduces. Now two people are involved. So one person cannot do that fraud. That fraud cannot be committed by one person. I have split the transaction into two people. So guys, such activities are also known as internal controls. So we have certain internal checks which we employ in our business to ensure that all the accounting entries, all the business transactions are recorded properly and there's no fraud which is happening in the company. These are known as internal controls. All right, sir. So let's start. Internal controls are certain checks and procedures installed by the management. Very, very important. Who installs these checks? Management installs these checks. Installed by the management to prevent financial fraud or misappropriation of assets. I have installed these internal controls in my business so that my entries and transactions are checked by some other person also. Entire transaction is not done by one person. It is done by two people so that they are checked properly. In other words, internal control system can be defined to be the policies, practices, procedures, tools designed with the following objectives. What are the objectives? That everything is done with proper authorization. Everything is recorded promptly in the correct amount and correct accounting period. Assets are safeguarded. No one is stealing my assets. Like my cash is not being stolen by my staff. Compliances are made. Adequate compliances are made. Compliances regulations are followed. TDS is being filed on time. My returns are being filed on time. Every compliance is made on time. Any negative event, crime, fraud can be controlled and can be managed if I have proper internal controls in place. So these are the internal controls definition. A process designed, implemented, and maintained by those charged with the governance, who is the management of the company. Those charged with governance is the management of the company. So management of the company infuses or implements certain processes. What is the objective of that process? Financial reporting should be done properly. Accounting entries should be done properly. All the accounts should disclose the true amount and account. Compliances of law and regulation should be done properly. Effective and efficiency of operations is done, and assets are being safeguarded. Scope of internal control. What is the scope of internal control? Which means, what are the areas of internal control? What are the gambit of internal control? What all will internal control cover in its purview? So scope of internal auditor, area of operation of internal auditor are as under. What will internal auditor see? What all things will internal auditor see? So guys, internal auditor will see your internal control on everything, starting from financial and operational information. The first thing which internal auditor will see will be your internal controls regarding financial operations. So what are the internal controls? Internal controls will be that, all the accounting entries should be put in the system. All the accounting entries should be put in the system. That is the first internal control. And how will you ensure that all the accounting entries is put in the system? Reconciliation. After every month, your bank should be reconciled with your bank as per books. Some companies do it on a daily basis. After the end of the day, your bank balance in your bank account should match with your book bank account. The bank balance which is there in your books of accounts, it should match with your bank balance in your bank. This is a reconciliation which happens every day in many companies. This is one of the example of internal controls, and that too financial internal control which is related to finance. So operational and financial internal control is the first aspect of internal control. So internal control will cover, number one, financial aspects. Your profit and loss account should be perfect. Your balance sheet should be perfect. Your assets value should be perfect. We need to control your assets. We need to control your bank balance. We need to control your balance sheet. That should be absolutely perfect. So that is the first internal control. What is the second internal control? Compliance with law, policies, procedures, everything should be adequately done. So, to deposit TDS on 7th of the next month, this is an internal control with respect to the compliance of law. So guys, I will design a system whereby my CFO will get a prompt on 5th of the next month that TDS has not been deposited. Alarm will buzz off that TDS has not been deposited. This is an internal control on compliance of law, policies, plans, procedures. Your return of income should be filed up to the stipulated date. Again, buzzer will be triggered. This is another way of controlling your compliances with law. So the second aspect with which internal controls will see is your law compliance. First aspect is your financial and operating compliance. Second will be your compliance relating to law. Third is safeguarding of asset. Internal control should be such that your assets are safeguarded. They should not be stolen by your employees. Suppose you have 100 shares in your organizations, okay? You have 100 shares, okay? Now, the 100 shares are, there's only one person who buys the shares and maintains the shares. Okay, he takes 10 shares out of the company, he takes it to your home, to his home, sells it. That person is responsible for buying and maintaining shares all through. Okay, he will buy another 10, he will put in the factory, no one is there to check. But if we have another person who checks, counts the number of shares on a regular basis, he will be able to identify that 10 shares are missing. So we need two people in every transaction. We need two people in every transaction. That is the bottom line of safeguarding of asset. And internal control should be there to ensure that all the assets are adequately there in our organization. Nothing is stolen by the employee sometimes. Okay, it is stolen. Internal auditor should verify existence of assets, should review the means of safeguarding assets. Economic and efficient use of resources. This is one important aspect of internal control. We should be able to maintain our input output ratio to a specific level. If input output ratio goes below a specific level, it should automatically give information to the production in charge. This is an internal control to ensure that we are efficient and effective. We should not waste our resources. Then accomplishment of established objectives and goals for operations. Whatever objectives we have designed for our operations, those should be effectively achieved by us. That is another important aspect. That is another important thing that we need to ascertain, that we need to see in our achieving of goals. Then types of internal controls. Internal controls are necessary checks and balances to keep a check on what we have done, what all we need to do, and whether it is done properly or not. Okay. Internal controls are of following 4 types. We can control our 4 things using internal controls. What are those 4 things? First of all, we can control our administration. Guys, the managerial administration that we are doing, the decision making which are doing are around our administration. Administration means whether everything is being done fine or not, whether maintenance of books of accounts is being done suitably or not, whether the production manager is doing his work rightly or not. All these things are administrative stuff. First internal control should be administrative control. We need to ensure that our internal controls are so strong that if there's any problem in the administration of a particular thing, it should directly reach the top management immediately. For example, we produce 100 units daily. One day we produce only 80. Now there should be a mechanism whereby we need to analyze and see why did we produce 80 units that day? Why? There should be a control to this 80 units production because it's a loss for the company. On the next day, we should be able to produce optimally. So administration is first area where internal controls are very, very important. Next is operational area. Whatever operations we are doing, their internal controls are very, very important. You must have studied EOQ. Do you remember EOQ? Economic order quantity, that we have studied in our costing. So guys, EOQ will ensure that we never run out of supplies. EOQ will ensure that. There should be a adequate amount of inventory always there in our inventory. That will ensure that we never go out of supply. So that is an operational control. Financial and accounting control, I've already discussed this particular aspect with you. When we reconcile our bank and our books daily, we will be able to know that yes, this accounting entry has not been put by our finance in charge in the books of accounts. We'll be able to know it. So things like reconciliation, things like giving one responsibility to two people will ensure financial and accounting control, safeguarding of asset, prevention, detection of fraud, etc. Compliance control. Compliance mean the laws and regulations, whatever laws and regulations are there in the organization, those laws and regulations are complied with or not. This is the compliance control. For example, TDS is being deposited on time, then the laws are being followed on time. All these are compliance control. So these are four areas where internal audit can work, internal controls can work. These are the four areas which are very, very important, and these four areas are important for our internal controls. All right. Then to ensure internal control, following factors must be considered. So guys, how internal controls are done? Okay, I've given you examples of internal controls, like I've given you example of segregating the duties. I've given example of using EOQ as the method. I've given example of using input output ratio. If it falls below a certain point, it directly triggers an alarm without top management. I've given you certain examples of how internal controls are done. These are certain additional examples of how internal controls are done. Number one, segregation and rotation of duties. Very, very important. Very, very important. One person should not handle the entire transaction himself. Should be shared with people. One person should not handle the entire transaction himself. So if amount is deposited to be deposited to bank, collection of amount should be done by person A, deposit should be done by person B, so that there is two times checking of the same transaction. Segregation of duties. Second is rotation of duties. Rotation of duties means that, if one person is handling cash in first 6 months of the year, then another person should handle cash in next 6 months of the year. Rotation of duties. Because if a person remains on one duty for a longer period of time, he will be in knowledge of various sources of avoiding compliances. He would have more knowledge and experience of how to do fraud. Yes. So rotation of duties is required and segregation of duties is required. One person should not be allowed to carry on a particular duty for a longer period of time, because if he is allowed to carry on a duty for a longer period of time, chances of fraud increases. If he knows that after 6 months someone else will come in his place, he will not do fraud. This is the first aspect of internal control: segregation of duties and rotation of duties. Competence and integrity of people. Now this is very, very important, guys. For your important functions like cash collection, your banks, your debtors collection. Okay. For these important elements of your business, hire competent people, people with integrity, people who are educated, people who are highly educated, like chartered accountants, cost accountants, company secretaries. Because guys, those people will be afraid of doing frauds. They will not do fraud very easily. They will be afraid of doing frauds because they know that if they do fraud, then they will be they will be fired from job, and their degree will also be snatched away from them. So hire people who are competent, hire people who have integrity, hire people who have appropriate degree and appropriate experience, hire people who are integral. Okay. So competence and integrity is the key point in hiring people for certain key areas. So you should have people who are competent, people who have integrity, who are honest enough. They should be hired for special things. Appropriate level of authority. So to ensure that the internal controls are working fine, authority responsibility matrix should be determined in a fair manner. Authority responsibility matrix means everyone should know whom is he reporting to, and that person should exercise authority on the other person, and that person is always, if he's exercising authority and supervising the other person will not incur fraud. So adequate level of authority should be there. Everyone should be accountable to someone else. So each one should be accountable to someone else, and everyone should know that he has someone to supervise. So accountability is very, very important. Just give me 1 minute, guys. Okay. Accountability is another important aspect of internal control. Everyone should be accountable to some other person so that he knows that someone is supervising me, someone is watching my activities. If this watching is not there, then people tend to commit fraud. So accountability is one important element of internal controls. Internal controls should have properly accountable. So everyone should be accountable to someone else so that no one thinks that I'm the king in the company and I can do anything. No, no one can do anything in the company. No one is king in the company. Okay. Then adequate resources should be there. Now, if you want to have internal controls, adequate internal controls, you should have adequate resources, guys, because each and every transaction, if you pass it through two people, then you should have manpower. You should have finance, you should have equipments, materials to have internal controls. So yes, internal controls necessitate adequate resources. If you have adequate resources, then internal controls is possible. Supervision and periodical updation. It is very, very necessary that, controls should be updated after a point in time. Controls also become redundant. Control also become outdated. For example, you have a banking channel, you have a cash deposit mechanism, and you have a very good control in that cash deposit mechanism. Now, after a point in time, you stop taking cash from your customers and you turn entirely on an online mode. Then will that old control be relevant here? No. So you have to update your controls on a regular basis depending upon your businesses and your market's demand. So controls will be updated on a regular basis. Now, there are certain limitations of internal controls. Yes, internal controls are very, very important. In fact, pivotal. Internal controls are non-compromisable. They have to be done in a proper manner. Internal controls are very, very important, undoubtedly. But there are certain limitations of internal controls also. Certain drawbacks of internal controls. What are the drawbacks of internal controls? Drawbacks are cost. Internal controls come with a huge cost. So to design internal control and implement internal control, it is a costly affair. So cost benefit analysis should be done for the internal control. So that is an important drawback of internal control, that it includes additional cost. No control for unusual transaction. So generally internal controls are designed for the usual transaction, like banking transaction, cash transaction, purchase transaction, sales transaction. Generally these transactions have internal controls. Now suppose if you want to sell your machinery, internal controls around selling machinery will not be there, because selling machinery is a once in a lifetime kind of a event. It's not a regular event. So there will not be internal controls for exceptional items or exceptional transactions. So they will go undetected. They will go without internal controls. Human error is anytime possible in internal controls as well. Human judgment in decision making is definitely possible in internal controls also, guys. Internal controls can lapse because of human error. Collusion among employees. This is a very, very important aspect. Collusion means combination. So I'd given you an example that if you want to deposit your cash in bank, then employ two people. First person will collect the cash, second one will deposit the cash. This way you will be able to check it the amount twice, right? But guys, what if both of them shake hand? Both of them say that yes, okay, we'll do this fraud in a combined manner. So if they decide to do this fraud in a combined manner, then segregation of duty internal control fails. If both of them say, yes, we want to do this fraud and we will cooperate with each other in doing this fraud, and they combine hands, then there's a big problem. So yes, collusion among employees is a drawback of internal control. Abuse of authority. Guys, the problem with internal control is that it is installed by management. And management can anytime lapse a control. So if time is less, then management can say that, one person will only collect the cash and he will deposit the cash in bank. If time is less. So sometimes internal controls are lapsed by the management itself. Due to lack of time or due to lack of patience, management colludes the internal controls, and this is abuse of authority which management shows. This will result in risk coming in your financial statements. It will be a risky affair. Your financial statements might be in a risky proposition. Then inadequate procedure. If the internal controls are inadequately designed, then compliance will result into a bad drawback. Manipulations by management. Management might manipulate the transactions, estimate, judgments required for preparation of financial statements. Internal controls might be tweaked by the management of the company. Internal controls and statutory auditor. Now, very, very important point, guys. Internal controls are seen by the statutory auditors very, very carefully. Why? Because CARO reporting is there. CARO is Companies Audit Report Order. So statutory auditor is required to report in the audit report whether internal controls are appropriate or not. Okay, so that necessitates the statutory auditor to test the internal controls whether they are working fine or not. Okay, then Companies Act also requires the auditors to comment on the weaknesses, if there's any weakness in internal control. Then the auditor also identifies operation weakness. If there is any internal control weakness, then the auditor spots weakness in the systems and procedure also. If there's any weakness in internal control, then statutory auditor will say this your operation is weak. That is also a. Then auditor shall include a written communication to the management, the statutory auditor, about the internal control deficiencies. This is also a role of the statutory auditor. So guys, statutory auditor relies on the internal controls also. Let me tell you, statutory auditor, if internal controls are strong, then statutory auditor will work less. Auditor will do less audit procedures if the internal controls are strong. If internal controls are weak, statutory auditor will do more work on the audit. So that is the important aspect of internal controls. Yes, guys. All right, internal controls and audit committee. Yes, guys, the main objective of audit committee is to study the internal controls. Okay, that is the main objective of audit committee, is to see the internal controls whether they are working fine or not, and whether the auditor is satisfied that internal controls are fine or not. Now, what do you mean by audit committee, guys? Audit committee is a specialized committee which is created on only a specific type of company. So this is the definition which is there for the companies who are required to create their audit committee. Audit committee is required to be created only by this sector of people. So a company should have a separate department as audit committee, which will include the independent directors, which will include the finance director, etc., etc. So what is the role of audit committee? Audit committee is not finance department. Please understand, audit committee is not finance department. Audit committee's role is to overview the audit, whether audit is being done fine or not, whether the auditor's grievances, auditors' qualifications are being resolved or not. That is the role of audit committee. It's a separate committee, apart from finance. Finance is a different committee. Audit committee is a different committee. Okay. So internal control and its relationship with the audit committee. So audit committee has to evaluate the internal and financial controls and the risk management system. This is the responsibility of the audit committee. Then audit committee will review performance of statutory and internal auditors and see whether the internal auditors comments and statutory auditor comments are resolved or not. Third, it will review adequacy of internal audit function. Whether internal audit function is doing fine or not, that is the responsibility of audit committee. Discussion with internal auditors for significant findings and follow up thereon. What are the observations of internal auditor and how can they be rectified? This is role of audit committee. Reviewing finding of internal investigations by the internal auditors. Statutory auditors discussions are also responsibility of audit committee. So audit committee is only focused on auditing. Audit should be done in an appropriate manner. Audit should be completed perfectly, and audit should be done in an unbiased environment. That is the whole objective of the audit committee. Therefore, audit committee is very, very useful. Next, features of a good internal control system. So what are the features of a good internal control system? When will I say that internal control system is appropriate? Internal control system is absolutely fine. When will I say that? What are the features of a good internal control system? That is what we are going to study. There should be a proper organization structure. If the structure is it is well defined, automatically it's a control that everything will go fine. If everyone knows the responsibility and accountability matrix, if everyone knows who's my senior, who's my junior, okay, this hierarchy is very well defined, automatically it's an internal control. Automatically things will go fine. So first quality of a good internal control system is that there should be a proper organization structure. Second, authorization procedures should be well defined. Everyone should know that, which transaction should be authorized by whom. The structure of authorization and the entire procedure should be well defined. Everyone should know what is to be done, how is it to be done. Internal checks should be perfect. So the accounting procedure should be designed in such a manner that no single person is authorized to carry all the operations involved in a transaction. So any one transaction should not be done by a single person. So the responsibility should be divided between two people of a particular transaction. That is important. So accounting procedure should be there that no single person should carry on one transaction. Okay, then suitable people should be there in your system, like competent people, honest people should be there in the system. Their qualification, their experience, their personal characteristics should be judged while keeping them in the organization. Internal audit system, internal audit system should be there where an independent person is coming in the organization and seeing whether the internal controls are working fine or not. Internal audit system should be very much in place, and internal audit is definitely something which looks at the internal controls. Okay, and now we are going to start internal audit only. Okay, so guys, let me tell you, internal control comprises of two things: internal checks and internal audit. If your internal checks are strong, internal checks means everyone is checking transactions of each other. If your internal checks are strong, and if your internal audit is strong, cumulatively it will make your internal control system strong. So internal control is a accumulation of two things: internal checks and internal audit. And now we start with internal audit. And guys, as you are aware, now again, first of all, please mark this topic as very, very important. From an exam standpoint, it's very, very important. Now, internal audit is not mandatory for all the organizations. Only specified organizations are required to get their internal audit done. Rest, it is mandatory for other organizations whether they want to get their internal audit done or not. Now, what do you mean by internal audit? Internal audit is the review of operations of an organization, including review of the internal control system. Including review of the internal control system. It improves managerial control by measuring, evaluating effectiveness of other controls by maintaining vigilant watch over risk. So what is internal audit? Internal audit is review of law and regulations, governance should be proper, operating activities are working fine or not, risk management, financial operation information. All these are aspects of internal audit. Now, person eligible to be an internal auditor. Who can be an internal auditor? Guys, internal auditor can be a chartered accountant or a cost accountant. So yes, cost accountants can also be an internal auditor. Then, for which companies is internal audit mandatory? Very, very important, guys. There was a practical question which came, practical in the sense, analytical question which came from this particular aspect. Every listed company has to mandatorily get its internal audit done. See, statutory audit is done by all the companies, irrespective of their turnover, irrespective of whether they're listed or not. Statutory audit is to be done by all the companies. Internal audit is to be done only by listed companies or every unlisted public company whose paid up capital is 50 crores or more, whose turnover is 200 crores or more. Any one of the criteria needs to be fulfilled. Okay, or who has taken a loan of 100 crores or more, or who has outstanding deposit of 25 crores or more. All the unlisted public companies having these traits are required to get their internal audit done. In case of private company, turnover should be of 200 crores or there's loan outstanding borrowing of 100 crores. In case of a private company, then they are required to get their internal audit done. So internal audit is not compulsory for all the companies. It is optional. Some companies are required to get their internal audit done and some companies are not required to get it done. That is internal audit. Then what are the audit techniques which we use, which the auditors use to audit? First one is vouching. Vouching means we inspect the documents. We inspect the invoices. We inspect the inward register. Suppose if raw material has been purchased, we'll check